Financial world. No bigger event than this, and all through the day we're going to get you the top voices from corporate India as well as from across various industries as well. But let me go ahead and say hello to Jeevan, I think so. Let's say hello to Jeevan, and good to have you on the show. Let me try that again.
Yeah, try it again.
All right. Hi Jeevan, welcome to the show.
Yeah, he did. I was thinking, Nigel, in a way, this is, been to the World Economic Forum a couple of times, and this is, in a way, the Davos event.
Yes.
The biggest of names, CEOs, regulators, and I think it'll be kicked off with, of course, the Sebi chairman himself at about 9:30 in the morning.
Yes.
Of course, we'll have our usual sort of, array of market experts, top CEOs. But I think what makes this different compared to other events, of course, is the depth and breadth of global personalities who will be here. The biggest talking point is artificial intelligence, right here, right? Robotics, artificial intelligence. And I think we have a bunch of people joining us from places like OpenAI, which are right in the center of this AI revolution, right up on that stage, which of course we'll showcase for our viewers as well.
Well, that's right. I think all through the day we're going to be touching various aspects, whether it's going to be from the regulators to corporates to AI, it's going to be all across various platforms. So interesting day lined up ahead, Prashant.
Absolutely, and I think our colleagues are in the studios with us. I think we should bid adieu to Jeevan.
Thanks, Jeevan, for joining in, and we'll see you later in the day. Thanks a lot. All right, I think Jeevan's said that got another appointment on the way out. See you later.
All right, I think what we're going to do, of course, is also bring in our colleagues from the studio. Surabhi and Mangalam are with us. So it's, of course, going to be a mix, a sprinkling of the unveiling of the Global Leadership Summit over the next 1 hour. But of course, you've got a market to track, and markets last night have looked a little wobbly. Surabhi, Mangalam, good morning.
Morning, morning, guys. I'm sorry, Jeevan's stolen your thunder completely, Prashant and Nigel. And I think it's the last couple of maybe quarters, maybe a few years. It's time to hang up our boots. Jeevan's looking spiffy out there, but as are the two of you. Looking forward to, day-long extravaganza, lots of views, global, local, and so much more. Morning, Mangalam.
Good morning. It'd be fun if, one of our, wardrobe team or stylist team would have gotten Jeevan a jacket. Then definitely he would have matched up to your swagger as well. But it was very, very impressive to watch just that. You watch it in the sci-fi movies, and now to see it in real is a lot of fun.
But normally when I come to studio in the morning, and we welcome each other, I'll tell you what, today I got out of the elevator and the first person to welcome me was Jeevan. And I said, let me just try it. I said, hi, good morning. And Jeevan said, hey, what's up? And she put the hand out. That's why I thought I've already done it. Let's do it again. But interesting day ahead, guys.
And guys, it's only telling, right? I think the timing is so right that we are here looking at the reality of AI, and that's been the biggest discussion point across the world this year. And actually, Prashant, I'll hand it back to you for the top cues. And look at that. That's exactly what's driving markets. Wall Street fell last night. All of Asia, by the way, is down. Exactly because of that AI debate, whether it's getting a little excessive. Over to you.
Shireen is going to be here in just a bit, and we'll sort of get her into the chat as well. She's speaking with, by the way, the OpenAI person who's here at the event. And that absolutely, Surabhi, as you said, that is the central focal point, because this is a market which is driven by AI at the exclusion of everything else, right? So let's just take it from the top. I think we should, for our viewers, get them what they need to know in terms of the trade setup as well. So here you go, right? US equities, a bad and a poor session. The S&P 500 down about 1.5%, NASDAQ down about nearly 2%. So, Nigel, you had a 2% sell-off on Tuesday. Wednesday, there was a bit of a recovery. And last night, once again, same kind of vibes. Not really great in terms of what we've seen, right? So the WIX jumped about, 11%. 10-year yield lost about 7 basis points. We're at about 4%. And this is classic risk-off. Led by a couple of things. Of course, technology is a big part of it. NVIDIA was down 3.5%. But so were Meta, Amazon, which was down 3%. Palantir was down about 7%. So Michael Burry, with his short positions on NVIDIA and Palantir, already in the money. I think, of course, we don't know what price he's bought those puts at, but I guess he's in the money. Weakness on the back of renewed capex and return on investment concerns. Remember, you had this crazy thing, which was basically this OpenAI person essentially saying that we are looking for government financing. That was interpreted by markets to say, well, are they really asking for government backstop for all the investments which AI companies are making? And I think that sparked a bit of a sell-off. This morning, there are some comments which have come through from Sam Altman, and I'm sure Surabhi will refer to them as we go along. He's kind of saying, well, we're not looking for a backup, we're not looking for a fallout or bailout, but we're looking for, of course, financing for government-led programs. There was also, of course, a challenger job cuts, which data on job cuts, which got the attention of markets, and that is kind of speaking to some weakness in the US economy as well. And on the back of all of it, you look at what's happened to the FOMC December pricing. It's ticked up to about 18 basis points. Market breadth, just to come to India, yesterday was a poor day, by the way. We were down about 70, 80 points, but just look at the market breadth. It was smashed, and mid-caps, popular mid-cap, small-cap stocks, a long list of names which are down between 8, 10%. And where does it leave us, right? I mean, crunching fall yesterday. Nifty's closed under the 20-day moving average. And now you've got to look at the September top. Remember, you had a September stop, a sharp sell-off, and then a rally from the lows of September all the way high. So the September top is 25,448, which, by the way, becomes the support. And for the Nifty Bank, it's not yet broken the 20-day, but it's not very far away either. And here the number is about 57,486. So that's the a trade setup and the overall way to look at things, and of course some levels there as well. On the positioning side, futures and options and that side, how's it looking, Nigel?
Well, Prashant, as you said, yesterday was absolute risk-off for our markets itself. So you look at the headline index, you'll see you'll be down 100 points or thereabouts on the Nifty. The problem was in the broader market. So breadth of the market was smashed. The bears felt on top out there. And the Nifty has been making lower lows and lower highs as well, which is a bit of an issue. And the Nifty Bank, it's very, very close now to that 20-day MA. So today, in that sense, is a make or break day. Global markets in a bit of a tizzy, and the bulls will want to fight back from the days of lows of the day. So we'll have to keep an eye out on that. One okay factor is actually the India VIX. That's not yet run away. It's still holding at around that 12-odd handle. And we've corrected close to 600 points in the recent peak. I'll keep an eye out on that. You don't want the VIX, to spike up and get out of whack. So that's one point out there. The FIs continue to sell. Close to 3,000 crores of selling is what we saw yesterday. And in terms of FI net short positioning, from the start of the series, it's moved up by close to around 40,000 contracts or thereabouts. Yesterday, actually, there was some unwinding of long positions. The clients on the flip side, well, they are totally opposite, diametrically opposite. They have added long positions. So FI is net short, the clients are net long on the index. Moving to the PCR, well, the Nifty PCR went down up to around 0.95. That's come back down to around 0.77. Remember, at around 0.65 odd is when you see some kind of basing out. Two strikes were very active, and they should come up for you on the screen. 25,600 call, good amount of open risk built up out there. But one important point was the 25,400 put, you got the direction right because the Nifty was lower, but the premium in fact came down, telling you there is some writing at those levels. So in terms of levels that I'm looking at, because there was writing out there, around the 25,375, 25,425, that's a crucial support where you'll want to protect on a closing basis today. And on the upside, I think the 25,700, 25,800 mark will be a bit of a resistance zone. The Nifty Bank 20 DMA, normally the first test of the 20 DMA, does see some kind of defense, so we'll keep an eye out on that. And finally, two sectors I'm going to be looking at because of the finance minister's comments yesterday. One is the capital marketplace, because they said, no, we don't want to get rid of the F&O market. So that's point number one. Capital market stocks could be in focus, and PSU consolidation could be a relative very, very soon. So PSU banking names as well. Two sectors that I'll be keeping on my radar.
By the way, Nigel, on that not BSE, but on that options thing, right? I will play the soundbite out in just a bit, but it kind of sort of, she didn't refer to, the finance minister did not refer to weekly options per se, but she essentially said that we're not here to crush options, the options market, the futures and options market. We want to regulate it.
Indeed.
Our story, last story was that, the thinking at Sebi has perhaps changed a little bit.
Yes.
They were going really hard after options and they wanted to sort of get rid of the weekly options product. That seems not to be the case. So, I mean, maybe if you want to read a little too much into what the finance minister said, because she didn't say it.
She didn't say it.
I think directionally it looks like maybe there will be regulation, perhaps some guardrails, but it won't be done away with. So we'll see.
I think so. We'll have the Sebi chief as well later today, so that conversation becomes even more interesting. But I tell you what, guys, we're tossing it back to you all in the studio. I believe y'all have a guest with y'all.
Yeah, we do. And before we get to that, just to close out the point that Prashant was making, and just to clarify this, and this whole US tech sell-off and Asia tech sell-off this morning, this was the OpenAI CFO, Sarah Fryer. She was speaking at a Wall Street Journal event yesterday where she made the larger point that if the government does guarantee loans that are taken by companies like OpenAI to build out AI infrastructure. It'll lower their cost of funds. So I think she was speaking from wearing her CFO's hat from a very technical perspective or financial perspective. But the market interpreted this as, is the tech industry asking for some kind of a bailout, which is what Sam Altman has denied this morning. I mean, he's put out the post saying that we do not have or want government guarantees for OpenAI data centers. We believe that governments should not pick winners or losers and that taxpayers should not bail out companies that make bad business decisions or otherwise lose in the market. So just, closing the loop on that one. Sam Altman saying we don't need a bailout, but that didn't stop stocks from falling, Mangalam.
That doesn't stop stocks from falling. Yeah. So that's exactly what we'll probably discuss with Prashant Parora, who joins us this morning as well. Prashant, good morning. The way the sell-off has taken place overnight on Wall Street, in fact, over the last 2 or 3 trading sessions, do you think that the AI excesses are now coming to roost and people are perhaps recalibrating their estimates here, and maybe we can see some bit of sell-off from here on before people actually find out what the reality is?
Yes, this is just a digestion phase, I would say. People are kind of, AI stocks have been the only story this year so far globally. And I think people are recalibrating whether some of these stocks have kind of run up too far ahead. And this is a digestion phase, I think, for a lot of the AI names.
Yeah, but it's not that the fundamentals of the market are fairly strong as well when I come to the US, because the job cuts for October as well, nearly 1.54 lakh, which is a surge from September and the highest that we've seen in the last 22 years. How do you look at that then?
Yes, so it is a pretty much K-shaped economy that we're seeing. So obviously the infrastructure spend on the AI side continues, but job growth hasn't been great over the last few months. And the government has also shut down. We'll see if they open it up. There are talks that they'll probably try to open it up tomorrow. But the idea is that once the government opens up, we might get better sort of some data coming through and maybe a little bit of a Santa rally towards the end of the year. But all depends on how quickly we open the government up.
Yeah, I know. And that wait has gotten longer and longer. I think this is probably going to be the second month, if things continue at this rate, that we don't even get a jobs report. And so the Fed has just been second guessing through it all. With respect to their policy as well. Prashant, good to be speaking with you today. How are you finding India now? The valuations here and the hectic deal action, all the IPOs in this market, and how are you finding things?
So India, the primary market continues to be very strong, and domestic liquidity is there, even though FIIs have not warmed up much to the market this year. I think India, if you look globally, continues to be, earnings growth story is without any sort of AI kicker. So I feel globally, as people kind of digest the AI trade, maybe there will be some flows coming back to India. So India could be the non-consensus AI when AI earnings sort of roll over trade. And that might still take some time for FIIs to come back.
And just as we speak, we get another comment coming in, this one from Donald Trump, saying that the trade deal with India is fairly on, as India's decided to stop buying a lot of oil from Russia. PM Modi wants me to come to India. We'll figure that out. PM Modi is a great man, and I will be going to India. So Donald Trump perhaps coming to India, the trade deal in the works as well. That should sound music to the ears of all those who are looking to deploy some money in India. Prashant, secondary markets or primary markets? Because primary markets, the valuations in a lot of these offerings, even though the businesses are solid, strong, brands are fairly well recognized, the value that's left on the table is practically very little. So how do you then deploy money into India? Via primary markets, via secondary markets? You look at some of the fallen names. What would your allocation be?
Yeah, so we've been very selective ourselves when looking at the primary market. I think some of these, and as you see, even even the valuations are a little bit high, and sort of the earnings, the first day pop that you used to see in the IPO back in 2024, that's also kind of dissipated a bit. So we think the secondary market is still like the way to play. There's still companies growing earnings at a decent clip. And, a lot of these new age companies, they take time to digest to the public market. And, we'll probably wait for some of these to roll over in the next year to pick them up over the next year, so, such.
Okay. All right, Prashant, we'll leave it on that note. Good to have you with us today and good to get that perspective. Thank you so much for joining in. We look forward to more conversations soon. Well, with that, let's quickly move on and tell you what else is lined up on the show. It's a power pack lineup, as always, and there's plenty coming up, including, of course, a lot of the earnings that came in after market hours. So here's what we're looking at. At 8:35, we are going to have a special discussion coming up from our Global Leadership Summit with Sridhar Sivaraman of Enam Holdings. He'll talk markets. At 9 a.m., we'll have the management of Narayana Health to talk about the acquisition of the Practice Plus Group. That's a recent acquisition that the company has done. At 9:20, we have Devina Mehra joining in from First Global. She's our market master of the day. At 9:30 a.m., the management of Apollo Hospitals joins in to talk about second quarter earnings. At 9:35, Lata gets chatting with Tuhin Kant Pandey, the Sebi chief on capital markets from the Global Leadership Summit. Following that, Siva Chitur of Sai Life Sciences will be chatting with us at around 10 o'clock to decode the company's second quarter performance. And towards the end of the show, we have a special market panel lined up with a whole host of experts from the sidelines of the Global Leadership Summit. So stay tuned. It's a power pack lineup, and we're getting just started over here.
Earlier there. But just to sort of, for our viewers who are just tuning in, this is the Global Leadership Summit, the marquee biggest event that CNBC-TV18 conducts. And of course, the focal point, in a way, is what's happening at the intersection of technology and finance. AI, we'll get Jeevan back on. Jeevan is the humanoid robot who started this program. And, that I think is the key talking point here. So lots of top-end speakers across a range of industries, and of course, regulators, corporates here in India, market participants. So it's a full-day packed lineup that we're going to get to you. It kicks off, of course, with Sebi Chairman Tuhin Kant Pandey at 9:30, but we're right here taking you through the market action. Take a quick commercial break here. We are back. Our research team on the other side with the top 10 stocks.
Welcome back. You're watching us here on Bazaar Morning Call. Well, it's been a tough evening on Wall Street yesterday, and also this morning we have the Asian markets which are seeing a bit of a sell-off after closing around 25,500 for the Nifty. The GIFT Nifty indicates a discount at open as well. But a lot of individual stocks on our radar. So we're looking at the numbers that came in post-market, and our team is here with us. Let's start with Apollo Hospitals. Vinny joins in with those numbers. Vinny.
Hi, good morning. So Apollo Hospitals, good set of numbers that's coming from the company. We're expecting green on the stock today. Net profit up 25%. Good growth in terms of revenue of around 13%. Margin seeing an improvement as well, 14.9% versus 14.6%. So 30 basis point improvement there. The hospital revenue, that grew by around 9%. But there was some bit of an impact that came in of seasonality. And obviously, there was the Bangladesh impact as well that comes in, right? Because in terms of lesser patients coming in from Bangladesh. So occupancy was lower because of that. It came in at 69% for the hospital business versus around 73% last time. So despite all of this, the company has managed to see good growth. The pharmacy business has done well. The diagnostic business has seen a very good growth. All the other businesses have seen a good growth. So that is why we're expecting green here.
All right, expecting green here. In fact, we also have the management of Apollo Hospitals joining us here at 9:30 a.m. on their second quarter earnings. Sunitha Reddy joins in. You want to stay in for that conversation. But we go back to Vinny. You are looking at Lupin and Mankind Pharma as well.
Yes, looking at Lupin and Mankind Pharma. Now, both these pharma companies reported their numbers. Lupin, again, a good set of numbers that's come in from this counter as well. Beat on all fronts. Revenue growth of around 25%. We're seeing profit growth of around 73% as well. Improvement in terms of margins. Look at the margins. Very, very sharp improvement, right? 33% versus 23% approximately last year. And this is despite that R&D spends growing by 14% as well on a year-on-year basis. Now, what has led to the margin expansion? Possibly because of the product mix change that comes in the US side of the business. That includes Myra Bagron, a full year or a full quarter, I beg your pardon, of Tolvaptan, which is an exclusivity that they have. So that benefit surely is coming in terms of revenue as well as in terms of leading to the margin improvement as well. Strong growth in the emerging markets as well as developed markets also is leading to a good growth and better margins for the company. So green there. Now, Mankind Pharma, largely in line set of numbers that's coming from the company. Profit seeing a decline of around 21%. Revenue, just a growth of 20% there. And margins at 24.9% versus 27%. So a contraction in terms of margins. Though the company in the con call highlighted that, obviously they're going to be paying off most of the debt that they have. They've already reduced the debt position to 4,791 crore in Q2 FY26. They've guided to pay off 2,000 crores by the end of FY26 as well. They've guided for a lower EBITDA in terms of the guidance that they have, 25 to 26%. They said that they would achieve that in the lower end of the EBITDA guidance. So EBITDA margins 25 to 26% range, lower in there, and maintained its guidance at 18 to 20% for the growth in the BSV sales for FY26. Keep an eye out on Mankind. We could see a bit of a red coming in on the screen here.
Okay, so Mankind, maybe a little bit of red. Got it, Vinny. We'll keep that in mind. On to Gaurav now. He's looking at numbers from Bajaj Housing Finance. How are they adding up, Gaurav?
Well, as when we look at the numbers, they actually did well. In fact, as management quoted, it was a stable quarter for them, 24% AUM growth on a year-on-year basis. And apart from that, when we look at net interest income, that increased almost by 34%. We saw more than 20% growth in PPOP, and at the same time, profit that increased almost by 18% on a year-on-year basis. But apart from that, what remains key is that the net interest margins, they remain stable on a quarter-on-quarter basis at around 4%. And credit costs, that inched up just by 2 basis points to 0.18%. Remember, they have given a credit cost guidance of 15 to 20 basis points, so in line with their guidance. But at the same time, what is cautious is that their commentary, they are constantly suggesting that there is heightened competition in pricing, and specifically from the PSUs. In fact, they also said that the portfolio attrition that has increased from 15 to 16% to 21 to 22% in this year. Apart from that, they have also guided for net interest margins to decline almost by 15 to 20 basis points, and the reason being that heightened competition, and second, they are expecting rate cut as well. They are also saying that the net interest income is largely going to remain in line in FY26 versus FY25. So definitely, on the back of the cautious commentary, we are going with yellow today with this stock.
Oh, 15 basis points decline in margin. That's a pretty clear call-out, Mangalam, there by the company. Absolutely clear about what they see ahead.
Yep. Will be very interesting to see where that stock goes from here on as well. But Vinny's back with us. She's tracking a whole host of sectors today, ABB and Cummins. Vinny.
Hi, yes, ABB and Cummins, both these cap good companies reported the numbers. Now, ABB, we are expecting red here. Why? Because revenue, yes, that came in slightly better than what one was expecting, but margins and profits were in line. Now, the concern comes in on order inflows, right? Order inflows were a bit muted. Margin pressure also came in. Look at the numbers. Revenue growth, 14%. Margins, they're seeing a contraction there, 15.1% versus 18.5%. So almost a 300 basis point contraction in terms of margins. Profits of the company also have seen a reduction by 7%. And obviously seems like there's some pricing pressure that is continuing in the LT motor space. Subcontract charges are up by 50% and profit mainly impacted by the increase and rising material cost due to revenue mix change as well as dependency that comes in terms of import, given that there were some quality control compliances that have come into play. So that is some bit of an impact that we're seeing there. Order inflows also have seen a reduction by 3% on a year-on-year basis. So that's why we're expecting a bit of a red for ABB. Cummins, on the other hand, strong set of numbers reported by the company. Revenue growth is around 26% on a year-on-year basis. So that is mainly strong revenue growth, but one saw in the domestic business as well as the export business. Export business, has managed to stay at that 500 crore mark and above that level in the last few quarters. So that is interesting. Margins at 22.24% are the highest levels that we've seen coming in since Q4 FY24. So very good margins also that we're seeing coming in for the company. Actually, much more than that also. So positive numbers for Cummins, and we could expect green here.
All right. Positive number for Cummins coming in as well. Amber and Upasna joins in. Upasna, how do those numbers look?
Well, overall, it's been a weak set of numbers. It's a miss across the board. Now, revenue fell 2% versus the poll of 9% growth. This was mainly a drag due to muted performance from the company's RAC segment on account of GST-related delay and even the weather impact. Now, companies reported losses this quarter. This is due to lower RAC demand and even a slower electronic growth that the market was factoring in. Now, company's key segment, that is the consumer durable division, forming 53% of the mix, saw a muted performance. The consumer durable revenue was down about 18% on a YoY basis, and margins also under pressure, down about 120 basis points at 3.7%. Coming to company's electronic division, it reported a lower growth than anticipated, as mentioned earlier, with a revenue uptick of 30% and margin down about 190 basis points at 5.8%. Now, overall, if we look at the numbers, the revenue saw a decline of 2% on a YoY basis. EBITDA saw a decline of 20%. EBITDA margin under pressure overall, with a downtick of 120 basis points. All the three segments, margins are under pressure. And lastly, company has reported a loss of 33 crores versus a profit of 19 crore. So going with the red with this one.
Okay, so not such a great quarter for Amber Enterprises. Got it, Upasana. Thank you. Let's head across to Sudarshan, because today we're watching out for some large blocks, perhaps in Bharti Airtel and even in Time Techno. Sudarshan, is it?
So for Bharti Airtel, there is a block deal and Time Technoplast has launched QIP. So first talk about Bharti Airtel, Sectoral, which holds stake through its financial arm that is known as Pastel. As of September, the stake was around 8.5%. Now we understand from the sources that Sectoral is looking to sell around 0.8% stake, and that block deal is expected to happen tomorrow. And the value of that block deal is seen as 10,300 crore rupees, and the price is pitched 2,030 per share, which is a discount of around 3% to the current market price. Last time Sectoral sold stake was in May of 2025. That time the price was around 1,814 per share, and since then Bharti Airtel share price has jumped almost 16%. I'm going with green mainly because there are several other reasons for Bharti Airtel tariff. There are some reports about the tariff hike is expected, and also the stock has been on the uptrend. So I'm going with green on Bharti. For Time Technoplast also going with the green. Company has announced the QIP. As per sources, it's looking to raise up to rupees 800 crore, and dilution can be up to almost 9% equity, and indicative price is seen at around 209 per share, which is a discount of 3% to current market price.
Okay, all right, got it. Thanks very much for keeping those stocks on our radar as well. So let's head across to Yash. He's watching out for LIC. How are the numbers, Yash?
Well, Surabhi, so the expectation from the street was muted. the street was anticipating a degrowth when it comes to numbers. Now, two things. One thing hasn't changed and one thing has changed. What has changed is that the numbers have been much better than what the street was anticipating. What hasn't changed is that the numbers still are degrowing on a year-on-year basis. To speak about the specific numbers, new business premium, that again is a beat against CNBC TV18 poll, growing at 9%. Total AP is a beat to CNBC TV18 poll, but of course contracting by 1%, retail AP contracting by 11%. Despite that, as I said, beat to CNBC TV18 poll. VNB, beat to CNBC TV18 poll, growing at 9%. Now, most importantly, the second reason why I'm going with green on LIC, that's because margin has come with a strong beat to CNBC TV18 poll, as well as they've grown by 100 basis points on a year-on-year basis, coming in at about 19%.
Okay. All right, Yash, thanks very much for that. Let's quickly recap our list of top stocks to watch. The ones that have positive news flow today are Apollo Hospitals, LIC, Lupin, Cummins, Bharti Airtel, and Time Techno. Stocks with negative news flow or slightly disappointing earnings would be Mankind Pharma, ABB India, and Amber Enterprises. Mixed views coming through on Bajaj Housing Finance. Okay, well, we'll take a break on that note. But on the other side, we head back to the GLS event, the big venue over there. Sridhar Sivaraman of ENAM will join in.
One. Done. Well, of the day, I think. So Prashant, a little bit of fun. Got a few at least. I was lucky to get a few actually.
Nigel उसको बोलते हैं क्या साम धाम दंड भेद. I think good reflexes.
Yeah, I mean, others are pretty good at that. Maybe in the morning a little bit rusty, but there's a market to look at and there's lots to talk about because of the way markets are panning out. And we'll try to do a few games during the course of the day as well.
I think I can see one more right there, which we will do as the
We'll give it a crack.
But right behind us, guys, if you're just joining us, we're coming to you from the Global Leadership Summit venue here in BKC. And this is just a sampling of, I mean, not everything we do at CNBC-TV18, but a portion of what we do, just a slice of what we do. And I think if you go back a little bit, you can see, I mean, shows, properties. I mean, some of these properties have been running for over 2 decades. Young Turks is an example, and many more. I mean, of course, newer properties like CNBC-TV18 Prime, which basically aims to give you a global perspective for the Indian audience, which I think, at least in the business arena, is sorely missing. And I think it kind of captures some of it. And this is just sort of, one area of this Global Leadership Summit where we are standing right now. And there's a lot more. It's a big one. As I was saying earlier, Nigel, this is like, maybe it's not exactly, you can't say like to like, but this is like the Davos of Indian business events. And you will hear really top-notch speakers, thought leaders coming here through the course of the day. We kick off, of course, with the Sebi chairman, Tuhin Kanta Pandey, and go on all the way through the course of the day. We got somebody from OpenAI.
Yes.
And I think that'll be an interesting conversation with everything which has been happening.
Well, that's right. All the big properties of CNBC-TV18 and some behind-the-scenes action as well that you can see on your screen. But I think it's a good time. Let's get another colleague,
Let's get a colleague in, and let's get someone who's been in the markets a long time. Actually, we've all sort of, in a way, grown up together. We've Sridhar Sivaram, who's with us. Sridhar, hi.
Yeah, hi.
Great
Thanks
to have
for
you with us
inviting
here.
me.
And
Good morning.
Morning.
So, I mean, great you could make it.
Yeah, thanks for inviting me. It's a great event. Looks fabulous.
And it's tradition because Sridhar was here right around this time last year as well.
Very
right?
much.
So how's it going, Sridhar? And yesterday, and just to get to the markets conversation a little bit, right? Bit of a crunching fall, especially popular mid-cap, small caps really getting sold hard.
Prashant, it's tough to predict on a day-to-day what is happening. There's so many events happening on a daily basis. I think this is the point we've been making that, earnings have to come for the markets. And our own view is that the next financial year, the earnings will rebound. This year, we are seeing choppy earnings. Maybe some of them are in line, some of them are not. And we were just discussing that even the ones which are in line, if you look at the absolute number for financials or banks, what are their growths? 8%, 9%, 10%. Do we invest in India for 8, 10% growth? Obviously not. So I think that's the challenge, that, we are coming off a very high base and there is a reset that is happening. We are very optimistic that next year will be...
the reset is ending, or is it still... It's going to go on for a while.
If I just take a minute, I think what has happened is we've had a very low, inflation, which has resulted in very low nominal GDP. And we've discussed this in the past, and I've been trying to highlight that our inflations are going to be very low. That has resulted low nominal GDP. I think the government also has realized, RBI has realized, the GST cuts. We are seeing a lot of FDI coming in because the government and Reserve Bank realizes that you need capital for growth. And Reserve Bank is cutting interest rates. I think we'll get another 25 to 50 basis points of rate cut. This is all part of the government stimulus to get growth back. And we need a little bit of inflation. We'll get the lowest inflation for the October. We'll get the number in a few days. It'll be below 1%. That's not the type of inflation you want for an economy which is growing. I think there's been a reset. The government thinking has changed. But it's time for it to play out, which is why we are confident that the next year will be good because government has done whatever they could from their standpoint. This will result in more consumption. The focus on investments was a bit too much. Less focus on consumption. I think that has flipped, and I think that will make a big difference for the economy.
You spoke about FDI coming up, and the big sector beneficiary was financials.
Exactly.
4 or 5 large deals in the financial sector. How are you going to place this space? Large cap banks or the mid and small cap banks?
No, so I think it will be a combination of both. In a falling interest rate scenario, NBFCs benefit a lot because their cost of funds go down. But the sheer
that some of the private banks are getting.
Of course,
RBL Bank was
of course, but you know,
blockbuster
a lot of them are impaired banks. A lot of them have their own set of challenges. So these capital will come, but it'll take time for them to get repaired.
This is all growth capital,
so
right?
It is growth capital, but they also have issues with the bank. So it's not like they are the cleanest of the clean. But it is great that this capital has come because this gives them opportunity to clean the balance sheet and to grow. Which is required from an economy standpoint. So I think that's the interesting space. We are invested in some of the small banks, the larger banks we like. NBFC is the space. But we also think that we could see lower interest for longer.
Sure.
I mean, that's the key, that we could see maybe 25, 50 basis points rate cut. But I don't see the rate cycle reversing in a hurry because our inflation trajectory is looking extremely good.
Nigel, before you take a question, I just want to pivot to the next booth, which I think is, which we want to showcase, because this is, as I was saying there earlier, we have so many new properties, and CNBC-TV18 Access, as the name suggests, is aimed at providing high quality access to our subscribers.
Sure.
Right, and I think it's something which we are building out. It's new, but I think it's got traction, and this is a premium membership from CNBC-TV18. So access to events like this, by the way, Global Leadership Summit. So subscribers are all here of the Access sort of property, and of course it involves a lot of interactions with, I mean, senior people across industry, if they so desire. So
I'm happy I have access.
You always have access.
Lovely. Sridhar, since just to close the loop with regard to the banking and the financial space, yesterday we had comments coming in from the finance minister on PSU consolidation as well. What's your view on that space? And if I look at the banking pack, yes, there have been a lot of fund infusion that's come into a couple of financial institutions as well as of banks. But SBI, the big PSU there has been actually the biggest outperformer in the last 2 months or so. So what's your view on the PSU banking pack? And if there is a consolidation, would you be interested?
So we are already playing the PSU packs. We've been long on PSUs for many years. We've been champions of that since almost late 2020. And they have done really well. So if you actually see the numbers, they have actually done extremely well in terms of, not only the NPAs, their loan growth. Obviously, a lot of that has played out. A large part of the consolidation has also happened. Now, what we are talking of is there are 4 or 5 smaller banks which will get consolidated. I'm not very sure it will make a material difference as far as the PSU banks are concerned, unless they plan to merge 2 large banks into one, which I'm not sure, because it takes a lot to get that done. But we remain positive broadly on the PSU space also, but selectively, not all of them, but we do have a few.
All right, 2 big cues that I was looking at, for the month of November itself in the near term, and hopefully by the end of this calendar year, we get a trade deal that comes about. What's the probability out there? We have Mr. Trump sound bites coming in on a day-to-day basis. No breakthrough as yet, but directionally it seems that's on the cards. And on domestically, the Bihar elections, do you think the outcome changes sentiment a little bit?
On either of them, the outcome is very difficult to predict. I think the Trump is even more difficult to predict than the Bihar elections. At least we have an exit poll. Trump, only one person knows, which is only him, right? So he decides, and he can change it the next day after he confirms. Like he gave an interview yesterday that he had positive talks with our Prime Minister. But I think it should get resolved because I think their own inflation will start to inch up, and his own popularity ratings are going down. So I'm positive that there'll be some trade deal. Hopefully we'll get the extra 25% off, and for the first 25%, if we can negotiate it downwards, that will be a great thing for India. Which is why I said that we're positive for the next year, because a lot of this noise will get resolved over the next 3 to 6 months.
On Bihar, Nigel, I just, as an aside, earlier back in the day, we used to get calls, right, from people in the market. Now, of course, I mean, also because information is so decentralized, right? Access has become, not this access, access has become so easy now. But you used to get calls, what kya lagta hai? Election mein hawa kis taraf chal rahi hai? But I think people have been, I guess, because, I mean, the BJP and the incumbent has been such a juggernaut, right, in terms of election after election. I mean, that level of, that uncertainty around elections has kind of gone down a little bit.
Also, I don't think Bihar will make so much of a difference.
Yeah, that's the point.
The larger state would have made a bigger difference. Bihar, I'm not very sure it could move.
I see, around UP, for example.
Yes, exactly. There is a big difference. I agree.
Sridhar, you spoke about some of the so-called tailwinds for the sector in the next year. But the very near term, the big concern has been the supply of paper. earnings season is getting over, and I'm getting a sense that nearly 50-60,000 crores of paper is lined up to hit the market. Is that going to cap the upside in the very near term?
I think it's already capping the market, right? Because if you see what is happening is that the secondary market stocks are not doing as well.
Yeah.
There's a chase for primary market, and if you look at a lot of stocks, you have similar stocks in the in the secondary market which people are not looking at. Wanting to pay much higher
premium
for a company which is coming in for IPO. But that's how always markets are, right? We've seen many IPO booms in the past. This is nothing new. So we don't have that FOMO feeling, fortunately. So if we like, we participate. If we don't, we are happy to, stay and watch from the sidelines.
By the way, IPO sometimes यही लेके आते हैं. The day after day, blocks and
QIPs and promoters.
I'll tell you what, gentlemen, Sridhar, we thank you for joining in, and I just hope that the next few days we hear from Mr. Trump that things are resolved, and thank you for your attention. let's
Keep
hope.
my fingers crossed.
But thanks a lot.
Thank you guys for inviting.
I'll tell you what, guys,
Thank
we
you,
slip
Sridhar.
into a
Thank you.
short break. You come back, we'll continue a lot more market talk. Don't go anywhere.
Welcome back. About 10 minutes to go before trade kicks off. And the cues across Asia, as we've been telling you, are fairly muted thanks to that sell-off on Wall Street. Let's pull up the implied open. The Nifty anyway has been struggling last couple of sessions, and even yesterday we ended practically at the lows of the day. And the suggestion is that this zone may get challenged once again, the lower side of the current trading zone, 130 points lower, at least as of now. Siddharth Khemka is with us now to take a couple of questions. Stocks. Siddharth, we want to discuss, banks, especially public sector banks, given what the finance minister has said. We'll just play out that soundbite in a second. But before I get to that, let's discuss some of the key earnings that came in overnight. Apollo Hospitals, do you think the numbers merit a further re-rating? I mean, a fresh entry at this point or not? There's Cummins, which I think really stood out. And Amber was a big disappointment. So what do? Do you buy the dip? Stay away? What's the advice?
Hi, good morning. I think if you look at the PSU banks, I think 2-3 factors are playing in favor of them. Definitely the what the promoters, which is the government, plans to do consolidation, increase the limit for FDI investments to 49%. I think those are very positive steps. What is also important is that the key business, that is growth, credit growth, that is picking up. NIM compression is done with, and valuation-wise, they are pretty comfortable compared to the private peers. So we see a lot of room for upside potential over the next 2-3 quarters in PSU banks. We like SBI, PNB, Canara Bank, Union Bank. These are some of our preferred picks. Coming to the results, yes, I think Apollo Hospitals came out with decent set of numbers, improved hospital performance, led to an earnings beat. Overall, what we see is that across segment this quarter, we were expecting strong numbers from hospitals all across. So that is being delivered by most of them. We see the hospital EBITDA grew about 8%, occupancy at about 70-odd%. And so I think Apollo, the key trigger going forward would be the corporate action that they are looking at. That could be the key trigger going forward. So we continue to remain positive on Apollo Hospital. But I think if you look at the finer details, the higher growth, our top choice in the hospitals would be Max Healthcare. That would be our preferred pick within the hospital space.
All right, Siddharth, I just wanted your thoughts a little on some of these consumer durable names, because if you look at the way Voltas fell yesterday, we also saw Whirlpool and a lot of the others not do particularly well because the conference call was on. The summers were obviously impacted, the summer sales, because of early monsoons. Thereafter, then there was the GST-related transition. And the winters also impacted because monsoons continue into October as well. Typically, that second wind of sales that happen in October heat, that hasn't been the case. And now the street believes that maybe there would be La Nina after El Nino, which means that the winters will be a lot colder. What does that do to the inventory at the dealers and, sales coming in for all these air conditioner makers?
Definitely, Mangalam. I think if you look at, there was a hope of recovery in growth, especially for the ACs and some of the consumer durable companies in Q3 because of the festive season, because of the rate cut. However, what looks like this time also there are weather disruptions, monsoon, or you can see rainfall across the country in October, late October, November, early November as well. And then you have the early onset of the winter seasons. I think it is pretty tough for them going to be in Q3 as well. Q2 we saw because of monsoons numbers becoming weak, especially for the AC companies. The outlook for the Q3 is also not that strong. So I think it's looks like the sector, specifically the AC segment, that could remain under pressure for some more time.
Okay, got that point. Bharti, Airtel, and actually even Vodafone Idea for that matter, Siddharth, because so much is going on. Today we're expecting a block in Bharti. Maybe some pressure comes in, at least initially, on the stock because of that. But otherwise, it's very clear the government will probably explore all kinds of options to revive Vodafone Idea now. How do you find either this one or Bharti? Again, I'm asking from the point of view of any fresh entry in either of these stocks at this point, if at all.
Yes, Surabhi, I think Bharti is something which we are very positive on. I think the block will give only an opportunity for long-term investors to buy at lower levels. So even Q2 numbers, pretty strong Q2 results across segments. Margins saw improvement. We believe that both the India Wireless as well as the home business, that continues to do well. The stake sale that they've done in Bharti stake in the Indus Tower, that they are planning to increase stake, and with the resolution that the Supreme Court has allowed for the Vodafone. I think a direct beneficiary of that would be Indus Tower, where Bharti has a large stake. Plus, the Africa business has also started to doing well. So all across segments, pretty strong numbers. I think this is not a fundamental event. This is a technical event where the promoters are selling at a discount. So definitely, I will suggest buy. We have a target price of 2,350. So we see a good 10-15% upside from current levels.
All right, 10-15% upside from the current levels. Thanks a lot for that. Grow IPO, do you have a view?
So, Grow, we are the merchant bankers, so I will not have any view on that.
Take that point. Thank you so much for joining in, Sid. We'll take a short break, come back on the other side. We'll come back with the pre-opening rates. Also with us will be our technical experts, Mitesh and Siddharth. Welcome back. The pre-open has just come about, the early rates. Nothing really to write home about. It's 40-point downtick on the Nifty, much different from what the GIFT Nifty was indicating. So we'll obviously wait for these rates to settle. So there are some interesting moves which are taking place right now as well. SBI Life, straight off the bat, up 10%. Obviously no volume, so we'll let that settle as well. So a lot of these moves out of the whack. More importantly, we'll watch out for comments coming in from the Sebi chair, Tuhin Kanta Pandey, in the Global Leadership Summit, which is currently underway. But let's also get in before that all the technical trades of today. We have Mitesh Thakkar as well as Siddharth Rai Mangla joining in. Mitesh, good morning. On the index, we've seen a sharp fall, almost 650 points from the top. Where does support come in? And at some point, do you think it turns?
Good morning, Mangalam. So, when we were close to 26,100 odd zones, which was also the earlier all-time highs, I was looking for a pullback to about 25,600, and I was hoping that we will not break below that. And yesterday we've done that. So I think this decline could possibly extend a little bit more. The next support area which I'm looking at for the Nifty is around 25,400 to about 25,350. And in case we start seeing a break below that, then I think the correction will get deeper, possibly to about levels of 25,000. So I think maybe around 25,400, 350 is where I would want to see some kind of a reversal, a bounce back, and some turn on the upside for indicators. But for the time, that's the level which I'm watching.
Okay. Got that. Gentlemen, hi, good morning. Siddharth, let me bring you in as well. You know, from the base, I think the market rallied almost 1,400, 1,500 points, right? From the lows of around 24,600. So from the top, we've given up about 500 odd points now. So where does it leave things, and what's your call specifically for the day?
Hi, Surabhi. Good morning, and thank you for having me, first of all. See, Surabhi, if we talk about Nifty, my view has been quite the same, quite consistent over the last 3-4 sessions, that it's much better to stay with the trend for now, because since we came down below 25,800, that was a big, breakdown. We've not really seen a sustainable bounce back or an attempt to recovery in Nifty. So it was much better to look for opportunities to sell in the short term. Now, definitely, Surabhi, since we're also expecting a negative opening today, I do think that finally Nifty will be able to find some refuge in the 25,400, 25,350 region. That will be acting as a short-term support for the next some period. So finally, I do think that this sharp sell-off that we've seen in the last 1 week will be taking a breather in this region. So it won't be a good idea to take fresh short positions now. The risk rewards will not be very, attractive. We can definitely start looking for opportunities to buy in case of a negative opening today. And if we open, negatively around 25,450, 25,400, that range, we have to look for opportunities to buy in case Nifty comes back above 25,500 and then sustains for some time. Then we can definitely see a short covering towards that big 25,650, 25,700 level. So after all this sharp fall, we can now finally start looking for opportunities to buy. But if there's a recovery above 25,500 in case of a negative opening.
Right. Mitesh, I'd like your thoughts on the Nifty Bank before you talk about your individual stocks, because while the Nifty is broken below the 20-day moving average, the Nifty Bank is still there. So the street has some hope that maybe the Nifty Bank, which was earlier outperforming, will lead from the front once again. So do you have a view here and your individual stocks for today?
Well, I think the Nifty Bank, one, as you rightly pointed out, and we've also been saying this, that it will outperform the Nifty. And while a pullback looks very likely over there as well, I think we might see the Nifty Bank either head towards 57,250 or maybe around 57,000. So we're not actually very far away. If you look from a percentage point of view, maybe it's 1% more from here. But that's the idea. So I think, if it breaks 57,250, I think we might even see 57,000. But again, my expectation is that from those levels, we should bounce back. On the stock side, I have a couple of sell calls and one buy call. On the buying side is Dabur, that had a good continuation signal on the upside yesterday. So buy here with a stop at about 517.9 for targets of 535. Couple of sell calls and Indian Hotels, I think, was a STVT yesterday as well. I think a big price and volume breakdown happened over there. So keep a stop at about 720, look for targets of 665. Similar action happened on the charts of Blue Star, I believe, on the event of results. Had a very negative price and volume action. So sell with a stop at about 1845, 1850 and a target of 1700 could happen over here. And a sell on BEL with a stop at about 413 for targets of 400.
Okay. By the way, just look out for the stock reaction on Amber. In the pre-open, stocks down 10%. The growth was hardly 2%, well below expectations, margin compressed by over 100 basis points, and the company's reported a loss this quarter. So watch for this. Let's see if this settles. But right now, Amber's down 10% in the pre-open. Okay, let's get to the picks as well. Siddharth, which are the stocks you'd go with? And throw in a word on Amber in case you track it. Any levels to watch today?
Yeah, sure, Surabhi. Let's talk about Amber first of all. See, we have seen a very sharp correction. We have already been seeing a sharp correction for the past 1 week from the 86,100 levels to already it was around 7,800 levels. So there's the weakness did start around the last before 1 week. So now since the stock has come below 80-200 mark, the momentum is clearly negative. In case of a negative opening, the support for today will be around the 7,000 mark, that big mark. But the structure has completely been distorted in the last 1 week. So now we should be kind of avoiding this stock.
All right. Thanks a lot for that. But your individual stocks, I think, are pending, right?
Yeah, definitely, Mangalam. See, I have 2 stock picks for today, and interestingly, both are buy calls. First one is from the FMCG space, and the stock's name is Tata Consumers. See, Mangalam, we've seen a lot of volatility around the stocks, the results of this company over the last 2 sessions, but very nicely, the stock has managed to bounce back from its lows, even from the lows of around 1140. Now it's trading around 1190 just in the last 2 sessions. So I do think that we'll be able to go past the 1200 mark, and then a fresh momentum will be coming in this counter. So Tata Consumers can be bought. Right now the spot is trading around 1190. It can be bought here. The stop loss will be at 1175, and our targets being the first target 1225, second target 1240. The second stock is Mahindra and Mahindra. See, the stock has shown a lot of resilience over the past few sessions. Even after, a lot of weakness in the index, we have seen this counter being, acting very strongly. In fact, even now the stock has come above 3600 mark, which was a very big mark for the stock. So M&M can also be bought. Right now the spot was trading around the last time or so. The spot was trading around, let me just check.
3615.
Yes, the spot is trading around 3615, right? We can buy it here. The stock, and our targets being the first target 3670, the second target being 3695. Yeah.
All right, we take that point. Thanks a lot, Sid and Mitesh, for joining in. Let's go back to the Global Leadership Summit, where Prashant and Nigel are in conversation with Parag Thakur. Nigel. I think it's one of those games.
Oopsie. All right, I think we'll get to that. I'll get back to the game in just a bit and try to do a little bit better. But plenty of games. We have a booth out here. We've got a markets though to deal with. So going to hop across to Prashant. Prashant, well, I tried my luck yet again. And there are a couple of booths as well.
It's GLS,
yeah,
right?
GLS. So you try to move across.
Did you reach which curve? Which part of the curve did you reach? No, I think you started with S.
It's just at the start because it got a little bit too noisy. So I said, let's get back to the market action then, since we're almost into market.
Absolutely. How much time, right? 6 minutes to go
yes,
for market to open. The pre-open is ended, as Surabhi and Mangalam are telling us. Let's actually welcome in Parag Thakur now, right? And to the conversation. Parag, hi. Come in. Please, right at the center.
Welcome, Parag.
All the best.
Yeah, please. So Parag, of course, has been with us for a long time, and you is a regular face on CNBC-TV18. Markets, Parag, a little wobbly, a little shaky.
Yeah, I think because of the last Fed meeting, where Powell said that December rate cut is not a given thing. After that, you have seen some bit of jitterness amongst FIIs, and FII selling has increased. They have shorted more. But I would like to say to FIIs one clear message. That was the largest banker of India, SBI, tells you with a 44 lakh crore loan book that my credit cost is below 50 bips. I am increasing my credit growth guidance from 12 to 13 to 12 to 14%.
Yeah.
Okay, and the $100 billion market cap is just the beginning of the story. Stock is trading at just 7.5 PE and 1.1 times price to book. And they are inching up towards 1.3% ROA. And they have already said that Q2 is the bottom of the margin. So NIMs and ROA are all going to expand. And so you have a subsidiary value unlocking.
Yeah, and SBI, I remember 2021 or so is when the re-rating, that big re-rating started.
When Mr. Khara was there.
Exactly. For about 2 years, it completely re-rated. You think, and then it's taken a break.
Yeah.
Then the second leg starts.
No, I think Indian, based on whatever I'm hearing on ground in terms of Indian economy, after this, whatever steps government and RBI has taken in terms of GST cut or in terms of interest rate cuts of 100 bips, and to start with, whatever developments they have said, government and RBI has delivered, I think they'll go, you'll have to give some time. So I think next 18 months, I am extremely positive on Indian economy and anything which is facing India business. For example, if you see results also Q2, starting from Reliance, L&T's order book, 6.67 lakh crores, right? SBI upping its credit growth guidance. Right. All banks, SBI, ICICI, HDFC, reporting credit cost at 50 bips only. Many banks like Axis, saying that now their credit card and personal loan portfolio will also pick up, and it has stabilized in terms of NPAs. So I would say that core economy is recovering significantly.
Yeah.
Some of my small portfolios, small cap stocks, like yesterday, 2 companies reported out of my portfolio, Minda Corp and Flair, both reported excellent numbers.
Right.
So I would say that companies are doing their best. Government and RBI has done their best. Now time will tell.
You know, Nigel, before just today, by the way, Piramal, I remember this because you have a view on Piramal, right?
Yeah,
Parag?
yeah.
I
We have it in
recall,
our
and
portfolio.
Piramal Finance is listing today.
Listing today,
Yeah.
yes.
And we'll have the pictures come up a little later. 10 o'clock is the listing. Any thoughts quickly,
Yeah,
just to
I'm
wrap
very
up the
bullish.
financial point?
Very bullish on that company.
Okay.
Because I feel that Mr. Jairam and his team has done a wonderful job.
Yeah.
See, to bring down a legacy book from 43,000 crore to 6,000 crore without taking significant hits. And now the growth book is at 80,000 crore, which is going to compound at 25 to 30%. Right, and they have a huge operating leverage. Their cost to OPEX to asset ratio is going to decline significantly. That will give a big push to their ROA. So here is a company where your ROA is going to expand significantly by around 1%, and your loan book is going to grow at 25-30%. So you'll have a double.
I saw Parag saying that you said double or 3 times. Or something.
So basically, just based on numbers, if the credit quality does not worsen, and if the economy behaves well, then you are clearly seeing a PAT of 4,000 crores in next 3 years.
All right, Parag, very quickly, we've spoken about the banks and financial space. Give us 2 more stocks from the broader markets, very quickly.
No, so basically, as I told you, yesterday my 2 companies reported numbers because that is very fresh in my memory.
Minda and Flair.
Yeah, both reported excellent numbers. You see, Minda reported 19% revenue growth, 19% EBITDA growth. Flair reported 30% growth in PAT. So I would say that, all companies actually, I would say, all decent, good companies in their own segments are doing their best.
Okay.
And government and RBI.
So we have Minda, we have Flair, SBI, L&T and Reliance, as well as Piramal Finance. Those are some of the top.
By the way, Parag, Reliance, right? I mean, yesterday there was that report, Bloomberg report,
about the IPO.
ascribing a value to Jio.
Yeah.
Right? So
$170 billion.
So, I mean, say for example, filing happens in January or whenever it happens. What's the play here? You buy, Reliance
100%.
straightforward?
100%, yeah, straight away. Because see, the higher the value Jio and the retail gets, the holdco discount, whatever market describes, which I don't fully agree to, but market describes, then also Reliance will look attractive.
Yesterday,
and first, don't forget Q3, Reliance retail can do very well. Q2 already they did 16% EBITDA growth.
Right, got it, Parag. I'll tell you what, I think we're getting into market opening, but we appreciate you joining and we'll keep having a chat during the course of the day. Guys, tossing it back to you all in the studio.
Yep.
Thanks for that. Thanks, Nigel. So what we have is an opening, which is probably going to be 75 points lower. It's actually better than what the implied open was indicating, because that was an over 100-point cut. Bharti Airtel is going to be in focus as we look at details of that block. It's down about 2.5%. In terms of the sharpest result reactions, like I said, Amber. Pre-open is finished. Amber is still down 10%, so that's a stock to keep an eye on. Mankind Pharma reacting slightly negatively to the numbers. But then on the upside, you have names like Linde India, Aarti Industries, Cummins, some green there because of the earnings report card. Okay, we're off, almost ready, 5 seconds to go. Lower start, but will the bulls buy the dip? That's the question. Okay, so it's about 80 points down as we speak. In terms of weakness, beyond Bharti Airtel, which obviously is in focus because of the large trade, what else is driving the market down today? Okay, there's Tata Consumer weak, there's Lever, which is a little lower. HDFC Bank is about 0.5% down as we start things off. Some tech names like HCL Tech, Wipro, even TCS for that matter, all on the lower side. So tech is down, Bharti is down 3.5%, and some FMCG is down. On the upside, it's actually all pharma. Apollo Hospitals after numbers 1% higher. Some green on Sun Pharma. But Mangalam, that's it. I mean, actually, it's a pretty overwhelming negative screen for the Nifty. If we pull up the heat map now, and now it's a 130-point cut, actually, in line with the implied open. So, yeah, apart from pharma, not much on the positive side.
Not much on the positive side. The only positive you can take is that perhaps the Nifty Bank is not falling as much as the frontline index, but it's still, for whatever it's worth, below the 20-day moving average. On the way down, apart from Bharti Airtel, we do have Amber Ent, which is down 10%, straight off the blocks. In fact, temporary freeze on that stock. ABB India also, the ordering activity was weaker, the margins were lower, down 4%. MCX is seeing some bit of a sell-off, down around 4% on that counter as well. On the way up, Cummins is up 2%. Aarti Industries, decent numbers coming in. LIC as well, Yash told us, slightly better than what the street was anticipating. So that stock up around 1% in an otherwise wobbly market as well. And then we have some, stray gainers, the likes of Rajratan Wires, Paradeep Phosphates, and the others which, if you go down the volume curve, then you'll find a bunch of them. But it's largely a down market than an up market right now. If you look at, the advanced decline ratio as well. Nearly 1,500 stocks in the red for about 600 which are in the green right now. Lupin is picking some pace, Nykaa, Pidilite, all of them. So more defensive than anything else, but can't take away from the fact that we're now down around 150 points and it's only increasing on the way down from the time we opened. So the Bharti Airtel last trade has taken place. So let's see whether after the supply has taken place, the stock finds some buyers. So 3% lower on that one, 5.1 crore shares change hands via a block deal. What we understand is Singtel is the seller. A good time to welcome our market master for the day. Devina Mehra joins in. Devina, good morning. We've seen a decline from the top. You've been, speaking about how valuations were on the extreme. Earnings didn't come by. There was a fear of missing out when it came to some of these hype stocks, some of the IPOs, etc. as well. With the decline that we've seen already, do you think, some sense of normalcy is coming by, or do you see some more?
Actually, I never said that the market is overstretched or that earnings won't come through. So I think you're mixing me up with someone else. So I had always said that whatever is your equity allocation, remain invested. And actually, if you look at sector by sector, the PE multiples, even if you look at crude measure like that, are not at extreme ends. In many cases, they are even lower than the average for the last decade or so. So it's not been very stretched valuation. On earnings, my stance had been that in the second quarter, you would see an uptick. So, if I go back a quarter, that's what I was saying, because the consumption had been ticking up, and most important, inflation had come down. In some cases, even food product prices had come down, which created room in the householder basket to buy other things. So there were several positives. And GST, while overall is changes, that was overall a positive, but because of that, there was a disruption in the second quarter, in the July to September quarter. So once that was announced, my stance became that the earnings improvement you will see only in the third quarter because of the GST, right from FMCG to autos. It took some time for people to sort out what happens to pipeline inventory with the retailers, with dealers and so on. And also some consumers postponed purchases. So some of that improvement in earnings got pushed, but it is there. And now also I would say that, my stance remains unchanged. Don't put 100% in equity ever. Whatever is your equity allocation, I don't see the risk of a huge crash that you should sit out of the market. So that is very much still my stance. And
but now that we've gotten that dip, Devina,
we can discuss the IPO separately.
We'll discuss the IPOs in a bit. But just as your stance is unchanged, the market is off the highs. Do you believe that increase in allocation is important right now, as against going 100%? Maybe if you were, say, 50-60%, this dip must be bought. If yes, then how would you distribute that allocation across sectors?
It is not much of a dip from the top. If you look at it, it's just that the market is not decisively taken out its all-time high. That's a different matter. But as I said, never have 100% in equity, because equity returns are never predictable for 6 months, even 2 years. So equity, you should have only what you can forget about for the next 8-10 years. So if you think you will need to withdraw something next year, then equity is not the place to be. Yeah. And if I go back to my February interviews, because I did a number of interviews when my book came out, and all of them I'm saying the same thing, that if you were waiting for a correction to buy, have you bought? And February we ended at 22,100 for the Nifty. So it's you know how much it's up since then. Of course, market as a whole, it has been, while the market move has become a bit wider than what it was extremely narrow up to August end, where you had only 10% of the stocks outperforming the index, but now it's a little broader. At that time, it was something like 40% of the stocks were down more than 25%. Now that's 20%. But still the advanced decline ratio keeps varying day to day. It's still not great, but it has been improving from where it was. So market was extremely narrow till a couple of months ago.
No, absolutely. And Devina, your stance on asset allocation and being very well hedged, diversified, not just across asset classes, across global markets as well, that we know very, very well, absolutely. But I guess, for the equity market, about a month back, it was all guns blazing. We were supposed to get a deal with the US. We were supposed to get the FPIs back, and we were supposed to get earnings. Out of these three, I think two things are still iffy right now, the FPIs and the deal. Earnings, maybe we're kind of okay. But, more on that later. Let's talk about the hot subject in the room. And that's this red-hot IPO market. So, raging debate. I'm sure you've seen it on social media, maybe participated once in a while. And the thing is that the investment bankers are able to sell the issues. They're getting the anchor investors. I mean, Lenskart's anchor book was oversubscribed and well oversubscribed, actually. The overall issue was oversubscribed some 26 times, 27 times. So then who's to say when money does the talking? But just give us your sense if you've studied any of these companies. It's not a buy or sell recommendation or avoid or subscribe. But just generally, I mean, which are the companies and the business models that you're a little more optimistic on and where pricing seems at least a little sensible, if not cheap?
Actually, I wrote a column on that yesterday.
Oh,
in Mint.
okay.
So, yesterday's column on Mint was that whether you should go by the big names who have supposedly invested in an IPO or a stock to take it as the good housekeeping seal of approval. And the answer is no. I mean, if you look at the venture capitalists, for instance, they often buy at a fraction of the IPO price. Many times, in fact, most times the IPO is priced at 2, 3, 4 times the last fundraise. In Lenskart times, I think in case it is 8 times. So, and many times now IPOs have a considerable portion of offer for sale. So all those big names are getting out at the price that you're getting in. The anchor investors is another story. They are obviously buying at the same price that you are buying at the same time. But so why are they there? And I've been an investment banker and I know this firsthand. So the public part of the IPO is the allotment is a lottery. But for the anchor investors, as also for the qualified institutional placements, the QIPs, the investment banker has the discretion how much to allot. So if you look at it, there's you gave the example of Lenskart. So there like all the who's who of the fund industry are there, but how much are they investing? They're investing, 0.01 or in some cases 0.000 something of their AUM equity assets under management. So why are they?
But Devina, at the quoted price, I mean, I get it. It's probably pocket change for a lot of these large guys like Fidelity. But at that price.
So why are they doing it? So I've been an investment banker, as I said, so I know the story from the inside. So when it is a coveted issue, the funds will chase you and there'll be recriminations. Why didn't you allot me more?
Devina, just hang on. Sorry to interrupt, but we're just dipping in back to GLS. There you see the Sebi chairman walking in. He's going to be on the stage very, very soon. Shireen accompanying him as he makes his way to the stage. And so many questions for the Sebi chief, including what the finance minister said just yesterday, remember, at the SBI conclave, at the SBI event, where the finance minister did say that we're not looking to shut down the F&O market, so to speak. She was speaking in a broader context, but I'm very sure that question is going to go to Mr. Pandey on the public forum even today as to what is the regulator thinking about futures and options, which is a separate debate altogether. But Devina, coming back to the investment bankers and how they get people to write the checks for some of these issues that are priced at 200 times PE.
Yeah, so the point is this, that if you are not in the good books of the investment banker, you will not get allocation in a issue where you want to get allocation. So the investment banker can very easily arm twist you to kind of lend your name to an issue which you may not like. If you'd like the issue, probably you would have put in more. But you want to lend the name so that it gives credibility as far as the retail investor is concerned. And there is a quick...
Devina is revealing the dark secrets of the financial markets today, huh? We're treading on ice, so to speak. But anyway, I thank you for the candor. But just getting back to the recent issues, a lot of them are very well-known businesses, touch and feel businesses, which we as consumers know, whether it's Grow, whether it's Lenskart, whether it's Physicswala. What do you think of the quality of the business and the pricing?
So I have not studied all the issues, but broadly, when there is frenzy in the IPO market, it mostly does not make sense for the retail investors to get in because most issues tend to be overpriced. And if they're not overpriced and it's a good business, you're unlikely to get allocation. So both ways, it doesn't work out. If you look at, there was the last frenzy of these new age tech companies in 2021, around the same time, around October, November 2021. Most of them, let alone leaving aside the stock price also, most of them have not done that well on the business side. Many times the numbers peak just before the IPO. I mean, just giving a random example of Nykaa, I mean, all their peak numbers from margins to cash generation were at the IPO. At that time, the story was ki wait 3 to 5 years and you will see much better numbers. I mean, here we are 4 years later, the net profit margin has come down from 2.5% to 0.9%. And as I said, I'm just giving it as an example, not that it's the worst example, but I'm saying broadly, the company gets to peak numbers around the IPO and often it is downhill from there. Lenskart, if you see the earnings, a lot of it is not even operating income. A lot of the earnings are covered.
We take that point entirely, Devina. And, as journalists, we've been asking these questions of the management as well, whether they've left value on the table or not. What we want to understand is that now you've told us how, institutional investors go ahead and put in money because of the investment bankers, that kind of relationship that they have to maintain, so to say, to get access to better IPOs going forward. But then there are these HNIs and there are hallowed investors who are putting in money as well in the pre-IPO round. And amidst all of this, how is it that the retail, keeps its eyes and ears open and not get taken in by this FOMO sort of situation which is created? And this is not pertaining to just one IPO, but IPOs in general.
So FOMO is the worst reason why you should take any decision in the market, whether it is the IPO, whether it is the latest theme that did well, and maybe your friends are saying, I made so much money in this thing, whatever. I mean, if you go back over 2 years, there's been PSU, there's been small cap, there's been this, that, and you get in onto the bandwagon, usually at the wrong time. So FOMO is not the reason. The other thing to remember is that there is only one way to value a stock or a company, whether it's an already listed company or to be listed company. If anyone is trying to tell you that look at these other type of valuation parameters, they are trying to justify a valuation. They're not doing a valuation. So remember all of this, that I remember in the 21 frenzy also an anchor asked me, Devina, gun to your head, which one will you buy? And I said, I won't buy any. So that's the point. And if you look at the performance of all those listings, they haven't done anywhere close to what the market has done. And some have not even,
But it's a good conversation and a very interesting one, Devina. Usually our conversations are centered around what to buy. Today we discussed sometimes what not to buy. That could be a great call as well when it comes to your investments in the market. Thank you so much. Good conversation. We look forward to many more. You have a great Friday. Thanks for joining in. Well, with that, we have to get back to corporate conversations. As we do that, just a glance on the screen, and the market is still down 160 odd points, 25,343 on the Nifty. But let's talk about better things. And one of those better things definitely were numbers that came in from Apollo Hospitals. The numbers were a beat across most of the parameters, starting with the top line itself. In fact, it's been a fairly steady quarter for the company. We have Ms. Sunita Reddy, Managing Director at Apollo Hospitals, joining in to give us some more color. Ms. Reddy, always a pleasure to have you on with us. So I'm just quickly running through the numbers for our viewers' benefits. Your revenue is up about 13%. The margin has actually improved. It's been steady with an upward bias at almost 14.9%. And profits are up 25%. So let's break this down with the basic stats first. Occupancy levels, the RPOB, and the share of the higher value surgeries, the more complex surgeries, which are obviously margin accretive.
Yes. So if you were to focus on the hospital performance, it's been a good performance. We've seen a growth of 9%. Total revenues coming in at 3,169 crores and a EBITDA of 741 crores. So as you can see, 9% growth in revenue, 8% growth in in EBITDA and about 30% growth in profit. Profit coming in at 410 crores. What really contributed to this is that occupancy has moved up to 69% and our average revenue per patient. So we're actually moving beyond RPOB because we want people to know that if you get admitted in Apollo, that this is what it will cost, which is about 1.72 lakhs. So our ARPP has moved up by 9%. And the reason for the growth in ARPP is that our high-end surgeries have really grown. And the growth in the high-end surgeries is about 3%, 3.6%. And this has really contributed to, let me say, profitable growth because the EBITDA margin is also steady at 24.6%.
Right. Ms. Reddy, also, on the on two things I wanted your clarity. One, the international patient growth and contribution. I believe there were some issues with, people traveling in from Bangladesh, which were supposed to be ironed out. So where does that number stand at right now? You had a target of 7%, I suppose.
So currently we're at 5%. And, I think that this quarter we've seen patients coming back. In fact, in October, 60% of the patients have come back from Bangladesh. So we're quite optimistic about that region. But beyond just Bangladesh, we are looking at more like Iraq, Indonesia, Brunei, and the surrounding regions. Of course, Africa continues to be a major source of patients coming to India.
All right. And the other part was the hospitals who had decided against accepting cashless payments by some insurance companies. Have you, faced those issues? Where does that issue now stand, and what have been the discussions since?
So I think, we've had a good set of discussions. We have managed to close some of the insurance agreements, and this has worked out very well. I believe that both the insurance companies and the healthcare companies need to work together because they are part of a single value chain. So we've had good discussions, closed some contracts, especially in our new hospitals, which is in Pune and of course in Athena, which is a women's oncology center that we've started in Defense Colony.
And what would the clauses of those contracts be? No increase in RPOB? Would that be one of them?
You've seen our ARPP. I think that reveals that that we've done well.
Okay, Ms. Reddy, and I'm just moving to slightly wider industry level issues and something that we've been picking up from sources. Our colleague Yash has been reporting on these two separate issues. One, I believe there's been some discussion at an industry level with the central government on perhaps not regulating tariffs or how much hospitals charge, but perhaps holding back or rationalizing price hikes. Could you just set the record straight on that? Has there been any industry level conversation on this of not taking price hikes this year?
So there have been conversations with the insurance companies. And what we have always told them is that if you look at price hikes, the insurance companies are doing it once in 2 years instead of yearly. So when it happens, it looks very steep. So our request is let's do this yearly and to follow the same pattern of risk stratification. They had wanted a standardization of rates. We said that when you give out an insurance policy, you have risk stratification based on age, risk profile, geography, and pre-existing illnesses. So we said even the way that we price should take into account this risk stratification. And I think the conversations will have been good. We will continue to have these conversations. It will probably take some time before we're able to really close out.
But just to understand this, ma'am, I mean, in effect, does it mean that hospitals may not be taking the kind of price hikes that they've taken in the last couple of years?
No, I think that it'll be fair, it'll be inflation adjusted, and it'll be risk adjusted, which is the the same policy that insurance providers also use.
Got that.
Okay. The other thing I
think, I just want to add this one point. Sure. Because if you look at India, we're already at 1/10 of international cost. I think going cheaper will compromise quality, and that too, outcomes matter.
Yeah. So we're already at 1/10 the average international cost. Got that point. The other piece, which obviously has been doing the rounds a lot, is that post GST, what happens? And again, our understanding is that commissions have been going down as well. I mean, insurers and their commissions to their distributors. Is that impacting, hospitals in any way? I mean, is there any linkage there? If there are lesser, commissions, or is that only an insurer and their distributor issue?
I think it's an insurer and distributor issue.
Okay.
And I think, insurance, our payer mix with insurance has improved by 4%. So clearly it is not a hospital issue.
All right. So let's talk about the hospital issue itself. Then, your health and lifestyle businesses. The street was working with what, a 15% growth and a 9% margin here. What's the prognosis?
So Apollo Health and Lifestyle has grown by 17%, 474 crores of revenue. In that, I think the focus has now shifted to diagnostics, 183 crores of revenue and a 36% growth, and improvement in the margin to 10%. So, Apollo Health and Lifestyle, as you know, has many verticals, and some of them are really CapEx heavy. So what we're doing is really restructuring. We will focus on restructuring Apollo Health and Lifestyle this quarter, and with a very strong focus on diagnostics and clinics, because it was meant to really serve primary healthcare and to really spread out in the community. So currently we already have 2,333 touch points.
What I actually wanted to know is that the street was working with a number of 15% growth and 9% margins. You've done 17% growth and closer to 11% margins. So will you up your targets here?
Yes, of course. I think in the diagnostics, certainly we will, and so will the clinics.
And what would those numbers be, according to you, the targets for the next couple of years and this year?
No, I think 20% let's talk about this, because you ask me next quarter. Let's talk about 20% growth in the business next quarter.
All right. And what about, beds coming on stream? You do have a bunch of them. In fact, you have four hospitals and 500 beds which open over the next couple of quarters.
Yes, more than 500 beds. I think we're opening 1,600 beds in the next 1 year. And, we've already started with Pune. We've opened Defence Colony with 50 beds. What will happen in the rest of the year is that we'll open Bangalore with another 170 beds in January. Moving on, we will open Gachibowli by the end of this year, and that is another 350 beds. So Gurgaon will start in the beginning of the next year, which is 450 beds. Then we have Kolkata with 220 beds opening by the end of the year. So totally about 1,600 beds will open in the next 12 to 14 months. And this will really enable growth.
Take that point. Thanks a lot, ma'am, for joining in and decoding that business for us. In fact, we know that you're going to the airport right now to take a flight and come to the Global Leadership Summit. And as you do that, in fact, we'll get you some visuals from the Global Leadership Summit itself while we see you in the evening. Also listen in to what Tuhin Kantapande of Sebi has to say.
The world looks east because leadership now speaks with a new voice. India. Powering progress, scaling impact, and shaping tomorrow. From a single spark grows a force of life, rising with potential. A story that embodies India's unwavering spirit of growth. Technology takes root. Innovation branches out. Industry. Infrastructure and ambition bloom together. space missions. India leads not by imitation, but by imagination. This is the India advantage. Welcome to CNBC-TV18's Global Leadership Summit 2025.
Please welcome your hosts for the event, Shruti Mishra and Arundhati Ramanan.
Good morning and welcome to the CNBC-TV18 Global Leadership Summit 2025, presented by HSBC India and powered by Google, in association with ITC, WeWork India, Embassy REIT and Reliance Industries Limited. We're delighted to have you with us here in Mumbai and across our broadcast and digital platforms.
This is the second edition of the CNBC-TV18 Global Leadership Summit, and what a year it's been. India's economy is posting 7.8% growth in the first quarter of FY26, while global conditions remain muted. The country remains one of the strongest among major economies. Capital markets are breaking records. Digital infrastructure is extending to nearly 1 billion users. Space, defense, innovation, everywhere you look, the momentum is real.
And today we are calling it the India Advantage. And over the next several hours, you'll hear from the people shaping it, policymakers, CEOs, investors, innovators, and the leaders making the decisions that determine where the India goes next.
And before we move ahead, we want to ask you to share your thoughts and pictures from the summit on social media using hashtag CNBC-TV18 Global Leadership and hashtag CNBC-TV18 GLS. Now, to open the stage for this conversation, here's someone who's been documenting India's economic transformation for over 2 decades, the voice that has chronicled this country's transformation in real time. Ladies and gentlemen, please welcome Shireen Bhan, Managing Editor, CNBC-TV18.
Good morning, ladies and gentlemen. On behalf of the entire team at CNBC-TV18, I would like to extend a very warm welcome to each and every one of you, not just for being here this morning, but for reposing your trust and your faith in us day after day. So thank you to each and every one of you. To borrow from the legendary Warren Buffett, it is your support, your feedback and encouragement that help us tap dance to work every single morning. So big applause to all of you here at the Global Leadership Summit and those of you who are joining us on TV and online. I'd also like to thank the Sebi chief, Mr. Tuin Kantapande, for agreeing to open the Global Leadership Summit. We couldn't have asked for a more powerful start, so thank you very much to the Sebi chief for joining us here this morning. Ladies and gentlemen, this summit is significant for many reasons. It marks CNBC-TV18's 26th anniversary of being India's most trusted, most influential, and most loved business news brand. For 26 years, we have been the undisputed leader in business news, and we continue our outperformance. Today, we've extended our dominance beyond television. CNBC-TV18 is now India's largest business news brand online, with almost 5 million subscribers on YouTube, another 2.5 million on Twitter, 2.2 million on Facebook, and almost 1 million on Instagram. Ladies and gentlemen, we honor our legacy by building on the future. 2025 is also a big year for us as we've launched a brand new offering, CNBC-TV18 Access, a members-only platform that gives you access to the best content and experiences, from masterclasses to webinars to an opportunity to be at events like this one. So big welcome to the CNBC-TV18 Access members. Thank you very much for joining us here and for being part of the CNBC-TV18 community. We also relaunched CNBC TV18 Prime, our channel that gives you the advantage of CNBC's global network. From Wall Street to Asia, from Europe to the Middle East, we cover the global markets like no one else. And these offerings are an affirmation of our continued effort to stay true to our purpose of providing you, our viewers, the most credible, actionable insights to make smart life choices. Only those who will risk going too far can possibly find out how far one can go. T.S. Eliot's words were never meant to describe GDP growth or market capitalization, but yet today they capture perfectly the spirit of India in 2025. A nation poised at the edge of ambition, ready to push beyond the comfort zone and discover how far it can truly go. The backdrop for the second edition of the Global Leadership Summit couldn't be clearer. In a volatile world, India's economy is stable, with a GDP growth of 7.8% in the first quarter of FY26, marking a five-quarter high, fueled by resilient services, a manufacturing rebound, and sustained government investment. India is poised to become the world's third-largest economy by 2030, with a $7.3 trillion GDP. Now, these numbers only begin to illustrate the scale and depth of the opportunity that lies ahead. This summit is designed to hold the entire canvas to capture India's pulse in real time, from space and defense innovation to sport, digital economies, from infrastructure to sustainability. So if you miss any part of the day today, you miss a key piece of India's narrative unfolding on the global stage. Before we dive into the summit, I want to take a moment to thank HSBC India, our presenting partner, Embassy, our co-presenting partner, powered by partner Google and associate partners ITC, WeWork India, Embassy REIT and Reliance Industries. We couldn't have made this happen without your support. Thank you so much to each and every one of you for bringing this platform to life. I'd also like to thank our speakers and panelists from markets and policy to technology, space and defense, and the creative sectors. Thank you for making time for us today and being part of the Global Leadership Summit. We look forward to your insights and shared vision. And to everyone joining us here in Mumbai and across CNBC TV18 and our digital platforms, thank you for your trust. In an era of constant information, trust is our most valuable currency. As the seminal victory of the women's cricket team has shown us, to win matters, but to win with passion, courage, grace, dignity, and resilience makes the victory truly historic. So we have an opportunity to lead with the clarity of purpose, a commitment to shared prosperity, and an unshakable resolve to create a more equitable future. In a world fraught with uncertainty, Peter Drucker's words ring true. The best way to predict the future is to invent it. So here's to invention, innovation, and enterprise. Here's to building the future that we want. Welcome once again, ladies and gentlemen, to the CNBC TV18 Global Leadership Summit 2025. Together, let's explore how far the India advantage can truly go. Thank you very much, and I hope you have a wonderful morning. Thank you very much.
Thank you, Shireen, for setting the stage. We now move to our first session, and it's fitting that we begin with a conversation about India's capital markets because they are central to the growth story we'll be exploring over the course of the day.
These markets have been transforming rapidly. Record investor participation, significant regulatory reforms, and growing global interest. But with that growth comes important questions about resilience, governance, and sustaining this momentum while protecting investors.
And to share his perspective on opportunities and challenges in India's capital markets, we're joined by the person who leads India's market regulator, Tuhin Kanta Pandey, chairperson of the Securities and Exchange Board of India. Ladies and gentlemen, please welcome him with a huge round of applause.
distinguished guests, leaders from industry, esteemed partners from global markets, entrepreneurs, ladies and gentlemen, a very good morning to you all. It's a pleasure to join you today to reflect on the evolving role of India's capital market. The theme of the India advantage is timely in this period of an uneven global environment. In an era marked by heightened trade uncertainty, geopolitical fault lines, and sudden policy shifts, the Indian economy continues to demonstrate remarkable economic growth, resilience, and stability. Our capital market is not just a barometer of the economy. It's a key pillar of our economic growth and central to our aspirations of a Viksit Bharat. Today, I want to outline some key opportunities and challenges in different segments of India's capital market. The health of our primary market remains robust. In FY25, 4.6 trillion rupees was raised through the equity market. In current financial year, the equity market has already raised 2 trillion rupees. Unique investors have crossed 135 million, up from just 38 million in FY19, indicating their confidence in our markets. However, our investor survey shows that while 63% households are aware of security products, only 9.5% have invested yet. Moreover, 80% households remain risk-averse, reflecting the fear of loss. Therein lies our opportunity and our challenge. There is a deep well of domestic capital waiting to be deployed, and I urge the industry to take advantage of this opportunity. Raise capital, create value for all stakeholders, and help define our economic future. On our part, we have and will continue to streamline the capital raising process. The IPO listing and rights issue timelines have been shortened. The recent proposals for scale-based approach in minimum public offer size and calibrated MPS timelines, consistent with market absorption capacity and liquidity, will enable and encourage more listings. The governance framework for MIIs has been strengthened, ensuring that public interest is given first priority. Derivatives play a vital role in price discovery and risk management. We have taken several measures in a phased manner to address some of the challenges posed by this segment. Going forward, our approach will continue to be data-oriented, calibrated, and consultative. The block deal window has been reviewed comprehensively, with changes made to price bands and to the minimum order size. We are also committed to introduce closing auction framework soon, aligned with other global jurisdictions, but suitably designed for our requirements. We are focused on deepening our cash equities market to spur capital formation. An active securities lending and borrowing scheme is critical for improving price discovery and facilitating interlinkage between the cash and derivative segments. From a borrower's perspective, it facilitates the settlement of securities sold short, while lenders can earn a fee on their idle securities. The framework for short selling was introduced in 2007 and has remained unchanged since then. Further, the securities lending and borrowing mechanism was introduced in 2008 and modified a few times subsequently. However, this segment remains significantly underdeveloped as compared to other jurisdictions. We will soon form a working group to comprehensively review short selling and the SLBM frameworks. The mutual fund industry AUM now exceeds 75 trillion rupees. Monthly SIP flows of over 250 billion rupees show that awareness about disciplined savings and long-term investing is taking deeper roots among Indian households. Yet, Sebi's investor survey underlines that despite high awareness of mutual fund products, which is about 53% households, their penetration remains low at 6.7%. The AUM of mutual funds is still less than 25% of our GDP, where they are over 80% of GDP in many advanced economies. Huge opportunity lies in deepening this penetration. Moreover, financial inclusion will remain incomplete unless women are equally represented. Towards this end, we have revised the incentive structure for distributors to onboard first-time women investors and new investors from beyond the top 30 cities. The challenge lies in ensuring that there is no mis-selling. Mutual funds must be products that retail investors can trust. We have worked with AMFI to strengthen the monitoring mechanism for mis-selling and misconduct by distributors. Corporate bonds outstandings have increased with a CAGR of over 12% from 17.5 trillion rupees at the end of FY 2015 to about 54 trillion rupees as of September 2025. During the current financial year, around 5 trillion rupees worth of bond issuances have already taken place. Several initiatives have been made to develop corporate bond market further, such as mandatory electronic book provider platform for debt issuance of 20 crore or more, reduction of minimum face value to enable access to retail through online bond platform providers, and liquidity window to provide option to exit before maturity. However, much needs to be done to deepen the market and improve secondary trading and liquidity, especially in the area of retail investor awareness about the debt market, which is much less than what is there in the equity market. Municipal bond market as well as market for green, blue, yellow, social, sustainability-linked bonds have been enabled through regulations. They are still at a nascent stage though, but have a potential to take off. This brings me to one of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as Sebi's survey points out. Our response has been on multiple fronts. We have launched a dedicated awareness campaign, Sebi versus Scam. We are actively monitoring social media for misleading content, with more than 1 lakh such items being escalated for taking down. Stock exchanges have been mandated to publish a regularly updated list of whitelisted broker apps on their websites. We have also recently launched the utilities of Valid UPI and Sebi Check, where investors can easily verify the authenticity of bank accounts or QR codes of Sebi intermediaries. This is one of our major initiatives to combat cyber frauds. Let me highlight some more data from our investor survey. 22% of aware non-investors intend to invest within the next year. 36% of investors possess high or moderate knowledge of the securities market. Urban participation at 15% is significantly higher than rural, which is at 6%. 37% of those surveyed are not aware of securities market products. 27% of non-investors don't know how to start investing. Our challenge is twofold. First, to bridge the gap between awareness and action. Potential investors are being held back by risk aversion, perceived complexity, and a lack of trust. Second, there is an opportunity to bring new investors into the fold of responsible investing. Sebi's investor campaigns going ahead will cover multiple formats: digital, multimedia, physical interaction, and multiple languages to build a new generation of informed, responsible investors. Our regulatory stance of optimum regulation is aligned towards making our markets future ready. We believe in smarter and forward-looking regulations. In the past few months, several reforms have been taken for ease of doing business with due regard to risk management. The comprehensive reviews of stockbroker and mutual fund regulations are underway. We are soon going to take up a similar comprehensive review exercise for LODR 2015 and settlement regulations. Ladies and gentlemen, Sebi's regulatory stance is clear. We are first and foremost the guardian of trust in our markets, but we are also a facilitator of capital formation, enabling both investors and enterprises to participate with confidence and with ease of doing business. Thank you. Jai Hind.
Thank you, sir, for setting the tone with such inspiring words. I would now request you to stay back on the stage for a special conversation with Lata Venkatesh from CNBC-TV18.
Thank you very much, Mr. Pandey. That was an extremely perceptive speech because some of the questions I prepared have already gotten answered. That clearly indicates a regulator who is ahead of the curve, who is able to answer questions of the market even before they are put to you. But, well, one subject you obviously didn't touch because the consultation paper is just out, and that is on the brokerage cap that has come along with the total expense ratio rules for the mutual funds. It is still in discussion stage, so we thought we would get some initial thoughts from you. There is some angst over the brokerage fee cap coming down from 12 to 2 basis points. You pointed out that 35% of the people surveyed are interested in markets. We think that the brokerages and their analyst community do a lot of work in educating. I mean, okay, GST cut has been announced. How does it impact FMCG companies? How does it impact car companies? Where should you invest? So, you know, if you cut it down, the fear is that the analyst community may shrink. So, are there any further thoughts? Is it open to discussion, or, you'll do away with the cap itself?
I think when we put out something on consultations, it's not with a view to just inform. Consultations mean actually sincere consultations where we put out certain facts and elicit responses from a variety of participants, market participants. we are actually basically reconciling. There's investors on one side, there is industry on the other. Jointly, they have to work together to develop the industry, which has already gone, your mutual funds have gone 3 times for the last 5 years. So therefore, what we really need is, we have to really expand this 130 million unique investors, doubling up in the next 5 years. Now, if you have that sort of thing, obviously you need to look at the investor's point of view, as much as we will also like to reconcile it with the industry point of view. There is a scale benefit, and how much of that scale benefit can come to investors. And so therefore, when we put out a consultation paper with certain facts, I think different participants do come back to us with their views and with rationale, and then we are able to look at it. This is not a decision, but this is certainly food for thought for everyone to comment on this. And this, to my mind, is a very good process. That means we don't really decide something sitting in our rooms just like that. We need to put it to wider public consultation, have wider views, and therefore the decisions that we take are not only there is a more buy-in, but also there is a better decisions that we are able to arrive.
No, fair point, sir. Actually, every word you say, resounds, even with a person like me. CNBC-TV18 has huge many rules if I have to invest in stocks. So I stick to mutual funds. And therefore, if you're bringing down the cost for me, it is to my advantage. I'm not denying that. But the other side, which we are, getting to learn from industry, is that if mutual funds are allowed to pay only 2 basis points, but there is no cap on an FPI or a private equity or a corporate, then when a mutual fund goes to the brokerage, he is lowest in the pecking order. The brokerage first does everybody else's, and it's possible that they actually get a raw deal. So you're of course coming to serve the investor, but it may not work like that, is one worry of both the broking community and the investor community. Would you want to add anything to that?
I've always said, the consultation paper is out, the people will be actually commenting and giving their different rationale on what we need to do, and we are very good listeners.
Okay. So can we reasonably assume that it will not be 2 basis, but something higher, something in between 2 and 12? Can we go with that hope?
I think let us not speculate. Okay. Let the things come out.
Okay. Then just a speculative doubt, if you please, or just an intellectual doubt. Why have a cap at all? If that's also a cost, like mutual fund pays a rent, it pays salaries, it's paying a brokerage. Why not include it in the management fee at all? Why give a cap? Very powerful, big mutual funds will probably get it even for 1 basis point. Somebody else gets it for 10, for 12, for 8. Is that even a consideration?
The cap is a cap. The ceiling is a ceiling. Okay. So it's not something that, people have to really pay for that.
Okay.
The only thing is right now we are discussing the cap, whether the cap is too low or a ceiling is too low. Okay. And there are 2 points of view. And let's see the cost structure, let's see the sell side research, if there is a problem, which will happen there. And we would take cognizance of different rationales to do that. Okay. I think the point is that in the overall situation, this is something which is, this particular point is, I think, probably creating a angst, as you said. But there are other points also, like giving far more transparency to investors, how the costs are split, and also bringing the taxes out of this, because otherwise, you would not know exactly how the tax structure is playing. So there are many important elements, and I think this cap is what you are referring to as a pain point from a section of industry.
Do you need a cap at all was the point that I was raising, because many countries don't have a cap. It's a cost which is included.
I would say that, there are many jurisdictions that we see, but it's very important that in the very development of our mutual industry has been made possible through a well-regulated structure. So what is the right kind of regulation depends upon the country and jurisdiction, its circumstances, its people, the way you are. So something which is happening in US is not simply replicable in
Yes,
India.
fair
In many respects, it won't work. And we have shown, like in case of DPI, for example, digital public infrastructure, how is it that India has really got to the top of the global
Fair point, sir.
ladder? Because we thought sui generis, and we developed that capacity, and we didn't just waited to copy.
Oh, no doubt about that. No doubt about that at all. We've got a very elite audience over here, and Nigel, my colleague, is waiting by. Nigel, Rhythm Desai has already told us, or at least we leaked, that he will have to question the Sebi chairman, so he has a question.
All right, Rhythm, over to you.
Thank you, sir, for your comments. Is there something that in particular worries you about the Indian capital markets? Something that may give you sleepless nights?
Sebi, you want to come in the center.
I think there is no meaning in worry. What means is an action. So there is no need of sleeplessness because that will spoil your next day.
Okay. Well, actually, on that point, Nigel, there was a worry from foreign investors, sir. This worry always comes when foreign investment or FPI flow lessens into India. You go around asking, and one of the big cribs they have is, you guys charge capital gains. I mean, that's uniformly coming from everybody who comes on the channel. They don't always say it on the channel, but they do tell us. Is there a thought that this could be impeding? I mean, now it is, the last 3 of the last 4 years we have seen outflows. So is that a thought?
First, that question is addressed to the government, not to me.
Certainly.
Because it's a revenue issue. The second, we also cannot have a correlation like the way you are drawing. Because this has been there for quite some time. And there was a time, when we had very heavy flows despite a so-called capital gains tax. The third, the way the FPI works is quite differently. It is basically a relative space. It is not an absolute space. You have your funds, you have a mobility, and you can really maximize your returns. You can in and out. And different jurisdiction. India is not the only one. We are not our world. The world is much bigger, and there are different jurisdictions. And people keep looking at different opportunities, the actions of the Fed Reserve. They also look at their profit opportunities. They look at PE ratios, relative PE ratios, and so on and so forth. All I can say is I have had massive amount of interaction with FPIs and foreign players, banks.
They told you the same thing?
FPIs, and not only in India, and every time, I get an opportunity, I talk to them and meet with them. And I have gone out and gone to US, I've gone to Paris, gone to UK, gone to Singapore, Hong Kong, and talked to each one, like every segment. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not. In fact, we are now much stronger in terms of our domestic flows as a counterfeit. 18% of individuals in India today own the 18% of NSE listed companies is owned by individuals today. And then you have domestic institutional investors. So the FPIs, in fact, are now a little bit of subordinate to the domestic
highly subordinate now, sir.
Domestic institutional investors. But they are very much there. See, you are only taking a flow.
Yeah.
But if you really look at it, it's still a $900 billion market cap that the FPIs hold in India.
true.
Right.
Nigel, I
right.
believe, okay.
Right. So Nigel, yeah, I was just listening to your opening comments as well, and it's heartening to see media and all the big names over here as well. We're developing an equity cult, and many years down the line, this will be the foundation. That being said, last evening we got comments coming in from the finance minister, and she said that the F&O market will not shut. Now, the street was reading it in various ways, but I wanted clarification on that front. Does it mean that weekly expiry continues for now?
Well, I think on this I've said, because I don't have to actually give a statement every second day. I just
it's
spoke
just that removing weekly, is it off the table?
I just spoke the other day. We are looking into a consultative database. We are, normally you would speak that you build the market, and if you have problems and imperfections, if you have distortions, we try and fix it. I mean, this is a normal thing, you have something happens in your body and all that. I mean, you don't really just, at the first instance, go and remove it surgically. I mean, this is something which you have to see, how do you take it, and therefore our approach will have to be necessarily calibrated, data-based, and see how the problems, distortions in the market can be taken care of. There are multiple solutions to a problem. There is no one solution to a problem.
Okay. Nigel, I believe Sridhar Shivram also had a question. We are running out of time so quickly.
Yeah.
Sridhar.
So my question is on buybacks. For some reason, Sebi has barred secondary market buyback. If you see in the US, almost $1 trillion of buybacks happen every year, and it's a great tool to stabilize the market during difficult times. I would urge Sebi to relook at open market, secondary market buybacks, given that the tender offer has become very complicated now because of the taxation rules. In the entire last year, we've had only one buyback. So I would urge Sebi to relook at the entire buyback ban. Thank you.
Can we have hopes that open market buyback will come?
I think we are open to all suggestions. We will examine.
Okay. Nigel? Okay, I believe we are running out of time, sir. So just very quickly, should we assume that the ban on weekly expiry is off the table?
Please don't try to put words in my mouth,
Okay,
I think. I have said, enough on this subject. And I think let it rest, because I think this is also not right for the media to, because we also need a certain stability of thought and stability of action. I know you have your own requirements, that you have to be newsy, you have to discover something which is very exceptional.
We are only looking for certainty, not news.
Yeah, but if you are looking for certainty, the certainty currently is that it's on and it is working. And next time, if we have to take any further steps, we will come out with a consultation paper, which you will get to see. I mean, Lata will be the first one to see that consultation paper. I'll ensure that.
So we'll get it on the website. Thank you for that. So just final question. Are there, what is the next step in Jane Street? And are you all still investigating? Are there likely to be more such high-frequency traders whom you will pick?
See, as a matter of our policy, we don't discuss individual cases in media. So my apologies.
Okay. Thank you, sir. Thank you very much for patiently taking all our questions and that of our guests. We're really grateful that you inaugurated our second Global Leadership Summit. Thank you, sir.
And of course, RBI's rate cuts will provide a durable bump to growth in markets. The question is, how will all of this resolve itself going forward? And that is what these four gentlemen will do, for you here on this very, very interesting panel. Gentlemen, once again, thanks very much, all of you. And we were just joking outside that Narayana, I think, said that I'm here to balance things a little bit. If Rhythm, who's the big bull on the equity analysis side, gets too excited, I think Narayana is here to temper some of that enthusiasm. So, Ashish Bhai, great to see you as well. Ashish Bhai, of course, heads the NSC. It's one of the largest companies now, and hopefully we'll see an IPO soon as well. But let me just stick with markets first up. Rhythm, where are we in terms of this cycle? Let's just place ourselves where we are.
See, first I have to acknowledge that Narayana has been dead right and I've been dead wrong. So we should get that right of the way. I think he was warning, if I remember correctly, first time last year in September, that things are getting tricky. And well, they did. So India has, and I think the Sebi chair made a very useful point about foreign investors who, unlike domestic investors, see things on a relative basis. China announced its first round of stimulus September last year, and that eventually proved to be India's peak relative to emerging markets, and we've had the worst year for India relative to EM in 30. So it's not been just another year. It's not visible in absolute share prices because the world is in a raging bull market. Markets like Korea up multiples of 10 percentage points in the last 12 months. So that's the extent to which India has underperformed. The proximate reasons are known to everyone. Growth slowed down. The starting point of relative valuations especially were very high. And we've seen both of these, I think, correct or inflect. The RBI started working on the growth cycle in February, and we have arrived at a situation where it seems to be in reflation mode with a view to increase CPI. So that should help nominal growth going forward. India's relative valuations have corrected a long way, and we're now actually at levels which we don't see very often. So India does look far more appealing as a market to foreign investors. And the final point is that in recent months, the focus of global tourist capital, the one that looks at short-term returns, has been on AI. And India does not really offer an AI trade. So ultimate trigger point for the return of the FPI will be if the AI trade starts fading. I think India will suddenly start looking very attractive. And the final thing is on the trade deal. While I don't think the trade deal with the US is that critical for India's macro, in the minds of short-term capital movers, it does seem to be an important thing, and hopefully later this month that trade deal happens, and that will again be another negative out of the way. So as I see the landscape, I think things look like they are about to turn for India on a relative basis. The risk, of course, remains that the world could wobble, and that could make it another tricky year for absolute returns, but I'm hoping that that risk doesn't pan out.
Well put. And that AI point that you made, Rhythm, right? ChatGPT, I think, came out in November of 2022. I think the opportunity size crystallized maybe in 2023, and it took off after that. Before that, 2021, 22, and maybe parts of 23, we used to say Nifty and the NASDAQ are so closely synced and they were the best performing markets in the world. And that broke, as you said, because maybe there's no AI trade. And but that's very, very stark in that sense. Narayana, come in here. What is your sense? Rhythm's view is gets better from here on a relative basis. Not a raging bull market or anything, but gets better relatively.
No, clearly on a relative basis, it gets much, much better from here because India has underperformed so much every other market in the world that it gets relatively better. The problem is on an absolute basis across the world because today every market in the world is very costly today. So how does the absolute markets behave from here is possibly we don't know. If you had asked me 1 year back, would US also correct? We maybe would have said US would correct, but that call went completely wrong. So I think the risk is something going wrong in US AI stocks, because if US is 60% of the global index, how do you expect India to go up when US is going down? So I think the challenge is US market. In India, what the Indian entrepreneurs, the Indian private equity firms, all they've done is they've ensured enough supply. So even if we get good SIP inflows, they have ensured that there's so much supply that the market just cannot go up easily. I mean, there is so much supply and there doesn't seem to be any end to the supply. So, I mean, although we have a very, very big investment team, all the time we are trying to see how to handle every day there's some block or the other. So most of our time is spent in analyzing whether we should buy this block or this, participate in this IPO or this QIP. That there doesn't seem to be any way the market can go up till this supply ends. And we're not able to see when the supply ends. If I can say, okay, it'll end, maybe it will not be there in December, so December markets can go up because supply doesn't happen in December seasonally. But otherwise, again, Jan to March, there'll be supply. So that's where the challenge is at this point of time. So we are in a situation where it's tough to argue that you can make big money. You can't make big money, but at least on a relative basis, the problems doesn't seem to exist at this point of time. But on an absolute basis, we don't know. But at any point of time, markets can correct. And I think, we look at a global guru like Warren Buffett. He has created the highest row of cash at this point of time ever. And, he's the only person who doesn't care what happens in the near term. He doesn't have any performance risk. He doesn't have any risk that anything can go wrong just because he's underperforming. So I think what he's doing suggests that there is enough risk of US markets correcting.
And that's the big risk to your mind, right?
Yeah, that is the biggest risk.
We have, by the way, as we were just saying, OpenAI on stage, I guess after this panel, or maybe after a panel after.
Yeah, I think, the risk is not AI doing badly. The risk is AI stocks doing badly. Yeah. It's like internet. Internet didn't do badly from 99 to 2010, but still internet stocks crashed between 99 and 2002.
There has been enough mainstream sell-side research which is now comparing and asking the question with a question mark at end, whether this is the 99 moment. And most of the answer to that in those reports is no, this is not. And this is why it's different. Point 1, 2, 3, 4.
They'll say this time is different.
But do you think, I mean, just to that point, this is something similar to, you've lived through that?
I don't think we can say with certainty. We are not part of it. All I'm saying is the sentiment, if you look at the kind of vendor financing which is happening, X supplies to Y, then say Y goes up, then X doesn't have money, X gets money from A then gets money from B. If you look at what is happening, it is very worrying. But do we know with certainty? I don't think we know.
But if AI has not helped India, why should it hurt India?
No, that is where 99 to 2001 did Indian markets go down? Yes, it did go down. So now maybe it will go down as everyone says it will outperform. Doesn't mean it doesn't need to go down because the world's biggest market is US. I don't think if US goes down 20%, any market in the world is going to go up.
And across ICICI funds, are you kind of sort of building some hedges?
Yeah, I think, there it is very simple. We recommend asset allocation and tell people to invest in not only in equity.
Correct.
We have succeeded much more than most people, but that's a risk that the investor is taking. Investor is too fond of equity. After 13 years of 12 years of continuous equity return, they like only equity.
Nilkant, come in here. And it's just the other part of the thing which Rhythm also mentioned is the US-India. Rhythm said, well, it's not that crucial. I remember speaking with you immediately after that, those tariffs, etc., were imposed. And I remember what you said. You said, well, the longer they last, I mean, it'll start to show up more and more. I mean, a quick resolution is, of course, is the best thing, but that's obviously not happening. It doesn't look like it's in the immediate horizon. How do you think about that? And weigh in on markets as well.
Yeah, so that, I agree with Rhythm that it is not important for India's macro. It is important for FII sentiment on India. Remember that the whole world is obsessed with tariffs right now, so it does affect sentiment. And if you're sitting in London or New York and you're reading some of these Western business press and you see that India has 50% tariffs and, it is struggling. I think the sentiment around India sours. The view on India among foreign investors that I see is not just neutral, that there is no AI, it's actually negative, that India is an AI loser, that Taiwan and Korea are AI winners because they have Samsung and SK Hynix and TSMC and they are beneficiaries of this boom in AI. And India is not just no player, but actually Indian IT and all of the GCCs, etc., will suffer, which I think is very, very myopic. I think it's absolutely disagree with that. And therefore, whenever this AI bubble turns, while I'm completely in agreement with Naren that as the US market from 200% market cap to GDP starts to normalize, that no equity market will be left untouched. But I do think that the roll forward gains in earnings are now starting. So for almost 3 quarters, we had all the roll forward gains, which is 3 to 3.5% a quarter, being offset by earnings cuts. So now I think that GDP upgrades have started. I expect that by the end of this fiscal year, the real GDP number will be upwards of 7. The reason why there is still a lot of negative sentiment is that nominal GDP growth has been coming down. And again, people have been extrapolating too far. So from 18% in FY22 to 8% this year, people think that this is the new trend line. I don't think so. We have been tightening fiscally and monetarily too much. Therefore, core inflation has come down. Food inflation has been falling for the longest period, as RBI has documented. So both of these will reverse. And so we are going to be back to 11-12% nominal GDP growth in 6 to 9 months. And then the earnings cuts start to slow down. And they've started to slow down. I think maybe some earnings upgrades can happen. And the roll forward gains will start coming through. So I do expect that in the next 12 months, we should see much better support for India. In fact, foreign investors have been using, hedge funds have been using India as a funding shot. That it's not going to do anything.
Which means they're selling here and then using that.
Yeah, so because they know that this market is not going anywhere. And therefore, you just sell it, you get free funds. And then you invest, punt on that in the AI themes globally. On whether the AI bubble is bursting right now, I'm not so sure. Because as much as it does seem really excessive, even on things like code generation, you talk to or you listen to people who have worked in AI, who've done coding, people think that vibe coding is going to replace software engineers. I don't want to make it too nerdy, but there was a time when you actually had to write code in assembly language. And then compilers came. AI, the way it works today in coding is maybe as big an impact in terms of time and effort as compilers. So it is not really going to transform and replace all coders. So I think even that is becoming excessive. So far, a large part of the capital going in is surplus capital that Google and Microsoft and all was accumulating. Bubble formation and the risk of a collapse happens when you have a lot of credit funded, you have a lot of, so then there is a deadline. So if Microsoft does not make enough money, the ROC falls by 2%. But if you've taken private credit and you fail, so that kind of the share of capital is still low. So I think there's another maybe couple of years of bubble formation, and then it all falls.
So not there yet is your point of view. Ashish bhai, you could be stoic through this market conversation because you sit on top of the market ecosystem where we all operate, analysts, fund managers, economists, everybody. But I mean, just your thoughts on the first point which we made, which is the domestic investor. And I mean, the numbers are just mind-boggling. Naren put it well, right? I mean, I don't think domestic investors need any equity encouragement. I mean, they're there, they've seen the returns, and they're here to stay in that sense. So while we can complain about all the supply, but it's like chicken and egg, what came first? The supply is there because there is demand in that sense, right? Just wanted your thoughts, Ashish bhai. How do you see things?
I think a time comes in the history of a nation when it starts investing in itself. And I mean, if you look at the numbers, in 2014, because that's when Mr. Modi took over, so I have some idea of what the numbers were. Total number of investors in India, unique investors, because we count accounts and also unique investors because we have PAN numbers. So we dedupe and figure out. When Mr. Modi took over, on that day, we had 1.6 crore unique investors. Today, after 11 years, we have 12 crore unique investors. Today, and many of, literally almost half of them have come in last 5 years, largely due to the COVID-induced framework, where we were having a KYC framework where you had to go to physical houses of people, check their incomes and all. And then in COVID, because we could not go, Sebi allowed the KYC to be done by video. And that allowed many of my brokers to reach out to the nooks and corners. Today, India has around 19,400 zip codes, give and take few. I have pin codes in every part of India, every zip code except 28. And my understanding is out of 28, probably 25 are, the pin code themselves are airports, where you can't do KYC, right? So broadly, I have people in Ladakh, literally 6,000 meters, 7,000 meters on top, and I have people in Andaman. It is amazing how India started shifting from real estate and gold and everything else into equities. And it's a miracle, I would say. Today, with 12 crore investors, 9 crore males, 3 crore women, 25% women. And if you take number of households, it is now literally 9 crore households, give and take few, which is 1/4 of India's households. You don't see that type of numbers even in Germany. I mean, it's always said that a poor country, we are still $3,000 per capita. I don't believe we are $3,000 per capita, but numbers say that, so I would believe, right? So poor per capita income countries cannot have a good functioning capital market because poor people cannot save. And if they save, they don't trust their brothers also. How come somebody sitting in Arunachal Pradesh is putting money in a small little company, SME company coming out of Salem in Coimbatore? That person is never going to visit, check out what is happening, but she has a tremendous trust. Her 1,000 rupees is important to her. Don't think you talk billions and trillions. Her 1,000 rupees is important, but what I call a virtuous cycle has been created by all the past companies which have given results. And broadly, today, I mean, although people don't talk, Indian equities market with $5.3 trillion is probably 160% or more of Indian entire banking system. It is amazing what has happened, that people are investing in risk assets. And also it tells you that over last 11 years, India has become more middle class. Whatever data tell you that India's poverty has not reduced, this, that, because 25% of households are now rich enough to invest in stock markets. It is unbelievable progress.
No, absolutely. And I think that point, that the suite of access to, because of UPI, Aadhaar, mobile penetration, I mean, access to financial products at that $3,000 capita, I think it's unmatched anywhere in the world. And I think that's really a miracle. Just a last round of questions. We're eye on the clock as well. Rhythm, on that supply point, right? I think Narayana earlier at one point had said that, I think you gave the Narayana 95 example, that supply essentially is what overwhelmed the market back then. Just your thoughts on that. How do you think about the supply issue?
So see, Prashant, we are, so the previous peak in supply was about 3% of GDP. Today we are circa 1%. So we have a long way to go. When we get to about 3% at current GDP, it will be about $10 billion per month for 12 months on the trot. So I don't think we have reached a level where supply is going to be the reason why the markets wobble. So I'm not so perturbed about it. It's a good sign. It's a good thing that people are raising capital. It does help the economy. And eventually this will flow into capex and help earnings.
On that AI question, Rhythm, what's your, we got Narain who thinks, no way to tell, but it looks a little scary. Neelkan says it's still a couple of years away before it, to use the word, pops. But your thoughts?
So with the caveat that I don't know, like Narain said, I remember that in the internet cycle, Warren Buffett became cautious in 1996. A lot of smart investors became cautious in 1998. If you became cautious in December 1999, it was still too early because a lot of stocks doubled in the next 3 months. So this is really about your mandate, what you want to achieve with your portfolio. Warren is as Naren rightly puts it, he doesn't have to report to anyone, including himself. So he's fine being early. Not everybody in this room can afford to be early. Yeah, so when this is always going to test everyone. But we don't know.
Yeah. Wrap up with how are you approaching markets in terms of where wealth will be made from here? It's going to be relatively better, but relatively better where, Rhythm?
I think banks look very attractive. Valuations are, in fact, it's the only place where valuations are below history, where earnings are below history, where I think margins are stabilizing, likely expanding, where top-line growth looks like it's accelerating. So I think lenders are probably the place to be. The other places in the market, I think, get a little bit more tricky because you have to have some faith in their ability to deliver into the future. IT services, I think, offer an interesting opportunity because the consensus seems too bearish. I agree with the point Neelkant made. It's not so simple that AI is going to, take over coding. In fact, from whatever I know, a lot of the AI work, the monetization of the investments that have happened is taking place here in this country. So it's unlikely that AI is going to... What is hurting IT services actually is the GCCs. It's not AI. Because we, for example, Morgan Stanley used to farm out a lot of work to IT services companies, say 5, 7, 8 years ago. Now a lot of that work happens in-house. So the amount of headcount that we have at our vendors has not grown, whereas our internal headcount has grown 3x, 5x.
Has grown.
So that's really the proximate reason why IT services may be hurting, not AI.
So financials and IT services is a non-consensus kind
IT services, you have to have a 2 to 3 year view. I think financials will do well even on a 12-month basis.
Naren?
What we think is it's a mature bull market. So, there have been such good stock pickers in India that anything which has to be discovered got discovered. But a lot of people get frustrated.
That is like the efficient market theory.
A lot of people got frustrated. They buy in 2023, the share hasn't worked for 2-3 years. They get irritated, they start selling. So we found that in many sectors, people get frustrated holding a stock for 2-3 years, they don't get return, they come and sell. So we've been trying to buy wherever we find that the seller has got frustrated with holding stocks. Not like 2018 to 20 was very easy. You buy PSU, buy metal, buy telecom. All those stocks are very cheap. Today, all those sectors are not very cheap, but across, whether it is quality, whether it is many other sectors, suddenly you'll find someone coming and selling because they waited for 2-3 years, no return, they'll come and sell. So we buy across sectors. And we find, like recently we bought oil and gas, and we found that it suddenly performed. Now today, if you ask me, is oil and gas the best sector? I would say I would think, because oil and gas has done very well. So we look across sectors at this point of time. But do we expect mega returns from here? For that, we need supply to come down. The day supply comes down for 3 months, this flow comes, our SIP flow keeps coming, then I think we have a good rally ahead. But for that, we can't afford to have this kind of supply coming in the markets. And the difference, what Rhythm said is maybe 3% of GDP. But at that point of time, FII money used to be double local money. Today, we're having very low FII money. For that, Rhythm has to get FIIs to invest as much as domestics invest. Then we can have 3% of GDP. Today, the entire burden of matching what all the PEs and promoters sell, only domestics are investing. FIIs have a very small role to play. So for 3% of GDP to be absorbed, Rhythm has to do more work.
There's a good chance that FPIs turn net buyers in the next 12 months.
In the next 12 months.
Yeah, because India will
then it can be 3% of GDP. But otherwise, domestically, we can't absorb 3% of GDP.
Now Rhythm is promising he'll do work.
In 12 months.
Now Rhythm is promising he'll do work.
Neelkant, just 30 seconds. Where do you see returns being made from here?
I think financials, construction proxies, I think that hardware tech is, I think the current listed stocks, the universe is very bullish, but I think in the private space, you will see a lot more investment opportunities.
I had a lot more questions, but as always, we're always limited by time, and it's a packed day through the course of the day, and this is the top market panel that we put together for you. Rhythm, Naren, Neelkant, and Ashish Bhai, thank you all for joining us here on this session. Thank you very much.
Next 8 years, that's just OpenAI, and that gives you a sense of what is happening in the AI ecosystem today. Oliver, it's wonderful to have you join us here at the Global Leadership Summit. Thank you so much for making time for us here in India and joining us here this morning.
Thank you so much for having me.
You know, you've spent a few days in Bengaluru. You're here in Mumbai. Oliver, before I talk to you about India, I want to understand from your vantage point as an insider, how you see 2025. From the outside, many of us believe that 2025 has in fact been an inflection year as far as AI adoption is concerned. How do you as an insider see 2025 from the OpenAI perspective?
I think 2025 indeed was quite an inflection year for us and for the industry. 2025, I'd say in many ways, is the year we will remember as the year AI went from the chatbot era into the intelligence era. It's hard to believe that ChatGPT launched less than 3 years ago.
It's your 3rd anniversary this month, I believe.
Exactly, exactly. It's not even 3 years, but soon. All right, we'll blow out the birthday candles, the 3 birthday candles soon.
But happy birthday in advance.
Thank you so much. Thank you so much. But when we first launched, most people experienced AI from the perspective of chat, as a chatbot. And it was already this marvelous experience that people have. And incredibly, when you look at what has happened in just such a short period of time, now with AI, AI is not about giving you just responses, helping you with search results. AI is actually doing tasks for you. It's actually completing tasks, is really thinking about what reasoning, right, through like what you really need. And then when you think about ChatGPT, what we're very excited about our company and products is actually moving up the layer now, and really ChatGPT becoming more of a platform. And so you'll see more of that as you as we.
I want to push you a little bit more on this transition from being a chatbot to now becoming perhaps a platform, virtually an operating system, an AI operating system. What will this transition entail, and what can we expect now as far as the future is concerned?
Yeah, well, one thing for sure is I think you can see continued rapid adoption. Right? For us, we now have over 800 million weekly active users. Right? You see, we recently crossed 1 million businesses that are adopting our technologies, and so this is just the start. Right? I think when you see our products becoming more of a platform, that just introduces many opportunities. Let me give you a couple of examples. We recently launched an apps SDK. So this is an ability for developers to publish applications in ChatGPT. What that means is a startup like a Zomato, right, can actually build an application and enhance their customer experience by building that experience into ChatGPT and take all their actions within ChatGPT. So what that does for companies, it gives them much more access to distribution, right, and leverage the fact that we are growing our user base, right? And a lot of that is India. A lot of that growth is powered in India.
You know, let's talk about India, because you look at international markets for OpenAI. India, did it surprise you, the kind of adoption rate that you've seen in India? It continues to be your second largest market outside of the US today, right?
Yes, absolutely. The momentum we see in India is incredible. It is indeed and still will be. I don't know, maybe not forever.
Maybe surpass the US?
Not sure when, right? Not sure if, but I can tell you one thing for sure. We're seeing tremendous growth. The growth in India we've seen it has tripled. It has tripled year over year. And so we're seeing a lot of that growth. And what's interesting about India, you know, I have the opportunity to fly around the world and meet with governments and businesses and developers around the world. You're seeing AI being adopted in all facets of society here. Right? I was in Bangalore. We held a developer day there. We had incredible. There's this energy, right, that you really don't get in any other places, where there's a hunger to adopt frontier AI. Right? We highlighted companies like NVIDIA and Eternal and Emergent, and these are developers that are building products.
That's an interesting chat there with OpenAI's MD of International Strategy, Oliver J, talking about how they're seeing a growth in the Indian market as well, and a lot more on that front. But a quick look at what our Indian markets are doing, because it's a muted day of trade that's coming for the Indian markets. We saw a sharp fall in the opening trade as well. And as of now, the market's still not managing to hold on to gains. 25,300 is what the Nifty is around that level. 145 points down in today's trading session. That's where we've been since we started the trading session. Not much of a move on the upside or the downside. 0.6% of decline. Nifty Bank, that continues to see a decline as well of around 0.3% in the trading session. IT among the top sectoral losers, 1% down tick for the IT pack as well. But on that note, we're going to step into a very short break. Don't go anywhere. More updates after the break.
Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, Hormuz Fatakia. And Rima is joining us now from the Global Leadership Summit. Rima, Hormuz, good morning. And before I talk about the markets, Rima, so much happening there. We all are here in the studio, but you are there at the ground with all the action happening. Tell us more. What's happening? What's the update?
Well, there's so much energy. The entire conference room, the entire room is full of people. And this whole conversation with OpenAI that Shireen was just happening has literally electrified the room, because now that you can see the conversation shifting from what AI can do to what we can build with AI. So there is a shift in conversation, and I'm just, very excited to, go back in there and listen in to those conversations.
And we are also looking forward to getting there as soon as possible. But yes, of course, for the markets now, if you look at the Nifty, it's a 140-point downtick that we are seeing right now. It is off around 50 points from the day's low, but nevertheless, across the board, be it Midcaps, the Bank Nifty, the four major indices in the red as we speak. The metal index is letting some support, but IT, infra, consumption, realty, all of them in the red. Yes, Nifty Bank has seen that recovery from the lows. The metal index is the one which is leading to the recovery as well from the lows on the Nifty, but remains to be seen which way things go, Hormuz.
Earlier this morning we were speaking about the fact that the 50% retracement of the rally that the Nifty has seen from the September 30 lows till the October 23 high comes up to around 25,345, and we are currently trading at those levels, just around about 40 points off the lows of the day is where the index stands. So that 50% retracement level becomes a very, very important one to watch out for when it comes to the index. But of course, while the Nifty Bank is recovering from the lows of the day, they can't take away from the fact that there are plenty of earnings reactions, and ever since the morning, one stock that has been in the spotlight, that has been Amber Enterprises, and that has seen a marginal recovery from the lows of the day. At one point was down 13%, is now down around 9.5, still a big gash nonetheless. So we keep an eye out on Amber Enterprises. We also watch out for L&T Finance. It was an investor day that the company held yesterday. That stock is outperforming today amidst this broader market sell-off, and 7.5% higher on that stock. And Aarti Industries numbers were good, and the result reaction is good as well. 6% higher on Aarti Industries as well, among the top gainers on the NSE 500 currently. Interestingly, the other one, of course, is the one stock that you need to also keep an eye out for is BSE. You just heard from the Sebi chairperson in a few minutes earlier, and after what he spoke with regards to the weekly expiry, that stock has moved to the highest point of the day as well, Sonal.
Yes, a lot of stocks on our radar, and earnings, they continue to be in focus. In fact, let's get us our colleague Upasna. She's joining us on Amber Enterprises reporting numbers. What did they look like and what's the outlook, Upasna?
Well, certainly it's a weak set of numbers reported by the company. It's a miss across the board, below our poll, that is in terms of revenue, PAT, EBITDA margin. Now, revenue fell by 2% versus the poll of 9% growth. This was mainly due to the muted performance from the company's RAC segment on account of GST delay in implementation and also the weather impact. Now, company reported a loss this quarter. This is mainly due to the lower RAC demand and even slower electronics growth than anticipated. Now, company's key segment, that is the consumer durable division, which forms 53% of the company's mix, saw muted performance this quarter, which dragged down the overall performance. Now, consumer durable division, the revenue was down nearly about 18% on a one-year basis, and margins also under pressure, down about 120 basis points at 3.7%. Coming to the company's electronic division, it reported a lower growth than what the street was anticipating, with a revenue uptick of 30% on a one-year basis versus the estimates of 40%, and margin under pressure, down about 190 basis points at 5.8%. Now, looking at the numbers on an overall consolidated basis, revenue saw a downtick of 2%, EBITDA saw a downtick of 20%, and EBITDA margin saw a downtick of 120 basis points. All the three segments, margins under pressure, and stood at 5.5%. Company has reported a loss of 33 crore versus the PAT of 19 crore. Now, we just ended the con call of Amber Enterprises, and management remains optimistic of the future growth. Now, management has guided for a consumer durable division. It expects 13 to 15% growth in FY26 versus the 15% growth seen in H1 FY26. Now, commercial AC continued the growth momentum is what the company has highlighted in its con call, and it expects it will scale up further. For electronic division, it is guided for margin to range between 8 to 9% for FY26, and it expects the margin to touch double digit by FY27. And lastly, company is confident of doubling its revenue in its third segment, that is the railway subsystem and defense division, in 2 years, is what they have highlighted.
Upasana, thank you for that update. Still 9.5% lower on Amber Enterprises, one of the biggest single-day drop that the stock has seen in quite a long time. We'll take a short break here on Trading Hour. Be right back on the other side. Focus on the crypto markets with Manisha Gupta.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Just two stocks that I want you to take note of. One of them is Hexaware, which is down nearly 4%. They had their conference call today in the morning, and basically the company is saying that Q4 will see regular furloughs. Companies are shut, etc. So that will have an impact of 250 to 300 basis points. There is also an additional headwind because of the US government shutdown, and plus because the company has not been able to do visa transfers on account of the H-1B headwind. There has been some impact. So on the whole, the company is saying that Q4 growth will be on the flatter side, though they're a lot more optimistic about calendar year 2026. But this commentary perhaps has put some pressure on Hexaware. And the other one is L&T Finance, because yesterday the company held their investor day, and they've set a target for the next 12 to 18 months where they are driving a 20 to 25% risk-calibrated AUM growth. And they're planning to achieve an ROA of 2.8 to 3%. So that stock is on the rise. But moving on now to Manisha for a quick handle on what's happening in the world of cryptos. Manisha.
Well, on Crypto Corner today, we talk about the crypto custody services. Well, this is a secured third-party services that manages and stores digital assets. Well, it does safeguard private keys for institutional investors like the hedge funds and exchanges. It acts also as a digital vault. It does provide institutional-grade security solutions such as multi-signature technology there. It also does provide cold storage and hardware security modules to protect against theft and also loss. Beyond safekeeping, there are other services that custodians also provide, and these are analytics, trading, pricing, and settlement as well. But it does help the regulatory requirements as well, so that is something that you don't have to bother about also. So when you look at the major examples within that space, it does about Coinbase Custody, Gemini, and also BitGo are some of the very important and credible ones. Well, it is important also because it helps risk mitigation. It also helps institutional adoption, and then there's a lot of convenience to this as well. Also, when you look at the crypto wallet side of it, it is a digital tool that manages the public and private keys. So keys are needed to access and transact with your cryptocurrency holdings on blockchain, and these are the keys that you can safe keep in many of these wallets. A wallet does not store your crypto or on blockchain. It does store your key though, and if you forget that key number or that wallet password, then it is all lost, and there have been various instances for that as well. So that is one thing to keep an eye on. Apart from that, the wallets also allow you to send, receive, and manage your assets. There are various types of wallets as well. One, of course, is custodial. This is, as we've just talked about, it's a third party, like an exchange, and it tools and manages your private keys. The other one is self-custody wallets. In this case, it is not the third party, but it is you or itself who is maintaining your wallet. So you are the one which is completely in charge of storing, protecting when it comes to your own private keys. As far as security part of it goes, well, that relies on strong cryptography, and without your private keys, you can permanently lose access to your funds. So as I said, keys are the most important, and the password is the thing to access, trade, and own your cryptos there.
Manisha, thank you for that update. Let's go back to the Global Leadership Summit from CNBC-TV18, where the ISRO chairman, V. Narayanan, is in a fireside chat.
3%, 8.2 billion US dollars. This is set to increase to 44 billion by 2033. The Indian government, along with ISRO, has been rolling out several reforms. We've launched InSpace so that ISRO and InSpace together can mentor startups. There is a FDI policy for the space sector. We've significantly liberalized FDI almost up to 100% to encourage investments in private companies. You also have a venture capital fund for startups, which is almost to the tune of 1,000 to 1,500 crore rupees. So what more is ISRO's ambition? What does Mr. Narayanan see that ISRO and the private sector can do together? Ladies and gentlemen, let me begin by speaking about the Bahubali. Yes, just a few days ago, India launched its heaviest communication satellite. It was a 4,400 kg LMV-3M5 that was launched. Mr. Narayanan, a proud moment for you, isn't it? Could you tell us, what does the Bahubali satellite say about India and ISRO's abilities?
Thank you. As you introduced, on 2nd November, we have successfully placed, using our Bahubali rocket LVM-3, the CMS-03 communication satellite, which is the heaviest satellite ever launched by Indian launcher in the geotransfer orbit. And this is going to bring a lot of benefit in the communication area. In fact, when I look at the launch vehicle, this is the launch vehicle, this is the 8th successful mission of this LVM-3 rocket, built totally by India. And today, we can say one of the launcher what we are having has performed 100% reliability, all the launches going through successful. Again, when we started this countdown for this mission, we had to face tough weather situation. Then we were thinking whether we had to postpone the launch. Then after thorough analysis, with the entire team, we decided to go ahead with the launch. And today, it is a successful story. And India has placed the heaviest communication satellite in the geotransfer orbit using our own launcher. In fact, a similar rocket, similar communication satellite, 12 years back, we had to go abroad and launch. And we have built the capability today, and we have launched. It is a proud moment for all the Indians, not only ISRO team, the entire Indians, not only India, across the globe. And we have accomplished this mission.
Right. Ladies and gentlemen, a big round of applause for the ISRO team for the launch of the big Bahubali satellite. Mr. Narayanan, when it comes to collaboration with the private sector, today India has approximately 350 space startups. You've been mentoring them. Could you give us a sense of what do you really want private sector companies in the space domain to do? Also, if you could give our audience a sense, this is a very serious audience who are looking at opportunities in the space sector, in the defense sector, very, very closely. I'd like you to give us some vision in terms of our import dependence right now and where the private sector can come in to complement ISRO and our space ambitions.
Well, let me address this question in two parts. Number one, our program started almost 63 years back, and we have built almost 6 generations of launchers and 134 satellites. And currently, there are 56 satellites in the orbit, serving the common man of the country. And these numbers have to be taken to at least 3 times based on the vision of Honorable Prime Minister in another 2 to 3 years. That is what we are talking. And whenever we talk about a launching taking place, or a satellite being placed in the orbit, out of the entire money, almost 80 to 85% is pumped in the private sector for the hardware realization. For example, this Mark III vehicle, what we have launched a few days back, almost 80 to 85% of the fund for realizing that vehicle has gone to both the private and Government of India undertaken companies for realizing the hardware. That is one aspect. Second thing, it was 2020, our Honorable Prime Minister Narendra Modi ji and the Government of India rolled out the space sector reform. In fact, when the space program was started, our idea was to bring the benefit of space technology to the common man of the country. We were not looking at it, to be frank, the business model, and that area we were not concentrating. Today, as you rightly told, the total space economy, global economy is something around $630 billion. And when we really reviewed, our share is hardly only 2%. And this number has to be increased. And this the space economy is going to be almost $1.8 trillion by 2035. And we are putting a target, ambitious target of 8% of that amount. And we are working towards that. Thanks to Honorable Prime Minister Narendra Modi ji for the great visionary leadership, great thinking. He and the Government of India rolled out the space sector reform. When the space sector reform was rolled out, hardly few startup companies were only working.
All right, that's our colleague Parikshit in conversation with ISRO Chairman V. Narayanan. Of course, we'll keep coming back to that interesting conversation at our Global Leadership Summit. For now, we have to slip into a break. When we come back, we'll get you more on the markets on the other side. Stay tuned.
Significant recovery from the lows of the day now. 110 points is the recovery on the index, back at 25,430 for the Nifty. So healthy recovery seen from the lows of the day. The key question is whether this recovery sustains or it gets sold into as we move into the second half of what is the final trading session of this truncated week. But Narayana Health has entered the UK market, and the company is set to acquire UK-based Practice Plus Group hospitals for close to £190 million. Earlier, Vinny caught up with Sandhya J, the group CFO of the company, to understand more about this deal. She began by asking her about the company's international expansion plans. Listen in.
As you are aware, if you've been following us for some time, Cayman's been operational for more than a decade now. And after the initial period which we had to overcome, we've been performing quite well in Cayman. And we've always been on the lookout for the next international opportunity. So what made UK attractive for us? Of course, apart from the obvious, which is that it's a developed country, there is a clear rule of law, business certainty, transparency, policy certainty, all that. What we saw was that within the industry, there has been meaningful success for large operators. And so we thought that this is a market where we could participate. For us, as we see Practice Plus, it's in our sweet spot. It's neither too large that it becomes unwieldy for us to integrate. At the same time, it's neither too small. So with the current size, we can be able to bring what value we have to offer, whether it's our technology, whether it is our capabilities. And at the same time, there is a lot of strength and execution, demonstrated execution from Practice Plus. So I think it comes together quite well for us.
Sandhya, what are the synergies then one will start seeing from this acquisition that you have made? When will we start seeing these synergies? And also, is this margin accretive for the company?
So tech is a big differentiator. We do believe that we will be able to improve the quality of care while being able to bring down the cost with the help of our technology. We also believe that there is a scope to increase work spectrum, but I think we will know that with time only. We have just got into the business. From a EPS point of view, this will not be EPS dilutive. Obviously, India and Cayman operate at a much higher margin profile than at which the target is coming and at which the market is. So if we look at from a group margin point of view, this will come in at a lower than the group level. But overall, I think jointly with the management of the PPG group, we will be able to demonstrate improvement in margins over time.
Okay, over a period of time, you will be able to see an improvement in margins. So then in the near term, maybe, till the integration process is over, we could see some bit of a margin pressure?
So if we look at each of these markets independently, I think we would be able to continue to build on and improve margins in India. Cayman, as we have always said, is a stable margin market. So therefore, I think Cayman will continue to perform the way it has been performing so far. And we are not going to be dilutive from where we are starting as far as PPG is concerned.
Okay.
So I think if we take the group numbers after PPG is integrated, I don't think we are going to have dilution pressure on the margins coming from PPG.
From here, there won't be any dilution, at least, is what you're saying. When will this full integration process be completed by? Will it be FY26? And you will start seeing those synergies in FY26 itself, or maybe can we expect in FY27?
So for a period of 6 months, there is the integration process which we will be going through, because we are only acquiring one portion of a larger group. There were 3 businesses in that group. We have only acquired the hospital portion. For the next 6 months, we will be working jointly with the sellers in terms of carving out the hospital portion and integrating it into the Narayana business. And I think the journey of synergies is a long journey. It's not a point in time that it will be done now. So as we start, I think we will start looking at what are the opportunities, and I think it's a journey that we will have to walk on.
But when will that journey begin? 26 and 27 beginning?
Yes, we can say that, yes.
Okay. What about your profitability? Narayan's overall profitability, return on capital employed target after this acquisition?
So, because a lot of our assets were established a long time back, so therefore they are very, very well sweated out. So Narayana has had the benefit of a very high ROCE for the past few years. But as Narayana, the India group goes into an expansion phase, we will see that getting stressed. And that's the cycle for any infrastructure-led business model, where you have a capex cycle and ROCs are stressed, and then the assets start getting sweated out and the ROCs come back to normal. So while Narayana India goes through that journey of going through the asset investment cycle and then balancing and stabilizing the ROCE, we do believe that UK will catch up. And therefore, when we hit that FY30 kind of time frame, we do think that all assets may be equalized on ROCE.
Okay, that's great. And just the last word, any more plans, any newer acquisitions that you're looking at in any market, whether UK, Europe, anywhere?
So we've always indicated that we have interest in the international market. The threshold or bar for us is very, very high because as we know, our home market, India, is, if not the most, one of the leading healthcare markets in the world. And there is tremendous propensity for growth and for expansion within India. So if we are looking at a target outside India, it has to hit that very, very high bar to make economic sense better than India. So while we will continue to look out, I think it's a very difficult and long journey.
All right, with that, we'll do one thing. We'll slip into a short break. When we come back, we'll be joined by Karan Virwani, who's the CEO, India We Work, from the Global Leadership Summit. Welcome back. Well, quite a bit of recovery from the lows. The Nifty is off around 140 points from the lows of the day, closer to the day's high as we speak. Bank Nifty is the one which is leading that recovery, which is in the green now, 200 points higher on the Bank Nifty, and it is at the day's high as well. So we'll keep tracking that for you. But it's time to go across to Nigel. He is at the Global Leadership Summit in conversation with WeWork India CEO Karan Virwani. Nigel, over to you.
Well, thanks a lot for that, Sonal. The atmosphere here is absolutely electrifying. And we have Karan with us who's joining in. Hi, Karan. Good to have you on the show. Post the IPO, I think this is the first time we are chatting.
Yes.
But interesting times. You know, India is growing at a fast clip if you compare us with other global peers as well. And we seem to be having the momentum with us. Tell us on ground, how is business looking? What kind of inquiries are you seeing? And what's driving this sort of momentum on ground?
Thank you, Nigel. And thank you all for having us at this incredible event. The energy is just unreal. And I think it really just depicts what the energy of India is even today. All of this panelists and everything that we're speaking about really represents the type of business activity, the entrepreneurship happening within India, and all of that is really happening, a lot of it is happening within our spaces as well, where we're seeing India become a GCC hub, we're seeing international companies grow drastically, adding headcount, but also domestic businesses now growing, at an exponential pace. Startup funding has sort of come back also. There's a lot more VC funding coming in, which leading to these companies starting to grow as well. So overall, I think we're in a very good place with high energy, and the next few years, looking good.
Well, Karan, let's take that GCC point forward, right? I think a third of your business comes in from GCCs. You could correct me on that number.
Yeah.
And I think you're looking to fill in some gaps, in terms of demand on that front. I think you'll have a launch as well.
Yes.
Tell us a little bit more about GCC, the demand, the launch that you're doing, and what is the addressable gap that you're looking at filling?
Yeah. So today at WeWork India, specifically, we have over 130 GCCs, active centers that are within our space, all of different sizes. And over the last few years, we've seen this accelerate a lot, where our model, because of the flexibility, the ability to have a plug-and-play approach and be able to scale as you're growing, is seen favorable by these companies because I can enter India in a very light way without having to put any upfront cost.
Yes.
I don't know exactly what my runway is going to look like. So the growth and all of that can be sort of, the cost can be a lot more variable than fixed. And as I scale and as I continue to hire, I can grow from a very small hub to, full-fledged GCC. And that's what we've been able to do with multiple companies. Interesting fact, though, is that almost 50% of the GCCs are actually under 50 desks or 50 people today, which shows you that these are companies that are starting small and actually growing, over the next few years, and showing you that there's a long tail of companies actually entering India right now that will continue to grow. So it's fragmented from really large businesses going into mid-tier and small businesses. And what we wanted to do is become the player that is very focused on the infrastructure part of this GCC growth. Whereas there are services, your services businesses, etc., handhold a lot of these GCCs on hiring and setting up compliance and all of those various things. We want to be the partner that helps you from the infrastructure side so that your pain of setting up an office, growing, where that headcount sits, the type of environment, the employee experience that they get also while they come in here as they're building out their brands, these companies, you're able to do it through a partner like us. So we've now tied up with actually multiple GCC as a service partners who are using us as the preferred real estate partner, where these companies, whether they're bringing them from Europe, from Japan, from America, can set up their office very quickly at a WeWork, can grow very quickly to, from few desks to many desks. And then finally, we're even doing fully bespoke offices at large scale for these GCCs. The idea is to productize this and be able to make it extremely easy, extremely simple for companies to now enter India and grow. Okay. If you think about it, a few years back, every time I set up an office, I have to go negotiate with a new landlord. I'll have to deal with vendors to design it, to fit it out, I end up spending capex and all of that. It becomes hurdles when I'm a company just wanting to quickly set up and hire.
So basically,
the idea is to like free that entire
so
thing.
the GCC service launch basically fills in that kind of a gap and helps them, in terms of setting up. Got that.
Yeah.
Tell us about growth as well.
Yeah.
If I got the number right, I think in terms of centers, we're at roughly around 68 to 70 centers.
That's right.
A number of seats, I think 115,000 on.
Yeah.
How do you see this number scaling up? I don't want to ask you in the near term because I believe you're in silent period and you have your numbers next week.
Yeah.
That point of time, I'll press you a little bit more about the near term. But in terms of the longer term, where do you see this number headed? What is the growth trajectory that you're looking at, say 3 years down the line?
Well, India's office market has just been on all cylinders. And flex as a part of that, if you just look at the last 12 months, has been the second highest contributor after IT or tech as taking space, and has been growing at about 21%. So we've also grown pretty much a little bit higher than the pace of the industry. So we're growing just like 1 or 2% higher. In the last 12 months, we've added about 20,000 desks, almost closer to 2 million square foot of space. We see that sort of as a consistent growth trajectory. We're seeing sales velocity also increase drastically, which is giving us more confidence to take a lot more space or expand a lot faster from a capex standpoint. And on Monday when we go through the numbers, we'll kind of highlight some of that. But there's a lot of tailwinds right now in the industry, and our focus is to just grab onto this growth that India is on and become rails to that growth that businesses can use to sort of grow faster and easier.
All right, in India, it's quite diverse. But if I look at your kind of mix, the product, the exposure mix, if I look at it, I think Bangalore and Mumbai and I think Gurgaon. That would be your key markets where you have 60-65%, if I got the number correct, with regard to exposure. Going ahead, what about tier 3, tier 2, tier 1, as well as city breakup? How do you see this breakup, get spread across India?
So our focus has always been follow the demand. And if you look at commercial leasing demand today, 30 to 40% always is Bangalore and has been Bangalore for the last, decade or so, or even longer than that. So the idea is to have that continuously, be a big chunk of our growth. Mumbai is seeing a new transformation, I think, with the infrastructure boost that the city's seen. We're seeing markets like Worli and South Bombay suddenly start also picking up, while Andheri and, the other side of Bombay also has been growing a lot. And then NCR as a whole has become a hub as well. So Noida, there's a lot of development coming up in Delhi now around Aerocity and, a few of those pockets. And then Gurgaon, Cybersecurity. But the real growth markets for us, or where we're seeing a lot of growth, is cities like Hyderabad, Chennai and Pune. Hyderabad and Chennai in particular in the last few years has seen a lot of activity. People coming out of Bangalore, moving to Hyderabad for cheaper real estate. And the same thing in Chennai when manufacturing is getting set up in Chennai now. A lot of automotive, electronic companies need their service offices also around the hubs of the factories. So it's really all building off of the entire momentum that India is seeing from even that side of the world, where when manufacturing starts setting up here, you will start seeing office demand also grow along with that.
So Hyderabad and Chennai could be on a low base. They could be good growth drivers from here on. And final question with regard to tier 1, tier 2, tier 3, how do you see that panning out in terms of your exposure? I mean, what is the feedback you've got? What are the inquiries you'll have got? And how are you all addressing this kind of demand?
98% of all demand is still in the top metro cities. We're still seeing the top metro cities as hubs of urbanization where, everyone is just moving there because it's better quality of life, better opportunities. Our social infrastructure is a lot more solid. And so our focus is to stay within these top tier cities, at least for the mid to short to mid term. And we'll see as cities develop and as companies, start making them bigger hubs, we might enter other cities as well.
All right, Karan, it's always a pleasure talking to you. You're sounding, quite optimistic with regard to the longer runway. In the near term, we'll press you for some numbers, but, growth momentum seems to be there, demand seems to be there, and you're evolving the business in such a manner that you could address all the gaps as well. Thanks a lot for joining in. Well, guys, I'm going to toss it back to you in the studio. We need to get back to the conference.
It's very choppy currently for the index. We see, although no taking away from the fact that there has been a substantial recovery from the lows of the day. But again, the big question, whether that recovery gets sold into or not. We are already seeing some signs of that. We managed to get to levels of around 25,470-ish, and now we have around about 30 points off those levels as well. So interesting to watch as the second half of the session progresses. A couple of stocks to watch out for before ahead of results. Trent and Bajaj Auto. Keep an eye out on both of these names for ahead of their results. But we have a special conversation lined up. Jairam Sridharan, the MD and CEO of Piramal Finance, is now joining in after the relisting of the company, and Surabhi is here to take the conversation forward as well. Surabhi.
Mr. Sridharan, it's a pleasure to have you with us, and Hormuz, thank you for that handover. Indeed, shares have been trading with gains. Let's just pull up the stock price. Last I checked, it was still up about 5-6%. It was a positive listing. Oh, actually make that 17%. That's a solid move coming in on Piramal Finance after the merger of Piramal Enterprises with the financial entity itself. And those are the visuals from the listing in the morning. So let's try and understand the trajectory ahead for the company, growth segments, and how things will look from here on. Sir, thank you so much for joining in, and congratulations on, the listed life now in this new avatar. So if I go back and look at, some of the numbers, the Q1 numbers that we have, growth has been pretty robust for you. I mean, over 20% growth coming through, and your AUM, your total book, has crossed 85,000 crores. The bulk of that, obviously, is on the retail side. So just walk us through, how you're looking at the different segments behaving and performing, and whether these kind of growth trends, your own guidance, I think, is closer to 30% growth for this year, 25-30% growth this year, whether you think you'll be on track with that.
Hi, Surabhi. Thanks for having me. Yes, we have had a really solid start to the year. The first half has been very kind to us. We have been well above 20% on a consolidated basis, and in our core business, we have been up by almost, about 35%. So it's been a very, very strong start on growth. Yes, we are seeing, growth momentum continuing. Certainly for the rest of the year as well, growth momentum should very much continue. We are seeing strength in the retail segment, in the loan against property market, in the affordable housing market. We are seeing a little bit of strength in digital lending. We are seeing some strength in personal loans. So there is a lot of pockets of strength. There are also some pockets of weakness. But on the whole, we have seen 30+% growth so far, and that is not waning off. October was pretty decent as well. We disclosed, I think yesterday or day before, that for the festive season this year compared to the last year, same festive season, 1 month around Diwali Dussehra, our growth was 45%. So the festive season has been very solid. As well, GST cuts have helped. So lots of things are coming together. Growth is looking very solid right now.
Yeah, and that's been the case with Piramal Finance for a while now, right? Because I think over the last 4 years, from a retail book, which was just around 5,000 crores, now you're talking, northwards of 70,000 crores. So, what's interesting is, and I'm just going back to commentary from one of your peer entities coming through, and I'm talking about Bajaj Housing Finance. It's just top of mind because we just read the commentary out in the morning. Interestingly, now they're saying that there is a fair amount of competitive intensity in the market. I mean, the fight to go out there and win customers. Specifically on the housing side of your book, because that's a large portion of your business, are you also seeing this?
Yes.
And that's one entity. I mean, Bajaj Housing is actually calling out for some pressure on margins because of competition. What would you say to that?
Yeah. See, this is indeed happening in the prime segment. In the prime segment, where customers are borrowing at, let's say, 10% or less, there is a lot of competitive intensity, and growth rates are really suffering for everybody, and margins are suffering for everybody. We are not in that segment. Our average rate at which we lend housing loans is anywhere between 11.7 to 11.9%. So we are a good 200 basis points above kind of a lot of the banks and AAA NBFC players. So we serve a very different market. Our ticket sizes are also very small, are compared to like 40, 50 lakhs or above kind of ticket sizes for some of these other players. Our ticket size is 22 lakhs. So we are much smaller players. So we serve small town India, small customers there, but we charge a reasonably stronger yield for it. And in that segment, in that middle India, basically, semi-urban India, we are actually not seeing this competitive intensity problem. We are seeing strong growth trends. Our margins are not coming down. In the first quarter of this financial year, the average yield of our housing business was 11.7%. In the second quarter, it was 11.9%. So yield actually went up. Q1 to Q2. So no, we're not actually seeing pressures, but we are working in a very different segment and very different geography, to be honest, compared to some of the peers that you mentioned. The AAA world operates in a very different universe, and in our universe, in the middle India that we serve, semi-urban India, we are not seeing the same competitive pressure.
Okay, all right. That's a good perspective to have. Speaking of yields, let's talk about the overall trajectory. As of Q1, your margins, net interest margins, were just shy of 6%, right? Just about, I think, 5.9%. And there was actually, the growth quarter on quarter on margins as well. So just give us the strategy from here on. A large part of your book is retail. Within that, how much is unsecured now? Will you push more on unsecured in search for yield? And what can investors expect on margins as we roll through the rest of the year and beyond?
Yeah, you should expect to see margins improve with every passing quarter at Piramal Finance. In fact, if you see the last 8 quarters, practically every quarter our consolidated margins have gone up. And we started at about 4.25%, and we are now close to 6%, as you rightly mentioned. So we have been raising margin with every passing quarter. You got to remember that Piramal.
Okay, I think
a bit faster in this in such a company, and so metrics will continue to improve. So you should expect to see us above 7% over time, as from a consolidated margin perspective. On the
that's
on the
interesting.
Whole,
That's a
makes a return on.
Mr. Sridharan, that's an interesting headline. So 7% margin. By when and what will drive it?
Yeah, absolutely. You should totally expect that. You should totally expect that over the next kind of year and a half, we should get there. And the consolidated margins will keep going up, both for cyclical reasons and for structural reasons. Cyclical reasons you're aware of, what's happening to the rate environment. RBI has cut rates. Banks have not yet cut MCLRs. But as and when they do, we as NBFCs who borrow from banks in big way, that will get accrued to us, at least in part. So that's the cyclical story. But there is also a structural story of us divesting away a lot of our negative margin businesses, and that keeps increasing our yields. Plus, structurally on the book, you spoke about unsecured. Today, 17% of our total portfolio is unsecured, and I've stated in the past that we would like for that to be close to 25% over time. So you will see us invest more in the unsecured lending business, and that's another structural reason why you should expect to see higher margins. So yes, absolutely, you should expect to see margins going up. On the whole, from a profitability perspective, Surabhi, today or the second quarter, we published return on AUM of 1.7%, and we have guided the market that we want to be close to 3% over time. So you should expect to see our return on AUM steadily increase from where we are currently, where as a young company we've just about gotten to kind of 1 3/4 as our return, but we aspire to be 2.5 to 3%.
Okay, so 30% growth on the book, a 7% margin over the next year and a half, and maybe a 2.3% kind of return on assets under management. Got that out of the way. Now, since you spoke about building up the unsecured book to 25% of the total book, that brings me to the question on asset quality and the confidence that you have there. Of course, trends are looking very healthy now. Your credit cost declined in the first quarter. But what are you seeing on ground in terms of asset quality? And is there some element of risk there as you keep building on the unsecured portfolio?
I think unsecured, of course, went through a very painful period last year. All the way from April to November, December last year, it almost felt like every quarter risk was getting worse compared to the previous quarter. But things have stabilized since then. This calendar year has actually been better. Things have remained fairly stable. Things have not gotten a whole lot better. It has just been stable. It is not deteriorating. But in general, Surabhi, unsecured lending is always going to be a little bit of an up and down business, a little bit of fasting and feasting type of business. Last year was a tough year for the sector overall, particularly for some pockets of unsecured like microfinance, as we all know. It was a particularly bad time. But in general, it was a tougher time for unsecured lending last calendar year. But this calendar year has turned out to be less challenging, and things have been a lot more stable and predictable. So the way I might say this is that last year that engine was in brakes mode. This year that engine is in neutral gear.
Sure.
Not yet in acceleration mode, but at least we have gone from brakes to neutral gear.
Okay, and a very final question. We only have 30 seconds left on the chat, but it's a good question to ask you, someone who's a veteran of the industry, and you've been on the banking side and now with the NBFC side. I mean, are you expecting more policy easing? And if yes, and in this environment where there's both fiscal and monetary easing, which ones will be better off in the growth race? Large banks or specialized NBFCs?
The last couple of years have belonged to NBFCs, honestly, but banks will come back, and I have a lot of respect for what banks are capable of doing, and particularly the private sector banks who have lagged a little bit in the last couple of years. I'm sure they'll come back, but right now, tailwinds are very much with NBFCs.
Okay. All right. We wish you all the best for your operations and for the rest of the year, and look forward to more conversations now in this new avatar at Piramal Finance. Thank you for joining in. Thank you. So, Harmaz, there you go. It's a new avatar, one more NBFC, and an NBFC that's sounding extremely bullish and fairly confident of growth.
And an NBFC that's bucking the trend in an otherwise weak market as well. 17.5% higher for Piramal Finance. So, a strong listing on the bourses. Take a leave on this edition of Trading Hour. Thank you so much for watching. Halftime report on the other side.
stock slip following the tech sell-off overnight. IT, power and consumer durables are the big drags, while metals and financials stay resilient.
Sebi Chairman Tuhin Kanta Pandey tells CNBC-TV18 the regulator will take a calibrated and data-based approach on F&O, adding that the current certainty is that weekly F&O is on and working.
And following this Sebi, Tuhin Kanta Pandey, he told us that the data-based approach and on F&O and will take calibrated steps for this as well. Moving on, he also spoke, adding that the current certainty is that the weekly F&O is on and working.
All right, and we are reviewing whether the cap on brokerage is too low for mutual funds, says Sebi Chair. He adds the aim is to balance interests of investors and AMCs and double the investor base in 5 years.
The stocks of Bharti Airtel sulks after Singtel's likely offloads of 0.8% equity via block deals for a sum of near rupees 10,000 crores.
Hello and welcome to Halftime Report on CNBC-TV18. I'm Ekta Batra and with me is Vinny Motiwala. And look at Mangalam. He's joining us from the GLS. And look at how grand that looks. Mangalam, just give us an insight. And after that, we're going to get to the Divi's Labs numbers, where the stock is down around 1%. The net profit is looking better than expectations. But Mangalam, over to you first.
Well, just before you look at the Divi's Labs numbers, I'll have to tell you that this is just a smidge of the grandeur that there is, because this makeshift studio that we have right outside where the main arena is, if this looks so grand, then you can only imagine how good the insides would look. And we'll keep dipping into that as and when, important conversations happen, just as we did that earlier in the day as well, where a lot of the markets, experts spoke along with, we also heard from the Sebi chair. The important part, however, is the market's listening. We have recovered from the lows, and as the street was anticipating, the Nifty bank, was very close to breaking the 20-day moving average. From there, it's found some support, and now it's only a question of whether Nifty finds that support or not after having fallen almost 650 points from the highs already. But it's back to you guys in the studio, largely because of Divi's Labs numbers, and also to take the show forward, I will keep getting you all the insights and the things that is happening behind me, which you can see from this see-through studio that we've made here. Definitely a very exciting prospect to be here, and I'm sure you guys will join in soon.
Yes, absolutely. Waiting for that to take place. We're waiting to go by and see how grand the GLS in fact is. And we've got so much of perspective which has come through from the Sebi chair to all of the market guests such as Rhythm Desai, WeWork, all of them who have spoken to CNBC-TV18. So it's really a wealth of information that we've managed to, dip into and collect over the past couple of hours. And it's only going to go on through the day. But let's talk a little bit about Divi's Labs. The stock, in fact, is selling off a little bit. The net profit doesn't seem to be a problem. It's coming at around 689 odd crores. The revenue is up around 16 odd % this time. So it's at around 2,715 odd crores for Divi's Labs. Let's wait by for the margins as well. I think the margins weren't a problem in terms of what they've reported. So overall, it doesn't look like a bad set of numbers. What really moves the stock is the commentary from the management, and I think that the street will be waiting for. So overall, looks like it's largely an inline set of numbers based on what they've reported, but we have to wait by and see the internal details. Margins have also come in better than what the street had anticipated. Street was anticipating around 31.5%. They've come in at around 32 odd %, and the profit is better than expectations at this point as well, Vinny.
Okay, profit is better than expectations, but like you're saying, commentary is something that we'll be keeping an eye out on. As of now, the stock has seen a bit of a fall post the earnings, down almost 2% in the trading session as of now. But let's focus and talk about MTAR Tech, because they reported their numbers. A weak set of numbers that came in Q2 FY26. Revenue saw a decline. Margins were contracting as well during the quarter. We have Parvat Srinivas Reddy, who is the managing director at the company, joining us to talk to us about the outlook of the company going forward as well. Mr. Reddy, good afternoon. Thank you so much for joining us on the show. let's just start by talking about the quarter, right? Q2, that saw a decline of around 29% in terms of revenues. Mainly, what is it that led to this decline? Which segments did not perform well? And now for the second half of the year, what is the expectation in terms of revenue growth?
So basically, the Q2 was a quarter of negotiating about tariffs with the US companies. So we had, being a technology company, we had to ensure that we are not affected by tariffs at all. And that took some time. And presently, we are back to square one in terms of where we were before. And if you look at the order inflows which we have received, that itself is a proof that there's a kind of demand which has been created for the kind of products that we do with our customers. The second half would be almost like twice of revenue as the first half. And in fact, our guidance would be up by about 30 to 35% in revenue, and we would maintain our margins at 21% plus minus 100 basis points, as mentioned earlier.
All right, so that is fairly optimistic coming from, you say that 30 to 35% revenue growth is something that you will do with 21% margins, even as the first half revenues are down by 8%, because you believe that the second half will be double of what you did in the first half itself. But my question is more on, the Bloom Energy business, clean energy, which you expected this business to be about what, 1,500 to 1,600 crores by FY28. Do you have a glide path to that? How much will this business do in FY26 and FY27?
So basically, we have a capacity of, let's say, in one of the divisions for the customer for 8,000 units, which we're using only half the capacity before. Now we're going in for expansion to 12,000 units by end of March. And then about in the next year, we are increasing our capacity by another 8,000 units in two phases. In September, we increase it by another 4,000 and then by another 4,000 by March of next year, end of FY27. So there is a huge demand in terms of, we must have seen the kind of orders we are receiving. We have the entire order book on hand to ensure that we are growing at a very rapid pace. And probably that's something which we'll be able to achieve a much larger number in FY27 with respect to this customer, based on the kind of demand and orders that we have received.
Just want to narrow down a little bit in terms of the order book, because you have indicated earlier your guidance has been that your closing order book should be around 2,800 odd crores, which is maybe close to 3 times your FY25 order book. Is that still on track?
It's absolutely on track. We have closed at 1,296 crores order as of Q2. And post Q2, we have received 480 crores of orders as of yesterday. And we are on track with that in clean energy, nuclear, and space sectors. So we will end up with 2,800 crores of order book after executing the sales for the second half of the year.
You said you're, probably a little more incrementally bullish on FY27. Do you have visibility in terms of what the incremental order inflow could be in FY27? Have you targeted maybe what your closing would possibly be at that point in time? Would it double to, say, 6,000 odd crores by then?
I won't quantify at this point of time. It's too premature right now, but the focus is on to get the closing order book at 2,800 crores, which is very clearly achievable. It's something which is already there, and we are expecting a lot more orders in the second half of the year. And once we do that, then obviously the way the growth momentum is going, we would have a much stronger order book even for the next year as well.
Okay, sir. Thank you so much for joining us this afternoon on CNBC-TV18 and speaking with us about the outlook of the company going forward. It's a pleasure having you at the show. Thank you so much for that. But let's cut across to Lata, who's in conversation with Ananta Nageshwaran, Chief Economic Advisor, Anisha Group CEO and MD at Mahindra Group, Ananta Maheshwari, President and CEO at Honeywell at the CNBC-TV18 Global Leadership Summit.
And we're not even talking festive season. We're talking September 30th. And revenue 21%. If I look at your volumes for the festive season itself, personal cars since Diwali is 23% for the industry, that is. Two-wheelers are 22%. So very good volumes for the festive season. what would you guide for the full year? And you are not just an automaker. I understood when I was walking with you inside. He tells me that he's only 28% an automaker. What is the rest of your universe telling you?
So, Lata, first, it's a pleasure being here with you. And you're right. If you look at our profits over the last 5 years, auto is only 28%. And the part of auto that everyone loves talking about is less than half of that, which is SUVs. So as we look at results for this quarter, we actually play in 70% of India's GDP. And for us, this quarter, the farm business profit after tax was up 54%, Mahindra Finance 45%, Tech Mahindra 35%, our growth gems 22%, and auto up 14% because we've had some transition which we caught up in October, and therefore for the quarter itself was a little lower. But you can just see from that that the Indian economy is firing on all cylinders, which allows us to fire on all cylinders. And therefore, I am very bullish about growth. You started with asking the right person for growth forecasts. I'm the wrong person to ask for this, but my forecast would be greater than 8%, 8 to 10% for the next 20 years is what we see from a business standpoint.
That calls for a round of applause. Aapke muh mein ki shakkar. But for the full year itself, what would you guide for the auto sector and for tractors? Are you confident of double digit?
Tractors we do see growing in low double digits now. Our initial estimate was mid-single digit or so.
Yeah.
And auto also was much lower. From an industry standpoint, we see it possibly still in single digits, but our guidance for SUVs has been mid to high teens, which we did last year as well, contrary to the industry, and we expect that to continue this year.
Okay. Consumption, of course, is the theme that's been clicking. I'm going to come back with the more difficult question of capex, where we want to see more. But I'll start with you, Anant, over there. We in India have been slightly disappointed by the way the FPIs have kind of shunned India. There have been outflows for 3 of the last 4 years. FDI is coming, but it is also going because of the very good IPO market. Since you are, as Honeywell, looking at the interface between foreign investors, what are foreign investors thinking about in terms of investing in India?
So maybe I'll use the analogy that you used of the tunnel. And I was reading that title, Flying into India, yesterday in the evening. And I said, I don't see any tunnels in India. And they're definitely not dark. If I take the automotive industry example that since Anish is sitting here, and if you were flying into Germany or into Japan and you thought about the automotive industry, yes, there are some tunnels and you got to think through them in terms of where the brightness is. But I would say in general, even the numbers that we were talking about, 6.8 or above, the growth numbers that you just spoke about, Mahindra, they are in an order of magnitude different from everything else in the world. So there may be short-term moves around the FPIs or the FDI, but in general, if you ask any CEO globally, India is a bright spot. Middle East is a bright spot that they would want to have a general lower risk sort of investment cycle into these two markets. India primarily with its consumption-led economy, a local economy, is more, I would say, risk insulated from the global moves that exist.
Well, the tunnel part for me becomes relevant when I look at the global, picture, global ecosystem, because a lot of CEOs, or at least economists we speak to, tell us that the CEOs are riddled with uncertainty. I mean, you don't know whether to invest in this country or that because you don't know how much you will be tariffed, where this product might be tariffed more here. You move your... we asked Indian textile guys, will you shift a little bit to Vietnam because the tariff is lower? Who is to say that that will not change, 2 years from now? So they're not moving. The point is they're not investing because they don't know. Is that, a likely cloud for us, a likely tunnel?
So maybe it is a very sectoral response. If you are today in the business of supporting the data infrastructure, data centers, the networking, the communications, you are supply constrained on the planet. If you are in this business of supplying any form of energy in any part of the planet, you're supply constrained.
Honeywell would know that.
If you are in the business of supporting high-tech manufacturing, you're supply constrained. So there are many sectors on the planet which are seeing a very uniform aviation, a very, very uniform investment cycle. So I don't see those sectors as being affected. It is more, I would say, short-term sectors where there may be a little bit of a concern, but in the larger picture, I still see a lot of capex. And I can speak from the conversations in Abu Dhabi and on Monday in Future Investment Initiative in Riyadh the week before that. There is a lot of capex cycle that is being announced and actuated.
Okay. Well, that's good to hear. But Mr. Anish Shah, are you enthused by the consumption, that the brilliant numbers that you just reported, to believe that the consumption cycle has picked up enough to enthuse you and other entrepreneurs like you to do more capex? The private capex cycle is not where we would like it to be. The government has done its bit. And now it has to plateau at some point. We have to reduce our fiscal deficit as well. So is private sector picking up the baton well enough? Do you see it picking it up?
Let me start with what we've done. Over the last 4 years, we've quadrupled capacity for our auto business. And we are still putting in more capacity. We've added 60% capacity to our tractor business. Yeah. And we are running out of capacity and therefore adding more there as well.
Good to hear that.
So we have been at the forefront of investing. To your question of are we enthused? Yes, a lot more. We believe that the fundamentals are in place for the Indian economy. The demographics, the reforms that we've seen and that we are seeing, the commitment to reforms, the physical and digital infrastructure, all of these are very strong foundation elements. The recent GST cut was a huge one in changing the sentiment. And that change in sentiment is what we are seeing in translating to some of the numbers that you read out as well. And that will result in greater investments across the private sector. And we do feel that a number of industries and companies are getting above the 80% capacity utilization mark, and that will be a trigger for greater investments.
Okay. Well, that's good to hear. We would like to see it in the numbers as well. When we get capex numbers, we see more of government capex. Private capex is still running behind, though of course it's the larger giant. Dr. Anand Nageshwaran, we understand that we are, pre-budget consultations are starting sometime soon. Market participants who came here said they've already got invitations from the government, from Kartavya Bhavan, for ideas, for feedback. We've got some very good success stories in PLI. We've got good success stories in the way we've boosted electronics, semi-knockdown and complete knockdown into India, assembling. What are the lessons that we have learned, and how can we ramp up to a faster pace of growth?
No, obviously, with the right set of, more than the specific plans, it's the right set of framework, the legal and regulatory framework that enables successes in some of the sectors. For example, removing the inverted duty structures, exempting primary and intermediate raw materials from customs duties, so that making the cost of production cheaper and competitive. Those are all the important success stories which we have learned from the electronic sector and so on. And therefore, making sure that in the process of boosting domestic production, there has to be a complementary goal of plugging ourselves into the global value chain. That's equally important, because I don't think we will succeed only by onshoring everything, but by plugging ourselves more intelligently into the global value system. For example, different countries have been able to have different kinds of leverage with the US administration's tariffs, and those were directly influenced by the amount of leverage they had. So we have to basically, the success of PLI has to encourage us to move from domestic indigenization to strategic resilience, and from then on to becoming strategically indispensable. And that is the lesson we need to draw from the PLI successes and move on to the next stage.
Welcome back to Halftime Report on CNBC-TV18. Nifty obviously has recovered from that low of the day as well, right? Look at it now, it's just down 57 points. At one point of down, it was down almost 140 points. A sharp recovery that has come in for the Nifty. 25,450, around that mark is what the Nifty is trading at. And especially in terms of the last half an hour, Max Financials, that's seen a up move also from the day's lowest point. Bajaj Finance, some of the names that have recovered or come up and moved up sharply. Look at it, Max Financials, Bajaj Finance, these are the names that we're talking about as well. Under that, in terms of the losing side, DVs, they reported their numbers. Right now, the stock is also seeing a bit of a decline in the trading session. So keep an eye out on that one, down more than 2% in the day. As of now, day's lowest point, 3% downtick that we're seeing coming in for DVs. So that's what we'll watch out for. But LIC, they posted their numbers as well. Mixed set of numbers that came in Q2 FY26. New business premium saw a rise as well. And Yash Jain caught up with the CEO of the company as well as the managing director of the company. And he started by asking about the slowdown in the retail as well as the total AP listed.
As you told, Yash, the top line performance for the first half has not been up to the expectations. But we had the reasons for that as well. Two things. One, last year on 1st October, there was a master circular which was rolled out and all the insurance companies had to become aligned to them. And as part of that, LIC had to modify the existing products which existed on 30th September. So we had a very high September last year because the existing products are going off the shelf, and the new products that were rolled in, they were realigned to meet the requirements of the master circular. So we had to increase the minimum ticket size in the most popular products of LIC. Which resulted in a contraction of the total number of policies sold, particularly in respect of those ticket sizes between 1 lakh and 2 lakh. Correct. So that numbers we could not repeat. So that effect also continued because the first half of last year was very heavy. Yes. So on a large base, we found it difficult to match in the current half year. That is one part. Second, Government of India rolled out the GST reforms in the first week of September with the effect coming from the 22nd of September. So. After the date of announcement, there was a reduction, or you can even say a stoppage of people willing to buy life insurance in anticipation of life insurance becoming cheaper from 22nd. So there was a loss of business opportunity for us between the 6th and 22nd of September. And the last 8 days, which are very good, could not compensate for the shortfall that we
22 days.
That working days that we lost. These are the two reasons for our top line not being in alignment with what we expected. But the traction has now is totally different. We are seeing a good volume of growth in the second half, which has started in October itself, and I'm sure the second half will be much better than what we saw in the first half.
Okay, quickly, 2-3 numbers. What is the APE and the retail APE growth, the number that you expect for second half, and where would that take you for the full year?
We are looking at our decent growth over the full year APE growth. That's okay. Though I would not like to fix a number. I would like it to be in the double digits. That's what I would certainly look at. Okay. And the performance has already started showing traction in the second half, and I'm sure that we are comfortably doing that in the current year as for the full year.
Okay. As far as VNB is concerned, that saw a good performance in the quarter as well. Growing at about 9%. For the full year, FY26, what is the guidance on the VNB? If you could put that number.
You are looking at VNB or margins?
VNB.
VNB, we expect it to continue to grow. Okay. That's what we are looking at. We are not giving any guidance. We have not been giving any guidance regularly, but only thing is our continued effort and focus will be on to show a good growth. When we do business, we have to necessarily work on the financials as well. So we are looking at products offering us a good VNB, and that I expect it to grow. Okay. Though there will be an impact of the GST's ITC not being there, we are trying to get it compensated by way of a good top line growth.
Okay. Strong traction as far as AP is concerned. VNB continues to grow. Now coming on to the margin band, you've done 19%, which is a very strong performance on the margin front for, of course, the second quarter. It's up about 100 basis points from a year ago. confident of crossing that 20% mark for FY26?
Again, I don't keep a particular number in as target for any of these parameters, any of these metrics is concerned. We would like to continue to work on improvement. See, year on year, if you look, the VNB margin starts at a lower level in the first quarter, keeps increasing as we reach the end of the year.
Correct.
The end of the year also will have the component of PAR coming into the entire thing, and so naturally there will be a good increase on that. But in the current year, we have to be a bit cautious also, because we are looking at the exemption of life insurance, individual life insurance business from GST, resulting into the input tax credit not being made available to us. So we need to be cautious about it, but we are confident that the continued focus and efforts that we put in will result in a good top line growth. And that top line growth, along with our rationalization of expenses, which has been happening for quite some time now, will be able to compensate for the loss of GST input tax credit to a great extent, though we will not be able to completely take care. So we expect the top line growth to compensate for our this thing. We expect this margin growth to continue for, but though not to the original expected level, but we'll be able to manage. That's what we are looking at.
Okay. How much short do you think would it
we are actually our aim is to see that it doesn't impact us at all.
Okay. Now I just want to understand, of course, you said that a strong top line growth would compensate for, the additional cost that comes through GST. In the second quarter, what has been the impact on VNB and margins because of input tax credit not being there, inverted duty structure not being there, all of those things? And for the year, how much FY26? And because FY27 will be a full year of GST impact, what kind of impact after taking all the measures that you're talking about?
We don't want to guess or predict a number right now. But we have already given the investor presentation, which also contains the VNB walk. So we are looking at effect of the assumptions change, having a small effect, as we have given the numbers. There is a negative impact because of the economic assumptions change as well as the expenses assumptions change. So it's not very high.
So less than 100 basis points on VNB?
That's what we are looking at for the first half of the year, but it's not necessarily VNB. It's all components put together.
All components put together.
Welcome back. You're watching us here on Halftime Report. We're coming to you live from the Global Leadership Summit. And as we speak, there has been a stellar recovery which is underway from the lows. The Nifty is up over 100 points. And, a couple of these financials, they deserve mention right now. Bajaj Finance and Bajaj Finserv for one. Big spike is what we've seen over the last few minutes. So the intraday chart of Bajaj Finserv comes up for you and Bajaj Finance. Also, we are seeing good traction in a couple of these life insurance names. So we have HDFC Life, which has done well. We have SBI Life, which is spiking as well. And we have a decent traction on something like Eicher Motors as well. In fact, the top sectoral gainer right now in terms of the, up move at the day's high is actually the Nifty auto space. And don't lose sight of Britannia as well, where the conference call is currently underway. Stock did well yesterday on account of appointment of Rakshit Hargave. And thereafter, we've seen an up move even now. But let's go back to the conversation that's taking place inside here at the Global Leadership Summit.
Other laws that that already are there in the law books to actually figure out how to address these concerns. And if at all there is a requirement, we will tweak the existing laws and rules. And beyond that, if there is a need at an appropriate stage, we'll legislate. But today, the emphasis is fundamentally on innovation. The emphasis is on making sure that innovation is given adequate play in the AI space so that we can harness the benefit of this technology and at the same time guard against whatever harms can come up.
You know, Mr. Krishnan, you said innovation several times there, and you also said that we have existing laws to deal with problems that may arise on account of the AI adoption and AI rollout. So would it be fair then, sir, to say that at this point in time, the government doesn't feel that there is a need for a dedicated AI regulation?
I would say that we don't need a dedicated legislation today, now. But I will not say that no legislation is required for all times. We will have to see how it plays out, and we will, at an appropriate stage, if there is a need, we will come up with a suitable legislation.
Okay, so no legislation just yet. But, sir, the focus of the AI framework is essentially on self-regulation. While industry will welcome that, it often also leads to, problems because there's a lack of clarity on obligations, and ambiguity and regulatory uncertainty often crop up. Is that something that you're worried about? Is that a concern?
I think we will discuss with industry. We will, nothing of this sort will go without adequate discussion with industry in terms of what needs to happen. And if there is any room for ambiguity, if there is any room for doubt, we will make sure that all such ambiguities are set at rest.
Okay, that's good to hear. But I want to shift focus now to talk a little bit about the AI mission. A lot of the conversations here at the Global Leadership Summit have focused on that, Mr. Krishnan. The Indian government has expanded the scope of the AI mission from 10,000 crores now to about 20,000 crores. But that pales in comparison to what we're seeing countries like the US, etc., spend in excess of $400 billion, $500 billion. Is this going to be enough, Mr. Krishnan?
See, I think you need to understand one thing very clearly. The capex or the expenditure that we are talking about under the India AI mission is expenditure that the government is incurring. This is intended to be a catalytic investment. It's not intended to be the only investment. And it's not, and investments even in the government sector on AI could come from other sources as well, from other parts of the budget, other efforts that we are taking up. So that is one part of the story. The other part of the story is the numbers that you are quoting for the US and other geographies really are about private sector investment, corporate investment, etc. And not all of the US investment that you are mentioning, the $400 billion, is necessarily taking place in the United States. It's of global companies, technology companies based in the US and the investments that they are likely to make. And some of those investments are taking place in other geographies, including India. And you've seen there have been some big announcements of data centers and other investments related to AI by US technology giants in India. So I think you have to figure out that it would not be very correct to compare what we are spending on the India AI mission, which is entirely government's effort, with the other broader investment numbers which are being announced by companies, which represent their global spend and which also represent not the government effort in that case.
No, fair point that you make that there is a significant private sector investment, but you alluded to one big headline number and one big headline investment. Google recently announced a $15 billion investment in its cloud businesses here in India. In light of that, are you also seeing more interest from other tech companies? Have there been conversations? What do you expect on that front? Could we expect more investment announcements?
There have been other announcements. Other global technology companies have also been speaking about investments in India, and they are making investments.
Okay, we will look forward to hearing those announcements. Mr. Krishnan, we were just talking about the possibility of jobs being replaced, jobs being displaced, and that's become part of the increasing conversation around AI. Now, we've seen companies like TCS reorganize, restructure. It has led to job losses. Globally, companies like Amazon, Salesforce have let go of people, are letting go of people. How concerned is the government with the idea of job replacement and displacement?
You see, this is something that we are watching closely. Our understanding, which we have from the companies we speak to and other industry players, is that the nature of the jobs are changing. They are pivoting on the types of jobs that they are looking at. And they are looking at more jobs in those who create applications of AI and those who do that kind of work, and those who will eventually deploy AI applications. More traditional ITES roles are going out. And therefore, they are retraining their own employees, redeploying them in those areas, and they are recruiting newer people with those skills. So I would say net-net, the impact on employment isn't likely to be as grave, or that is not yet such a cause for serious alarm. I think there are other opportunities which need to be taken up when we are looking at opportunities for our youth. But what is most important is skilling and making sure that we nurture the right kind of talent, and that we also ensure that the newer cohorts which are coming out are equipped for what the market needs today. That is one part. And the second part, those who are already in these kind of jobs are also upskilled and reskilled to meet the changing requirements. I think these are two very crucial things that we'll have to do to make sure that they readjust to the new scenario.
Well, speaking of future opportunities, Mr. Krishnan, PLI, of course, that's gotten a lot of headlines already. But the electronic component scheme, what has the response been like? If you could share that with us for the ECS scheme, sir, and in terms of the approvals for the projects as well?
No, we have, as you know, 249 applications in all. We have taken up an evaluation of those applications as we speak, and which is why we were able to immediately come out with our findings on the 7 applications. The remaining as well, we are working on, and we will be making fresh announcements soon. And this is an ongoing exercise because there's a sense of urgency here. We want the scheme to get grounded quickly. And as you know, the scheme guidelines also state that those who are able to build out first and, they can claim the incentives first. Those who commence production first get the incentive first. And therefore, it's important that we give them their approvals as quickly as possible. So whoever is ready in every sense, the approvals will come.
Well, let's talk about the PLI scheme then. So that's been the big success story for the electronic sector. We've seen record numbers coming in specifically as far as the iPhone export is concerned. But the mobile PLI scheme is now all set to see the sunset on the incentives. Is the government considering an extension? Are you actively looking at that?
We are examining requests from industry for a continuance of the PLI. So we will have internal discussions in government and finalize what our view would be.
Okay, so no clear answer there, but consultations underway. The budget is not very far either, Mr. Krishnan. What is the top priorities that you would like to focus on? What would you be recommending as well in your consultations to the Finance Ministry? AI mission or phase 2 of the semiconductor mission? Which one would you like prioritized?
As you know, I think the ISM 2.0 has been firmly put on the agenda by the Prime Minister himself during the Semicon, and so we are working hard towards it. We also have what we believe are a few other good proposals, and we are also speaking to the Finance Ministry as to what we can take up and give them as our inputs for what needs to come into the budget, which and much of what we would have to suggest would be employment oriented, would also build greater capacities within the country. And I think all of those are important objectives of the government as a whole. And therefore, I hope, like the budget has been in the past years, it will be kind to us this year as well.
Well, we certainly hope it's kind to you and it's kind to all of us as well, Mr. Krishnan. But, at Semicon, which was not very far away, you had assured that there would be an outlay for phase 2 of the Indian semiconductor mission. Has there been a number that's been finalized, Mr. Krishnan, for phase 2?
It's not for me to reveal that number or state that number yet, nor has it been finally put down saying that this is the number it shall be. But yes, I mean, as I said already, I think my stance would still be the same.
Which will be more than the 10 billion for phase 1, I would imagine. But I know you have another meeting to run to, Mr. Krishnan. So before we let you go, we've got a room full of CEOs. We've also got a lot of young people here, professionals, students, entrepreneurs, startups. What is your message, Mr. Krishnan, to India Inc.?
I think as far as adoption of technology is concerned and making sure that technology informs most of what is done across various enterprises in the country, it's a very important role. It's an almost all hands on board situation we are in right now. We are all committed to this objective of India becoming a developed nation by 2047. Viksit Bharat 2047 is a commitment that we all have. And if we have to grow at that kind of a pace, then all of us have to work together. And it needs to be everybody who participates in this effort to truly take India to that goal. The only route which is available really is through greater adoption of technology across a range of spheres, across various sectors, and in all enterprises. I think that should be the push that we work towards.
Well, Mr. Krishnan, it's been an absolute pleasure. Thank you so much for joining us. We were hoping that you'd be here with us at the GLS, but I know the duty calls. But, we would have liked to see you chat with the winning squad members of the women's cricket team. They're going to be here with us later this evening, as will several other dignitaries, including the actor Deepika Padukone and many others. So thank you very much, Mr. Krishnan, for joining us. Ladies and gentlemen, a big round of applause for the Secretary, Meti. Thank you very much for joining us from New Delhi for this.
Okay, so high-powered conversations coming through the day. But just quickly, let's just focus a little bit on the markets. We have the Nifty, which is absolutely flat at this point in time. So we're just about lower by around 31 odd points. We have the Midcap index, which is managing to hold up with a gain of around 0.3% at this point. And the Bank Nifty not doing too badly. That's exactly where the recovery has come through. So up around 0.5% currently for the Bank Nifty. We've been pointing out Bajaj Finance, which is one of the stocks which has moved up, and it comes out with its numbers on Monday. So ahead of that, there is some amount of movement and some amount of buying on Bajaj Finance. Just talking about a couple of the other stocks within the Nifty space, we are obviously seeing Bharti Airtel as the top loser on the Nifty. So that one is down around 4%. But Apollo Hospitals, post its numbers as well, has lost out a little bit. So that stock is down around 1.4%. We're seeing IT sell off today because of what we saw overnight. So Wipro, HCL Tech, TCS, all of these stocks lower by around 1% at this point. Overall, just about consolidating, you'd have to say the advanced decline ratio. Let's see whether that manages to improve. Currently at around 1,800 stocks advancing to around 2,300 stocks declining on the Bombay Stock Exchange. In terms of the broader market stocks, what stands out are a couple of others. Actually what stands out, Vinny, has to be a lot of these insurance companies and the banking stocks. That seems to be really taking the cake in today's trading session. Shriram Finance, ICICI Bank, SBI Life, HDFC Life, that seems to be really how the market is positioning itself on the upside today. It's a wrap on the show. That's all the time that we have on Halftime Report. Business Lunch will take all the action forward. Stay tuned.
Very much for being with us here at the Global Leadership Summit. It's not every day that you get four of the sharpest minds in India's market ecosystem on the same stage at a time when the noise is loud, the flows are AI, Atmanirbhar India, and the opportunity set feels both extraordinary but also quite complex. I guess all of you would agree. The numbers are just mind-boggling. Naren put it well, right? I mean,
Stock slip but stage a strong recovery from the lows following a tech sell-off overnight. IT, power and consumer durables are the big drags while metals and financials remain resilient. Sebi Chairman Tuin Kantapande tells CNBC-TV18 that the regulator will take a calibrated and data-based approach on F&O, adding that the current certainty is that the weekly F&O is on and working. We are reviewing whether the cap on brokerages is too low for mutual funds, says the Sebi chairman. He adds that the aim is to balance the interest of investors and AMCs and double the investor base in the next 5 years. Shares of Bharti Airtel sulk after Singtel likely offloads and 0.8% equity via block deals for nearly 10,000 crore rupees. And market masters at CNBC-TV18's Global Leadership Summit repose faith in Indian equities, see investment opportunities in IT and financials. Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormus Fatakia, and what a remarkable recovery we have seen from the lows of the day for the benchmark indices. At one point, it felt as if the Nifty is going to even break past the 25,300 mark, but right now, we are on the verge of reclaiming 25,500 and almost on the verge of getting back into positive territory now. And Sudarshan highlighted this in the morning as well in his F&O setup, saying that he would not be surprised if there is a recovery towards the later part of the trading session. And that's exactly what is playing out right now on the index, looking to end the week, what has been a down week, but they're looking to end it on a high at least and take the momentum with them are the bulls going into next week. Of course, there are a lot of earnings reactions, but leading this recovery has been the Nifty Bank. The Nifty Bank has been an underperformer over the last couple of trading sessions, is dragging the index lower, but it's been the Nifty Bank that has pulled the index higher today. It's a 700-point recovery from the lows of the day for the Nifty Bank, 350 points higher now. At one point was 350 points lower. So a very, very strong recovery for the Nifty Bank, now almost back on the verge of reclaiming that mark of 58,000. Of course, there are a lot of earnings reactions that we need to keep an eye out for. But just before we get to that, pull up BSE. The stock is now up 7% after statements that came in from the finance minister with regards to the fact that the government is not here to shut the door on the F&O segment. The statement from Sebi chairman Tuhin Kantapande at the Global Leadership Summit earlier this morning, where he mentioned that the current certainty is that the weekly expiries are currently running and they are working, and that is as a result of which BSE currently now 6% higher at the highest point of the day. Speaking of earnings reactions, we've had quite a few of them that have come in the last few minutes. Divi's Laboratories is one of them. Reported results a few minutes earlier, and at one point the stock was down almost 3.5%. There's a slight recovery from the lows of the day. What has seen a recovery from the lows of the day is Amber Enterprises. The stock at one point was down 13.5%. And after the management commentary on the earnings call, there has been a recovery, still 8% lower, but a recovery nonetheless of almost around 420 rupees from the lows of the day. We're counting down to results from three important Nifty companies today. Trent is one of them. Of course, Trent already gave out its business update earlier in October. The revenue growth was 17% below what the long-term commentary from the management was projecting. Bajaj Auto, being the other one, has been fairly quiet in comparison to the other auto stocks that had rallied sharply post the GST rationalization. That stock is also looking to recover from the lows of the day. And of course, the last one being Hindalco, where the stock was smashed in yesterday's trading session after results from Novelis. And that stock currently seeing a bit of a rebound from lower levels. But since we are on the subject of Bajaj Auto, awaiting numbers, Sudarshan is here to break that down for us today. Sudarshan.
So this stock is one of the major underperformers in 2025 if you compare with the peers. But this time in Q2 of FY26, we are expecting a healthy set of earnings. And after several quarters, company is likely to regain the margin above 20.4%. It might report the margin around 20.5 to 20.6%. That would be at multi-quarter highs. And what would boost the margin? That with the recovery that company has seen on the export front and also the rich mix because of the three-wheelers, that will support the margin. Talking about the volumes, company's volumes were up 6% year-on-year and 16% sequentially. That will boost revenue, and revenue is seen growing by 13%. Profit may increase by 24%, EBITDA too can increase by 14%, and margin, as I told you, it might come around 20.4 to 20.5% versus 20.2% in the same quarter last year, but versus 19.7% if you compare sequentially. What exactly would be looking out in the management commentary? If there is any recovery in the domestic segment, because company is positively impacted by export recovery, but the one segment which is dragging is the decline that company has seen in the domestic motorcycle segment. What's the strategy on the electric three-wheeler, and also if there is a further plan on the new launches? But as far as the earnings are concerned, we are expecting a healthy set of earnings from Bajaj Auto.
Expecting a healthy performance from Bajaj Auto this time around. Sudarshan, thank you for that. And since we were on the subject of BSE as well, which is at the highest point of the day, here out Sebi chairman Tuhin Kantapande, who spoke to CNBC-TV18 at CNBC-TV18's Global Leadership Summit, and he spoke on a range of issues. Listen in.
The block deal window has been reviewed comprehensively, with changes made to price bands and to the minimum order size. We are also committed to introduce closing auction framework soon, aligned with other global jurisdictions, but suitably designed for our requirements. We are focused on deepening our cash equities market to spur capital formation. An active securities lending and borrowing scheme is critical for improving price discovery and facilitating interlinkage between the cash and derivative segments. The mutual fund industry AUM now exceeds 75 trillion rupees. Monthly SIP flows of over 250 billion rupees show that awareness about disciplined savings and long-term investing is taking deeper roots among Indian households. Yet, Sebi's investor survey underlines that despite high awareness of mutual fund products, which is about 53% households, their penetration remains low at 6.7%. The AUM of mutual funds is still less than 25% of our GDP, where they are over 80% of GDP in many advanced economies. Huge opportunity lies in deepening this penetration. Several initiatives have been made to develop corporate bond market further, such as mandatory electronic book provider platform for debt issuance of 20 crore or more, reduction of minimum face value to enable access to retail through online bond platform providers, and liquidity window to provide option to exit before maturity. However, much needs to be done to deepen the market and improve secondary trading and liquidity, especially in the area of retail investor awareness about the debt market, which is much less than what is there in the equity market. One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as Sebi's survey points out. We are actually basically reconciling. There's investors on one side, there is industry on the other. Jointly, they have to work together to develop the industry, which has already gone, your mutual funds have gone 3 times for the last 5 years. So therefore, what we really need is, we have to really expand this 130 million unique investors, doubling up in the next 5 years. Now, if you have that sort of thing, obviously you need to look at the investor's point of view, as much as we will also like to reconcile it with the industry point of view. There is a scale benefit, and how much of that scale benefit can come to investors. And so therefore, when we put out a consultation paper with certain facts, I think different participants do come back to us with their views and with rationale, and then we are able to look at it. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
A whole host of issues addressed by the Sebi chairman at CNBC-TV18's Global Leadership Summit. Take a short break. More news and updates on the other side. Welcome back. Let's go back to CNBC-TV18's Global Leadership Summit. Niti Aayog CEO BVR Subramaniam is in conversation with Shireen Bhan.
I think that is what it is. I think, and I think that's the way the government is actually moving. That we have, and there's another thing. We are doing good. And we are doing very good because there are strong inherent strengths. And I think if you have to live in the slightly more turbulent times, be it war, be it economy, be it tariffs, build up your internal strengths. The more you build up your internal strengths, the more the world will actually look at you far more favorably. You will be compelled to make far fewer tough choices.
Well, you know, one tough choice, of course, at this point in time that we know that we're grappling with is, of course, how do you engage and how do you deal with the US? The US has put forward what it wants India to do, especially as far as Russian crude, etc. is concerned, and we've made our position known, and we've hopefully made our position understood as well. But given the almost sort of, you know, it's an unyielding piece at this point in time, how do you see this playing itself out in the long term?
So I think things have been a bit difficult with the United States. And I think a reset is being tried. The trade negotiations are on. I wouldn't like to preempt anybody. Hopefully, end of the month, we may hear some news on that front. Having said that, what the US government is saying and what the US corporates are saying are totally different. You are still continuing to have the steady stream of foreign investors coming to India. You've got American companies opening global capability centers in India. You don't see anybody lessening their importance being given to India. So that basically means the fundamental attraction of India will trump everything else.
Will trump everything else. That certainly is the hope, and that does deserve a round of applause as well here for Mr. Subramaniam. But, you know, Mr. Subramaniam, irrespective of what finally happens as far as the India-US bilateral trade agreement is concerned, you've always been a very firm believer in the fact that India must actually cut its tariffs, that it's in India's interest to bring down its tariffs.
There are a couple of things. Let me elaborate a bit. You know, we want to be a Vikasit Bharat, which means we want to be a developed nation. If we want to be a developed nation, we must have a long-term goal which has been set. The Honorable Prime Minister had made it very clear. We should be a $30 trillion economy, $18,000 by 47. There are some principles which we should not forego, irrespective of what happens. Number one, don't forego openness. You need to be a world-class country, irrespective of how anybody else behaves. I mean, just because there are tariffs in one part of the world, the rest of the world hasn't changed its behavior. I mean, you still have a COP going on next week, irrespective of somebody not joining it. So I think the importance of that is something we need to realize, openness. Second, we need to be a leader in green transition and addressing, you know, the clean energy transition. Extremely important. They're a core principle. And the third one, focus on our people, focus on our strengths. That means invest in people. As long as you invest in people, I think you're pretty good.
You know, and to the point that you made that India must remain open for the benefit of the people who are watching, last night the finance minister in a conversation also mentioned that India's Atmanirbharta policy should not be seen as an isolationist policy, and that's the point that's being made here by you as well, Mr. Subramaniam. But, you know, Niall Ferguson was also talking about the low-hanging fruits that India must address in order for us to be able to do the 8 to 10% growth ambition aspiration that we have to fulfill. Now, from Niti Aayog's perspective, given where we find ourselves today, domestically as well as globally, what would you prioritize?
Okay, so look, this is a country whose fundamentals are very good. You know, fiscal prudence is there, inflation is under control, demography is in our favor, and I think that's okay. So what do we need to do? We need to do a couple of important transitions, and I think that's priority. First, we need to make a transition from agriculture to industry. I think that's long pending. A lot of emphasis has been given in the recent past, PLIs, this, that. But I think the transition to manufacturing of two types, high-tech advanced manufacturing on one end and labor-intensive manufacturing. One takes you to the cutting edge of the world economy, the other creates jobs. That's absolutely important. And I think that was the biggest announcement in the last budget, which is the National Manufacturing Mission. And I'm hopeful that by the end of November, the mission will be up and running. The NMM is going to transform India's manufacturing landscape. It's going to be a very different approach, quite different, not throwing money alone, but actually focusing on building capabilities. So that's one. And the second thing is, we think of services as just restricted to the IT sector. Services in India have become synonymous with IT. Services are more than 150 sectors, You're in the service sector.
Yes.
And this is also an area because services have one advantage. Services are people-driven. It's a great employment generator. If you look at it globally, only 30% of Indians work in the service sector. It's 60% of our economy. So this is where we need to grow, which means what? Education, healthcare, professional services, entertainment, transportation, all this tourism. This is huge. And I think we have barely scratched the potential. And that's the other area of focus, which means what? Services means people. Invest in their training, improve their talent, make them high-tech, and that's when you become global. So manufacturing and services and the transition from agriculture, I think are the big bets for India to become Viksit Bharat.
Let me pick up on the headline that you gave us, that the National Manufacturing Mission is going to be rolled out at the end of the month. And that's a big one because that's something that we've all been waiting for. You also said that it's not just an issue of throwing capital at the problem, that we will have to reimagine the way that we look at the manufacturing sector. Leave us, I don't know how much you can share with us by way of details ahead of the launch itself, but what is going to change for Indian manufacturing? I ask you this in the context of the fact that for over 10 years, more than that, we've been talking about going from 15% to 25% manufacturing share to GDP. Will that finally happen?
So actually, let me tell you, manufacturing has had some remarkable successes in the last few years. And we have learned in the process. I mean, mobile phones is a success. There are a couple of areas where there have been successes. We have also learned from where we haven't succeeded as much as we wish to. The first thing which we have learned in, say, mobile phones is you can't bet on a product. You need to bet on the entire ecosystem. So that's one thing. So you need to have an electronics ecosystem. You need to have a pharma ecosystem. You need to have an ecosystem for semiconductors. So there's a whole range of ecosystem stuff, number one. Number two, don't spread yourself too thin. Focus on specific areas, which means focus on clusters. Pick up 15 sectors, pick up 5 clusters for each, 75 locations which are going to be global in size, capability, and actually employment. I think that's the buzzword. When China began, it began with one cluster. And once that succeeded, they just replicated it. We're just going to do something like that. Pick up clusters, pick up areas which you want to focus on, where you have inherent strengths, which are demonstrated or can have strength, and then put everything you have in it, like not just money, skilling. You need people around. If somebody asks, why do you make a siting decision for a factory? They don't do it just because there's a market. They look, where do I have talent? I mean, day before yesterday, I was in Bangalore at a skills summit, and what were they talking about? Bangalore is a destination not because it has the best incentives. Everybody else gives best incentives. What they say is, Bangalore has the talent. And I think that's the primary thing in today's work when you want advanced manufacturing. So this cluster-based approach is going to be the key to manufacturing, but cluster-based across the ecosystem. And I think that's the big thing, and I'm very hopeful. There's another thing that's happening. We must understand that the manufacturing space is being vacated by many countries. China is vacating a lot of manufacturing space. There are other countries who are filling it in. So I think there's a huge potential. And what is the potential arising out of? It's arising out of our demography. We have a 1 billion strong workforce. That is the biggest workforce in the world. I mean, 2/3 of Indians are in the workforce, 65%. That's huge. So you just need to create an ecosystem which can absorb this workforce. You create jobs, you create economic growth.
I'm going to push you a little bit on that. So you talked about clusters, and what we have seen successfully as perhaps one of India's post-liberalization success stories is what we've seen with the auto ancillary sector and with the auto sector. What are the 5 champion sectors, if I may ask you, you believe we should bet on from this cluster approach that you speak of?
Okay, so that I would categorize these into 3 groups. There would be one where we are already global players. There are another group of sectors where we have some strengths, but we are not yet there. And there are some where we need to be because they're important. We're probably going to pick up equal number of sectors from each, 4 to 5 in each of them. So if you look at areas where we have inherent strengths, and we are already globally strong, automobile certainly is one of them. Pharma is going to be the other. On the labor-intensive side, textiles and garments is the other, and also leather, footwear, etc. 2 are labor-intensive, 2 are going to be capital-intensive. If you're looking at areas where we have some skills, but we are not yet there, we're not global, or world-class. Capital goods is one. I mean, that's something where we need to be there. You can go through and you will see there are many, many areas where we are just about there, but not, champions. And there are some futuristic sectors, be it, semiconductors, be it EVs, be it other stuff, be it transportation, robotics. We need to be there. So there'll be a pretty decent selection of areas. And I'm sure this NMM is going to be the transformative lever. It's going to be our big bet.
It's going to be our big bet, the new national manufacturing mission, as is being articulated here by Mr. Subramaniam. But, I want to go back to the first point that you made, that we're living in a world where trade is flat, where FDI is flat. Now, India has been trying to draw in foreign direct investment across different sectors, from semiconductors to AI and so on and so forth. Given the fact that there is this global uncertainty and nervousness which seems to be impacting FDI, what worries you about our potential to grow at the rates at which we aspire without the requisite amount of FDI?
So I think this is going to be a topmost priority. Firstly, we need sustained growth of 8 to 9% for about 25 years. That itself is a big challenge.
Are we on the cusp of that?
We are on the verge. We're doing the right things. I think from next year onwards, we should be touching those kind of numbers. I mean, that's the goal. And I think the policy levers are being tweaked, number one. If you're going to have 8 to 9% growth, I mean, even if you have a capital output ratio of 4, you need 35, 36% of investment every year. We are not yet there. We're around 30, 31%, and it's been a bit flat at that. That additional 4 to 5%, a lot of capex has been going. Households have been doing a lot. People have been buying houses, building stuff, etc. I think the private sector capex cycle needs to kick off. And one good thing is, thanks to the cut in GST, the GST festival that has happened, the reduction in income tax rates, the exemption limits being raised, I think more money is being put in pockets. You're going to see a boost in that. So that's the second. So the investment cycle needs to kick off. But on the other side, domestic capital is not going to be enough. So out of that 35, 36% that we need, 3 to 4% has to come from outside. We have touched 3 to 4% long ago, but that was a much smaller economy. Yeah. So 3% of a $4 trillion economy is quite different from 3% of a $300 billion.
So would you consider this one of your biggest worries today?
This is one of the biggest areas of focus, where we need to be actually kicking up our FDI dramatically, and that's it. And the good thing is, you got all the major multinationals in the world looking at India, thanks to the uncertainties. There are companies which are just wanting to shift operations from one country to the other. What does this mean from us? They're interested in India for two reasons: domestic market, and we are one of the best low-cost destinations for manufacture. Having said that, we need to cut our paperwork. We need to cut our bureaucracy. The Prime Minister keeps talking about, minimum government, maximum governance, ease of doing business. Get out of the way of business. Make life easy. We don't want people to fly in with interest and fly back disappointed.
How much are we still in the way, though?
So this is the other area on which a lot of work is happening. If you actually tick the boxes on reforms, Government of India has probably done 90-95% of it. Take the Income Tax Act. It's about two-thirds the size of what it was earlier. 90% of the work now is left in the states. So we have a task force under the Cabinet Secretary. He is pushing day to day, without publicity, reforms at the state level. Every day I'm seeing some news item. For example, you want to convert agricultural land to industrial land, you need 1,000 permission. Andhra has just gone ahead and removed that permission. So it's a major transformation. I mean, why can't I be allowed to use the land the way I want it to be used? So a lot is happening on that. So I think the PM has been very clear: reforms. Cabinet Secretary working with states. We have two committees in Niti Aayog. One of them, by the former Cabinet Secretary, is called the High-Level Committee on Non-Financial Sector Reforms. They're focusing only on cutting down paperwork and waste. The first report covered 3 areas: environment, MSMEs, and the whole area about restrictions in manufacturing, etc. They're not public documents, but I'm seeing coverage in some papers. But even if half of them get done, that's going to be transformative. They're going to add 1% or 2% to India's growth.
But Why haven't we seen them being done, and when do you hope that they will be done?
No, I think we shouldn't, I don't think there's any need to be sorry, because the reports have just gone out in October. So we're just about 4 weeks away from it. I think there's very high level attention. The highest level attention is being paid to that. So I foresee in a month or two, much before the budget, some of these things happening. I think the systems are working full time. You go to Delhi, nobody is asleep. They're working 24/7.
Well, that's the other big headline that's coming in there from the Niti Aayog CEO, that the reports, high-level committee reports on the ease of doing business across different sectors will be made public and will, of course, be part of the execution roadmap even ahead of the budget. But, sir, you talked about FDI, and you said that drawing in FDI should be the biggest focus area. For this audience here, FPI flows is another big focus area, and the Indian markets have not seen the kind of FPI flows that we would have liked to have seen. And one of the aspects being talked about is the capital gains tax. Do you believe that there is a need, or this is the right time to review that?
I will put it that way. Global capital flows on the portfolio side happen for a lot of reasons. It's not just your performance, it's all relative. China suddenly became less attractive, a lot of capital came back to India. The China story changes, you'll see capital moving out again. So I think there are larger things that are happening there. But I think the intrinsic worth of India as a destination for portfolio capital, I think continues to exist. There are two things, however. You're having a huge boom and spurt in domestic capital flowing into the markets. I mean, so one of the reasons that in spite of FPI not happening in the same extent, markets have taken it quite well, is domestic capital is replacing foreign capital. Having said that, I think one area where there is huge scope for foreign capital come to India is, patient capital, what I call pension funds, insurance funds. They need to come into India on a much larger scale. I mean, take InvITs, for example, infrastructure investment trust. I mean, the NHAI has one InvIT, which is a public sector InvIT. They should be pushing for more private sector InvITs, and I think that's going to happen in the next year or two. There's going to be a lot of asset monetization from the government. That should be moved into the private space. These are the kind of assets which are not greenfield, they're brownfield. They're the ones which will attract patient capital. So I think the Canadians are in India in a big way. They've put a lot of money in the Indian market. But large areas, London, New York, their funds are not yet in India on that scale. And I think there is a need to, create enough products where they can put money, number one. Number two, it's not the rate of tax per se, but there are a lot of nitty-gritty things on the tax side which need to be resolved. I mean, Niti Aayog has a consultative group on tax policy. They have submitted 2 reports to the government, one on permanent establishment, the other one was on criminalization. Hopefully they are going to be seen. It's got representatives from the finance ministry in that. We're going to come out with a dozen more reports in the next 2 months. So the whole idea is, it's not about tax rates. It's about tax administration. If you improve that, I think there will be a lot of... It's not the rate which is bothering. It's the uncertainty of interpretation which is bothering people. If you have certainty on interpretation, I think much more capital will flow in.
Mr. Subramaniam, you've given us a long list of things that are work in progress and hopefully will get done. What's, if I may ask you, you believe the single biggest priority that you believe Niti needs to focus on, and through Niti or via Niti, the government needs to get done?
I've already spoken about manufacturing. Let me say one thing. When everybody looks at India, they're looking at the market. What do you mean by market? Market is people. So the strength of India is its demography. And if India has to become Vikasit Bharat, these people have to be skilled, educated, and they should have productive livelihoods. I think that's priority number one. If I was asked to put money, and at just 1 rupee, I'll put it on skilling and education. On average, an Indian student goes to school for 67 years. South Koreans go for 13 to 14 years. That's the level of gap that we need to bridge. 4% of our industrial workforce is skilled. You want them to make high-tech stuff. You want them to be doing robotics. With 4% having skills, it's not adequate. Invest money in skilling. So Niti is actually working very hard. How do I improve the skilling ecosystem? How do I integrate it with the education system? Don't make it an extracurricular activity. Skilling is, education is skilling. It's just a different path. And make them all interoperable and carry it all the way to graduation. We probably roll it out in 2 states, Andhra and Orissa to begin with. Hopefully it works, roll out in the rest of the country. I think that's the key to the future. If you have 1 billion people who are highly skilled, the foreign direct investment, portfolio investment, all of that will come.
Well, that's the other headline. Skilling is education, and that is what Niti is trying to push forward. Let me end by asking you, sir, we started by talking about the so-called polyamorous relationship. Let's bring China into the conversation as well. Re-engagement has started. Flights have restarted. Visas are being issued at this point in time. How do you see this relationship progressing, given the backdrop of what has happened in the past, but more importantly, looking into the future?
Look, the large economies in the world are important. So we will end up having some economic relation with them. If that country is 20% of the world economy, you can't shut off 20% of the world economy. That's reality. Whether we like it or not, maybe it's not our choice. They still end up being the largest, import source for us. That's because of the capabilities they have built up. So I think we will be engaging with them, but we need to keep 2-3 things in mind. A, when the Prime Minister talks about Swadeshi and Ardha Nirbharta, he's not talking of protectionism. What he is talking about is, secure yourself from surprises. See that not you're self-sufficient, but you're self-reliant when necessary. I think if we keep that at the back of the mind, we can engage with anybody, be it a friend, somebody who's not so friendly, we will be able to do that. I think we need to de-risk our engagements. We can't allow our dependency on another country beyond a point. And that's a lesson we have learned in the recent past, particularly. Don't be over-dependent. And since you said it's the last question, I go back to just one point which I think is very important for India as a nation. A, if we have to become a great nation, it will be on our skills, our talent, our workforce, our manufacturing, our services. We need to grow them. And we need to grow them fast. We don't have much time. We have just 20 years, 25 years to do it. The world is going to change. And the problem is going to be, in 25 years, we are also going to be older. Our median age today is 29. In 25 years, we'll be 39. So the big thing is, grow rich before you grow old. And I think that is the vision driving Vikasit Bharat. Vikasit Bharat is not a choice. It is essential, because only then will India grow rich. And we need to grow rich before we grow old, because simultaneously, India is also aging. We have crossed the total fertility rate of 2.1. Indian population is going to peak in another 10 years. So it's important that we focus on becoming a rich nation pretty fast. There are others who have not managed it. They are in trouble. Thank you.
Become a rich nation before we become an old nation. BVR Subramaniam, always a pleasure. Thank you so much for joining us here at the CNBC-TV18 Global Leadership Summit and really laying out the roadmap across a whole host of sectors, a whole host of areas that India must prioritize. Thank you very much, sir, for your time.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. And what a recovery. That is the trend that we are seeing today. The Nifty is up 27 points, almost 150 points off from the lows of the day. Mid-caps are higher and this recovery is led by Bank Nifty. That is the one which is outperforming 0.7% higher there.
Good afternoon, Sonal. You're absolutely right. The banks and BFSI, in fact, doing very well in the session today, leading the recovery, like you mentioned. We have a lot lined up on the show. Let's start off with the top headlines. Markets sharply off morning lows. Key indices now near the flat line. Banks lead the recovery. Mid-cap index also up over 0.5%.
Amber Enterprises' second quarter numbers miss estimates across the board as weakness in the room AC segment weighs. The stock slumps over 7%. Management in its conference call says consumer durable business may see 13 to 15% growth in FY26 versus 15% in first half.
Aarti Industries rallies over 5% as the company reports a strong set of numbers off a low base. However, the commentary on the outlook going ahead remains muted.
LIC is in focus after it posts a mixed set of quarter two earnings with new business premium rising 9% and VNB margin up 100 basis points. Management tells CNBC-TV18 that business opportunities were lost between GST announcement and implementation affecting APE. All right, those are the top headlines that we are tracking for you. But, earnings, they continue to take center stage, a lot of them being reported. And Mass Financials is one of them, which reported a decent set of quarter two numbers. Net interest margins came in healthy. AUM grew by 18% as well. The stock is up around 0.6%. At a point in time, it had spiked and now seeing flattish numbers right now. Kamlesh Gandhi, who is the chairman and MD at Mass Financial Services, is joining us now to take a few questions and understand the outlook going forward. Mr. Gandhi, good afternoon. Thank you so much for joining in. Well, it's a good set that you have reported. You aim to grow AUM in the range of 20 to 25% going forward, which is currently the growth number is 18%. What makes you confident that you'll grow at 20 to 25% from the current 18 levels? What are the triggers here?
Very good afternoon. The growth in this quarter was in lines with our strategic intent, where we always prioritize profitability and risk management over just the numbers, the AUM growth, what I mean. And historically, if you see that we have demonstrated our capabilities over a very long period of time to grow anywhere between 20 to 25%. And we remain confident that in medium term, we'll be in a position to achieve that growth anywhere between 20 to 25%. On the back of improved eligible demand. Because when we talk about credit demand, we have to talk of eligible demand in the same vein. And we are seeing some improvement post the challenges, what we have been seeing since last almost 1.5 years, that the eligible demand is increasing, and hopefully from Q3 onwards, we will see a better Q&Q growth and gradually get into a trajectory of anywhere between 20 to 25% as we have demonstrated over all these years.
Okay, so if you want to narrow down the range, especially for FY26, would you be towards the lower or the upper end of the range? Also, Q2, like you've indicated, the number of eligible borrowers have increased, so you're expecting a pickup as far as Q3 is concerned. Could you quantify that? Can you see a pickup in the range of 5 to 6% over there as well? And what about asset quality, especially in the small and mid cap? The loans over there were pretty weak.
Yes. So if you see, we grew at 4% over Q1 as far as Q2 is concerned. And we see this growth going upwards to anywhere between, say, 5 to 7%. Once again, depending upon the market situation. But as it looks like right now, it looks very promising. And with this improving, we can see at least reaching at the lower end of our target at around 20 to 25%. And with quarter on increase, say 5 to 6% this quarter, and then incrementally increasing the quarter thereon, should take us very nearer to what we anticipate to grow between 20 to 25%.
Okay.
And we being predominantly into MSME funding,
right?
We will see a better results once we find, as I shared with you earlier, once the eligible demand picks up.
So right now it saw single-digit growth, the MSME segment. What kind of growth will you look at? Will it be high double-digit, mid double-digit? What's the target here once you say the eligible demand improves?
It should be in mid double-digit, but all product combined. As you know that we are a diversified NBFC, And we serve various assets, including wheels and to an extent Celerite personal loans also. So combination of all those things should give us the desired growth, and MSME should grow in a mid single digit, double digit.
In the second half itself?
I did during the second half, yeah.
Okay, Mr. Gandhi, in the quarter gone by, two highlights. Number one was the credit cost that declined on a sequential basis. What will be the credit cost guidance for the rest of FY26? And number two, what is the reason for such a high OPEX?
Starting from the credit cost, I think that varies from quarter to quarter depending upon our configuration of the off-book and on-book assets. We assign assets very regularly to the other financial institutions. So depending upon what we keep on book and what we assign, there will be a slight change in the credit cost from quarter to quarter. But if I give a guidance, overall, we maintain our guidance that our credit cost will remain anywhere between 1.35 to 1.5%. That is what we have historically maintained. And in terms of OPEX, we are increasing our distribution strength. We have added close to 500 employees this quarter in order to fuel our distribution strength. We currently work at 15,000 PIN codes. And once the disbursement picks up, the OPEX will also moderate. And secondly, we are moving more over towards our retail distribution. And that is the result why the OPEX cost looks higher. But overall, in terms of our ROA metrics, that has been offset by better yields. And that does not disturb our ROA metrics. And that is what the strategic intent is. That irrespective of whatever the operational cost is, it should commensurate with the yields that it can generate.
Okay. You did mention 3% ROA. That is the guidance that you have or the targets that you have. Any timeline that you have in mind, not as guidance, but as an aspiration? What are the levers for this particular growth that would come by, the number on ROA?
If you ask for aspiration, it is right now. But it will take some time as we gain the critical mass, as we can control the operational cost, the credit cost, and more importantly, when we can get the real benefit of the rate transmission. While the repo rate has reduced over past 2 quarters, but the real transmission is yet to happen. So once the transmission happens, so the combination of all the critical mass, improvement in credit quality, improvement in efficiencies, and improvement in the borrowing cost, altogether should take us from current 2.85, 8.8, 2.85 to 2.87 to 3%. As you know that we don't have a very long margin to be covered, but even though it will take few quarters before we really reach there.
Okay, thank you so much, Mr. Gandhi. Thank you so much for joining us and explaining to us about how Q2 panned, and wish you all the best for the rest of FY26. Well, moving on, we'll now slip into a short break. More on the markets on the other side.
Welcome back. You're still tuned into Midcap Radar, and this is our special segment, Midcap Movers. We have Sudarshan joining in to take us through the midcaps that are moving around in trade. Sudarshan.
So as the cues were indicating a sharp recovery in the market, we have got that recovery, and especially in the broader markets, we are seeing a big recovery. So let's talk about some of the stocks from the broader markets which are seeing a big move. Top on the list is Amber Enterprise. While the earnings were weak, but in the commentary, company has indicated that it would see double-digit growth in consumer durable segment. In the H1, the growth was 15%. Again, in H2, company is targeting growth in the range of 13 to 15%. That's the reason you have seen a big recovery from the low. At one point, the stock was down almost 15%. ABB India, earnings were largely in line, but what has weighed on the stock was order inflows that has missed the guidance, and after that, commentary was also mixed. That's the reason stock is down almost 4%. LIC is sharply higher, it's up 4% because after reporting a strong set of earnings, company is saying that VNB, that is value of new business, will continue to move higher even going forward in H2 of FY26. That's the reason it's up. BSE is reacting positively to the comments that we have got from not only from Sebi chairman but also from finance minister regarding FNO and weekly expiry. That's the reason, along with BSE, other capital market names are also higher like Angel One and others. L&T Finance had held Investor Day yesterday, in which company has talked about AUM growth guidance. Now in Q2 of FY26, AUM growth was just 15%. Now, in next 12 to 18 months, company is saying that it's targeting AUM growth that would be more than 20%. That's the reason you are seeing a big uptick in the stock, up almost 10%. Some of the other mid-cap gainers, Vodafone Idea continues to see buying on the back of the positive developments that we have been getting over the last few weeks on AGR. Today also the stock is up more than 4%. Even Indus Towers is saying buying too. Max Financial ahead of earnings, and all the insurance companies after strong set of earnings from LIC are saying buying. Max Financial too is up almost 3%. Thangamel Jewelry every day is seeing a big move after Q2 earnings. Today also the stock is up 10%. Indian Metals, since the day it has announced the deal with Tata Steel to acquire one of its assets, that is the stock was under pressure, saw profit booking, but today it's seeing buying up almost 6%. Aether Energy, yesterday there was a shareholder lock-in period which ended yesterday. Stock was sharply lower, but today it's back in the green, up almost 4%. Some of the stocks which are down in the trade, first on the list is Suzlon Energy. Despite a strong set of earnings and positive commentary, the stock is today under pressure, down almost 4%. Vanke's reported earnings, and on the bottom line, company has reported loss against profit in the same quarter last year. That's the reason it's down 8%. Bharti Hexacom, it's seeing a rub-off impact because there was a block deal in Bharti Airtel. Singtel has sold nearly 1% stake. That might be one of the reasons that this stock is also under pressure, down almost 3%.
Well, thank you so much, Sudarshan. Sudarshan, you mentioned quite a few of the capital market names. Have a look at BSE, now near the day's highest point, higher by 9%. The key reason for that has been the fact that the Sebi chairman has said that they will take a deliberate and calibrated approach towards any form of restriction as far as FNO trading is concerned. But with that, it's all the time we have on this edition of Midcap Radar. Our market special from Global Leadership Summit comes up next.
all of you, thanks very much for being with us here at the Global Leadership Summit. It's not every day that you get four of the sharpest minds in India's market ecosystem on the same stage at a time when the noise is loud, the flows are AI, Atmanirbhar India, and the opportunity set feels both extraordinary but also quite complex. I guess all of you would agree. Now, the India equity story has had many headlines, and I'm just talking about the last 1 year. I mean, in recent times, returns have been more subdued than usual. The Nifty and the broader NSE 500 has been flat for about 14 months now. Foreign investors have been big sellers, with domestic investors on the other side of that trade. Very large equity supply via exits, IPOs, and of course, I mean, India getting little love from President Trump in the US. Hopefully that will change. Looking ahead, many are waiting to see if government policies like tax and GST cuts, and of course, RBI's rate cuts will provide a durable bump to growth in markets. The question is, how will all of this resolve itself going forward? And that is what these four gentlemen will do, for you here on this very, very interesting panel. Gentlemen, once again, thanks very much, all of you. And we were just joking outside that Narayana, I think, said that I'm here to balance things a little bit. If Rhythm, who's the big bull on the equity analysis side, gets too excited, I think Narayana is here to temper some of that enthusiasm. So, Ashish Bhai, great to see you as well. Ashish Bhai, of course, heads the NSC. It's one of the largest companies now, and hopefully we'll see an IPO soon as well. But let me just stick with markets first up. Rhythm, where are we in terms of this cycle? Let's just place ourselves where we are.
See, first I have to acknowledge that Narayana has been dead right and I've been dead wrong. So we should get that right of the way. I think he was warning, if I remember correctly, first time last year in September, that things are getting tricky. And well, they did. So India has, and I think the Sebi chair made a very useful point about foreign investors who, unlike domestic investors, see things on a relative basis. China announced its first round of stimulus September last year, and that eventually proved to be India's peak relative to emerging markets, and we've had the worst year for India relative to EM in 30. So it's not been just another year. It's not visible in absolute share prices because the world is in a raging bull market. Markets like Korea up multiples of 10 percentage points in the last 12 months. So that's the extent to which India has underperformed. The proximate reasons are known to everyone. Growth slowed down. The starting point of relative valuations especially were very high. And we've seen both of these, I think, correct or inflect. The RBI started working on the growth cycle in February, and we have arrived at a situation where it seems to be in reflation mode with a view to increase CPI. So that should help nominal growth going forward. India's relative valuations have corrected a long way, and we're now actually at levels which we don't see very often. So India does look far more appealing as a market to foreign investors. And the final point is that in recent months, the focus of global tourist capital, the one that looks at short-term returns, has been on AI. And India does not really offer an AI trade. So ultimate trigger point for the return of the FPI will be if the AI trade starts fading. I think India will suddenly start looking very attractive. And the final thing is on the trade deal. While I don't think the trade deal with the US is that critical for India's macro, in the minds of short-term capital movers, it does seem to be an important thing. And hopefully later this month, that trade deal happens, and that will again be another negative out of the way. So as I see the landscape, I think things look like they are about to turn for India on a relative basis. The risk, of course, remains that the world could wobble, and that could make it another tricky year for absolute returns, but I'm hoping that that risk doesn't pan out.
Well put. And that AI point that you made, Rhythm, right? ChatGPT, I think, came out in November of 2022. I think the opportunity size crystallized maybe in 2023, and it took off after that. before that, 2021, 22, and maybe parts of 23, we used to say Nifty and the Nasdaq are so closely synced and they were the best performing markets in the world. And that broke, as you said, because maybe there's no AI trade. And but that's very, very stark in that sense. Narayana, come in here. What is your sense? Rhythm's view is gets better from here on a relative basis. Not a raging bull market or anything, but gets better relatively.
No, clearly on a relative basis, it gets much, much better from here because India has underperformed so much every other market in the world that it gets relatively better. The problem is on an absolute basis across the world because today every market in the world is very costly today. So how does the absolute markets behave from here is possibly we don't know. If you had asked me 1 year back, would US also correct? We maybe would have said US would correct, but that call went completely wrong. So I think the risk is something going wrong in US AI stocks because if US is 60% of the global index, how do you expect India to go up when US is going down? So I think the challenge is US market. In India, what the Indian entrepreneurs, the Indian private equity firms, all they've done is they've ensured enough supply. So even if we get good SIP inflows, they have ensured that there's so much supply that the market just cannot go up easily. I mean, there is so much supply and there doesn't seem to be any end to the supply. So, I mean, although we have a very, very big investment team, all the time we are trying to see how to handle every day there's some block or the other. So most of our time is spent in analyzing whether we should buy this block or this, participate in this IPO or this QIP. That there doesn't seem to be any way the market can go up till this supply ends. And we're not able to see when the supply ends. If I can say, okay, it'll end, maybe it will not be there in December, so December markets can go up because supply doesn't happen in December seasonally. But otherwise, again, Jan to March, there'll be supply. So that's where the challenge is at this point of time. So we are in a situation where it's tough to argue that you can make big money. You can't make big money, but at least on a relative basis, the problems doesn't seem to exist at this point of time. But on an absolute basis, we don't know. But at any point of time, markets can correct. And I think, you know, we look at a global guru like Warren Buffett. He has created the highest trough of cash at this point of time ever. And, you know, he's the only person who doesn't care what happens in the near term. He doesn't have any performance risk. He doesn't have any risk that anything can go wrong just because he's underperforming. So I think what he's doing suggests that there is enough risk of US markets correcting.
And that's the big risk to your mind, right?
Yeah, that is the biggest risk.
We have, by the way, as we were just saying, OpenAI on stage, I guess after this panel, or maybe after a panel after.
I think, no, the risk is not AI doing badly. The risk is AI stocks doing badly. Yeah. It's like internet. Internet didn't do badly from 99 to 2010, but still internet stocks crashed between 99 and 2002.
There has been enough mainstream sell-side research which is now comparing and asking the question with a question mark at end, whether this is the 99 moment. And most of the answer to that in those reports is no, this is not. And this is why it's different. 0.1, 2, 3, 4.
But they'll say this time is different.
But do you think, I mean, just to that point, this is something similar to, you've lived through that.
I don't think we can say with certainty. We are not part of it. All I'm saying is the sentiment. If you look at the kind of vendor financing which is happening, X supplies to Y, then say Y goes up, then X doesn't have money, X gets money from A then gets money from B. If you look at what is happening, it is very worrying. But do we know with certainty? I don't think we know.
But if AI has not helped India, why should it hurt India?
No, that is where, 99 to 2001, did Indian markets go down? Yes, it did go down. So now maybe it will go down as everyone says it will outperform. Doesn't mean it doesn't need to go down because the world's biggest market is US. I don't think if US goes down 20%, any market in the world is going to go up.
And across ICICI funds, are you kind of sort of building some hedges?
Yeah, I think, there it is very simple. We recommend asset allocation and tell people to invest in not only in equity.
Correct.
We have succeeded much more than most people, but that's a risk that the investor is taking. Investor is too fond of equity. After 13 years of 12 years of continuous equity return, they like only equity.
Nilkant come in here. And it's just the other part of the thing which Rhythm also mentioned is the US-India. Rhythm said, well, it's not that crucial. I remember speaking with you immediately after that, those tariffs, etc., were imposed. And I remember what you said. You said, well, the longer they last, I mean, it'll start to show up more and more. I mean, a quick resolution is, of course, is the best thing, but that's obviously not happening. It doesn't look like it's in the immediate horizon. How do you think about that? And weigh in on markets as well.
Yeah, so that I agree with Rhythm that it is not important for India's macro. It is important for FII sentiment on India. Remember that the whole world is obsessed with tariffs right now, so it does affect sentiment. And if you are sitting in London or New York and you're reading some of these Western business press and you see that India has 50% tariffs and it is struggling, I think the sentiment around India sours. The view on India among foreign investors that I see is not just neutral, that there is no AI, it's actually negative, that India is an AI loser, that Taiwan and Korea are AI winners because they have Samsung and SK Hynix and TSMC and they are beneficiaries of this boom in AI. And India has not just no player, but actually Indian IT and all of the GCCs, etc., will suffer, which I think is very, very myopic. I think it's absolutely disagree with that. And therefore, whenever this AI bubble turns, while I'm completely in agreement with Naren that as the US market from 200% market cap to GDP starts to normalize, that no equity market will be left untouched. But I do think that the roll forward gains in earnings are now starting. So for almost 3 quarters, we had all the roll forward gains, which is 3 to 3.5% a quarter, being offset by earnings cuts. So now I think that GDP upgrades have started. I expect that by the end of this fiscal year, the real GDP number will be upwards of 7. The reason why there is still a lot of negative sentiment is that nominal GDP growth has been coming down. And again, people have been extrapolating too far. So from 18% in FY22 to 8% this year, people think that this is the new trend line. I don't think so. We have been tightening fiscally and monetarily too much. Therefore, core inflation has come down. Food inflation has been falling for the longest period, as RBI has documented. So both of these will reverse. And so we are going to be back to 11, 12% nominal GDP growth in 6 to 9 months. And then the earnings cuts start to slow down. And they've started to slow down. I think maybe some earnings upgrades can happen. And the roll forward gains will start coming through. So I do expect that in the next 12 months, we should see much better support for India. In fact, foreign investors have been using, hedge funds have been using India as a funding shot. That it's not going to do anything.
Which means they're selling here and then using that.
Yeah, so because they know that this market is not going anywhere. And therefore, you just sell it, you get free funds. And then you invest, punt on that in the AI themes globally. On whether the AI bubble is bursting right now, I'm not so sure. Because as much as it does seem really excessive, even on things like code generation, you talk to or you listen to people who have worked in AI, who've done coding, people think that vibe coding is going to replace software engineers. I don't want to make it too nerdy, but there was a time when you actually had to write code in assembly language. And then compilers came. AI, the way it works today in coding, is maybe as big an impact in terms of time and effort as compilers. So it is not really going to transform and replace all coders. So I think even that is becoming excessive. So far, a large part of the capital going in is surplus capital that Google and Microsoft and all was accumulating. Bubble formation and the risk of a collapse happens when you have a lot of credit funded, you have a lot of, so then there is a deadline. So if Microsoft does not make enough money, the ROC falls by 2%. But if you've taken private credit and you fail, so that kind of share of capital is still low. So I think there's another maybe couple of years of bubble formation, and then it all falls.
Ashish bhai, you sit, you can be stoic through this market conversation because you sit on top of the market ecosystem where we all operate, analysts, fund managers, economists, everybody. But I mean, just your thoughts on the first point which we made, which is the domestic investor. And I mean, the numbers are just mind-boggling. Naren put it well, right? I mean, I don't think domestic investors need any equity encouragement. I mean, they're there, they've seen the returns, and they're here to stay in that sense. So while we can complain about all the supply, but it's like chicken and egg, what came first? The supply is there because there is demand in that sense, right? Just wanted your thoughts, Ashish bhai. How do you see things?
I think a time comes in the history of a nation when it starts investing in itself. And I mean, if you look at the numbers, in 2014, because that's when Mr. Modi took over, so I have some idea of what the numbers were. Total number of investors in India, unique investors, because we count accounts and also unique investors because we have PAN numbers. So we dedupe and figure out. When Mr. Modi took over, on that day, we had 1.6 crore unique investors. Today, after 11 years, we have 12 crore unique investors. Today, and many of them, literally almost half of them have come in last 5 years, largely due to the COVID-induced framework where we were having a KYC framework where you had to go to physical houses of people, check their incomes and all. And then in COVID, because we could not go, Sebi allowed the KYC to be done by video. And that allowed many of my brokers to reach out to the nooks and corners. Today, India has around 19,400 zip codes, give and take few. I have pin codes in every part of India, every zip code except 28. And my understanding is out of 28, probably 25 are, the pin code themselves are airports where you can't do KYC, right? So broadly, I have people in Ladakh, literally 6,000 meters, 7,000 meters on top, and I have people in Andaman. It is amazing how India started shifting from real estate and gold and everything else into equities. And it's a miracle, I would say. Today, with 12 crore investors, 9 crore males, 3 crore women, 25% women. And if you take number of households, it is now literally 9 crore households, give and take few, which is 1/4 of India's households. You don't see that type of numbers even in Germany. I mean, it's always said that a poor country, we are still $3,000 per capita. I don't believe we are $3,000 per capita, but numbers say that, so I would believe, right? So poor per capita income countries cannot have a good functioning capital market because poor people cannot save. And if they save, they don't trust their brothers also. How come somebody sitting in Arunachal Pradesh is putting money in a small little company, SME company coming out of Salem in Coimbatore? That person is never going to visit, check out what is happening, but she has a tremendous trust. Her 1,000 rupees is important to her. Don't think you talk billions and trillions. Her 1,000 rupees is important, but what I call a virtuous cycle has been created by all the past companies which have given results. And broadly, today, I mean, although people don't talk, Indian equities market with $5.3 trillion is probably 160% or more of Indian entire banking system. It is amazing what has happened, that people are investing in risk assets. And also it tells you that over last 11 years, India has become more middle class.
Rhythm, on that supply point, right? I think Narayana earlier at one point had said that, I think you gave the Narayana 95 example, that supply essentially is what overwhelmed the market back then. Just your thoughts on that. How do you think about the supply issue?
So see, Prashant, we are, so the previous peak in supply was about 3% of GDP. Today we are circa 1%. So we have a long way to go. When we get to about 3% at current GDP, it will be about $10 billion per month for 12 months on the trot. So I don't think we have reached a level where supply is going to be the reason why the markets wobble. So I'm not so perturbed about it. It's a good sign. It's a good thing that people are raising capital. It does help the economy. And eventually this will flow into capex and help earnings.
On that AI question, Rhythm, what's your, we got Naren, who thinks, no way to tell, but it looks a little scary. Neil can say it's still a couple of years away before it, to use the word pops, but your thoughts?
So with the caveat that I don't know, like Naren said, I remember that in the internet cycle, Warren Buffett became cautious in 1996. A lot of smart investors became cautious in 1998. If you became cautious in December 1999, it was still too early because a lot of stocks doubled in the next 3 months. So this is really about your mandate, what you want to achieve with your portfolio. Warren is you know, as Naren rightly puts it, he doesn't have to report to anyone, including himself. So he's fine being early. Not everybody in this room can afford to be early. But yeah, so when you know, this is always going to test everyone. But we don't know.
Yeah. Wrap up with your, how are you approaching markets in terms of where wealth will be made from here? It's going to be relatively better, but relatively better where, Rhythm?
I think banks look very attractive. Valuations are, in fact, it's the only place where valuations are below history, where earnings are below history, where I think margins are stabilizing, likely expanding, where top-line growth looks like it's accelerating. So I think lenders are probably the place to be. The other places in the market, I think, get a little bit more tricky because you have to have some faith in their ability to deliver into the future. IT services, I think, offer an interesting opportunity because the consensus seems too bearish. I agree with the point Neelkant made. It's not so simple that AI is going to, you know, take over coding. In fact, from whatever I know, a lot of the AI work, the monetization of the investments that have happened is taking place here in this country. So it's unlikely that, you know, AI is going to... What is hurting IT services actually is the GCCs. It's not AI. Because we, you know, for example, Morgan Stanley used to farm out a lot of work to IT services companies, say 5, 7, 8 years ago. Now a lot of that work happens in-house. So the amount of headcount that we have at our vendors has not grown, whereas our internal headcount has grown 3x, 5x. Yeah.
Has grown.
So that's really the proximate reason why IT services may be hurting, not AI.
So financials and IT services is a non-consensus
IT services, you have to have a 2 to 3 year view. I think financials will do well even on a 12-month basis.
Naren?
What we think is it's a mature bull market. So, you know, there have been such good stock because in India that anything which has to be discovered got discovered. But a lot of people get frustrated.
That is like the efficient market theory.
A lot of people got frustrated. They buy in 2023, the share hasn't worked for 2-3 years. They get irritated, they start selling. So we found that in many sectors, people get frustrated holding a stock for 2-3 years, they don't get return, they come and sell. So we've been trying to buy wherever we find that the seller has got frustrated with holding stocks. Not like 2018 to 20 was very easy. You buy PSU, buy metal, buy telecom. All those stocks are very cheap. Today, all those sectors are not very cheap, but across, whether it is quality, whether it is many other sectors, you will find suddenly you'll find someone coming and selling because they waited for 2-3 years, no return, they'll come and sell. So we buy across sectors. And we find, like recently we bought oil and gas and we found that it suddenly performed. Now today, if you ask me, is oil and gas the best sector? I would say, I would think, because oil and gas has done very well. So we look across sectors at this point of time. But do we expect mega returns from here? For that, we need supply to come down. The day supply comes down for 3 months, this flow comes, our SIP flow keeps coming, then I think we have a good rally ahead. But for that, we can't afford to have this kind of supply coming in the markets.
You know, I had a lot more questions, but as always, we're always limited by time, and it's a packed day through the course of the day, and this is the top market panel that we put together for you. Rhythm, Naren, Neelkant, and Ashish Bhai, thank you all for joining us here on this session. Thank you very much.
South Korean index, that's also seen a sharp decline of 1.4% in the morning trading session.
The VIX jumped about, 11%. 10-year yield lost about 7 basis points.
It's about 80 points down as we speak.
FOMO is the worst reason why you should take any decision in the market.
The cap is a cap. The ceiling is a ceiling. So it's not something that, people have to really pay for that.
Warren Buffett, he has created the highest trove of cash at this point of time ever. And, he's the only person who doesn't care what happens in the near term.
Startup like a Zomato, right, can actually build an application and enhance their customer experience by building that experience into ChatGPT.
Our idea was to bring the benefits of space technology to the common man of the country.
You should expect to see margins improve with every passing quarter.
Industries and companies are getting above the 80% capacity utilization mark, and that will be a trigger for greater investments.
Fundamental attraction of India will trump everything else.
Well, that was the day so far. A 200-point rally from the lows is what we saw on the Nifty. The Nifty is above that 25,500 mark. A good recovery. I'm Mangalam Malu from the studio, and with me is Nigel from the venue of Global Leadership Summit, which is still happening. Nigel, see a lot of people, a lot of energy, a lot of activity around you. Is it lunch? Is lunch getting over? What's the scene?
Well, that's what, Mangalam. It's a bit of a lunch break that's going on, and I think we're almost done with that. But, as you said, the environment over here, the entire feel over here is absolutely electrifying. A lot of buzz, people of all ages, all parts of, the market as well as industry as well are here. Big event, Mangalam. Looking forward to having you back here later this evening.
Let's do that, Nigel. And in the meanwhile, what we do is we have 1 hour to go for trade to end. And what a day it has been, actually. From the lows, we've seen a sharp recovery, not only for the frontline index, but as expected, from the throes of that 20-day moving average, it's the Nifty Bank which has actually seen the biggest pop. The low on the Nifty Bank today was closer to 57,100. So from there, it's an 800-point pop that we've seen, closer to 58,000 for the Nifty Bank. Mitesh Thakkar joins us once again. Mitesh, you had in the morning indicated that maybe the Nifty Bank looks like a better long trade than the Nifty itself. But boy, that has worked. The Nifty's actually rallied a fair bit from the lows, and it's been led by the Nifty Bank. What's the strategy now?
So I think, good afternoon. I think in both the cases, what is important is the fact that, the Nifty kind of hit the support 25,400 to about 25,350. That was the level, and we went slightly below that. And Nifty Bank, the support was around 57,250 and then 57,000. So we didn't hit the second support. So clearly, the Bank Nifty remains in an outperforming mode. But having said that, I think, looks like a good kind of bounce back could happen, because we have now had about, from the highs, nearly 800-point kind of a pullback. And this 25,350 is a decently important support. That's where the, couple of retracement levels as well as the recent historical gap level come. So I think bounce back is expected. Now the challenge would be what levels can we scale on the upside. So my first target is around 25,650, 700. If we clear that, then I think we'll have strength back to the markets. Otherwise, it will still be a market which I would be, kind of wait and watch mode. Having said that, on the stock side, I have one buy and one sell. Indus Tower is a buy with a stop at 398 for targets of 415. And ABB is the negative or the sell side call. Keep a stop just above levels of 50.71 and look for targets of 49.20.
All right, we take that point. It's been a recovery, but the Nifty recovery has to sustain above the 25,600 mark itself. Let's also cut across to the CNBC-TV18 Global Leadership Summit, which is currently underway. Shireen Bhan in conversation with KB Kamath, who's obviously the chairman currently of Geo Financial Services, but a legend in his own right.
Your operation. And all these are critically important today, and even more so when you're talking of, I would say, a technological revolution that you're all going through. So this is absolutely the correct move at this point in time.
Correct move at this point in time. Another possible move is the consideration to enhance the FII limit for public sector banks, which is capped at 20% currently, to 49%. The PSB view is that this gives private sector banks an unfair advantage when we talk about FII participation. It doesn't actually dilute equity at all. Why not do it?
I entirely agree. The playing field has to be level. Why should there be a playing field which is different for private banks and different from public sector banks. Over the last whatever number of years you want to count, the public sector banks have played a major role in the banking system, and I don't see that changing. So you need to have a level playing field going forward.
You know, while we level this playing field, so to speak, Mr. Kamath, what gives you the most confidence about what we're seeing in the banking sector and in the larger financial services sector? When we last spoke, you said banks don't need to worry about other banks. They need to be worried about what's happening on the fintech side. They need to be worried about tech companies who are also doing banking. As you look at the landscape and how much it's changed today, where do you find confidence and where are your concerns?
Yeah, my biggest confidence is the fact that what gives me the biggest confidence is the fact that the bank balance sheet is clean. If we were having this conversation in a situation where bank balance sheets are not clean, profitability is not at healthy levels, then we would have probably gone in a different direction. So banks are strong, and banks can today compete. So they have capital, they have people, they have understood how to use technology. So they have all the elements. What is required is to understand how the new player, what I call the new co, any fintech or any player which is not a bank but is agile in using technology, how are they acting? And make sure that you keep pace with them. That is a challenge. So that challenge exists, but I think it's a challenge you can overcome. And that's where I think in another session that I was having with one of your colleagues, I said that banks are spending money, but they need to spend it where, in a competitive sense, it is most productive.
Which means to actually acquire capabilities, to acquire some of these new cores that you spoke of?
No, not necessarily. What I mean is to put in the right technology that is appropriate for today, rather than do more of the same thing that we were all doing over the last few years.
Yes, so to disrupt yourselves using technology. Yeah. But, what we've also seen happen over the last few years is the retail participation in the India equity story has picked up very significantly post-COVID, and it's been a very secular rise across the nation, fueled by domestic participation and domestic capital. Has that surprised you? And given the unlock that we've now seen happen, what is the kind of headroom for growth that you foresee?
No, I think the India story is driven by two or three things. I think, firstly, it is the long runway that we have. So that gives you headroom. If you did not have a 25-year growth runway, and why do you have that? Because I would think most of India is still to be built. That act of building itself provides the momentum. Again, you look at how growth has happened in other domains in the last 30, 40 years or 50 years. Japan first, Southeast Asia, tiger economy, Southeast Asia, China. You see the transformation journey starts with building what you don't have. And that itself propels you to a status where the next leap becomes easier. I think we are well on that journey. So that headroom we have. Then comes the question that is often asked, where is the capital?
Yes.
I think now we have clearly shown that that question has been asked for now at least 30 years that I have been in banking. Not the 50 years I was in development banking, but the 30 years that I have been in banking, that question has been asked, but where is the capital? I think the India story is what I would call a very measured growth. The government has always been careful to make sure that we grow at a pace which we have the ability to support. But today, I think we can grow at a faster pace because the access
What is a faster pace, sir?
I would say that we should actually aspire for a 10% growth rate. And then we will achieve 8%. So that's what we need to do. And also, and I'm very happy that the index is being reset of, say, industrial production or various indices, because we will then have a better picture of at what pace are we really growing. I would think that we're probably growing a little faster than what we all assume.
Than what the numbers reflect at this point in time. Yes, and that review is, of course, underway at this point in time for metrics that measure inflation as well as growth. But, Mr. Kamath, you talked about this aspiration of getting to 10%, and you said if we aspire for 10, we'll probably get 8. If you were to look at the landscape today and the measures that have already been taken, This year, the effort seems to be to boost consumption. We saw the income tax cuts, and we've just seen the indirect tax cuts by way of the GST. What next would you prioritize to really get to that 8 to 10% number?
See, I think we have to get on to what I call a virtuous cycle. Consumption is one part of that virtuous cycle. Investment is the other side. And the question could be, where do you invest? As I said, that's where the long horizon comes in. So you've got enough to invest. And as GDP goes in, aspirations change. That's the third part of it. So this keeps the momentum going. Now, again, historically, we would, that rhetorical question that I said, but where is the money to fund this? And that question has now been answered. Now, a classic case that I would is to say how this got addressed is NHAI. NHAI, we used to I'm talking of NHAI, say 10 years back or so. How will NHAI fund all the highway needs of this country? Just didn't seem possible because it would otherwise take a larger and larger portion of the budget. But today that issue is a non-issue because what they have already put in place is now getting tolled properly. And that tolled road is now you create an INVIT out of it, and you have a funding which was not thought of or could not even have been conceived of 5-10 years back. So basically we are creating new avenues to fund ourselves. And all this without necessarily looking at foreign capital. If I look at last 5 years, most of our growth has come through domestic capital, unlike most other domains. So we have got a lot of levers to push. We are on that virtuous cycle, and I think we will keep pumping at a good pace.
Okay, all right. We'll keep coming back to Mr. Kamath as he's highlighting that, bank balance sheets, well, they are very, very safe. They're looking in very, very good shape. He's going on to focus that we need to aspire to grow at a faster clip. And then maybe, in fact, we'll be in the vicinity of around 8 to around 10% or thereabouts. And he believes that the economy is in for better times or so. We'll keep coming back to that conversation. For the time being, let's welcome Dharmesh Kant onto the show. Hi, Dharmesh. Good afternoon. Good to see you in. You've got 45 minutes before you get into the weekend. So for the time being, let's continue to focus on markets and then you can focus on the weekend. Let's highlight the two sectors of the day. At the start of the trading session, I'd highlighted that the finance minister's comments will keep two sectors excited. One is the capital market sector, and you have BSE. That's flying away in today's trading session. If I saw it correct, that one's up close to around 10%. And the PSU banking names as well have done well. What are your stocks that you like from both these two themes? Because clearly, they're the sectors of the day.
Yeah, good afternoon, Nigel. I mean, both the comments were encouraging, be it Finance Minister or the Sebi chief, for the capital markets. And it's a very constructive sector. And I also heard NSE chairman saying about how the penetration growth has been into the capital market. So as far as capital markets are concerned, it's more what we are liking, more of an infra place and the exchange place like BSE, MCX, and CDSL, NSDL. And the registrar and transfer agents like AFIN and CAMP. So there is the highest weightage should be there, 60% or so, and balance you can have in AMC place. We are avoiding brokers for the time being. So direct executors, trade executors, we are not liking that. So overall, net, the things are going fine for this space and it's likely to be there for 3-5 years. As far as banks are concerned, I think now it's a consensus trade across the board. Everybody, every fund manager or analyst is liking the space and valuation is still comfortable for them. And the growth trajectory for Q3 and Q4 sounds very interesting, having the NIMs stabilized and the advances growth picking up. The ground level checks do suggest it. We are liking public sector banks quite a lot, and there our topic remains Bank of India. It has done well and it's still doing well even in today's market. And then for the private sector banking space, I think Axis Bank stands a chance. It does. It stands a merit out there in light of, say, SDFC and ICC because of the valuation comfort and the Q2 numbers which panned out. So any correction out there should be bought into. And if you want to take a punt, I think IndusInd Bank is shaping up right to have a good momentum play. Setting in the new management under the leadership of Mr. Arun Bakshi is doing pretty well. And I do think its valuation is comfortable. So that is one for bravehearts if you are willing to take a risk there. One should be getting into IndusInd Bank as well.
All right, that's the word coming in on IndusInd Bank. Even the financials are doing a lot better in today's trading session than what we would seen in the recent past. So Bajaj Finance, Bajaj Finserv, we've also seen the listing of Piramal Finance, the relisting of that. Good commentary coming in from Anish Shah as well, and that's taken the stock of M&M fairly higher today. M&M has moved to the high point of trade. But let's go back to the comment that came in from the finance minister on F&O and the reason why which all these capital market stocks, including the likes of BSE, are doing a lot better in today's trading session. So the government is not here to shut the door on F&O, has been the word that came in from the finance minister at the SBI banking conclave. Come back and then we continue our conversation.
उस पैसा को कुछ और रास्ता में लेके जाना मेरा इरादा नहीं है. जिस रास्ता में वो जाना चाहते हैं वो उनका मर्जी. सरकार रास्ता बदलने के लिए नहीं, मगर उस रास्ते में जिस तरह के नुकसान हो सकता है जो आप विस्तार से बात कर रहे हैं उसके ऊपर, उसको अवेयरनेस के द्वारा बातें करेंगे या प्रोग्राम करेंगे, गांव-गांव तक जाकर बोलेंगे भैया संभालो आपको इतना नुकसान होगा, वो सब कर सकते हैं. मगर वो रास्ता किस रूट में जाना है वो बोलने का मेरा अधिकार नहीं बनता, ऐसे मैं समझती हूँ, क्योंकि पैसा उनका है.
The block deal window has been reviewed comprehensively with changes made to price bands and to the minimum order size. We are also committed to introduce closing auction framework soon, aligned with other global jurisdictions, but suitably designed for our requirements. We are focused on deepening our cash equities market to spur capital formation. An active securities lending and borrowing scheme is critical for improving price discovery and facilitating interlinkage between the cash and derivative segments.
All right, so those were comments coming in from both the finance minister as well as the Sebi chair speaking at the Global Leadership Summit here at CNBC-TV18, and that caused a flutter among all the capital goods stocks, capital market stocks, and look at BSE, that's moved higher as well. But what's also doing well are a couple of these insurance names. So HDFC Life, SBI Life, LIC, all of them doing well. Dharmesh, you have a view on the insurance space. Is there anything particular that you like here? The LIC chair spoke to CNBC-TV18. The results weren't particularly bad. That stock holding up with a gain of almost 2.5%.
Yeah, Dr. Mangalam, we have been liking Life Insurance Corporation of India for a while, and we have been recommending that stock even on declines. I think the results were pretty good. The market was expecting a degrowth, whereas they came out with a VNB growth as well as a VNB margin growth. And the net AUM also increased, and it's the largest, mammoth kind of a company out there. If it's growing at that pace, it's quite credible. At the same time, I would like to point out that valuation-wise is 1/4 of the valuation multiples, which is SBI Life or HDFC Life or ICICI commands. At the same time, their return on equity is more than 45%, as when compared to others or 10 and 15% of the like. So I think the only overhang out there is the government holding, the promoter holding, which will definitely come. The supply will keep on coming out there, and that's what is keeping a hang on that. But to my mind, if you are holding a life insurance company or any insurance company, the time horizon should be 5 to 7 years. And from that perspective, it's a multi-bagger. We are seeing a price target of, say, 3 years down the line around 2100. That's our fundamental price target for Life Insurance Corporation of India. So we are liking this as a top pick out there.
All right, so LIC is your top pick out there. What about two-wheelers? We're awaiting numbers from Bajaj Auto right now, but Eicher Motors is doing well. We're seeing some traction build in TVS Motors as well. TVS Motors actually, in terms of valuation is higher than all its other peers, but at the same time, it's got better margins, and this additional kicker coming in as well, where they'll sell about 288 crore worth stake in Rapido. Not too much in terms of their size of balance sheet, but in 2 years or something, the investment that they've made, they've more than made 150% on that.
I mean, yeah, Mangalam, look, even for, Ola and Ubers of the world, they have been buying into Maruti and Hyundai cars. So such kind of a tie-ups does work for automobile, and that has been working out there. But that's where the sales numbers are coming in, not for the pure retail domestic kind of a number out there. But to my mind, I mean, as far as two-wheelers are concerned, they are priced to perfection. And I do expect, if not price correction, then time correction setting in for next couple of So the idea here is if you were an investment trader, I mean trader who was for short-term kind of a trading investment place, so it's a time to take profits out. Wait for a couple of months more on the monthly numbers, which I expect would be a weaker set of number, and then on declines because structurally things are fine. One can enter and take the benefit of the declines coming into play. Otherwise, if you are a long-term investor, stay invested. I mean, nothing to worry about. And again, the topic here is Hero MotoCorp and TVS Motor, Eicher Motors from the two-wheeler space.
Okay, all right, Dharmesh, we'll let you go at that. Thanks a lot for joining in and giving us all of those views. By the way, we have PFC that's come out with its set of numbers, I think. And for the timing, there's a sharp drawdown actually from the highs of the day. The stock has moved into the red, so we'll try to analyze those numbers in greater detail. But big drop is what we're seeing on PFC. I'll tell you what, we'll take a short break, come back. Rupen Rajguru will be waiting for us. He'll give us his view on the market, sectors, as well as themes. Don't go anywhere.
Welcome back. The Nifty is flitting between red and green, just below that 25,500 mark, just as Mitesh was telling us earlier that it's recovered, but it has to cross that 25,600 mark convincingly. Right now, though, Angel One, another capital market stock, doing extremely well at the high point of trade with a 5% gain. We're also seeing some traction in other names as well. Hormaz joins in to talk about those movers and shakers. Hormaz.
Earnings reactions dominating. Of course, we'll get to the capital market names in just a bit, but the positive earnings reactions. L&T Finance had an analyst meet yesterday after its results, and you look at the volumes here, that's 7 crore shares that have been traded on the stock. The 20-day average is only 50 lakh shares. Interarc, since the morning, was possibly the only one that was bucking the trend when the markets were lower. There are 25 lakh shares traded, or the 20-day average of less than 65,000 shares. Pricol and Nesco are also earnings reactions. So look at the volumes on Pricol. 1 crore shares have been traded. The 20-day average is only 1 lakh shares. When you spoke of capital market names, BSE, Angel One and CDSL, but the volumes on BSE are significantly higher compared to its 20-day average, but CDSL and Angel One have picked up pace only recently, so the volumes will now start to see a pickup in comparison to their 20-day average. And on the other side, of course, there are some negative earnings reactions as well, and they too are moving on very high volumes. Amber has recovered from the lows of the day, but still 7.5-8% lower. Amber now 30 lakh shares traded, almost 15 times its 20-day average. Venky's, after another quarterly disappointment, is trading with significantly high volumes as well, 10x its 20-day average. And Lumax Industries, the numbers were fairly okay, but they announced some capex plans as well. That's 75,000 shares traded already compared to a 20-day average of just 13,000 shares, Mangalam.
Right, we take that point. Thanks a lot for that. We also have Rupen Rajguru joining in from Julius Baer. Rupen, you've heard the finance minister, you've heard the Sebi chair as well. From what it was earlier, or what was feared earlier, to what it is now, it seems like maybe they're moderating their stance on, cutting down on weekly expiries, or actually putting the axe to F&O trading. It is a lot more calibrated than what was earlier feared. To that extent, would you back the capital market stocks right now?
Hi, afternoon, Mangalam. You are absolutely right. If you look through the language as well as the intention of the regulator as well as the finance minister, it's very clear that they don't want to regulate or rather over-regulate. They will cite caution when needed, but they will not want to interfere into the functioning of business models of various companies. And in fact, it's in line with, if you see, RBI also has been on that loosening or relaxing the regulations mode for last couple of quarters. So having said that, from a business perspective, the capital market intermediaries are definitely a good long-term structural place. And having said that, we have to be cognizant of valuations as well. So while today it has sentimentally all the stocks have gone higher because of obvious reasons, but then end of the day we have to look into the numbers and look into the valuations. And to be honest with you, probably from our side we'll wait for a valuation correction because the growth has been phenomenal. The penetration story also is playing, but the kind of growth which we have been seeing for so many quarters, that growth definitely will see some bit of slowdown, and we will probably look into better entry points into getting into these plays.
All right. Hi, Rupen. Good afternoon. Good to see you. And as always, let's focus on two factors. One is on the markets. There is some nervousness out there from those peaks that we saw last month. We have come off 600-700 points. We were bracing for fresh all-time highs. That wasn't to be. What would you do? Some part of the market believes that unfinished business is still there at the top technically, and fundamentally earnings will come through. So would you say that this market is a buy on dips market? Point number one. Point number two, I want to ask you about banks and financial companies. Now, there's a lot of interest out there, a lot of deals out there. So I'll give you options. Private banks, PSU banks, or will you look at the NBFCs? Give us the pecking order. Markets and banks and financials. Go ahead.
Sure. Afternoon, Nigel, and congratulations to the entire team for putting up such a lovely global leadership summit out there.
Hope to see you later this evening over here, Rupen. Try to make it.
Yeah, sure, Nigel. From the markets perspective, as indicated in our earlier conversation, India, yes, definitely while it has corrected a few 100 points over last week or so. But overall, in a global context, India has been a big underperformer. And that we believe was coupled by a degrowth in earnings, or rather deceleration in the growth of earnings. And plus, India was not considered to be a AI beneficiary. So India was like not an AI play. So as a country, a lot of selling happened from an FPI perspective. So what is happening now is that the earnings story is slowly but surely recovering. The Q2 earnings so far have been in line or slightly better than expectations. And if I were to map it, probably 70 to 80% of the companies have either met or beaten expectations. So we are good on that. And the commentaries indicate Q3 would be stronger. So probably what we believe from Q3 onwards, we'll get into double digits earnings growth. So definitely there is recovery in earnings, and FPI flows also now probably will they have done the chunk of selling, and probably at some point of time India will become a good contra play as well. So yes, India will be or India is a buy on dip market. So any dips in the market, definitely one should be buying it.
All right, any dips? Now go ahead, complete your point.
On the financials side, Nigel. See, we are in an environment wherein the regulator, that is RBI, wants growth, and RBI has, in fact, in the previous MPC policy, have done various measures to relax the regulation. On top of it, the foreign capital also, be it coming from Japan or from Emirates or even Blackstone investing big time into Indian financial system. So that also gives that vote of confidence. And, also some of those weaker franchises are now finding a stronger player or partner out there. So from a within bank, if you ask me, the pecking order would be the tier 2 banks from a pure stock market perspective will outperform the top 2 banks. So number 3 and number 4 will probably do better than number 1 and number 2 within the banking side. Secondly, I would say NBFC as a segment also are definitely a beneficiary out of a lower rate cut environment. And also a recovery of consumption can be also played through NBFCs, because a lot of the NBFCs are consumer focused as well. So NBFCs definitely we like as a theme. Yeah, in the current environment, probably in FY27 banking, we believe as a segment will post easily 18 to 20% earnings growth. So we will look into those banks, whose growth will be, say, 500 to 700 basis point higher than the system credit growth. So probably the large banks probably might grow 100, 200 basis point higher, or in line with the credit growth, but some of these others might grow 500 to 700 basis points. And in an environment where the credit costs are under control and an upcycle, these banks do definitely, we believe they will get, there are chances of them getting re-rated.
All right, 18 to 20% EPS growth is what you are expecting. The street will expect some sort of credit growth coming back, given the sort of deleveraged balance sheets that we have right now and the prospects of improving demand. Thanks a lot, Rupen, for joining in. But you did speak about the Global Leadership Summit and the possibility of you being there in the evening. Meanwhile, we'll cut across to what's happening out there itself. Prashant Nair in conversation with some leaders of the financial sector.
I can draw a parallel with some of the markets I've had the privilege to work in, and how you move people from being savers to investors. And it's a multi-pronged approach you need to have. So, to simplify it, I would say you need to have the technology. Part of the technology is here, but you need more technology. You need to have the products. And when I say products, there's a complexity, because it's not only the investment products, it's also the digital product, which is the whole customer experience. People don't relate to a financial product. They relate to an experience. And then you have the education, which is extremely important. I would say, if you take a look at today, the state of literacy, financial literacy, there's progress that needs to happen globally, but I think India, is part of that story.
Just to press on that point, Mark, when we talk about, we speak with wealth managers, etc., all the time, and you get the sense, well, it's a, the client out there already has, every client has a, so, and yet there is so much excitement, and people are, and it's a booming industry. Just your, I know you have strong thoughts on this, but go on.
Yeah, so Wealth management, I think, needs to be defined properly first. There's so many versions of wealth management, and you can't talk about wealth management without looking at the individual segments. Wealth management, so first of all, the word wealth can be a little bit controversial sometimes. Wealth management should be for everyone, okay? The democratization of wealth management is something that should happen. Very often, and I think when you take a look at the state of the wealth management industry in India, it's a little bit of an elite. So there's I would say, a few thousand families that have access to wealth managers. Wealth management can include elements of advisory, so investment advisor, there's elements of succession planning, there's all sorts of different things. And depending on the segment you look at, the needs and requirements will be very different. At the basis, I would say wealth management should be advisory, fiduciary advisory for everyone, whatever your level of assets.
Welcome back. Well, a few minutes left before we wind down trade, but let's welcome Mitesh Thakkar back on the show. Hi, Mitesh. Almost done with the week, and good to see at least we defended the crucial lower levels, both on the Nifty, the 25,400, and on the Nifty Bank, the 20 DMA. What is your call first on the Nifty? You've called for a bounce. We got a bounce on both those two. Book some profits or carry the position and fill us in with fresh trades.
I think, Nigel, my idea would be to take some profits off purely because Nifty is underperforming. But if you have Bank Nifty longs, I think that's a different story. Bank Nifty is still looking stronger to me and can possibly head towards 58, 150, 200. So while the Nifty can also move along with that, I think it's the Bank Nifty which will be more rewarding, and that's where the focus should be. On the stock side, a BTST on Asian Paints with a stop at 2602 for targets of 2640. And Angel One, I think, that's the stock which is after sideways consolidation is breaking out. So BTST with a stop just below 2600 for targets of 2635.
Interesting one. Angel One, obviously the capital markets team doing well. Asian Paints has been doing well also since yesterday, ever since, the street has tried to believe that maybe the worst of competitive intensity in the paint space is behind, and Asian Paints obviously yet to report its numbers. On the 12th is when the company reports its numbers. In fact, let's take this conversation further with market expert Sudeep Bandyopadhyay joining in. Sudeep, up until the resignation of Rakshit Hargave, everyone was wondering whether Birlas will continue to disrupt or not. Once that happened, all the theories started coming out, the worst of competitive intensity being behind, the worries in the paint industry in terms of demand, etc. Now also behind in the second quarter, things looking a lot better. These stocks have seen a price correction, time correction, multiple correction as well. Where do you stand on this space right now?
Well, Mangalam, I think the competition intensity isn't going to reduce. I think, yes, the change of CEO will probably slow down the pace at Birla Opus briefly, but I don't think it's going to go away. There is competition, and there is, there are challenges for the leader, which is Asian Paints, because market share gain by Birla Opus will come at their cost and the cost of other leading players. So I wouldn't, dismiss the competition and, subscribe to the view that we have seen through the worst in this industry. Of course, Q3, Q4 should be better for the overall industry because, the monsoon is normally a slow season for the paint industry. Now that season is over, so things should pick up for the overall industry. But competition is not going to go away, and I'll be very careful. The valuations are not cheap. Whether you look at Asian Paints or Berger Paints, valuations are reasonably full. So I will be very, very careful before I recommend a buy in any of the stocks in this industry.
All right, we take that point, Sudeep. We'll continue our conversation after this short break. Just take one and come back. We'll also track the closing of the market. It's recovered from the lows, still holding around the 25,500 mark.
Welcome back. Well, we have still a few minutes to go, and Sudeep Bandhupai is still with us. Sudeep, wanted to ask you about two stocks. I think Vedanta is a stock in the past that you have been bullish on, if I remember correct. And the stock has moved up considerably. At current reckoning, what is the view? It's at a 52-week high. And on the flip side, Hindalco, that's the one that's actually been a better, safer bet on aluminium. But that's got itself into a bit of a tizzy because of the big capex spike, and now they're talking about further debt. Your view on them?
Well, Nigel, you're absolutely right. I have been positive on Vedanta for quite some time, and I have also mentioned that if you are a bit aggressive investor, Vedanta is the stock in the metal space for you. Yes, the aluminium overall is a very hot sector, and that is contributing significantly to Vedanta's overall performance. But beyond aluminium, even the other segments are doing pretty well. We know the kind of return zinc is giving. The silver component of that is significantly contributing to the zinc's profit, and through dividend it comes to Vedanta as well. Other businesses in the Vedanta stable are also doing very well. We believe that there's a metal super cycle which has started, and it's going to continue for some time, which will definitely benefit Vedanta significantly. And on top of everything else, as you are aware, the demerger which they are working on, there are challenges, ifs and buts, but I strongly believe that is going to happen. It's just a matter of time. They are still talking about completing it within this fiscal, and I somehow believe them that this will be possible with most of the issues getting resolved.
All right, we take that point. Just before we talk about market close, a couple of stocks I want to bring your attention to. One is CCL Products. Reported a very, very good set of numbers day before yesterday. The stock has been doing well yesterday and today as well. Has moved higher by about 5%. So this week's gain on that counter at about 22%. The other one, which has taken everyone's breath away, is Thangamayil Jewelry. Their foray into Chennai last year has actually been a very strong one. Higher gold prices and some additional, income that they made on some of the unhedged gold that they had. About 10% of their overall portfolio has done well for their margins and overall performance as well. So it's up 10% yet again today. In fact, if you pull up the weekly chart of Thangamayil Jewelers, it's up 55%. In this week itself, the last 5 trading sessions, and the Nifty is actually down by about 1%. The Midcap's not too well either. This is a stock which is up by almost 55%. The last 7-day gain at around 30% as well. Any of these jewelers that you like, Sudeep? Because, be that as it may, even Titan, for what it's worth and its valuations, has actually moved to a record high. Titan was at a record high just today.
Mangalam, I always like Titan, and I have been recommending Titan for a very, very long time now. The second stock which I like from this entire pack is Kalyan. Look, you have to focus on pan-India players who have a wide distribution reach and who are well hedged. I don't want to speculate on gold price moving up and down when I'm buying a jeweler. Thangamayil may be moving up because of the unhedged portion of the gold which they're benefiting, but tomorrow it may work the other way around. And these are very, very region-specific players who was outside of Chennai in Tamil Nadu, and now they're moving into Chennai. There is some excitement around it, but I think these are a very, very narrow plays, and I don't think I will recommend these stocks to my investors. I will still go with Titan and Kalyan.
Still go with Titan. It's interesting because Thangamayil Jewelers told us that, their hedged proportion has increased from 70-75% a few years ago, now up to 95%. So they're not as hedged. And the Chennai foray has actually done well for them because it was nothing last year. And now it's 20% of their revenues. And they believe the next 6 stores that they open will be in and around Chennai itself, which is obviously more margin accretive for them. Be that as it may, we'll take your point and take your leave on that as well. Sudeep, hope you have a very good weekend. And as we start to begin to wrap up of on the markets for this trading week, just keep an eye out on a few stocks. We have Bharti Airtel, which is now at the lowest end of today's trading session. Large part of the street would have believed that maybe after the supply that came in from Singtel, the stock would find a bit of a bottom. That's not the case to be. In fact, it's holding at around the 2,000 mark, down almost 100 rupees in today's trading session. Devi's Lab is the other one, which is lower post its numbers. The profits were a bit of a miss. Tata Consumer, after reporting a decent set of numbers in line, and also the management guiding for better operational margins going forward, the stock has seen some bit of profit taking. Tech Mahindra is lower as well. On the way up, though, today we had Shriram Finance, Adani Ent, Bajaj Finance, Bajaj Finserv, Tata Steel and Britannia. The management of Britannia fairly confident
of volume recovery in the second half of this year in their conference call. In the broader end of the market, it was the finance themes that did extremely well. L&T Finance was up 11%. Angel won the capital market theme. BSE as well was among the top gainers today with a fair amount of volume. KFIN doing extremely well, along with Vodafone Idea, which was up 3.5%. On the way down, poor numbers coming in from Amber Ent took that stock lower. ABB India as well, margins were weaker than expectations. The ordering activity was lower than expected, and that stock down about 4%. We saw some weakness in PG Electroplast as well. Delivery continued its decline post its numbers that came in yesterday. The stock was down about 10% yesterday, down another 3% today as well. On the way up, we had Thangamil Jewelry, like we just spoke about, 55% higher this week, and Venki is down about 9% in today's trading session. All in all, the Nifty ends flattish, but in no way is that a weak session, because we saw a 200-point recovery from the lows, and that's limited the weekly loss of Nifty to just about 0.8%. The Nifty Bank star of the show up nearly 800 points from the lows on Friday. With that, we wrap up on this edition of Closing Bell, but you stay tuned to CNBC TV18. More insights from CNBC TV18's Global Leadership Summit on the other side.
After about 15 years that I'm seeing that the tailwinds for the various segments of the real estate sector are strong. And I see them continuing for the foreseeable future.
Okay, we'll come back to individual segments, office and residential in just a bit. But Arpit, you tell us, about infrastructure also, things are from telecom towers, and you folks own some of the largest telecom tower assets in the country. How do you describe the momentum and the immediate future?
Yeah, thanks, Surabhi. So infrastructure is a little bit different, right? These are hard assets that facilitate the movement of people, goods, electrons, data. We're at the start of an infrastructure supercycle in India. Every dollar spent on infrastructure contributes $2 to GDP. And we are at the start of a $2 trillion investment cycle. So think about it when we're talking about contribution to GDP. 2 trillion contributes 4 trillion to infrastructure. So it's investment in infrastructure is essential, it's not optional. Now, if you get into sort of sub-segments of it, you talked about telecom towers. We still think there's quite a bit of growth left. Because remember, your mobile devices are the primary devices by which you're consuming data. And as you consume AI going forward, your mobile devices will be that primary device still. So there is a lot of build out in telecom towers. We expect another 300 to 400,000 towers over the next 5 years. You talk about data centers. We're at about 1,200 megawatts. That's expected to triple by any conservative estimate in the next 5 years. Or you talk about transmission lines, renewable assets. I can go on, but the reality is this is a secular trend, and there's no real cycle. We're just at the start of it.
So let me try and
Interestingly, of that 16, 7% is through cash yields. So think about it. You're not actually taking a lot of, there is capital appreciation, but you're taking lower risk on the market movements. And if you compare that to the Nifty 50, that number over the last 5 years is 1% yield for a similar return. So it's a very interesting sort of lower risk asset class.
I think the equity market performance by itself has made sure that REITs and InvITs are absolutely, shining under the arc lights, bright, especially in the last 1 year, right? We'll come back to this and we'll talk about InvITs in more detail in just a bit. But gentlemen, now let's talk real estate and let's kind of break down what's been happening in, in the office market, the commercial real estate market. Grade A office space is, I think, flying. And I saw some numbers. I think out of the roughly 80 million, if I remember correctly, square feet of absorption that's expected for this year, more than 90% is grade A offices. We know the demand that GCCs, for instance, are bringing about in cities like Hyderabad and Bengaluru. But the question is this. We're living in times which are dedicated by Mr. Trump. And isn't that the biggest risk in the room now? I mean, will this GCC demand continue to be as robust?
May I?
Absolutely, sir.
So I think the Indian commercial real estate market landscape has changed completely. Today, India offers a high quality, technically qualified young workforce at a fraction of the cost of what it would be in the developed countries. At the same time, India is now offering global quality real estate at a fraction of the cost. Now, if you take the combination of these two competitive advantages, it's a very compelling reason for international companies to come and set up business in India. Now, this is further supported by a very strong digital backbone that India has. And therefore, once you're in a virtual world, whether you're sitting in Seoul or Hong Kong or Delhi or Bangalore or somewhere in the US, it does not make a difference. And I think this market will grow very well. If I may please add a few more things to it. These global companies that are coming to India are now no longer looking just at real estate. They are looking at other aspects which go with just creating the concrete. They look at sustainability. They look at ESG scores, they look at safety, they look at being the ability to expand, they look at amenities and social infrastructure that's created for the employees who are going to work there. And they invest in their fit-outs more than developers spend in constructing the commercial assets. And therefore, they are so invested that they are looking for the bigger picture.
But no, absolutely, no taking away from all the points you made. But the question is, if these companies suddenly start getting disincentivized, especially in, let's say taxes is an instrument widely debated right now. If there are disincentives to send work overseas, and I don't call it offshoring necessarily because GCCs are doing some very high-end work, now, especially now. Isn't that a real threat and a real challenge? Maybe Aditya, you want to pitch in?
Yeah, so maybe, they have no other choice. Yeah. It's all about the talent, besides the fraction of a cost where 1/3 of real estate, 1/3 of people cost, but it's just the availability of talent. And I think more than the Trump risk, I think what India commercial faces is a genuine AI risk, which no one knows today what's going to happen. So when you look at this 80 million and, even for the 6 months year to date, we're record high, we're going to beat 80 million square feet. These are deals that happened 3 years ago that are now coming under completion. So when the OC really comes in and the lease is signed is when these numbers come in. So I think the really interesting thing is going to be now is, will 3 years from today, the leasing numbers be the same? I am an ever optimist, and I think that, yes, it will. I think India will come out strong from this whole AI generation revolution that's happening. The work will change. This whole GCC concept is just another glorified word for the back office work that was happening 10, 15 years ago. So I think this terminology of GCC will change. We'll be doing AI-related work. I think India will come out strong. I think the service sector will grow this country.
So
immensely.
As of now, and I mean, you have huge presence in Bengaluru, right? As of now, when you talk about demand from the traditional IT sector, I mean, are there signs that that's plateauing? Because they're all grappling with the whole AI transition. And that's the biggest question in the room. whether that'll just mean a reduction in the workforce and therefore less requirement of space.
Yeah, so I think it's again the definition of IT. IT has been taking a back step for many years, even before AI. But the GCCs are doing technology. So I think we confuse IT and technology quite a lot. These GCCs are very deep tech companies. You know, the innovation is happening in India. So I just think people blur the lines between IT and GCCs quite often.
Now I have a question specifically for residential housing. And it's a really interesting line I picked out from a Knight Frank report. I'm going to quote it verbatim because it's them saying it. I'm not saying it, okay? And I quote, inventory levels in the higher ticket sizes, particularly those in the 20 to 50 million and in the 200 to 500 million categories have grown by 47 and 19% year on year respectively and warrant a closer look in terms of an assessment on whether the residential market, premium luxury residential market is overheating. So?
Yes?
Is overheating?
I don't think so. What's really happening is that, and this phenomena probably started post-COVID when the economy started doing very well, and it had a little overspill of the COVID days also. I have seen that the younger generations now don't want to stay with their parents. They don't want to stay in a joint family where you have a bungalow and you stay on each floor. And they really want to be on their own. And when they want to be on their own, then luxury condominium housing is the next option that they have. And the option provides them with a lifestyle which they could never get staying in a farmhouse or in a colony. And it's here to stay. It will continue to grow. Except it depends how you define a luxury. Do you define luxury when you buy an apartment for 6 to 8 crores or for 20 crores or for 40 crores?
So, I mean, if you just look at sales numbers, residential this year across pan-India, January to September, that's the latest data that I found, sales have plateaued. I mean, they're stable, but they've sort of plateaued, I think, minus 1%. The question is on pricing. I mean, do you see scope for pricing to appreciate from where we are when it comes to premium real estate?
Yes, the pricing will continue to improve, but you know, I would request you to look at real estate from a long-term time horizon and not from 3 months, 6 months, 9 months. This is not an industry which works around those cycles. It's not like the production of a white good which is produced, sold, and then next year, 2 years later, you want to change. You should look at this industry more from a 7, 10, 12-year horizon and then look at the pricing and then see what the growth rates are. The studies that we do, we believe that, and these are historic studies, so we see that the residential markets tend to grow, the value tends to grow slightly below equity, but much higher than debt. And that's what I think one should look at and not look at the immediate past or the immediate future in terms of the price.
Fair enough. Now let's look at future growth and how the growth is going to be funded. We discussed, pools of capital, REITs and InvITs, among them. Let's come back and talk infrastructure assets, Arpit. Purely from a, capital standpoint, what are we looking at? What kind of capital? What will be the color of capital, foreign, local, domestic, that will keep funding this infrastructure growth? And then what's the best way for an investor to play this rise?
Yeah, absolutely. I think it, to your question, I would probably split infrastructure into various phases of development. If you're talking about developing infrastructure ground up, that will primarily, in our view, be led by the government and Indian developers. But once those assets are operational, they can be switched over to institutional investors such as ourselves, who have built real operating teams on the ground to be able to manage these assets. Additionally, we will also tap into InvITs to be able to fund these operating assets. And to your point around, specifically on InvITs, if you think about before InvITs, investors such as ourselves didn't really have the ability to invest in these assets. You had these holdco structures and you had the SPVs with the operating assets below, and sometimes the developers had a mixture of the EPC business and assets together in some of these listed companies, and there's nothing inherently wrong with it. It's just a different risk profile. Now with InvITs, as an investor, you and I have access to these underlying assets directly, the cash flows coming out of these assets. So I think that will continue to be an attractive sort of destination.
Okay. So if I were to ask you, Aditya, I want to invest in hard assets here in India. What should be the best vehicle of choice? And is it fair to assume that I'll keep getting an IRR of 16, 17% because the last 24 months have been absolutely fantastic? Is that a realistic assessment to have, expectation to have for the future?
So I would always advise on the REITs. I think it's a great product for a retail investor. You want to invest from 300 rupees all the way up to 10, 20 crores. It's been a game changer. Before, when someone was chasing yield, you would invest in these kind of B-grade office, strata sold, multiple different owners. You have problems with asset management, common areas, not collecting your rents on time, dealing with the tenant, a lot of headache that goes into it. So I think the REIT has really been a game changer. It is, I keep saying this, it's a low risk, medium return product. It will give you 12, 14%. It's not going to overperform unless it's coming off a low basis. But it is such a well-diversified and stable product. I think it's one of the best things that's happened in this country. Still early days, 20 billion market cap, listed real estate's 100 billion, 20% of the market is REITs. When you compare that to the US, is 95 plus. 95% of listed real estate is in REITs. Now, I don't think we'll get there because those are residential, healthcare, storage REITs. We're not that mature yet, but definitely you want to invest in grade A assets. The liquid REITs are the best way to do it. People need to move away from the strata mindset if you're chasing yield. If you want to buy an office for yourself, fair, but I think that education has to continue to happen to our retail investors for them to be able to genuinely make a yield.
15% plus should be a realistic expectation.
I would say 12 to 14 is where the REIT should be performing.
That's not bad. The equity guys say 12 to 15% CAGR returns. REITs are saying 12 to 14. I'll take it. Mr. Khattar, final words with you. And also on regulation, what's also obviously a huge boost for REITs, I'm guessing, is the mutual fund regulations are changing, and now REITs are part of the equity classification. Anything else that's required in terms of either government intervention or regulation to give a boost to the sector and to ensure, might I add, to ensure that some of the mistakes of the past cycle are not repeated?
Yeah, I think the present government, very stable and very sound and looking to Viksit Bharat at 2047 is taking long-term steps. And I think this real estate regulation was a very, very major step which institutionalized the industry to some extent and continues to do so. But if I have to pick up two things which I think are important from the further growth and institutionalization of the industry. One is simplification of the approvals process. I think as a developer here, Aditya, I think the pain that one goes through to get the various levels of approvals from various regulatory, state and central government bodies needs to be sort of simplified a lot. And the other is land record digitization and putting it together. I think if these two things are done, then India, from a real estate perspective, is on a very good run.
Okay, on that optimistic note, thank you very much for all the insights. Very, very useful for us. Thank you.
Thank you.
Meeting with the UPI rails, redefining how money is moving across borders. And at the same time, Amitabh, not to forget, capital markets are on fire, record number of IPOs, surging retail participation. That's just changing the nature of the game. And now AI is also learning how we invest, how we save, how we spend. So all this really brings us to the question about who really owns the future of money? And Dilip, the first question is to you. I mean, is it the banks that were typically seen as the custodians of trust? Is it, people like Harshal, Razorpay, that are redefining the experience? Or is it the code that is writing it, or the platform that controls all of it?
See, and Harshal may not like this answer, so apologies. So I think
that's a giveaway. It's not him.
So
it's NPC, I think.
So I think the customer will continue to own the money, and the banks will continue to remain custodian of customers' money. However, what will change is the how part dramatically. And I'm saying it's not going to change just by incremental percentage. And I think in next 5 to 10 years' time, the way consumer is using his own money or using the credit money is dramatically going to change. So consumer and the bank continue to have the relationship, but that nature of that relationship will change.
All right, you're not writing off the fintech side. So Harshal, let me ask you, you've just announced this agentic partnership with OpenAI and of course NPCI, where AI is pretty much making the decision on how you're going to pay. How close are we to a world where, how UPI is as easy as second nature to us when it comes to payments, where we leave these decisions to AI? And if we do, I mean, who's really controlling the flow of money?
No, let me correct that. The decision is always going to be with the customer, right? Like when you want to pay, it has to be your decision that you want to pay. Everything else that we do, right, whether, as Dilip spoke about, like the platforms that we build, the consent layers that we build, the idea is how do we make it easier for the decision to translate? So earlier when you had to really make a payment to somebody, you had to either go to a bank or withdraw cash, and then you had to do all of those things. Today it is, I want to pay somebody money, I can open my UPI app and pay somebody money, right? And like enter a PIN, now NPC has announced biometrics, so I can show my face and complete the transaction. Agentic will make that one step ahead, that at the time I'm discovering what I want to spend on. So I'm chatting with the chat GPT and saying, hey, I think I want to make this today. And it says, you need these three ingredients to make this at home. And you say, can you buy this for me? And it figures that out.
Well, the money, of course, is owned by the consumer. My question was, who controls the flow of money?
It is all with the consumer. That's what I'm saying. So at the end of the day, it's like asking me that when I'm having cash in my pocket, is the money belongs to my jeans or my wallet or my leather company? Like, it belongs to me. It is my money. Yeah. Everyone here is to assist me in spending that money. So the platform, the bank, whatever interfaces you build are there to assist the customer to spend the money. With more and more regulations coming in, like for example, the data protection law and all of those things will make it more and more, will put the customer more and more in control of his data, along with that money and the financial world that lives with it.
Well, I thought Harshal will add that India is the second country to launch the agentic payments in the world at the GFF.
Yeah,
however, it's a pilot, but we are the second country in the world to launch the agentic payments.
Yeah, and just 20 days after US piloted agentic payments, India piloted agentic payments right here in this room.
Yeah.
And we're the second country in the world to make that happen. I think it's one of the things that you don't talk about as much.
Yes, very much. And that was at the Global FinTech Festival. We heard those announcements. And congratulations to the NPCI team and you FinTechs for making that happen. But Forum, in this interconnected world, I mean, you're controlling the flow of money across borders. Who really controls the trust? I mean, the money in my jeans, in my wallet, in my pocket, it's all mine, sure. But who's the custodian of trust?
So, I mean, that's, from a PayPal perspective, as a 25-year-old platform that's built on connecting two completely untrusted entities around the world, there is a clear paradigm shift in terms of how trust moves, especially with agentic AI transforming how commerce takes place. And as PayPal's mission moves from just payments to enabling commerce and democratizing, connecting MSMEs with parts of the world that they've never, ever been able to do initially, especially from out of India and Southeast Asia, there is a fundamental difference in how trust moves across borders. We have strong governance framework in the partnership that we announced with NIPL. We require those, right? The traditional security mechanisms don't go away. However, we need to look at how the threats are evolving,
the power that AI brings to the enablers of technology, the same power the attackers have as well. We see deep fakes, misinformation, disinformation, non-human identities, authentication authorizations becoming much, much more advanced, much, much more scaled, and at a speed that we haven't seen before. And that's why PayPal's partnering with OpenAI, with Google, with Perplexity in trying to come up with protocols. We may have heard of A2A as the overall agentic to agentic commerce protocol. And now they have on top of it AP2, which is agent payment protocol, where security is built in. We want to make sure that authorization, accountability, auditability of all of those, the transparency that the customers need, like Arshil was saying, the power, the control, is still with the customer. However, when an agent performs that money-making task, the commerce task for you, it is done in a way that anybody at any point can come back and make sure that the intent, that the non-repudiation of any particular transaction can be tested.
You know, that's a whole lot of risks that you're talking about, and I'm sure everyone in this panel and in the community is very, very wary of cybersecurity risks when we talk about digital payments. But what, to your mind, is the most underestimated one by the industry, by the stakeholders?
So I do think that people believe that one is the power of AI in its self-healing capabilities, in its ability to learn very quickly. They don't have to worry too much about the traditional security risks. And I feel that the governance, for example, I think yesterday, the AI governance framework that METI released, again insist on strong principles, strong risk-based mechanisms. If you again think of PayPal, like the primary way in which commerce had happened online, there was always a trade-off between security and convenience. When we started creation of what was called as FIDO initially, now there's passkeys, we've shown that security and convenience can coexist. Trying to come up with innovative ways in which you can have the convenience, the speed, and without compromising on security is a way one can show how you don't have to have that trade-off or the compromise on either the experience or the protections that a customer expects.
Well, we've covered a fair bit of payments, and there's been a whole lot of innovation there that the world, it's there for the world to see. But Amitabh, I mean, talk about the retail markets, and we at CNBC here focus on that very closely. Spate of IPOs, a whole lot of retail investors coming to the market, new investors coming to the market. Is capital markets going to be the next frontier of financial innovation, and what does that mean for the future of players like you, traditional players?
Look, there is a significant shift and change already happening due to the surge of capital markets in the financial intermediation that it kind of happens from a conventional basis as to what's happening right now. If you were to pick a few thematics, there's already a shift from a bank-dominated system to what is market-based intermediation. For example, corporates are no longer dependent so much on bank loan as providing them the credit appetite, but are relying on the bond markets and more so from there. Similarly, if you look at mutual funds or an NBFC, they are channeling the household savings and putting it into new productive sectors that one is seeing. Democratization of investment. You've seen these low-cost apps, UPIs, all of that is enabling, and you're seeing a surge in the capital markets that you were talking about right now.
Well, Dilip, let me toss that to you, because, I mean, there's a whole lot of conversation, a lot has been said and done about UPI, frankly, but, I want to ask you, while UPI has changed the nature of how we pay, how we borrow still feels very old and still feels like it has a lot of friction. There's talks of unified lending interface. It's touted to be a game changer. We haven't seen the results yet. But what, to your mind, is going to be the most transformative change that could be already in the works that will change how credit is distributed in India?
So when you look at, and of course, something like ULI kind of creates an interface to get a one-stop shop kind of a model to get all the information relating to make that decision to lend or not. But I believe that, while the UPI is in the process of serving the purpose on the consumer spending its own money, right? I think the UPI is also getting kind of shaped to use it for the credit purpose. So whether it's a credit card, you attach your credit card on UPI, or you get the credit line, which has been approved by RBI. And I think fundamentally, while it's a very initial stage as I see, but I think fundamentally it will change the game. And simply because of the reason of it has the ability to become super fast in that sense. It has the ability to become a short, and it has the ability to become really connected. And when the consumer is real-time connected with you, the decision-making on step up, right, becomes very, very easy. And actually, it's a very different game altogether, right? Because the ability to score the customer, ability to collect the money from the customer in the near zero cost is the kind of a new model what we are thinking is going to happen. It might take some more time basis some of the changes in the regulations and otherwise. But I think this credit revolution is going to come in, and we believe a fairly short, large volume credit for the large amount of population, and in a fairly contextual manner, because we have a lot of data on UPI, and I think that many financial institutes will get benefit to use that data to really expand the credit reach in India.
Well, Harshal, what about credit on UPI? Or rather, is there some other technology you're more excited about? And let me also ask you, credit has very much been the domain of banks, just like payments has been taken away by fintechs. You think, thanks to these new technologies, you can make a bigger dent there, of course, apart from partnering with the traditional players?
Yeah, no, definitely so. I think every transformation has this particular journey. So you start with transaction processing or payments, and it's not just India, everywhere else in the world. It starts with payments. Once your payments are digitized, then you can do credit much better, because now you have enough data to write credit on top of it. I think over the last 10 years, we have solved the payments problem quite well, and we are, to every extent, there's still a lot more to be done, but to most extent, consumer payments has been sorted, and where most consumers are spending on top of UPI, which generates enough data, enough insight that you can do credit on top of it. I think the opportunity we have explored an opportunity with credit on UPI, which has picked up really well. It has been almost a year, 2 years since it has really taken off, and it's taken off in a significant way. Today, credit card transactions on top of UPI is almost 25% of all transactions, and it's scaling really well. I'm talking about Razorpay platform.
Yeah, I was just
on Razorpay platform, 25% of all transactions are credit on UPI, UPI transactions, and scaling quite well, simply because customers are now feeling that, okay, if I can get access to the same rails that UPI has, but I can use credit instead of my bank debit, then it's significantly better for me, because I don't have to spend money out of my pocket. I think the next step is solving for scoring. I think that's this one area where AI is going to play a really important role. I think the hard part of distributing credit at scale has been underwriting. How do you do underwriting of individuals at scale at a very localized level, but at the same time doing it at a country level scale? I think with AI, we'll really be able to reach the threshold where every single individual can be underwritten using the data that he generates, using the transactional pattern that he follows, and being able to distribute credit at scale using that, and bring the cost of credit down significantly. I think that while a lot of that work has happened in the last few years, personal lending and personal credit has scaled a lot. But I think credit at the point of transaction or embedded finance, as we've been talking about it for the last 5-7 years, I think AI is probably the missing step there, which can allow us to do real embedded finance, where I want to buy something on this website right now. Somebody comes and gives me credit for that particular purchase at that point of time. I think we'll see it happen far more with AI coming in.
Well, Dilip, just to close the loop on credit on UPI, since, Harshal is saying 25% of Razorpay's transactions, on credit for UPI are going through that. Why aren't you opening it up for other players outside of RuPay? I mean, when will you expand the ecosystem, bring in more players for meaningful scale?
See, look, that's not NPCI's call. That's a regulator's call. But
But you're very much involved in the decision making.
But let me put it very differently, right? Today, every organization has a right to use the innovations that are created by that particular organization, and it could include a variety of them. And similarly, the other institutions also has leverage from their innovations. So I think, Ritu, it's a little unfair to say that, every organization should start sharing their IP with the other institutions. And I don't know how does it work in media companies, but anyway. But being said that, I just want to pick up one point from what Harshil said.
Yeah.
Right. I think and you spoke about the AI and what is the future it lies about, and I think it's going to be a little bit of a question mark in everybody's mind that how these platforms are going to behave like. Right. I'm just saying because see today the consumer, people speak about in 5 years UI is going to be. The apps are not going to be there. It's going to be the Gen Z likes to talk, and nobody's going to use the apps. I'm saying these might be a little bit of extreme views, but I think the platforms are going to create a very, very important game. And I believe that somewhere the India must play its game to the true potential, so that while we have a great sovereign platforms for the payments which are predominantly driven by API. And I think there would be a need to create the platforms that are powered by AI, right? Yeah. So that we control the data, we control our destiny, and we are not fully only reliant on like social media on the Western world.
Well, Forum, let me quickly bring you in on this because, Dilip brought in sovereignty of AI. At one point we used to talk about currency wars. Now we're talking about AI sovereignty or algorithm wars. Are we going to see a future, you think, and for someone who's building these rails to interconnect the world, are we going to see a future where there'll be digital borders for the movement of money, and what will that mean for the future of global commerce?
Yeah, I think, we announced PayPal World a few months ago, and the partnership with UPI, with Tencent, with Mercado Pago. We just added a couple of more players in UAE and Qatar. We believe interoperability is key, right, to connect the countries, to connect various networks, to connect various currencies. You have to have a platform that can speak every single language, that can allow every single individual to participate in the commerce and the transformation through the AI that is happening. Having said that, there is obviously a need for appropriate protections, appropriate guardrails that allow for the sovereignty discussion, for protections in a way that is compliant, that is allowing the individual to have the trust in the ecosystem. So it cannot happen without trust as a core mechanism. And that's why being present in 200 markets, allowing us to collect the data. Again, Dilip mentioned, how do you use the data to introduce some step-up mechanisms? Sure. We do that with 350 data points to decide when do you want to authenticate somebody. So to have a compliance, I don't think these are mutually exclusive. You can be compliant, you can respect any sovereignty requirements that are needed while allowing individuals to be operating in an interoperable global network.
All right. Amitabh, very quickly, since we're talking about AI, and AI is making all kinds of investment decisions today, at some point, do you think AI will go from being an enabler, an advisor, to a competitor for players like you?
No, I think adopting and embracing technology is a given. It's a must. So I don't think it's a competitor. You're right about being an enabler, because what it does to us is allows us to automate our system, allows us to provide services which are superior in terms of our customer, their acceptance as well. So it's an enabler. It's not a competitor.
Yes.
See, I think the AI, today's AI, right, it's still very expensive, right? And again, we should be very careful when we say that AI is going to eat the world, right? And I think the question should be the what use cases, right? Because today, and very simple example, what you can do with API, you don't need an AI for that, right? So I'm just saying that the simpler transactions, the high volume, low value transactions will continue to be dominated by the API-based systems, but definitely the level 3, level 4 use cases, right, which are fairly complex to solve only by API, will come in with AI. But again, the cost is going to be biggest hindrance on really, at least for the country like India, to really take AI to the every Indian in that sense.
Sure. Yeah, just in 30 seconds, Dilip, is there one thing AI should never be allowed to do with our money? AI should never be allowed to do with our money. Is there one thing?
AI to do?
Is there one thing that AI should never be allowed to do with our money?
With our money. So, of course, as Harshil said, the final word should be the customers.
All right, Harshal, final word for you. If you had to define the future of money, the next decade of fintech, as a Bollywood movie title, what would it be?
Invisible.
Invisible. All right, on that note, gentlemen, thank you so much. Dilip, Amitabh, Forum, Harshal, it's been a pleasure speaking with all of you. Thanks so much.
Thank you.
Thank you all.
Arundhati, and a very good afternoon, evening to all the ladies and gentlemen here. Let's first begin by saying and asking, why is cybersecurity an important conversation to have on a day like today? I think we'll all recollect the JLR cyber attack incident that crippled production and the UK government had to step in. Something that's reserved only for systemic crisis. Or last year, Taylor Swift's deep fake porn which flooded the internet. The world we live in is increasingly so digital that the repercussions of any cyber attack hit deeply at the government level, enterprise level, and at the personal level. Which is why this conversation is so important to have, and we've got the perfect guest joining in today. Sachin, let me begin with you. It's not just about data. It's about control. It's about power. How big is the problem right now when it comes to cyber attack and security?
Thanks, Rima. Great question. How big is the problem? Right now, the cost of cybercrime in 2025 is around $10 trillion, and it's going to become $14 trillion in 3 years. Let this number sink in. Only 2 countries have GDP more than $10 trillion. The entire health industry is $10 trillion. So globally, we are talking about this scale. And these are not teenagers sitting in basement and attacking us. These are highly sophisticated professionals, big enterprises, sometimes nation-state actors. They might be having a conference like this, sharing best practices in their enterprises. Everything from schools to hospitals to energy grids, it is on their radar. And now talking about India, just seeking some cues from past panel, I think we are witnessing a nation which is leapfrogging into digital world. We are the #1 payments market globally. Somebody said 20 billion transactions. We are also the largest YouTube audience. We are also the 2nd largest Android market. 65% of population below 35 years of age. So clearly, there's a huge set of vulnerable youth which is shaping and also getting shaped by the digital world.
Interesting. Jay, hi. You've built and led Kotak 811. And I believe Kotak 811 was named after 8th November 2016, the demonetization date, the day that changed India's and turbocharged India's digital banking system. So now tomorrow you complete 9 years, 9-year anniversary. Congratulations.
That's correct. We're still only 9 years young.
9 years young. But so much has changed in the last 9 years. How do you feel about cybersecurity today versus what you did when you started off?
As a business leader, I feel the same way as I did 9 years ago in the context that banks are custodians of customers' money and custodians of trust. And so we have to do whatever it takes to prevent that from getting eroded. How that manifests itself changes year after year. For example, in 2021, we had a video KYC regulation that allowed us to do KYC on video. Today, AI deepfakes present the kind of problem that could substantially undermine or change that entire framework. So we are constantly evolving and constantly fighting to ensure that the trust and integrity that our customers have with us remains.
Sandeep, you've been in the industry for decades. While AI brings a lot of promise and opportunity, it also brings new threat actors. And every time they're getting smarter and smarter. How different are cyber attacks in an AI-enabled world versus what they used to be now?
So a couple of things for context, right? I think we heard earlier that these aren't people who are sitting in a basement or kids sitting in a basement.
It's like almost organized crime now.
They are very sophisticated techies who are actually doing all of this. And I think with the availability of AI tools that are available, it gives them a lot more ways to, as they say now, it's smart logging in versus hacking. That's being used. And now once they enter through the AI portals and others, it gives them access to individually identifiable information. A lot of the company's assets that are their priced assets. I'll give you a couple of data points. We do a cost of data breach report every year. And I think you heard some of the numbers earlier in terms of what data breaches cost us. But if you look at, when you do a study and ask people how well they are prepared, there's only 37% of companies that sort of cited that they've got controls built around their AI implementations that have effective protection and security protocols and so on. Only about 60% said that they've actually got some form of AI governance that they've built that monitors how models are used, how AI applications are built, how they are deployed, and so on. So I think this whole notion of, we claim that we are very worried about data protection and so on, but with AI and the usage of AI tools that's becoming rampant, there's a lot of it which is out there and vulnerable and exposed to cyber attacks.
Especially now, Sachin, when we get into agentic AI, right? Here, it's an AI which is able to attack without human intervention. It's not AI assisting anymore. It's AI acting autonomously. You almost feel like it's an AI versus AI cyber battle taking place.
Yeah, that's right. Would like to step back and discuss, share about defender's dilemma. Many audience may not know. So if I am an attacker and I want to steal a wallet, all I have to do is find one wallet in the crowd and steal it. But as a defender, I need to protect all the wallets all the time. So when you talk about agentic AI, I think defenders deal with a lot of drudgery, a lot of grunt work. And 80% of our work can be offloaded to an agentic AI, while the workforce can be reoriented to focus on more intuitive and strategic things. So I think we believe that this is the time that AI will reverse the defender's dilemma, and it will tilt the balance in favor of defenders, because defenders can now use agentic AI to defend against the AI. And somebody talked about keyword as invisible. I think we are looking forward to creating an invisible shield, like a human immune system powered by AI, which is constantly identifying new threat actors, constantly evolving, and making sure we are constantly protected.
Jay, you said banks are the custodian of data, of trust. Now, whenever there is competition, competition maybe can beat you in terms of pricing, maybe in terms of customer experience. But do you think your moat as a bank is your trust? Is that the long-term advantage, competitive advantage you have, trust?
I think trust is an output metric that comes from years and decades of doing the right thing, doing right by your customer, and the word bank, the regulatory environment also helps. So in the short term, banks can take advantage of the fact that we are trusted. But in the long term, if we don't keep doing what is right for customers and innovating and adapting to the times, trust is not to be taken for granted.
But do you think a digital bank is more secure than a traditional bank?
Kotak 811 is not a digital bank. Kotak 811 is a platform within Kotak Mahindra Bank. So I think that should tell you how I feel about that.
But as a broader, from an industry point of view, if we do see an increase in the number of digital banks, how would it compare?
I think you have to be careful with how far you go down this road. But broadly, the world is digitizing really fast, and so you will have to build trust and security guardrails around end-to-end digital. And there will come a point where digital itself wins decisively and physical may be less relevant, though I don't think that point is in the very near future.
Yeah, but I think, look, I'll just add to this. I think Jay made some very important points. That at the end of the day, I think trust sort of builds over a period of time in terms of how you continue to deliver services and so on. I'm a fundamental believer that technology or AI or any form of technology or digital assets that people will use are those that people will trust. And you need to sort of get that built in. So there's a lot of things today that I think people are doing, such as, zero-based architectures, you don't trust. It's zero trust architecture. You don't trust anything. You make sure that you do have protocols where there's only a need to know basis. That's the way access controls and others get built in. But those, I think, will have to evolve and strengthen over a period of time, just as the bad actors get worse. I think that's where we're going as a business and an industry.
Sachin, I also want to bring in the personal angle over here. So far, we've been discussing at an enterprise level. But see a company like Google. It's not just a tech company. It's where our digital profile resides. You know my emails via Gmail. You know what I watch via YouTube. You know what I search via Google search. And you know where I travel via Google Maps. So in that context, how do you all, because you are again custodians of so much personal data, how do you all see security and what are you doing to protect individual data?
Got it. I'll start with mission of my team is to keep everyone safe at scale. And when we say everyone, we mean it. It's not just Google, Alphabet. It's not just the billions of users that Google apps have, but everyone safe at scale. So starting with, we make sure we have an invisible shield behind every product so that we secure them. So when you get up in the morning, open the Gmail, 99.9% of all spams are taken care. When you go to a website, we scan billions of web pages and issue millions of warnings saying, this is not a safe site, can you go back? We also have privacy and security by design. So while we are custodians of data, we make sure we provide transparency and all the tools to everyone to decide where their data will go and live. And finally, we have seen there are novel attacks in India, and we have a Google Safety Engineering Center. This is Asia's first. We launched in India this year. This is where we connect with local academia, we connect with our ecosystem, fact checkers, publishers, government, and industry to make sure we keep the entire ecosystem safe. And that's one of the initiatives that we have.
Sandeep, AI is making everything smarter. But quantum computing can break the smartest of encryption. Does that mean that there is a possibility that everything we know about cybersecurity will not hold true in a quantum era? Because quantum can break the toughest cyber defense?
So I'll make a overarching statement. I think as quantum computing becomes more mainstream, it is real today, by the way. Quantum is very real.
Even at scale?
Yeah, I mean, people are using it. We've just announced two banks who are starting to use it for portfolio management and getting brilliant results out of it, right? So quantum's here. I think what we'll see is if you talk to a pessimist, they'll say it's probably 4 years out. You talk to an optimist, they'll say it's 2 years out. So quantum's here. Once quantum is operating at scale, it will equip bad actors to become worse and bad actors to sort of hack things a lot faster, right? And even today, I think there is a notion amongst bad actors where they're saying, let's harvest now and we'll decrypt it later. But quantum technology will allow you much faster decryption of what we know today as security protocols. So we actually have to start worrying about it right now. When I have conversations in Delhi with our IT ministries and science and technology ministries, even telecoms, right? They are all starting to think about quantum cryptography protocols that are going to be important. US has been a little bit further ahead on this. NIST has published 3 cybersecurity quantum cryptography protocols, 2 of which we've actually helped author. And these are now going to start to, I think everyone around the world has to start to look at it, because this is a technology that is going to equip bad actors getting worse. So the notion of building in quantum safe capability within your systems is important. So even, for example, data security software and others, we've started to build quantum safe capability into those applications, those software capabilities, because I think that's sort of where we are going to have to be ready with.
Can I quickly add something? Sure. I think this danger is real, that with quantum coming, the current encryption can be broken, and Google is making strides into quantum computing. We recently launched an algorithm and one step closer to the real world application. But Google is also investing in post-quantum cryptography, and we believe once launched, we will protect the passwords for decades.
Jay, in the event of a cyber attack, where does accountability lie? Who owns the cyber risk, to your mind?
That depends on where the weakness was. If it's a weakness on the bank side or the customer provider side, the accountability lies there. Otherwise, you have to give me more context for that.
Would any of you, gentlemen, come in on accountability?
I'd say it's a joint responsibility across the board. I do believe now that cybersecurity needs to be a boardroom issue for every enterprise. It is becoming now. I think it's something that I know for a fact. It's always a board agenda for us every quarter, and it is something that everyone needs to look at. I think even when we talk to the government, I think the government's very, very quick to say that, listen, cybersecurity should only be the responsibility of the government and watchdogs. It's something that every enterprise has to think about, and it's something that I think every consumer should think about in terms of applications that they use and digital assets that they are using.
So Sachin, if there's one thing every individual out here should change in their digital behavior, starting from tonight, to protect themselves digitally, what should it be? One thing.
One thing. I think one of the biggest threats we are all facing is deep fakes and misinformation. It's possible that one of your relatives calls you with the deep faked image and asks you to deposit money in the hospital. So what you can do is 3 things. One is talk to your family and come up with a code, a common code that you only understand. For example, in my family, we have a book name. So ask the question, like, what is the book name? If the person cannot answer, most likely deepfake. Second, ask them to move hand in front of their face. Deepfake does not allow that to happen. So for now, things might change. And finally, ask them, I'm going to cancel the call and call you back. Because spoofing can happen one way, but not the other way. So if you can have these three things there, you might protect yourself from deepfake.
These are very interesting, hacks that we should all remember. Thank you very much, gentlemen, Jay, Sandeep, and Sachin for joining in and sharing your insights. Great, insightful conversation. Comes to AI is often dominated by headlines. Using a phone which is priced at 6,000 rupees. We are multilingual, different accents, and most of us are most of Indians are first-time digital users, not digital natives. Our realities are different, and AI for India needs to be inclusive rather than exclusive. So which is why this conversation with Preeti I'm very excited about. And at the heart of tech transformation, AI, that's taking place in India, we have Google. And Preeti, this is a topic which is very close to your heart, inclusive growth and how we can use AI as a blueprint for inclusive growth. So sitting where you are, take us through the opportunity.
I think the real opportunity for India and Global South is really to use AI not just to catch up, but to leapfrog ahead. Because we've been given this unique technology to be able to solve some of our biggest systemic issues at scale. But for that, we need to build new models of development that reflect our languages, our culture, our people, indeed our constraints and our priorities. Now, AI can, should, and will be the foundation of inclusive growth. It can accelerate productivity, and it can close access gaps when we talk about healthcare, agriculture, and education, and help us solve problems at population scale. So the way we think about it is, there's a lot of hype, right? People say, is it gonna be real? And we talk about adding, say, 400 billion, through AI to our economy by 2030. But we deeply believe this in Google. Think about AI and measuring AI in how it will transform lives and not just balance sheets and P&L. And the way we need AI to be inclusive is based on three things. One, understanding our language and cultural context. We need to make sure that AI that is deployed understands the key languages in India or other countries in Global South. And for that, making sure that we are training AI through local data sets is absolutely key. And that is what we have been doing with our open source models like Gemma, or project called Vani, where we provided data sets of local dialects in India to be made available to train models, because only then can it be deployed to be of value to every Indian. And then we are talking about building local capability. So it's about building compute and infrastructure locally, developing that pipeline of talent, because it's very important that we are not just implementing something that is developed elsewhere, we are also innovating. And last but not the least, it is if we innovate in a responsible manner and deploy it in the right manner, we can absolutely scale it, like I said, to close access gaps and leapfrog ahead.
So AI not just for economic value, but for real impact at scale.
Transforming the lives of every single citizen.
Every single. So AI has a lot of promise. But what about real progress? As you said that, at Google, you're solving for the constraints. You are training your data sets on different languages, understanding the culture. But there are constraints like there is no internet. Many families have one phone between them. Even then, there is intermittent connectivity. I mean, there are so many challenges to achieve this inclusive growth and have that impact, the desired impact.
So think about this. We've been India in deep partnership with India over 2 decades, right? And some of these constraints that you talk about, it's not just about a low-end smartphone or internet connectivity issues. It is about, just people having different cultural context or different levels of digital literacy. So I would like to say that we've been working on this. And by the way, we have been an AI company for several years, building AI into our search, maps, and all other products for years. So when we think about, how our products, so think about search or maps or even YouTube, we have carefully built our products. And if I may use that term, we make sure that if you're in a zone with low connectivity, the performance will degrade a little bit. The video quality or the audio quality may go down, but it'll come back up to that great quality once your network improves. So we've learned over the years as Google in India on how to make our products work for some of these constraints, how to have the lighter versions of our products on lower-end phones also. The second thing when you talk about these constraints is building in inclusive accessibility for all our products. We have invested hugely in smoothing out the UX interface, right? So think about Google Pay. From a street vendor who's not very digitally literate, they can use Google Pay to make payments and make a living, and to the most sophisticated users. So we have learned over time to make sure we have built that UX which makes our products inclusive, regardless of the quality of phone that you have and the internet accessibility that you have. And that thinking and that experience is what is continuing in how we are developing and deploying AI into specific apps and use cases. And we're also working with local partners, Rima, by the way. A very important part of our Google work here is to bring the best of our full stack approach. We have the infrastructure and compute, we have the cutting-edge frontier models, and we are building apps. But we do it in partnership with local, ecosystem developers, academia, research teams, so that everyone is thinking local and India first.
Preeti, you just heard the discussion that we were having on cybersecurity and what it means in an AI-enabled world. There are deep fakes, there's misinformation. What does security mean to you? Wanted you to get your views in. And how does Google work with the entire ecosystem to bring in that alignment?
So I want to say it is a very important and critical priority for us, but it's very important equally to understand it's a shared collective responsibility of the ecosystem between the regulators, players, the tech companies, and telecom providers, what you call the safety experts. So I always like to think of this as safety is infrastructure. It is foundational. It's a horizontal. Before we think of anything else, you got to build it in. So 4 or 5 principles. Security by design. It's not an afterthought. build it as you think about designing your product or your infrastructure, so it's not an afterthought. Then you think about governance. It's very important to bring the strongest sort of safeguards in the highest risk areas, but being smart about where we leave room for innovation. So when to go hard, when to pull back. Then, in this age of synthetic content and deep fakes, having tools in place which can, we talk about watermarking all synthetic content in a visible or a non-transparent way, and then ways of detecting that so that people know that this is fake content. And then we're talking about real-time threat intelligence, which the previous panel was also talking about. We can only stay ahead in the game at a country level, at a global level, if there is a very good and fast way of sharing, how scammers are getting ahead, what's the latest game in town. But as Sachin was also saying in the previous panel, AI is actually enabling us as defenders to be just catching up with the perpetrators. And last but not the least, we believe in user resilience. So making sure we are investing in educating users in a very simple manner so they know I'm getting phished or I'm getting scammed or so it's a multi-360-degree layer approach, but working with the ecosystem.
A lot of businesses, companies, founders must come to you asking you, how should I use AI? Everyone believes that AI can transform their business. How much of that is hype? How much of that is reality? What is the advice that you would give founders who can use AI to make a real impact?
So 2-3 things. We will say to founders, values over vibes or feelings. Make sure you're developing something that you can measure, whether it's revenue, cost savings, some measurable impact, better returns. 2 is think about things in a very systemic way. Think about transforming process, not just a bolt-on or an add-on cool feature. And then, like I said earlier, just build trust in as a product. So you're always thinking of that and not that as a cool thing. I think we work a lot with the founders and that ecosystem. We have a startup accelerator, and we are working with a lot of AI startups to share, our expertise. We share cloud credits and all of that. And we look at them and we say, are you solving the hard problems of India? When you talk about preventive healthcare, when you talk about diagnostics for tier 2, tier 3 rural Indians, who don't have that access, when you're talking about personalized learning or an AI tutor for anyone, whether it's an affluent kid or a kid, who does not have access to the best that we have access to. Efficient logistics. So think of the use case and hard problems, not the cool thing. And then look at India's unique strengths. Look at DPI. So build on those guardrails. Make sure it's localized. And if you asked yourself, are you solving the hard problems of India?
For sharing your insights. Thank you.
Hitendra, it's wonderful to have you back at the Global Leadership Summit. Thank you very much for joining us. Ladies and gentlemen, I do want to make a special mention because HSBC has been partnering with us, not just for the Global Leadership Summit, but for something else that is very, very close to my heart personally. It's our campaign called Future Female Forward, where we talk about the need for gender neutrality, gender parity in the workforce. So thank you again for partnering with us for both this as well as for Future Female Forward, Hitendra.
Only thing, you should have said it's close to our heart.
Yes, I admit, that was a mistake. It is close to our heart, absolutely. But you know, through the course of the day, we've had the global economy being described as tenuous, as volatile, as uncertain. But there is unanimity and consensus as far as the Indian economy is concerned. Stable is perhaps the most sort of underrated adjective that I've heard so far this morning about the Indian economy. So let's put that in balance. What's happening globally with respect to what's happening in India? Hitendra, how do you see the picture today?
Yeah, so I think you said it yourself. I think if you look at the monetary policy statements or any policy statement of any central bank, ECB, Bank of England, Federal Reserve, Reserve Bank of India, I think the word that's been most commonly used is uncertainty, right? Because we are living through unprecedented times in terms of policy actions. And I don't think any of us, any policymaker, any sovereign has a playbook. What happens if your tariffs go to X levels? What happens if certain products you just are not allowed to export or allowed to import, etc. So far, I think we have to say that the wise people about a year back or at the start of the year were indicating that there would be deep recession by now. There will be highly inflationary economies by now. Now, whatever is happening, that's not the case. We are not at the cusp of a recession, and we are certainly not looking at runaway inflation of the types that were feared 8-10 months back or so. So if you sort of go by that narrative, and then to your question on India, right? I mean, you look at India, political stability, whichever way, 10, 11 years of extreme political stability. You know, we get upset when we grow at 5.5%, right? Which is higher than the average rate of growth of the world. Inflation has been low and stable now for the last 7-8 years, more than it's ever been. We've got financial sector stability, market stability. So if you look at India in the context of a world which seems highly uncertain, clearly we shine out. We shine out in pockets. You know, I think in the previous panel we were talking about how much infrastructure is getting built, etc. So yes, I think by all accounts, the moment is ours to seize as a country. Because if there is a shining beacon out there in the world which shows stability, promise, growth, certainty, then that's India. So now, as citizens, as part of the financial system, as part of the communication or the media system, or policymakers who've been here since morning, I think all of us are seized of the opportunity. Let's see what we do with it.
It is our moment to seize, as you put it, Hitendra Dave. But you know, the HSBC Global Leadership was here in India a few weeks ago. We've got many global leaders who've been in and out of India at this point in time. One of the issues or the dissonance that's being discussed is that while there's a lot of interest, a lot of enthusiasm about the India story, the domestic market, as well as the opportunity to export from India, at this point in time, there seems to be some hesitation, some pullback, or a pause perhaps on FDI flows coming in. What's the sense that you get from the conversations that you're having? Is this a tactical pause at this point in time, given the uncertain waters we're in?
Yeah, so I think it's a very fair observation that on the one hand, we have this wonderful narrative of India, which we spoke in the earlier part just now. And then you look at the data, and it seems to suggest that the flows are not commensurate with the narrative that we have or with the visits by various boards, ours included, etc. But again, you know, boards are responsible to shareholders, and they are all living in the same uncertain world, right? You set up a factory here, commit a very large amount of FDI running into hundreds of millions of dollars, if not billions of dollars. And then you suddenly find that product which you were producing in a country to export to another country, or the inputs for which were coming in from another country, either the supply chains are no longer as easy as they were, or the cost of import or the cost of export has changed, or the price of export has changed. So I think it's fully understandable, and we have to also understand this is all a 2025 phenomenon. You know, we are not talking 5 years, 10 years of that period where
So
you
you're
say,
saying it's more of a here and now issue?
Yes, it's a here and now issue, and I think any board member would want to be a little cautious, but I also caution against over-reading into this, the fact that FDI has not come in. I think if you visit the city of Hyderabad, that is FDI. The whole city is FDI there for you. It's just not in the conventional sense of factories and goods and on the trains. The whole
GCC story,
the whole real estate there, the hundreds of thousands, if not millions of people who are working there, they are receiving FDI every month, which is their salary. It doesn't come as one bulky $500 million, but it comes as 200,000 per person every month into whatever number of millions. So there are sectors where FDI is coming in, and at the numbers level, and I'm sure you're aware, but for the benefit of the audience here, our gross FDI number actually hasn't come down as much.
Yes.
But what has reduced is the net, and that is simply because of the very buoyant stock markets we had. We had the Sebi chairperson here in the morning. If you have opportunity to take some chips off the table, monetize some of your companies, and we've seen, then, you know, it's X coming in, Y going out. It's X minus Y, which has shrunk because there was no Y earlier.
Yes.
It was only X. So that's where I would.
You know, I'm glad that you brought up the capital market story, because why we have seen a lot of MNCs make use of the attractive valuations that the Indian market is offering and do sales here and take back that money. The other interesting aspect is also MNCs listing in India. We've had Hyundai list in India, LG list in India. You know, do you believe that this could be the start of a significant marked shift as far as the MNC in India story is concerned?
Well, I can only share what we are observing and what we are talking to our franchise globally. I think wherever me and my colleagues are traveling, especially in the Western world, but even increasingly now in the Asian countries itself, or when we are being visited by senior CEOs and CFOs and board members, the one topic that regularly comes up is, what do you think we should be doing with our Indian business? Okay, and to that extent, if there are 100 such conversations, that means 20 of them will become serious and 10 of them will actually convert into a decision to go and list the Indian. And, you know, again, I'm sure the audience knows, but you took the example of LG, right? I mean, or Hyundai. I think when we were part of the Hyundai deal, Hyundai globally was trading at a PE multiple of 5. By the time we listed the Indian company, that PE multiple had gone from 5 to 9, and the Indian company listed at a multiple of 23.
Yes.
And this is after they had taken out substantial dividend in the preceding few months. LG India is today valued at more than LG globally.
Yes, more than the parent.
So again, if you are a board member and you are seeing such amazing opportunities, it is only natural that some people will say, let's do the listing in India. And from an India perspective, I think we should welcome this change, because...
Do you believe that we're likely to see this continue?
Yes.
More of these listings?
Yes, I think as long as our stock markets remain, especially the primary markets remain as buoyant as they have, and as long as the mutual fund Sahi Hai campaign continues to provide monies to domestic mutual funds and the retail individual investors, I think also we must understand some of these companies are also providing alternatives to the conventional Indian companies, right? They give you a global footprint, they give you global technology, global governance, things of that nature. So I think it's a welcome change, and it's a welcome development rather, I should say, and I suspect it will continue.
You know, we're talking about MNCs and their presence and their relevance in India. Let's talk about the global ambition and the global aspiration of Indian companies. We're also looking at a world at this point in time where global corporations are restructuring, global corporations are either divesting certain assets or are looking at joint ventures and so on and so forth. What opportunities do you see for Indian companies who are looking outside?
Yeah, again, I think for the benefit of the audience, I think one of the most active conversations we are having with corporate world right now is exactly this. There are companies available with very high quality manufacturing capabilities in Europe in particular, right? At valuations, just as we spoke about the valuations on the listed side, even in the unlisted side, at valuations which are very compelling, technology which is very, very good. And on top of that, you have the Indian entrepreneur's ability to identify further efficiencies and further saves from an already efficient unit out there, and then discover newer markets. So I think we have been part of dozens of such transactions just in the last 24 months.
Yeah, exactly. That's why I asked you the question.
Yeah. And just today we have closed 2 transactions of that nature. One is a hospital buying another hospital chain in UK. One is buying something in Europe. So, but it is not grabbing the kind of headlines that Chorus did or Jaguar did, because the ticket sizes are more in the $200 to $500 million as compared to much larger. I think on the much larger ticket sizes, it does appear that the very large Indian companies have decided that this is my Karam Bhumi. I will produce wherever in the world, but I will sell to Indian consumers. And if you have to sell to Indian consumers at the price points at which Indian consumers are willing to buy, you essentially have to have your manufacturing capabilities also here. So the medium-sized and the small-sized entrepreneurs and businesses appear to be buying outside India. Maybe they'll bring the technology back, or maybe they'll use it to sell it globally. But the large ones appear to be domestically focused.
You know, that's interesting that you talk about these $200, $500 million deals, and that's the kind of ticket size that you're seeing. And the aspiration of going global is more in the smaller enterprise level. Any sectors in specific where you believe we're going to see more of this kind of M&A, outbound M&A?
I think definitely in engineering goods, definitely in Germany. Because, you know, just as we have a trend in India of the second or third generation not wanting to join the business, and that's a prominent corporate problem today.
Is that a problem that you're helping solve also? the next gen of Indian family businesses who don't want to do business anymore?
Yeah, many of us in HSBC are hoping to be adopted by some of those people actually. So
while you're at it, can you put in our applications as well?
so I think there is opportunity out there to do the business out there. And again, to the earlier part, how will India achieve its ambition, Viksit Bharat, $10,000 per capita? I think it'll have to be a bit of everything that will have to come together, apart from, you know, female labor participation rates and things like that. So yes, I think there is wonderful opportunity and wonderful work to be done there.
I can't let you go without talking to you about what HSBC is doing to double down on your commitment in India. You talked about the various opportunities, but what does that mean as far as the bank itself is concerned in terms of hiring, in terms of what you intend to do here in India?
Yeah, so I think, I hope most of the people are a little familiar with HSBC, but we are a 160-year-old organization in India. We have full service from salary accounts, mortgages, credit cards, all the way to M&A, equity listings, debt capital markets, trade, payments, etc., etc. We are the only international bank which, in going back almost 10, 15 years, has asked for and been given approval by the Reserve Bank of India to open additional branches, 20 new branches. The first one of which opens in about 20 days, 28th of this month, so 20 days time or so. And so therefore, I think if there is a signal through actions, hopefully we are signaling that we are doubling down in this market. We think there is open-ended opportunity here to provide value add to our customers. And we think this economy needs a bank like ours, and a bank like ours needs an economy like this. So hopefully it will be a good narrative in the coming few years.
It's a win-win.
Yes, I think that's the right way to put it.
So 20 branches, new branches by when? The first, of course, you said by the end of this month. 20 new branches by when?
Yeah, I think the license conditions give us specific periods in which we have to open each cluster of branches. But just for context, right now we are there in 14 cities. By the time we end up opening these 20 branches, we'll be in 34 cities. So if you look at the map of India, we should be all over India. And therefore, any of you traveling through the country, if you see the logo which is up there, that's our branch. Please do visit. It's very expensive to open new branches. We could do with more customers.
It's hard to miss the HSBC logo if you're traveling through any airports in this country. Yeah. And now, of course, as you say, the logo is going to be across 34 cities in India. Hitendra Dave, always a pleasure. Thank you so much for giving us a perspective on what's happening with flows, what's happening with India, and how global boardrooms are looking at India. Always a pleasure. Many thanks for your time today.
Always good to be with you.
A big round of applause for Hitendra Dave.
something we need to double down on. And in this context, I'd just like to begin by referring to a Latin phrase, si vis pacem para bellum. If you want peace, you must prepare for war. And that's not just true in terms of guarding our borders. It is true in terms of our economic security, energy security, and resilience of our supply chains, as we've seen with semiconductors over the last few years, and as we're now seeing with rare earth minerals. As far as our defense spending is concerned, it is 1.9% of our GDP. And defense experts time and again have said that this should at least increase to 2.5%. The industry says it should increase to 3%. Let me begin by asking about Operation Sindoor. And General Naravne, you're possibly the best person to throw some light on it. India emerged successful in that conflict with Pakistan, a short duration conflict that we saw. But what were some of the gaps that you feel it is very necessary for us to plug for the future? And what's the opportunity for the industry there?
Good evening, everyone, and Jai Hind. And thank you, CNBC-TV18, for this opportunity to speak to all of y'all. And I must tell you, Parikshit, that you have taken one quote away from me, that if you want peace, prepare for war. That's one of my favorite quotes, which was said in the 5th century AD.
So I'm sure you have many, many more stories which are much
Roman
better.
Scholar. But getting back to what you just asked about Op Sindoor, Op Sindoor has been a very big inflection point as far as our nation's policy is concerned. It has demonstrated to the world that not only do we have the political will, but also the military capability to carry out whatever actions or operations are required for us. And I think that is one of the most significant outcomes of Operation Sindoor. That apart, we have, through Operation Sindoor, also made a very clear statement that we will not differentiate between terrorists and those who sponsor terrorism. For us, both are in the same plane, and all such actors will be targeted, whether state or non-state. So these are some very important takeaways out of Operation Sindoor. Of course, with every operation, and I will not say that it is only particular to the military, but to all businesses, you always learn lessons as you go along. And we too would have learnt our lessons from Operation Sindoor. What are the gaps, especially in the field of intelligence acquisition and drone warfare? What we need to do to counter this new threat of unmanned systems, whether at land, sea, or air. So these are ongoing processes, lessons learned, and how to mitigate them. And I'm sure that these are being looked into with all the seriousness that they deserve and will be acted upon. I do not want to intentionally, I am not committing to any particular weakness or lesson learned, because I don't want to give away what those could be and which could be taken advantage of our adversaries in the future.
But it's quite given, sir, that we have to prepare for new age warfare in the future.
That's true, because every conflict is fought in a new dimension. And armies are often accused of fighting the last war. But that is because that is the only experience we have. We don't know how the future of warfare is going to evolve. We can only crystal gaze and prepare for likely scenarios. But what actually happens is quite different from what we have prepared for.
Right. And you know, General Naravne, as we were talking earlier, when soldiers fight a war, ladies and gentlemen, it's when everything has broken down, when diplomacy is not working, politics have failed, and economic security is also at threat. So when soldiers fight, it's finally the last resort. Ambassador Swaroop, if I can bring you in at this stage. how has Operation Sindoor really changed our relationship with the United States? It ended with Donald Trump saying he's the one who brought the war to a halt. And since then, we've had it very difficult in terms of securing a trade deal. The tariffs on India are at 50%. We've not been able to strike a deal. How have things changed between India and the United States?
Thank you, Parikshit and CNBC-TV18 for inviting me to this global summit. It's a pleasure to share some thoughts with you and to share the stage with General Naravane. So Operation Sindoor, as General Naravane said, marked truly an inflection point in our strategic doctrine, because it showed that henceforth, cross-border terrorism from Pakistan will not be responded to with dossiers or notes of diplomatic protest, but with visible and proportionate force. And that obviously, has had its own dynamic. As you know, this was a 4-day war that was brought to a close when the DGMO of Pakistan called our DGMO and said, we want to call a stop, we want to stop hostilities. We said, we were already clear from day one that if you don't respond, we will not respond. Our job was to take out the terror sanctuaries, and we did that. And beyond that, we had no business to escalate this. Now, Donald Trump injected himself into this. He said it was thanks to his efforts that India and Pakistan stepped back from a nuclear confrontation, and this war was brought to a halt. We, of course, completely rejected that because, our stated position right through has always been we will not accept any external mediation as far as India-Pakistan relations are concerned. So this has obviously miffed President Trump. So that's the first thing, because contrast our approach with that of Pakistan. We said Donald Trump had nothing to do with the ceasefire, which was directly negotiated between the two DGMOs. Pakistan not only acknowledged Donald Trump's role, but even nominated him for a Nobel Peace Prize. So that's the first point because of which Donald Trump is miffed. The second reason for Donald Trump being unhappy with India is our membership of blocs like SCO and BRICS. BRICS in particular, I think he has a bee in his bonnet about BRICS. Somebody has whispered to him that this is an anti-Western alliance which wants to create an alternative currency to the dollar. So that's the second point. But thirdly, and I think most importantly, Parikshit, Donald Trump is miffed because the ultimate deal maker could not get India to sign on the dotted line on a one-sided trade deal. He wanted us to open up completely our agriculture and dairy, give up our data localization rules. We said, just for the sake of a photo op trade deal, we are not going to do that. And that's why today, India is one of the only countries which still does not have a trade deal.
Right. Ambassador Swaroop, I know it's been some time since you retired as a diplomat, but within the diplomatic fraternity, what's the sense? Why is this deal taking time? Will it happen this year? Because we've already reached the fall deadline.
So you see, first of all, we have to analyze a deeper strategic reason. And the fact of the matter is, India no longer has the same strategic salience in Washington that was there pre-Trump. Because every US president, starting from George W. Bush, has seen India as essential to maintaining a global balance of power favorable to American interests. They saw India as the only democratic counterweight to a rising and increasingly assertive China. And that's why they were invested in the rise of India. Now, Trump does not look at India from that lens. As you know, he wants a G2. He wants to do a deal with China. He's already done at least a one-year deal with China, that they will continue to get rare earths and America will not impose sanctions. So because Trump does not look at India from a strategic point of view, but simply as a market for American agriculture, as a market for American energy, for American technology, for American defense sales. And that's why, he is putting maximum pressure on us. The 50% tariff, including 25% on buying Russian oil, is all intended to pressurize us into accepting a one-sided trade deal, which we have clearly said we will not accept.
Right. Ladies and gentlemen, some trivia. Ambassador Swaroop had addressed the press conference with the then DGMO post India's Uri operation.
That's right.
So that was a very iconic press conference that had been called, where Ambassador Swaroop and the DGMO had announced what had happened. And General Naravane, ladies and gentlemen, was at the helm of affairs. He was the army chief during COVID-19 when the Galwan incident took place. And so that brings me to China. We lost 20 of our soldiers during Galwan. Chinese lost 5, according to what they admitted. Real numbers possibly could be much higher. Fast forward to this year. During Operation Sindoor, China was helping Pakistan real time with intelligence inputs, and there were Chinese planes, cargo planes landing in Pakistan. In such circumstances, can there really be a reset with China?
Well, the fact that Pakistan and China have had very good relations is not anything new. And this is something that we have always factored into our calculations, both at the political, diplomatic, and military level. And this partnership between them is likely to continue in the foreseeable future. But we should not always see everything as a zero-sum game. In fact, the US and China have also signed a deal recently. Just 2 days after the India and US signed a 10-year defense partnership. So people are partnering with whoever they feel they should in their national interest. And therefore, we should not totally shut the door on anyone and keep looking at opportunities in various fields. And relations between countries cover a vast gamut of activities. It's not only defense, it is defense, trade, people-to-people contacts. So we must explore where we can do what's best for ourselves in our national interest and not go by instructions being given by somebody that you do this or you don't do that. And that is what I think is the bottom line as far as India is concerned. And to that extent, I think even China has now realized that a military option to achieve their aims is no longer possible. We have crossed that stage. We are a military power to be reckoned with, at least in the South Asian region. So they too are cognizant of that fact and would like to move beyond this just a military lens to our relations and exploit the other opportunities that they have in India, especially in the trade and commerce, again, for their interests. So it's all a mutually beneficial kind of activity, which will always happen.
Right. General Naravne, now, when we speak about long-term challenges with China, problems with Pakistan, clearly, when it comes to a crunch time or a wartime situation, you're left on your own. How do we need to prepare for this now in the future? To deal with the two-front war?
Well, there's no doubt that we have a two-front threat, that is with Pakistan and China to our west and north. And we are preparing for this kind of a scenario. But going forward, I think what we need to pay more attention to is to try and get and maintain a technological edge over our adversaries. Wars in the future are not going to be the traditional wars with armies massed on either side of the border. And therefore, we have to concentrate on quantum technologies, artificial intelligence, machine learning, drone warfare, that is the whole gamut of unmanned systems, and so on and so forth. And that is where we as a country, including the industry, needs to focus on. Hypersonics, I missed out on that one. Manned-unmanned teaming, that is another field that we have to look at. This is where we need to focus in the futuristic technologies which will give us that edge in a future battlefield and not on what is already available in the market today. We need to leapfrog one generation to be ahead of the curve.
Absolutely. Ambassador Swarup, when I would ask you about the India-Russia partnership, we've seen our relationship with Iran almost coming to an end in terms of energy. Is that same thing going to happen with Russia because of sanctions?
Well, when you look at the situation unfolding now with Rosneft and Lukoil having already been sanctioned, you do get a sense of deja vu. Because let's not forget, at one point in time, Iran supplied 12% of our crude. But then Iran oil was completely sanctioned, and then we had to completely give up on Iranian oil. So from 12%, we went down to 0. Now, the same thing, I think, might happen with Russia. Because if Rosneft and Lukoil, which are the two major Russian oil producers, which account for 50% of Russian oil output, are going to be sanctioned, I think we have already seen a statement from Reliance Industries that they are going to taper off buying oil from any sanctioned entity. By November 21, in fact, it may come down to zero. So if that happens, I think it will be a tragedy because we have to also factor in Russia is the world's second largest crude producer, and they account for 10% of global oil output. 2 million barrels per day is what India is purchasing. If you take 2 million barrels per day out of the equation, what is going to be the impact on oil prices at the pump? So I think America has to really think about it, but we have to prepare for the day after, that not only have these sanctions kicked in, Senator Lindsey Graham is ready to unveil, the secondary sanctions, which means any country that trades with Russia on oil will be hit with, 100% extra tariffs. So I think given that, we'll have, these are global compulsions that we have to understand because we cannot sacrifice our trade with Russia vis-a-vis our trade with the rest of the world. Because, if banks that are channeling the rupee rubles, if they cannot do business with the West, then I think that's going to be very counterproductive.
Okay, my final set of questions. General Naravne, India is working for a 2047 vision. Does the Agniveer scheme really help the forces? Could that threaten our national security? What should be our 2047 military doctrine, and what's the role Agniveer scheme plays there?
The Agnipath scheme is a new scheme unveiled by the government 4 years ago or so. But you see, HR policies the world over keep changing, not only for the militaries, but even in various businesses. And many people are not aware, I'm sure even in this audience would not be aware, that till the mid-70s, there was nothing called a pensionable service. It was introduced only after that, when the minimum qualifying service was made to 15 years, and people started getting a pension. At that point of time, there were many people who said that, oh, we will have an aged army. We need young people in the army to fight the wars. So that time there was a counter argument, just as now the argument is, how will you fight with such young boys? So things keep changing. Which policy works or doesn't work, you'll come to know only when it has had time to settle down and get implemented. So let us not rush to any conclusions for and against it, but definitely a young army is the need of the hour. And as we go ahead, we will keep preparing with these boys. And it is not as if the entire army will be less than 4 years service, which is the terms and conditions for the Agniveers. The people who are in the 4th year will go into the 5th year, into the 6th year. So you will always have people and a correct, blend of youth and experience. And I'm sure, and they have performed exceedingly well, the Agniveers, and they recently concluded Op Sindoor. So why are we, as I said, jumping to conclusions? Give it time.
Give it time.
And if there are, requirement of mid-course changes, no policy is perfect the day it is rolled out.
All right.
If mid-course changes are required, they will be done. I'm sure people at the helm are looking into that.
All right. We've completely run out of time. I believe the Maharashtra Chief Minister is entering the premises. I'd like to thank Ambassador Sarup and General Naravne for joining us, giving us their view on defense and circles of influence for the future. Ladies and gentlemen, a big round of applause for them.
So wonderful to be in the midst of these four extraordinary young Indian entrepreneurs who've demonstrated to us the art of disruption, scaling, surviving, and really becoming billion-dollar entrepreneurs. This session's called Billion Dollar Babies. None of them are babies, actually. They've really demonstrated the art of moving from babies to becoming real giant killers in many ways. These are people who, when we started our startup movement in 2016, India had just about 150 odd startups. Today, India has over 150,000, 160,000 startups. We have over 160 unicorns in India. Many of them have been inspired by the journey of these four great young entrepreneurs. Let me first start with Piyush, who's just, I'm starting with you simply because I'm your consumer.
Thank you, sir.
The specs I wear is from Lenskart. So what makes Lenskart such an extraordinary story that you've been oversubscribed 28x? This great combination of technology, great eyewear. What's one big, huge disruption that you brought in?
See, I think, firstly, thank you, sir, for being a customer, and thanks for the vote of confidence. Look forward to keep serving you in the future as well. I think, firstly, the whole persistence and focus on a problem and a vision that how do we get India completely visually corrected is one big difference. I think that obsession that we have, almost 500 million people in India who need vision care and who are without one, and how can we really use technology to solve this problem? And I think the most disruptive, to answer your, and I think that mission has really kept it going and staying persistent day after day with a lot of failures. From a technology perspective, I think, and at the core of all of that, I think technology has been the biggest disruption. I'll give you a problem, like, as we were scaling up, one of the biggest problems we were facing is that we do not have optometrists in India, enough. We have like 35 or 40 optometrists for 1 million people. And it was like a big bottleneck on how do we test eyes for 500 million people more. And then using AI and technology, we developed this ecosystem where you can sit in front of a machine and do self-eye test. And you can talk to a machine. And that became, so I think to me, disruptions which have been around democratizing eye test have been the biggest ones.
Okay. And you're also in the export market?
Yes.
So how many countries have you penetrated so far?
So we are now in about 14 countries.
Okay, wonderful. So Fani Kishan is the co-founder of Swiggy. He's given Amazon, Flipkart, everybody a run for their money. He's also started doing 10 minutes delivery. How many deliveries are you doing a day?
Well, it depends on the day, but between 3 to 4 million.
Okay, and how much more disruption will you do? What's the next big plan?
I think for us, our mission has always been around delivering convenience to people. That's how we started. That's why I think we've been successful. There were many questions 10 years back around ability of people to pay for convenience.
Yeah.
And that's probably been our biggest contribution in the last 10 years, right? Where we've shown that at scale, people will pay for convenience and we can build massive businesses around that. And our vision continues to be around how do we unlock new methods in which hopefully you can get convenience.
And how's your journey of moving from just a food delivery app to providing many more things like shoes and groceries and many other items going?
Yeah, I think when we started out, of course, our vision was very simple. We said there seems to be a problem in food delivery, so why don't we solve that? But as we've scaled, the big question that came up for us is what can we do that can change, people's lives? If Swiggy was there in your life versus not, what meaningful delta difference can we make, right? And that caused the genesis of Instamart about now 5 years ago, about 4 or 5 years back. We constantly keep thinking now we have a concierge service where we're saying, hey, ranging from, trying to get a ticket at a movie or a concert to traveling abroad. How can I make my life easier? So we focused on continuously looking at pain points in people's lives, removing them, and be hopefully an integral part, an operating system, if I may, of their day-to-day life. So that's where our constant innovation is about.
So tell me, I mean, just because of you, are Indians and Indian housewives, are they all losing the art of cooking at home?
No. I don't think so. I can give my mom as a great example for this, right? I mean, there was a time when she was quite surprised about me joining or starting Swiggy. Because I was in a consulting firm and she was like, what exactly are you doing? But over the last many years, I've seen herself transform, wherein she continues to rely a lot on, let's say, the offline markets to get what she wants. But there are these few occasions, it's early in the morning, late in the night, some guests that come over to the place where there is that need state of seeking that additional help, right? And that's the kind of role that we're playing. So the way we see is to augment people's lives as opposed to displace it in any manner, right? And that's what we're observing. At the end of the day, while I wish we're used a lot more frequently than we are used, 3-4 times a month on average. And that kind of shows how we're augmenting, making life a lot more easy for people than, displacing it in some way.
So let me turn to Abhiraj, who's really brought a lot of discipline to the home services market, which is really chaotic in India. You know, you can arrange a plumber, electrician, a carpenter, even someone who can do your beauty, makeup, all right on his digital app, one click, they'll be at your house in 10 minutes. Abhiraj, how's it going? How's the journey been for you?
Thank you, Amitabh. Amitabh, we started this company 10 years back with the simple vision of providing exceptional service to Indian households. High quality, reliable, always on time, and just delightful. That has been our North Star ever since, and it's something that keeps us honest even today. We want to be a company that is truly known for customer service, customer excellence, and in equal measure also help our service professionals live dignified, respectful, middle-class lives. So that's the vision we've been on. It's not been easy. It is a complex, operationally challenging business.
So you must be doing a lot of skilling for this.
We do.
And how many people have you skilled so far?
Till date, we've skilled roughly 60,000 service professionals in our training centers. We also use a lot of technology, a lot of AI to ensure quality control at the doorstep. And I mean, in many ways, we think we're only getting started.
So where do you see the future of the market? Tier 2, Tier 3 cities, abroad, markets like Dubai, Singapore, where all are you going to penetrate in the next few years?
See, we think we can be in every middle-class Indian household once a day, eventually. So
that's about 450 to 500 million Indian households.
Yeah, so I think the opportunity is very large. We have to be disciplined, we have to be calibrated. We don't have to get ahead of ourselves, but we have to keep reminding ourselves that, you know, we're less than 1% done.
So, you know, with the kind of numbers that you're talking, each one of you is talking, it appears to me that you're still undervalued, not overvalued, huh?
Look, we just focus on value creation and leave the valuation to the markets.
Okay, so what is this connect between market value and the market share? And how do you look at expanding, growing, and enhancing market value in a much bigger way and getting a larger share of the market? Will that further enhance values? What is the core? How do you look at the correlationship in terms of values going up? Let's start with Piyush for a minute.
See, I think eventually we look at it in, I can talk about Lenskart. There is, what we have achieved so far is a very small portion of what we intend to do. We want to give a vision to 1 billion people. We have given it to only about 25 million people so far. right? So there is a lot more to do ahead. And I do think game and is going to be about how do you leverage technology, and this is my firm belief, to solve some of the biggest obstacles in getting access and affordability to people, right? Because what are the two important things? One is how do you deliver great experience? And second is how do you deliver it most efficiently? And in both of these, technology has a very large role to play. So for us, I think, and I believe for all of us right now, we are in very early stages of the journey. And I genuinely think with AI coming in the picture, if you have been using technology for a decade to deliver that extra experience, to deliver that extra reach, now is the time to take that extra superpower of AI and make it 10x.
Okay, I'm going to come to you, but I wanted to turn to Yashish because Yashish Daya has done a remarkable job in Policy Bazaar. He's sold about 20 million policies to Indians, health policies and term policies. It's a remarkable success story in terms of insurance. And Yashish, 20 million policies, what is the biggest challenge and how do you look at yourself in the next 5 years?
So first of all, before I say anything about Policy Bazaar, I wanted to thank you because you are the one person who for the last 10 years has been the go-to person for every startup. And we derived a lot of confidence in the fact that you were just there and willing to listen to all of us, whatever problem we had. So thank you for that. Now,
totally agree, sir, totally.
I think, see, we had a very simple, if you look at India, we used to have joint family systems. See, everybody works for about 20, 30, 40 years in their life. But before that, they are kids. And after that, they are old. And that time they don't earn, but they still have expenditures. And then there are people who fall ill or they die early. I've had some incidences in my family. And then their families go through very, very strong financial problems. You know, healthcare costs are going up, etc., etc. So for me, as I think of India 20 years, 30 years from now being a developed country, one of the biggest challenges we're going to have is healthcare and social security. Because we're a developing country, going to become developed. And I somehow thought in 2008, when we looked at the insurance industry, we were not selling health insurance and term insurance. We were selling some kind of savings kind of products and some car insurance, and that was it. And for me, that was, the reason for that was the consumer was not educated. And so we spent the last 17 years trying to educate the consumer about these products, but it's not that simple alone. You know, if today I'm not well and I know I'm going to, let's say I'm terminally ill, I want to buy a term insurance plan. So there's a lot of fraud element, etc. So in those 20 million, sir, it's a very circumspect journey and it's been built kind of day by day because you don't want to sell to somebody who's desperate to buy insurance. You want to sell to people, you know, that's the only way to kind of keep it feasible. So I think in terms of opportunity, it's very simple to look at countries that spend a lot on social security. You will typically find about 20 to 30% of their national budgets going towards things like healthcare, pensions, etc., etc. And in our case, it may not be the government, it may be individuals that have to be trained to do the same. And that training is a very difficult task. It's not it's not easy to get anybody to part with 10,000, 20,000 rupees. In the piece that, look, if something goes wrong, somebody will be there to help them. There'll be a claim provided. It's a pretty difficult proposition. But yeah, that's been the journey.
So, you know, I want to touch upon the other issue about growth and equity and about getting into tier 2, tier 3 cities and rural areas. Because all of you are talking about 1 billion consumers in India. One is, how do you in the next phase penetrate the next layer of tier 2, tier 3 cities? I also want to look at, because to my mind, Indian companies can be great companies if you can penetrate global markets. Export is very critical to me. You know, Indians must learn the art of getting 5x of what you earn in India by penetrating global markets. What's your strategy on penetrating tier 2, tier 3 cities and on exports? And I'll start with Swiggy.
Yeah, so I think for us, over the last many years, one thing that we've at least resolved is our commitment to focusing only on India. This is the market that we believe that we are in for the long term, and there's a fair amount of headroom for expansion here. So I think we are focused very much on India. On the aspect of tier 2 and tier 3, I can give an anecdote, right? A few months back, I was in a tier 2 town, Vijayawada, and I was meeting a few customers, and there was this homemaker who was talking about her purchase habits. And she spoke about how Instamart solves a very critical problem statement for her, where she cares for the health of her family, and there is a particular product, a 7-grained atta, that's not actually available in any of our local stores. While majority of our purchases still happen offline, there is this occasion, there is this element where we are providing access to people, and a lot of our tier 2, tier 3 towns don't have that evolved retail formats as well, right? And that's the kind of opportunity which we think that we can. It's about access, it's about convenience, it's about affordability to the consumer when they need it. And while we started out not thinking that we would have a role to play in those areas, it turns out that we could solve a much more important problem in tier 2, tier 3 in comparison to tier 1.
Okay, Piyush.
See, I think it is, if I look at our lives today, we are consuming so many international brands. I mean, you look at apparel, you look at shoes that everybody is wearing. And if you think about it, consumers are going to gravitate towards what, the best of the brands. And I think it is time that we start creating global brands, because my firm belief is that in the long term, if you think 10, 20 years, either you are global standard or you may cease to exist. What will it take for us to create global companies? I think the most important thing is belief. I think we have been phobic about it. When we were trying to go international, we faced a lot of resistance. More, I would say, mentally, created, that Indian companies may not succeed international. How many successful examples do we have? But today, about 40% of our revenue comes from international markets. I think that belief was really important.
So which is your biggest export market right now?
Right now, the biggest market is Southeast Asia.
Okay.
Singapore, Thailand, and then Japan.
How big are you in the Middle East?
Middle East is second in the we're not allowed to disclose market-wise numbers, and we are listing in 2 days. So I want to make sure I comply. But I would say we are one of the largest players.
Okay. Abhiraj.
So 2 parts to this question. One on the tier 2, tier 3 opportunity. I think that opportunity is immense, and it's only going to grow as India grows and middle class Indians, have more discretionary income. We are present in about 50 odd cities in India, and the number of emails I get every day from customers in cities we are not present in, saying that you should launch urban company in our city. We are worthy, and we need your service. So I can see that opportunity, and I think it's a long-term, one-way opportunity.
And what's your most popular service?
Mostly around home cleaning.
Okay.
But we also have beauty and repairs, which is popular. But to your other question of going global, and we have a global footprint in the Middle East and in Singapore as well. One of the things I've realized, Amitabh, is when you are a global company, even if you have a small global presence, you learn so much, because you learn to operate at the global scale. You learn about global quality standards, how your product should be globally competitive, how your service quality should be globally competitive. That invariably those learnings will be plowed back into your business in India.
Yeah.
So I always encourage companies to have at least some presence globally, because that's the real playing ground, and it allows you to calibrate yourself against what's globally best in class.
Okay. And probably you get a little bit better unit value realization also?
100%.
Yeah.
100%.
Okay. Yashish.
So, sir, 8 years ago, 20% of our business would come from tier 2, tier 3 cities. Yeah. Today, it's about 75%. And most of the growth is coming from tier 2, tier 3. Talking about international, I did not originally believe in the international concept. Now I do. I think we certainly need to have our organizations going international, because that's how you build national IP. That's how you build, see, the fact is Google, Facebook, etc. That's how America makes a lot of money. And there is no reason India should not. Some of our organizations, including ours, are super good compared to global standards.
I wanted to turn to this issue about making great companies like yours into the greatest companies in the world. One of the challenges Indian startup movement has faced is that you do well, you do an IPO, you raise a lot of good money, there's a lot of publicity, and then there are issues of governance. Major issues of governance, there's financial mismanagement. How do we tackle this so that we convert 4 of these companies into the greatest companies in the world? What can we do on governance? Yeah.
Yashish, given
it's
the
a very
most amount of
important issue
experience.
to my mind.
So it's a very, very critical issue. I think all of us actually have a very good smell for which are the companies that have a governance problem.
You can talk about yourself, you can't talk about others.
No, I can tell you, if you ask the startup community, 100 of them, which companies have governance issues and which do not have governance issues, you will get a pretty good idea. Now, at times, historically, we have been a place which is difficult to do business in. And my request is, one should, as a government, be able to see where difficulty is creating issues, right? I think that's also important. That's equally like I can talk about our sector. Life has been pretty hard on us, right? And I was talking to the ex-IRDA chairman a few days ago, and I mentioned that in 2011 we had an 83-page regulation on a company which had just started, and all that regulation was saying was kill this company. Now, that's a hard position to be in.
No, on the insurance side, I accept.
That's what I'm saying.
But I think on the insurance side...
It's become a lot better. But all I'm saying is, for those who've...
No, India needs to become far more easy on...
Easy on doing business,
On insurance, at least.
Specifically insurance,
What about you?
Amitabh, you've known us for many years and you know that we...
No, I'm not talking about just urban company. I'm talking about the startup movement. How do you ensure a better governance system in the startup movement of India? And that's critical to my mind. If the startup has to keep growing, if you people have to become the role model, if you have to inspire 1 billion young startup entrepreneurs, how do we ensure better governance in startups?
See, finally, I think it boils down to the founder. The heart of governance is doing the right thing always. And, that's something you can't really teach a founder. It is a function of many things, including your upbringing, the value system, why you're doing what you're doing. Of course, we can have oversight. I do believe that startups should have an independent board way before they go public. That helps. We've had an independent board for almost 3.5, 4 years now, even though we only recently went public. I do believe all the big 4 audits, etc., should happen from the get-go. But we have to remember that eventually, if the intent and the integrity of a founder is in question, that cannot be replaced.
Okay.
So
you're saying integrity and the intent of the founder is really critical.
Absolutely.
First, we should not generalize that startups are...
there have been a number of stories. Huh?
Yeah, I understand.
I brought this issue up because one after another I've seen startups growing, spending, doing IPOs, then going tuck.
See, I would say governance is non-negotiable.
Yeah.
Right? I would say we will see some very great companies come out of India in the years to come.
Starting with Lenskart, huh?
Starting with Lenskart.
Yeah.
And absolutely. And I think we all are sitting here with a dream.
Yeah.
And that dream can only be fulfilled if we stay high on governance. And I think, which is why I'm saying one should not generalize. It is happening. There could be a few cases here and there.
Okay. Mani, what about you?
Yeah, I think, it comes down to what is actually recognized and rewarded and what is not, right? And be it startups or otherwise, I think there have been a lot of discussions on valuation in the last few weeks, but it comes down to what value you're deriving or delivering to consumers, and that's a function of metrics like how many consumers' lives have you touched, right? What is the satisfaction score? The thing is, the moment people stop looking at that and look at this, red, green bar that goes up and down every day, that's when I think, people are forced or incentivized to stray down the wrong path.
All right. Okay. So let me turn and start with you again on this age of disruption through data, machine learning, AI, and how you're using the power of AI really to reach out to your consumers, do better analytics, improve your deliveries, etc. Just tell us 2 or 3 things which are making a difference to Swiggy.
Yeah, see, I think we probably analyze, 200 million data points every minute to actually predict
so 200 million data points every minute.
Yeah, because we need to predict for every customer what the delivery time is going to be, which delivery partner should get assigned, what is the right storefront to show the consumer, and many, many things, right? So for us, it's been if you look at how our business has been performing, a lot of the last few years, operating leverage has kicked in primarily because we leverage technology at the core, right? While our staff has remained the same, we're now almost catering to twice as many customers, and that's because of a combination of technology and AI. And personally, for me, the place where I see a lot more impact coming through is not productivity, but
since you're a young company, do you use that far more powerfully than legacy players like Flipkart and Amazon?
See, I think for us, that's how we've been born. Like our birth has taken place in technology, right? And therefore, it's come a lot more naturally. Of course, there's new technology like AI that we need to get adapted to. So I would say probably in comparison to other legacy companies, we would be more native, but then you need to always be on your toes. The market is completely unforgiving in that sense.
Piyush, Lenscard, how much of AI are you using? How much of cutting edge technology are you using? And are you using AI on the back of your spectacle? Will you be using camera on these specs?
Absolutely. I think it's time now, right? I think we missed the laptop and the mobile opportunity, and now is the opportunity as computing moves towards glasses. I'm wearing one right now.
What are you wearing?
I'm wearing the new B glasses.
So it's hooked onto a camera or a computer?
It has both.
Both.
Yeah, it has a camera, it has a computer, you can talk to it. So I think it is our time and opportunity to really own the next computing platform.
And tell me, how expensive is that specs with computer and camera?
This is going to be launched soon. I'm not allowed to disclose the price of it first on this.
You're not disclosing anything before CNBC.
All I can say, it's going to be it's going to be a lot more affordable, lot better, and it is homegrown. So we are really trying that all the computing and the data comes to us this time, and we can build it for the world.
Okay.
Right?
Yeah. But you should disclose much more to the customers here. Okay. Abhiraj.
AI is, existential for all of us as companies today.
No, has it got embedded in urban companies?
Absolutely. So the way we think already is all service touch points, we need to monitor quality against SOP through AI, the entire matchmaking engine, all our interactions with our service partners, increasingly onboarding and training of service partners. But I must also highlight that we're in the early phases of AI adoption in general. It's a very new technology, so it's changing so fast that all of us have to be on our toes to just keep pace with. Often you implement something and you realize the next version of it is already out. So it's rapidly evolving, and I think the mindset has to be that you have to be an AI first company.
So what, are you working with enterprise AI? Are you working with established AI companies? Or are you working with Indian startup AI companies? Or how are you integrating AI?
See, we've kind of, at our end, we've created think of it as a payment gateway equivalent gateway, which can real time switch between any enterprise AI model at the back end, whether it's Llama, whether it's, ChatGPT, OpenAI, whether it's Anthropic, etc., etc. We don't want to be wedded to any one model right now.
Yashish, what about you?
Sir, for us, the biggest win has been on the fraud detection. because obviously, in insurance that becomes a very critical area, and we've been using AI for the last 3 years. Now it's become very, very ubiquitous, where all consumers' conversations, etc., are picked up, where the person is buying from, and all of this is checked with past claims data to see where fraud can happen. And that helps customers for keeping their claims happening.
Okay. So let me turn to the last question. And all four of you have been very, very successful so far. Undeniably, you're the finest entrepreneurs of the Indian startup movement. You'll go on to create great companies. Tell me about one great failure you've had while doing this, or one of the biggest challenges that you faced while doing this. Because they say that for every startup, you have to have a failure, you have to have a challenge. What is that one big failure, one big challenge that you were confronted with? Or were you successful right throughout? You never faced a challenge.
Sir, it's become very easy. I hate to say it, but you know my answer. My answer was the regulation was very, very difficult.
So you're saying the government was your biggest challenge? Eh?
Not the government, sir. The regulation has evolved, but it was a very challenging...
You can say politely, insurance regulatory authority was the biggest challenge.
Right now, it's in a very good shape.
Okay.
But I think way back, it was a very challenging environment.
All right. What about you, Abra?
Well, urban companies is our second idea. Our first one didn't work.
You failed in the first one?
Yes.
Okay.
And
what was that?
A good it was a company in the media space, but it was a good reminder that, despite the degrees and the professional success, the real market only rewards you if you have a valuable product or service. It doesn't care about anything else.
So the customer focus.
Absolutely.
Customer is the king.
Customer is the king.
Okay.
That's all that matters.
Okay. What about you?
I think what was the biggest challenge was that, we really wanted to get into very deep in India.
Yeah.
And, as we were opening stores, there was this belief that stores cannot grow as fast. You can only open that many number of stores in India. Nobody has gone beyond.
Yeah.
And there was a lot of, pre-assumed notions about it. And then what we did is we developed a geo-analytics tool where we open now 350, 400 stores a year. And a human doesn't decide where to open the store.
So it's all analytics?
Yes, it's all AI and analytics.
Okay, Fani, what about you?
Yeah, I think for me, personally, we do a lot of tinkering innovation in Swiggy. We fail more than we succeed, to be honest. I mean, we only know Instamart, but there are 3 more failures behind the scenes.
Okay.
Right?
So you've had a number of failures before you succeeded on this one.
Yeah, and it's one of those really depressing things because you're throwing everything at the problem and it just doesn't work. And as Abhiraj said, it just comes down to, are you focusing on the right problem? Are you giving it your best?
Okay. Wonderful. Such a pleasure and a delight talking to all of you. And may you all go on to create the greatest companies for India. Thank you so much. Thank you. Thank you. Thank you. Thank you.
Pleasure.
Thank you. Let's have a photograph here. Photo खिंचवाओ यार, selfie कर लो.
Ladies and gentlemen, what an absolute honor it is to have with us the Honorable Chief Minister of Maharashtra, Mr. Devendra Fadnavis. As we were walking in, I was telling him that the unanimous opinion here of people who have been at the Global Leadership Summit this morning, especially the global leaders that we've had, they've all said that if there is one infrastructure transformation that they've been most impressed by, it is what has happened in Maharashtra, what has happened specifically in Mumbai. And I was also telling him that we were worried that, will people be on time or not? People were actually here ahead of time because the infrastructure has improved. So, Mr. Fadnavis, congratulations to you
so much.
and
Thank
your
you so
team for getting the job done. But आपसे पूछना चाहूँगी सर कि अभी तक तो जो आपने इंफ्रास्ट्रक्चर डेवलपमेंट कर लिया वो अभी उसका रिजल्ट हमको देखने को मिल रहा है. अब आप क्या प्रायोरिटाइज करेंगे? अब किस प्रकार का आप कैपेक्स डालेंगे इंफ्रास्ट्रक्चर डेवलपमेंट में? हमें क्या उम्मीद, क्या अपेक्षा आपसे रखनी चाहिए?
देखिए, मैं सबसे पहले तो आपको कहना चाहता हूँ कि अभी जो आप इंफ्रास्ट्रक्चर देख रहे हैं ये केवल ट्रेलर है, असली पिक्चर अभी बाकी है. क्योंकि मुंबई और एमएमआर रीजन ये एक ऐसा रीजन है कि जो भारत की अर्थव्यवस्था को एक पावर हाउस के रूप में, एक ग्रोथ इंजन के रूप में ये डेवलप कर रहा है. और जो हमारे प्रधानमंत्री मोदी जी का सपना है इंफ्रास्ट्रक्चर लेड ग्रोथ का, उसके साथ साथ जो एक प्रकार से अर्थव्यवस्था को विस्तारित करने का जो उनका सपना है उसको पूरा करने का काम हम लोग कर रहे हैं. इसलिए अभी आपने जो देखा तो आपने कहा हम लोग यहाँ समय पर आए, तो कुछ लोगों ने मन में कहा होगा कि समय पर तो आए लेकिन बीकेसी में आने के बाद बहुत टाइम लग गया. तो मैं इसीलिए आपको बताना चाहता हूँ कि व्हाट इज द नेक्स्ट प्लान. आप जब ये वर्ली बांद्रा सी लिंक से बांद्रा में आते हैं तो अभी हम लोगों का एक प्लान चल रहा है कि हम बांद्रा से सीधा एक टनल ये बीकेसी में लाएंगे और बीकेसी से सीधा उस टनल को हम एयरपोर्ट ले जाएंगे. तो जिसमें आपको उसके बाद ये जो बीकेसी का जो कंजेशन है और वेस्टर्न एक्सप्रेसवे का जो कंजेशन है वो ख़त्म हो जाएगा. अभी हमारा जो बांद्रा वर्सोवा सेक्शन है उसका काम चल रहा है. बांद्रा वर्सोवा के कारण वापस हम लोग वेस्टर्न एक्सप्रेसवे जो मुंबई का 60% ट्रैफिक कैरी करता है उसको डीकंजेस्ट करेंगे. वर्सोवा से लेकर हम लोग दहीसर और दहीसर से लेकर भाईंदर, इसका काम हमने ऑलरेडी चालू कर दिया है, जिसमें कुछ टनल्स है, कुछ ब्रिजेस है, वो हमारा हो जाएगा. और फिर अभी 3 दिन पहले हमने हमारे रिकॉर्ड तोड़ने का तय किया, क्योंकि जो अटल सेतु है दैट इज़ अ 22 किलोमीटर्स ब्रिज, सी ब्रिज, जो अभी देश का सबसे लंबा सी ब्रिज है. अभी हम लोगों ने भाईंदर से लेकर तो विरार तक एक 24 किलोमीटर सी ब्रिज को मान्यता दी है कि जिसका भी हम आने वाले दिनों में काम शुरू करेंगे. तो आप ये समझ लीजिए कि मुंबई को, और फिर विरार से अलीबाग तक मल्टी मॉडल कॉरिडोर का काम हमने शुरू किया है. तो एक प्रकार से एमएमआर रीजन में एक लूप तैयार कर रहे हैं हम लोग, कंप्लीट एक रिंग रोड जैसा हम लोग तैयार कर रहे हैं, जिससे आने वाले दिनों में मुंबई पूरी डीकंजेस्ट होगी. और उसके साथ साथ जो ईस्ट वेस्ट कनेक्टिविटी है, उस ईस्ट वेस्ट कनेक्टिविटी के लिए थाने से बोरीवली के टनल का काम हमने शुरू किया है. तो अभी थाने से अगर बोरीवली आना है तो आपको 2 घंटा 2.5 घंटा लगता है, आप 20 या 25 मिनट में आएंगे. उसके बाद मुलुंड से गोरेगांव तक के टनल का काम हमने शुरू किया है, जहाँ 1.5-2 घंटा लगता है, आप 20 मिनट में आएंगे. और ऐसा ही हम लोगों ने थाने से सीधा नई मुंबई एयरपोर्ट तक एलिवेटेड रोड का काम हम लोग शुरू कर रहे हैं. तो कुल मिलाकर अगर आप इंफ्रास्ट्रक्चर का विचार करेंगे तो मैं ऐसा मानता हूं कि आने वाले 5 वर्षों में देश में सबसे ज़्यादा इंफ्रास्ट्रक्चर अगर कहीं तैयार हो रहा है तो महाराष्ट्र में और एमएमआर रीजन में हो रहा है.
सर, आपने कहा कि ये ट्रेलर है, पिक्चर अभी बाकी है. पिक्चर का रिलीज डेट बता दीजिए.
देखिए, पिक्चर का जो रिलीज डेट है, ये हमारा पिक्चर ये किश्तों में आने वाला है, तो इसलिए सीक्वेल्स में आने वाला है. इसलिए इसके अलग अलग डेट्स है, कुछ डेट 26 में, कुछ 27 में, कुछ 28 में. पर मुझे ऐसा लगता है कि 2030 तक मोस्ट ऑफ इट विल बी एबल टू कंप्लीट.
तो आपने बताया कि इंस्टॉलमेंट्स में और सीक्वल्स में हमें वेट करना पड़ेगा. तो कुल मिला के किस प्रकार का कैपेक्स का आप अनुमान कर रहे हैं कि जैसे आपने बताया कि एमएमआर का इंफ्रास्ट्रक्चर डेवलपमेंट की बात कर रहे हैं?
देखिए, आज अगर हम विचार करें तो एमएमआर रीजन में जो हमारे काम चल रहे हैं, दे आर वर्थ 4 लाख करोड़, 4 लाख करोड़ के काम चल रहे हैं। और अब अगर हम इसमें जो हमारा वाडवंड पोर्ट है उसको मिला दे तो वाडवंड पोर्ट इटसेल्फ विल बी 1 लाख करोड़। तो ये वाडवंड पोर्ट तो एक प्रकार से मैं प्रधानमंत्री जी का धन्यवाद दूंगा कि ये एक ऐसा गेम चेंजर है। हमारे यहाँ अभी सबसे बड़ा पोर्ट जो है वो जेएनपीटी है, और जेएनपीटी की अभी जो क्षमता है कंटेनर ट्रैफिक हैंडल करने की, वो अब देश में सबसे बड़ी क्षमता जेएनपीटी ने तैयार की है। वाडवंड पोर्ट ये जेएनपीटी से 3 गुना बड़ा है। यहाँ नेचुरल 20 मीटर्स डीप ड्राफ्ट है। तो ये जिस दिन तैयार होगा उस दिन वाडवंड पोर्ट ये दुनिया के पहले 10 पोर्ट में होगा, और अगले 30 साल 40 साल महाराष्ट्र और देश की अर्थव्यवस्था को, और जो एक प्रकार से उसकी अगुवाई ये वाडवंड पोर्ट करेगा। और इसमें सबसे बड़ी बात यह है कि पोर्टलेट डेवलपमेंट की हम बात करते हैं तो हमने देखा कि जेएनपीए का पोर्टलेट डेवलपमेंट ये थोड़ा एक गोल्डन ट्रायंगल में रह गया, लेकिन अब हमने ऐसी व्यवस्था की है कि समृद्धि हाईवे और शक्तिपीठ हाईवे, ऐसे 2 जो हमारे हाईवेज है, इसके कारण पूरे महाराष्ट्र को हम पोर्टलेट डेवलपमेंट का लाभ देंगे, और महाराष्ट्र का ऑलमोस्ट एवरी डिस्ट्रिक्ट विल बी कनेक्टेड विद अ सुपर एक्सप्रेसवे विद द वाडवंड पोर्ट। तो मुझे ऐसा लगता है कि जो एक ग्लोबल सप्लाई चेन में हम लोग एक भूमिका निभाना चाहते हैं, उसके लिए वाडवंड पोर्ट और जो हमारे हाईवेज, ये जो इकोसिस्टम हम तैयार कर रहे हैं, ये इकोसिस्टम पूरे तरीके से इसको बदल देगी।
सर, आपने कहा कि जिस दिन बनेगा इट विल बी वन ऑफ द टॉप 10 पोर्ट्स इन द वर्ल्ड। किस दिन बनेगा सर?
इसका पहला जो चरण है वो 3 साल में बन जाएगा। वी हैव ऑलरेडी स्टार्टेड द वर्क। और मैं वापस कहता हूं कि देखिए, मोदी सरकार क्या डिफरेंस लाता है ये मैं आपको बताना चाहता हूं कि 1992 में 1992 a Supreme Court committee was set up, and the Supreme Court committee said that this port comes under Dahanu natural area, so it cannot be built. और उस दिन वो समाप्त हो गया था। 2014 में मोदी जी की सरकार आई, हमारी सरकार यहाँ आई, तो हम लोगों ने देखा कि देश में वाडवंड पोर्ट से ज़्यादा अच्छी जगह ही नहीं है। इतना नेचुरल डीप ड्राफ्ट कि जहाँ दुनिया की सबसे बड़ी वेसल आ सकती है, ऐसा कोई दूसरी जगह पूरे भारत में नहीं है। तो इसलिए हम लोगों ने महाराष्ट्र में, मैंने एक स्टडी शुरू किया कि हम लोग जो सुप्रीम कोर्ट का ऑर्डर है उसमें से कैसे बाहर निकल सकते हैं। तो ये ध्यान में आया कि इफ़ वी फाइंड आउट अ न्यू वे, जो राइट ऑफ वे फॉर द वाडवंड पोर्ट, तो हम इसमें से बाहर आ सकते हैं। और हमने प्रयास करके 2 सालों में एक नया राइट ऑफ वे ढूंढ कर निकाला। हम लोगों ने वो सेंट्रल गवर्नमेंट को प्रेजेंट किया, मोदी जी ने हमको उसके लिए मान्यता दी। एक जॉइंट कंपनी हमने सेंट्रल गवर्नमेंट के साथ तैयार की। वी वेंट टू द सुप्रीम कोर्ट, वी ऑब्टेन्ड ऑल द परमिशंस। सुप्रीम कोर्ट ने एक जज की कमेटी तैयार की फॉर गिविंग ऑल द परमिशंस। उसके सामने जाकर हमने सारी चीज़ें 1 साल तक सारे हियरिंग्स कंप्लीट किए, और उसका काम भी अब हमने शुरू किया है। अब वाडवंड पोर्ट का काम एक्चुअली जगह पर शुरू हो गया है। और इसके साथ साथ मैंने एक और मांग की थी। मैंने कहा हम जब पोर्ट के लिए रिक्लेमेशन कर रहे हैं तो दुनिया में आप देखेंगे तो सारे मेजर एयरपोर्ट्स आर द रिक्लेम्ड एयरपोर्ट्स, दे आर ऑफशोर एयरपोर्ट्स। तो मैंने कहा कि भारत का पहला ऑफशोर एयरपोर्ट ये वाडवंड के साथ बनना चाहिए, क्योंकि यहाँ एयरपोर्ट है, यहाँ एयरपोर्ट बनेगा, बाजू में जो हमारी बुलेट ट्रेन है वो बुलेट ट्रेन वहाँ है, और हमारा जो रोड है वो भी वहाँ तक जा रहा है। तो एक मल्टी मॉडल कनेक्टिविटी यहाँ पर हो जाएगी। और ये मैंने मांग की, प्रधानमंत्री जी ने तुरंत कहा कि इट इज़ अ गुड आइडिया, और उन्होंने कहा कि यहाँ हम एयरपोर्ट भी बनाएंगे। तो हमारे मुंबई का तीसरा एयरपोर्ट, दूसरा तो हमने बना दिया, तीसरा एयरपोर्ट हम वाडवंड में बनाने जा रहे हैं, जो देश का पहला ऑफशोर एयरपोर्ट होगा। और जो एक प्रकार से, चूंकि ये मुंबई है, बाजू में नई मुंबई है, तीसरी मुंबई जो बन रही है, ये हमारा जो न्यू मुंबई का एयरपोर्ट है उसकी विसिनिटी में तीसरी मुंबई बन रही है, और चौथी मुंबई हम बनाएंगे वाडवंड में।
आपने पूरा एक कॉम्प्रिहेंसिव रोड मैप हमें दिया सर, उसमें आपने बुलेट ट्रेन का जिक्र किया था, तो उसी पे मैं आपसे पूछना चाहूंगी कि पटरी पे कब आएगी?
नहीं, पटरी पे आ गई। 2019 में एक्सीडेंटली हमारी सरकार चली गई थी और एक्सीडेंटली दूसरी सरकार आई थी, तो एक्सीडेंटल सीएम ने उसको स्टे कर दिया था और उसका सारा काम बंद हो गया था। लेकिन वापस जैसे हम आए, हमने विद इन 3 to 4 months उसको पटरी पे लाया, लैंड एक्विजिशन कंप्लीट किया और अब जोरों से काम चल रहा है। अब कोई रुकावट नहीं है और होपफुली 2028 या 29 तक हम लोग बुलेट ट्रेन देख पाएंगे। और मैं आपको कहना चाहता हूँ, ये बुलेट ट्रेन यहीं आ रही है बीकेसी में, और बीकेसी में बुलेट ट्रेन का जो स्टेशन है, उस स्टेशन के ऊपर हम लोग देश की एक बहुत ही आइकॉनिक इस प्रकार की एक बिल्डिंग तैयार कर रहे हैं, विच विल बी लाइक अ कमर्शियल हब। एक बहुत ज़बरदस्त ऐसा कमर्शियल हब हम लोग तैयार कर रहे हैं। और उसी के डिस्पर्सल के लिए ये जो मैंने आपको जो टनल की बात की थी, ये टनल हम लोग तैयार कर रहे हैं।
टनल की भी बात आपने हमें बताई और अभी आपने कमर्शियल डेवलपमेंट की भी बात करी है, तो आई वांट टू टॉक अबाउट द फिस्कल कैपेसिटी ऑफ द स्टेट्स, बिकॉज हर स्टेट गवर्नमेंट में ये एक चैलेंज है, ये एक कंसर्न है। आपने भी मेरे साथ पिछले जो कॉन्वर्सेशन, पिछला इंटरव्यू में इसकी बात की थी, इसको एक्नॉलेज किया था। तो हाउ डू यू बैलेंस द स्टेट्स फाइनेंसेस बिटवीन इंफ्रास्ट्रक्चर डेवलपमेंट एज वेल एज द वेलफेयर स्कीम्स दैट यू आर आल्सो रनिंग?
देखिए, आपकी बात तो बिल्कुल सही है कि हम लोगों ने या पूरे देश में अलग अलग राज्यों ने जिस प्रकार से वेलफेयर की स्कीम्स को हाथ में लिया है, उसका एक स्ट्रेस ये हमारे बजट पर होता है और उसका। लेकिन मैं ऐसा मानता हूं कि आज हम जिस प्रकार की अर्थव्यवस्था में है, उस अर्थव्यवस्था में अगर आपके पास प्रोजेक्ट है, अगर आपका प्रोजेक्ट क्लीन है, अगर आपका प्रोजेक्ट बैंकेबल है, तो पैसे की कोई कमी नहीं है। और फॉर्चुनेटली मिस्टर शक्तिकांत दास जी यहाँ पर है, तो वो बता पाएंगे कि हमने महाराष्ट्र की अर्थव्यवस्था को हमेशा फिस्कल पैरामीटर्स पर एकदम परफेक्ट रखा है। आज भी आप देखिए, हमारा डेट जीडीपी रेशियो 17% पर है। देश में अभी कई राज्य 25, 26, 28% पर पहुंचे हैं, हम लोग अभी भी 17-18% से ऊपर नहीं जा रहे। तो मुझे ऐसा लगता है आज हम लोग ये 4 लाख करोड़, 5 लाख करोड़, 10 कुल मिलाकर सेंट्रल गवर्नमेंट और स्टेट गवर्नमेंट का मिलाकर आज महाराष्ट्र में 11 लाख करोड़ के प्रोजेक्ट चल रहे हैं। तो ये जो सारा पैसा आ रहा है, इसका कारण यही है कि हमारे जो इन्वेस्टर्स हैं उनको ये विश्वास है कि महाराष्ट्र हैज कैपेसिटी टू रीपे। हमारा ट्रैक रिकॉर्ड भी वैसा ही रहा है। हम लोगों ने फिस्कल डिसिप्लिन काफ़ी बड़े पैमाने पर रखी है। तो मुझे लगता है कि वी आर ट्राइंग टू मतलब स्ट्राइक अ बैलेंस, कि जहाँ वेलफेयर स्कीम्स और हमारी जो इंफ्रास्ट्रक्चर की नीड्स है, इसको हम लोगों ने बैलेंस करने की कोशिश की है।
आपने पिछली बारी मुझे बताया था कि वेलफेयर स्कीम्स जैसे कि लाडली बहन स्कीम है, उसका एक प्रकार से ऑडिट चल रहा है, क्लीन अप चल रहा है, तो वो काम अब समाप्त हो चुका है या उसमें और कार्य बाकी?
नहीं, अभी उसका एक पोर्शन हमने कर लिया। जो डाउटफुल अकाउंट्स हमको लग रहे थे, उनको हम लोगों ने रोककर अभी उसका फिजिकल वेरिफिकेशन हमने शुरू किया है। तो इट विल टेक अराउंड 4 to 5 months मोर।
मैं ज्यादा राजनीतिक सवाल पूछना नहीं चाहती, लेकिन पूछती हूँ आपसे बिहार के इलेक्शन के बारे में। एक रिकॉर्ड टर्नआउट हुआ है, तो आप उसका क्या मैसेज ले रहे हैं ये रिकॉर्ड टर्नआउट को लेके?
देखिए, 2 चीजें हैं। एक तो रिकॉर्ड टर्नआउट इसलिए है कि एक प्रो इनकम्बेंसी वोट ये यहाँ पर लोगों ने दिया है। और दूसरा मैं ये कहना चाहता हूँ कि देखिए, SIR के कारण जो हमारी वोटर लिस्ट का क्लीन अप हुआ है, वो क्लीन अप के कारण आज इस प्रकार का वोटिंग हुआ है। तो मुझे ऐसा लगता है कि एक ये मॉडल तैयार हुआ है SIR का, और ये पूरे देश में करने की जो घोषणा इलेक्शन कमीशन ने की है, मैं तो उसका स्वागत करता हूँ।
आप स्वागत कर रहे हैं SIR का, लेकिन ये जो उम्मीद थी कि SIR की वजह से कटौती होगी, बढ़ोतरी नहीं होगी, आप कह रहे हैं कि टर्नआउट में बढ़ोतरी हुई है SIR की वजह से?
बिल्कुल, क्योंकि ये जो सारे नाम थे, जो कुछ डुप्लीकेट होंगे, कुछ गलत होंगे, कुछ बांग्लादेशियों के होंगे, कोई और किसी के होंगे, तो कुल मिलाकर उसके कारण वोटर लिस्ट जो होती थी वो फूलती थी। उसमें एक अननेचुरल इस प्रकार का नंबर आता था, विच वॉज नॉट द एक्चुअल नंबर। SIR के कारण एक्चुअल नंबर आया। तो आप, जैसे मैं मुंबई की बात करता हूँ, हमेशा मुंबई का वोटिंग आपको 50% दिखता है। क्यों दिखता है? जिस दिन SIR हो जाएगा, उस दिन इसी लिस्ट के ऊपर मुंबई का 65% वोटिंग दिखेगा। तो ये हम करीब पिछले 25 सालों में हम लोगों ने हमेशा हम लोगों ने मतलब इलेक्शन कमीशन ने ही क्योंकि ये तो कोई पॉलिटिकल पार्टी का काम नहीं, इलेक्शन कमीशन का काम है, लेकिन इलेक्शन कमीशन ने पिछले 25 वर्षों में हमेशा समरी रिवीजन किया। और समरी रिवीजन में प्रॉब्लम ये होता है कि आप जैसे कोई शहर, अगर मुंबई जैसा शहर है, इस शहर में कई लोग ये माइग्रेट करते हैं। कोई कांदिवली में रहता है फिर बोरीवली चला जाता है, कोई मालाड में रहता है मुलुंड में चला जाता है। तो ये जब माइग्रेट करते हैं तो उनका वहाँ पर भी नाम होता है, और यहाँ जाने के बाद उन्होंने फॉर्म 9 भरकर या 8 भरकर अपना नाम ट्रांसफ़र करना चाहिए, वो नहीं करते, वो फॉर्म 6 भर देते हैं और अपना नाम यहाँ भी कर देते हैं। तो इसके कारण भी प्रॉब्लम्स होते हैं। कई बार कुछ लोग माइग्रेटरी लोग होते हैं जो लोग अपना नाम डलवा देते हैं। तो ऐसी सारी चीज़ों का जो क्लीन अप होना चाहिए था, ये क्लीन अप पिछले 25 सालों में नहीं हुआ है, और उसके कारण हमारी जो वोटर लिस्ट है उसमें कई लोगों की संख्या बढ़ी हुई है। स्पेशली जहाँ अर्बनाइजेशन है वहाँ पर तो ये बहुत ज़्यादा हुआ है। तो मुझे लगता है कि ये जो प्रोसेस अभी समरी की जगह इंटेंसिव जो रिवीजन करने का निर्णय ये इलेक्शन कमीशन ने लिया है, ये बहुत अच्छा है। और मैं तो ऐसा मानता हूँ कि आने वाले दिनों में इलेक्शन कमीशन ने ये कंप्लीट हमारे जो वोटर लिस्ट है इसको ब्लॉकचेन में कन्वर्ट करना चाहिए, ताकि कोई भी व्यक्ति किसी भी राज्य से कहीं पर भी जाए, किसी भी जगह से कहीं पर भी जाए, तब भी वो आइडेंटिफाई होना चाहिए, ताकि एक नाम बार बार ना आए, या इस प्रकार से उसको भी आसानी रहे कि नाम आज किसी को अगर नाम इधर से उधर ले जाना है तो यहाँ से वहाँ उनको फॉर्म भरना है, वो फॉर्म यहाँ आकर कटवाना है, ये बड़ी प्रॉब्लम्स है, तो वो प्रॉब्लम भी दूर हो जाएगी।
सिंस वी आर टॉकिंग अबाउट इलेक्शन, सर आपसे पूछना चाहेंगे बीएमसी इलेक्शंस, कॉर्पोरेशन के इलेक्शंस कब तक होने की उम्मीद है?
देखिए, इलेक्शन कमीशन ने जो इंडिकेशन दिया है उसके अनुसार जनवरी में वो इलेक्शंस होंगे ऐसा दिखता है, क्योंकि अभी हमारी जो छोटी कॉर्पोरेशन है या जिसको हम नगर पालिकाएं कहते हैं उनके इलेक्शन ऑलरेडी घोषित कर दिए हैं। 2 दिसंबर को उसके चुनाव है, उसके बाद जिला पंचायतों के चुनाव होंगे और फिर कॉर्पोरेशंस के चुनाव होंगे।
2 आखिरी सवाल आपसे पूछना चाहूंगी। एक तो यूएस के साथ जो हमारी बायलैटरल ट्रेड एग्रीमेंट की बात चल रही है, नेगोशिएशंस अभी फिलहाल चल ही रहे हैं, आपके स्टेट को भी इससे काफ़ी डिफ़िकल्टीज़ है, काफ़ी चैलेंजेस हैं, क्योंकि कई सेक्टर्स हैं जो टैरिफ की वजह से इम्पैक्टेड है। उम्मीद की जा रही थी कि एक एक्सपोर्ट रिलीफ पैकेज बनाया जाएगा, फिलहाल उसका कोई खुलासा हुआ नहीं है। तो आप स्टेट के लेवल पे इसको कैसे डील कर रहे हैं?
देखिए, जिस समय ये सारा टैरिफ वाला मसला हुआ उस समय हम लोगों ने इसका हमारे ऊपर क्या इम्पैक्ट हो सकता है इस दृष्टि से काफ़ी स्टडी किया। हम लोगों ने एक स्टडी ग्रुप भी तैयार किया। हमारा जो नीति आयोग का हमारा जो महाराष्ट्र अवतार है मित्रा, उसमें हम लोगों ने एक पूरा इसका कॉम्प्रिहेंसिव नोट तैयार किया। और जैसे प्रधानमंत्री जी ने हम लोगों को एक संदेशा दिया कि इसको आपदा मत समझिए, इसको अवसर समझिए, और 2 संदेश उन्होंने दिए कि लुक फॉर अल्टरनेट मार्केट्स और ज़्यादा से ज़्यादा ईज ऑफ डूइंग बिजनेस करके आप जो कॉस्ट है बिजनेस की, कॉस्ट ऑफ डूइंग बिजनेस शुड बी ब्रॉट डाउन सो दैट इसका इम्पैक्ट बिजनेसेस जो है वो उसको एक प्रकार से सहन कर पाए। तो हम लोगों ने ये प्रयास किया कि जहाँ एक और अल्टरनेट मार्केट्स क्या हो सकते हैं इसका विचार भी हम लोगों ने किया, और साथ साथ हम लोगों ने एक मिशन हाथ में लिया कि 100 बिग रिफॉर्म्स, और 100 बिग रिफॉर्म्स के लिए हम लोगों ने एक कमेटी तैयार की और एक वॉर रूम तैयार की, और एवरी मंथ दिस वॉर रूम इज मॉनिटरिंग द रिफॉर्म प्रोसेस। सो हम लोग 100 बिग टिकट रिफॉर्म करना चाहते हैं, जिसमें से करीब 23 हम लोगों ने कर दिए हैं। और इसको जो वॉर रूम है मैं खुद उसको संचालित करता हूँ। सो सीएम्स वॉर रूम ये इसको ट्रैक करता है कि भाई ये रिफॉर्म हुए कि नहीं, इसकी प्रोसेस हुई कि नहीं, प्रोसेस होने के बाद वो नीचे तक पहुंची कि नहीं, इसको हम कर रहे हैं। तो मुझे ये लगता है कि निश्चित रूप से हम लोग इसको अवसर के रूप में इसका इस्तेमाल करेंगे। बड़े पैमाने पर हम ईज ऑफ डूइंग बिजनेस करेंगे, कॉस्ट ऑफ डूइंग बिजनेस को नीचे लाने की कोशिश करेंगे, और नए मार्केट्स ये हम लोग ढूंढ रहे हैं। और हमको तो मतलब हम ढूंढ रहे का अर्थ है कि बिजनेसेस ही हमको कहते हैं, हम लोगों को सिर्फ उसमें जो हर्डल्स है, उसमें जो उनकी अड़चने हैं, उसको हमको दूर करना पड़ता है, वो हम लोग कर रहे हैं। तो मुझे लगता है कि निश्चित रूप से हम लोग इस इम्पैक्ट को सहन करेंगे। आपने
कहा कि 100 में से 23 रिफॉर्म्स, आपके जो 100 रिफॉर्म्स का प्लान है वो हो चुके हैं, तो बाकी कब होंगे सर?
नहीं होंगे, क्योंकि देखिए ये एक लंबा प्रोसेस होता है रिफॉर्म का, और इट इज़ नॉट जस्ट रिफॉर्म ऑन अ पेपर पर रिफॉर्म करना बड़ा आसान होता है, लेकिन उसको सिंक इन करना, उसको नीचे तक पहुंचाना, उसके लिए एंड टू एंड इस प्रकार की व्यवस्थाएं खड़ी करना, ये भी करना पड़ता है। तो हमने प्रयास ये किया है कि अगले पूरा मतलब हमने 1 साल का समय दिया है 100 रिफॉर्म्स के लिए, उसके बीच हम कर लेंगे।
आप प्रयास की बात कर रहे हैं और मैं जानती हूं कि आप बहुत ट्राई कर रहे हैं कि आप स्टार्टअप्स को भी महाराष्ट्र में एक स्टार्टअप हब बनाएं। अभी अमिताभ कांत जी स्टार्टअप से बात कर रहे थे, दिल्ली में है, बेंगलोर में है, मुंबई से कोई नहीं था सर। तो स्टार्टअप्स को बॉम्बे में और मुंबई में शिफ्ट करने का आप किस प्रकार से आगे प्रयास करेंगे? आपने
अमिताभ कांत जी का ट्वीट नहीं देखा? आप जब स्टार्टअप इंडिया का रिपोर्ट प्रकाशित हुआ तो अमिताभ कांत जी का आप ट्वीट देखिए, उन्होंने ट्वीट किया हुआ है स्टार्टअप इंडिया के रिपोर्ट में स्टार्टअप कैपिटल इज नॉट बैंगलोर, इट इज नॉट हैदराबाद, इट इज महाराष्ट्र, इट इज मुंबई। बाय एब्सोल्यूट नंबर्स एंड बाय एब्सोल्यूट इन्वेस्टमेंट महाराष्ट्र ही नंबर 1 है स्टार्टअप में। इसलिए हाँ, लेकिन और हमको करने की जरूरत है, वी कैन नॉट बी कॉम्प्लेसेंट। लेकिन आप ये समझ लीजिए कि आज देश का स्टार्टअप हब ये महाराष्ट्र ही है।
तो आप क्या मैसेज देना चाहेंगे सर जाने से पहले, बिफोर वी स्टार्ट द फेलिसिटेशन? You've got startups, you've got industry leaders, you've got students. What is the message that you'd like to leave with them about Maharashtra?
देखिए, हमारी तो टैगलाइन है महाराष्ट्र रुकने वाला नहीं है, वी आर नॉट गोइंग टू स्टॉप। और ये आप समझ लीजिए कि भारत की जो एक हमारा प्रधानमंत्री जी का मिशन है विकसित भारत 2047, उस विकसित भारत 2047 के साथ हमने विकसित महाराष्ट्र को अलाइन किया है और पूरी ताकत के साथ हम महाराष्ट्र को एक ग्लोबली कॉम्पिटिटिव इस प्रकार का स्टेट इस रूप में हम देख रहे हैं। और ये करते हुए मैं एक कहना चाहता हूं कि मैं ये नहीं कहता कि हर चीज़ में वी आर द बेस्ट, और भी कई राज्य हैं जिन्होंने बहुत अच्छा काम किया है। तो महाराष्ट्र में हम लोगों ने ये पद्धति रखी है कि जिस राज्य ने जो अच्छा किया है हम उससे वो लेते हैं और उससे अच्छा करने का प्रयास करते हैं। तो हमारी कुछ मामलों में कंपटीशन अलग अलग राज्यों से और कुछ मामलों में हम अलग अलग देशों से भी कॉम्पीट कर रहे हैं। तो वी वांट टू बी ग्लोबली द बेस्ट।
सबसे ज्यादा कंपटीशन विद इन द कंट्री आपकी किसके साथ है सर?
नहीं,
Who's your fiercest competitor?
मैं ऐसा नहीं मानता किसी के साथ। इट्स हम लोग तो कॉम्पिटिटिव फेडरलिज्म में हैं, तो इंडस्ट्री के मामले में अगर हम विचार करें तो गुजरात है, कर्नाटका है, तमिलनाडु है, इसके साथ हमारी कंपटीशन चलती है। अगर आप अलग अलग सेक्टर देखिए तो अलग अलग सेक्टर में अलग अलग लोगों के साथ कॉम्पिट। लेकिन एक बात आप ध्यान में रखिए कि अल्टीमेटली वन ऑफ द इंडिकेटर इज FDI, और FDI में महाराष्ट्र हैज कंसिस्टेंटली बीइंग नंबर 1। और इट्स नॉट जस्ट नंबर 1, अगर आप देखिए तो हमारे बाद के जो 3 राज्य है उन 3 राज्यों का मिला के जितना FDI है उससे ज्यादा FDI अकेले महाराष्ट्र में आ रहा है। सो वी आर द नंबर 1।
Devendra Fadnavis ji, thank you so much for joining us here. May I request you to please remain seated, sir?
Thank you.
We have a special moment coming up. Thank you very much. Ladies and gentlemen, the Chief Minister of Maharashtra, a big round of applause for stating his vision for his state and for the country.
Thank you.
Thank you, sir, and thank you, Shireen, for that comprehensive discussion on where Maharashtra is headed. Request the both of you to kindly remain on stage for a very special felicitation. Ladies and gentlemen, tonight we pause to honor 2 individuals whose contributions have fundamentally shaped India's economic and social infrastructure. The CNBC-TV18 Global Leadership Summit recognizes them as icons of excellence of the Indian economy. Shireen, requesting you to kindly read out the citation.
Privilege and honor to read the citation for the guests that we honor this evening. Mr. Shaktikanta Das has been a steady hand guiding India's economy through some of its most turbulent years. Appointed as the 25th Governor of the Reserve Bank of India in December of 2018, Mr. Das brought to the role over 4 decades of administrative experience and a reputation for pragmatic leadership. During his tenure, the RBI navigated the NBFC crisis, the pandemic, and the global monetary tightening with remarkable stability and foresight. He strengthened financial resilience, advanced digital innovation through the digital rupee and UPI's global expansion, and deepened financial inclusion. He also championed sustainable finance through India's first sovereign green bonds and encouraged climate-conscious banking. Earlier, as the Economic Affairs Secretary, he played a pivotal role in GST implementation and bank recapitalization. Mr. Das's leadership has earned him international acclaim, honored as the Central Banker of the Year Asia Pacific 2020 by the Banker London, the Governor of the Year 2023 by the Central Banking London, and rated A+ in the Global Finance Central Banking Report Card for 2 consecutive years of 2023 and 2024. For his visionary guidance of India's monetary and financial system and for strengthening the credibility and resilience of the Reserve Bank of India, CNBC-TV18 is proud to honor Shaktikanta Das as the icon of the Indian economy. May I please request you to join us on stage, sir, and I please request the Honorable Chief Minister to do the honors. Ladies and gentlemen, a standing ovation would be fitting for one of our icons here this evening.
Congratulations, Mr. Das. Requesting Mr. Das's daughter, Akanksha, to please join us on stage for this very special moment. Akanksha, can we please have you on stage?
We have proud daughters joining us here today, and here's Dr. Das's daughter standing with her father. That's a wonderful surprise for you, sir. Mr. Das, congratulations, sir. What an absolute honor it is to have you with us. I'll take that, sir. Thank you very, very much. You've had a long journey, a long tenure, spanning different roles and responsibilities. As you look back at your own career, sir, how would you narrate your life story?
Thank you very much, everyone, for being here. In particular, let me first thank CNBC-TV18 Network for giving me this recognition. It always feels nice to be back in this platform of CNBC. I have interacted with this channel over the years, and it's always a great pleasure to be back. And I'm equally delighted to receive this felicitation from Honorable Chief Minister Maharashtra, Shri Devendra Fadnavis ji, who over the years has taken many landmark initiatives, not only in the field of infrastructure, but also in all-round economic development of Maharashtra. And one point which I was listening to him very carefully, one point which he has identified and which he stressed is the role of Maharashtra in the context of the national economy. I think it is India first, and if every state grows, India as a country will grow. And that is the point which the Honorable Chief Minister has stressed. Now coming to you, Siren, to your point, it's my 45th year in public service, starting as a civil servant in the IAS in 1980. So over the years, I have derived a great amount of satisfaction. I have worked in multiple fields, but primarily in the areas of infrastructure, industries, and of course, finance and economy. Wherever I have gone, it has been my effort to try and put in my best effort to make a difference to the situation, to make a difference to the life of the people, and to make a difference to the stakeholders of the post which I have held. And God has been very kind, and I hope to continue with the same endeavor, with the same amount of commitment in the years to come also.
We wish you the very best of luck with that, sir. But before I let you go, a word on where you see India poised today, on course to become the 3rd largest economy. But given the global environment as well as our own ambition and our aspiration, what would you think we need to prioritize?
3 points I think I would like to highlight. Number one, the overall, in the global context currently, when the world order is changing, when the rules of international trade are being rewritten, when multilateralism is being replaced by regional agreements and by bilateral agreements, given the current uncertainties all around, both geopolitical and economic, Indian economy continues to be sound, stable, and resilient. That's the first point which I would like to mention. I can back it up with a series of factual details, but in the interest of time, I'll leave it at that. Second, the goal of Viksit Bharat, that is making Indian economy as an advanced economy by 2047, it's very much on track, and the Honorable Prime Minister has set the roadmap. You would have seen, just think of 2025, the kind of reforms which have been taken, GST, next-gen GST reforms which were undertaken recently. The Prime Minister talked about it on 15th of August from Red Fort, and within 5 weeks, on 22nd of December, the next-gen GST reforms were implemented with the cooperation of all the states. So the second point I want to mention is that the goals of Viksit Bharat, the roadmap has been laid. Several reforms this year have been undertaken, not only in GST, but also in non-financial sector deregulation, for which a high-level committee has been appointed. So in the days and months to come, you will see a series of reform measures relating to ease of doing business, relating to making Indian economy more competitive. All these measures will follow. So as the Prime Minister has pointed out on 15th August, I'm referring to that because that was really a moment which really marked a leap to the future. On 15th August, the PM PM stressed that reforms will continue with greater vigor. And thereafter, we had GST 2.0. Many deregulation measures are in the offing, and several other measures are in the offing. That's the second point which I would like to mention. The third, in the area of technology, in the area of artificial intelligence, in the area of startups, I think the future looks very bright for India. The young generation in India, not only in Maharashtra, with due respect to the Chief Minister, not only in Maharashtra, but also in smaller places, in Tier 2, in Tier 3 towns of states which are not known to have, to have been in the area of technology. You are seeing today great amount of transformation taking place in those Tier 2 and Tier 3 cities. So that journey, that process, I think holds a great future for India. And that becomes more important because jobs are getting created in the Tier 2 and Tier 3 cities. It will slowly spread to Tier 4. And not only that, it will also facilitate urbanization in more and more places. And urbanization by itself, as you know, acts as an engine of growth. So these are the 3 points which I would like to stress in the context of the current Indian economy. We are facing many challenges because of trade and other related issues. Many countries are facing, but every challenge is an opportunity, and I'm sure the current generation and the future generations of India will treat this, and not only this, but future challenges as opportunities and capitalize on them to take India towards 2047 Viksit Bharat. Thank you.
Before I let you go, so I'm going to borrow from the Chief Minister. He said for the state of Maharashtra, we've only seen a trailer picture abhi baki hai. As far as the country is concerned, sir, in the PMO's war room, is the measures that we've just seen also the trailer picture abhi baki hai?
You will see many steps. Let me leave it at that. Thank you.
Dr. Shaktikant Dadas, thank you so much for joining us, sir. Congratulations, and what an honor it is to have you join us here. Thank you, sir.
And I'm also equally happy to receive this award when many of my friends in Mumbai, with whom I developed this excellent relationship in the last 6 years, they're here. And also, as I mentioned, the Chief Minister is here. And also, I'm very happy because my daughter, Dr. Akanksha, is also present here. Thank you.
Thank you, sir. It is indeed a very special moment for us. Once again, sir, thank you very much. Congratulations. And we will come back to you.
Well, thank you so much.
Ladies and gentlemen, it is time now for our next icon. Dr. Pratap C. Reddy is the architect of India's modern healthcare revolution, a visionary who turned a personal calling into a national mission. Guided by compassion, conviction, and the belief that quality healthcare is every citizen's right, he redefined what was possible in a nation where access and excellence once seemed worlds apart. A cardiologist by training, a reformer by spirit, he founded Apollo Hospitals in 1983 and transformed it into one of Asia's most trusted healthcare institutions. Over 4 decades, Dr. Reddy's leadership has been defined by foresight, innovation, unwavering commitment to inclusion. He's made preventive healthcare a national priority, championed rural telemedicine, and introduced the 1 rupee a day community insurance model. He established policy platforms like Nat Health, advocated for universal health coverage, and launched the Total Health Program, a holistic initiative integrating physical, mental, and social well-being. Honored with the Padma Bhushan in 1991, the Padma Vibhushan in 2010, amongst India's highest civilian awards, Dr. Reddy has received global recognition for his visionary leadership and social commitment, for his visionary stewardship, for redefining healthcare with heart and purpose, and for exemplifying service through leadership. CNBC-TV18 proudly honors Dr. Pratap C. Reddy as the icon of the Indian economy. Ladies and gentlemen, he's 92, he's still here, and he's still doing what he's passionate about and what he loves to do. Thank you so much, sir, for being here today. Thank you. Dr. Reddy, it is truly an honor to have you here with us on this stage. And as I mentioned, for every Indian, what you've done as far as the healthcare sector is concerned to make private healthcare accessible, good quality private healthcare accessible. Thank you so much on behalf of all citizens, Dr. Reddy. What keeps you going at 92 to still have the passion, to still have the perseverance, Dr. Reddy?
I think it's not perseverance, it is seeing the happiness. When I came back from US, I saw the healthcare was absolutely, not accessible for the people, only a few people, 1%. As I told then Prime Minister saying, 1% of rich people can go abroad for treatment, or the government sponsors a small number. This is what made me sad. Was, if Indians, when I was in US, I was as good as any doctor anywhere there. And I said, well, we have that brilliance in our people. Why can't we give health care for all our people? So this is not easy, but I'm happy. I started the first hospital in Chennai. Today, we have 75 hospitals. That's not only my happiness. My happiness is there's another 300 big hospitals here. And of course, after hearing the Chief Minister talking about Mumbai, I must assure him I'll have a beautiful hospital coming up here, one more beautiful hospital coming up here very shortly. We'll start. But the thing is, when you gave me this award, I must say, I accept it on behalf of the entire family. Yes, my daughter, my wife, my daughters. But it is the number of people who got the, this kind of treatment. It is their trust that makes me whatever I am today. Even today, as I said, I work maybe on Sundays I don't go now. Previously, Sundays I used to go home for lunch, but now only Sundays I take off. But I have the brilliance of the entire lot of people. My daughters are working so hard, and there are a number of professions. More than anything else, it is the power within them. The care, compassion which they give. In clinical excellence, we are on par today with any hospital anywhere in the world. This is where I told our Prime Minister, I told him 2 things. I wrote 2 letters to him. 2 things in my letter. One is that saying India today is equivalent to any our hospitals in India or world class in our outcomes. I'm a cardiologist. We've done the world's largest number of cardiology procedures in Apollo. And in healthcare, it's not numbers. Our outcomes are better than the best centers anywhere in the world. Similarly, I told him there's a huge shortage of healthcare people in the world. About 8 million this year. By 30 million people, only India can give this. So he only changed. So I call it global healthcare and the global workforce. But he immediately changed the word, saying, we'll call it as Heal India, Heal by India. And it's not giving an interview for me and my daughter and my wife, but it is the action that he took. They told me he spent another 2.5 hours, after 1.5 hours, he spent another 2.5 hours to direct the various ministries. And look, when you saw this budget, she announced saying there are 70,000 additional healthcare people will be traveled. They opened 40 medical colleges last year. They're opening a few more colleges this year, 100 nursing schools, and from 70 admission, 300 per institution. So this is the spirit, the dynamism of the Prime Minister and the action taken by various ministries. So it will make India proud, because as I said, already 150 countries are coming to us. I must give you an instance which is very striking recently. About 6 weeks ago, on the same day, 2 air ambulances came, one from Sweden, one from New South Wales. Both patients were unconscious. They were told that, it's very serious, nothing more can be done. I'm happy to say the first patient who had the myocardial fluid in the thing, he recovered within 4 weeks and went home. The other patient who had a burst of pancreatic burst and unconscious, but about 1 week ago, she brought the son, and she said, she again cried. This time she cried with happiness. And the boy said, I want to come next time and meet you. I'm walking and shake hands with you. So this is what happened. I think that is what keeps you going. But what I'm saying is, as our Chief Minister was saying, he's proud of the development that Maharashtra is doing. I'm very happy that Indian healthcare is now matched with the rest of the world and will make a huge impact on the economy and the development of not only keeping people healthy, but I think it will keep, the 30 million people will serve in India, here in India, when they come here for treatment, healed by India, by these 30 million people going abroad. And more recently, my youngest daughter, she now connected the hospitals from across the world to manage from Hyderabad. So heal the world from India. So I think this is the spirit that's happening. And it's not just Apollo. There are wonderful hospitals in India. So I feel so happy. It was not easy to go through in 1983, the first hospital when it came. Before that, I must have had several hurdles. But I think that first hospital, and today, we're opening almost every year. Next 3 years, we'll have another 10 hospitals. But that's what, the country needs. And as I said, I want to say, I'm proud as an Indian, and India will be proud of its healthcare.
We are certainly proud of what you've been able to achieve, Dr. Reddy, and it's wonderful to see your daughters and, of course, Mrs. Reddy here with us as we honor you. They're taking your legacy forward. So thank you very much, Shobna and Sunita and Mrs. Reddy, for also joining us here. Ladies and gentlemen, a big round of applause. Thank you very much, sir, for joining us here this evening. Many, many thanks to the Honorable Chief Minister. Thank you so much, Mr. Fadnavis, for taking time out to join us here this evening. Thank you, sir. Thank you so much.
Well, congratulations, Dr. Reddy, and thank you so much, Shri Devendra Fadnavis, for joining in and facilitating our two guests. Well, in some time, we're going to step into a conversation where artistry meets legacy. Don't miss the session as Deepika Padukone and Sabyasachi Mukherjee explore the power, vision, and global footprint of Brand India in an unforgettable discussion.
Well, moving on from founders building billion-dollar enterprises to the capital that fuels them. That's the other side of India's growth story, because even the boldest ideas need resilient capital behind them. And right now, that resilience is being tested. Interest rate pressures remain elevated and deal activity has slowed, forcing investors to rethink the balance between risk and return in real time.
That brings us to our next conversation. To lead this discussion, I call on stage Surabhi from CNBC-TV18. And joining her are leaders who view this shift from very different vantage points. Mr. Vishal Mahadevia, the Managing Director and Head of Asia Private Equity at Warburg Pincus, Joydeep Sengupta, the Senior Partner at McKinsey & Company, and Amit Shetty, the CEO of Embassy REIT. Please join me in welcoming them with a round of applause.
Good evening, ladies and gentlemen. We'll just wait for a second, let the photo get over. We have icons amidst us this evening. All right, ladies and gentlemen, so we have a very, very interesting conversation lined up ahead. How to build resilient capital in a volatile world. And volatility is the only constant in this world. In an era where tariff headlines come at such a furious pace that sometimes it's even difficult for us in the news business to keep pace with the change of things, geopolitical changes, and then, of course, the volatility in the market itself and the tech disruption that is forcing business to reimagine and redefine the way they are operating. So in all of this, how should companies, entrepreneurs, capital and investors, how do they build resilience in their models? That's what we're going to focus on. And I have with me experts from their respective domains. Of course, Vishal Mahadevia needs no introduction. He would definitely know something about capital, a thing or two, considering he's got, I think, $10 billion at last count, which is invested in India. And then we have the McKinsey view coming in from Joydeep. And then, of course, the REIT story, which is unfolding at a rapid pace in India. We're going to discuss that with Amit. So, let me open with you, Vishal. Is life more dramatic and hectic over the last 6 or 8 months, or do you still manage to find peace and take peaceful decisions when it comes to capital allocation?
So firstly, thank you for having me join this terrific panel. I just want to just step back and say how inspiring it is to have heard the stories, to see Dr. Reddy, to hear our Chief Minister, Amitabh Kant, Shakti Kant Das. How can you not be excited to invest more capital into Maharashtra and India just after hearing that? Yeah, to answer your question, look, the last 6 to 8 months...
I think that deserves a round of applause, guys. Yeah.
Look, I would say, forget the last 6 to 8 months. I feel the last 6 to 8 years has been hectic. And the hectic nature of what's happening geopolitically around the globe, that's just been happening. If you go back and look pre-COVID, post-COVID, we referenced the crisis here for NBFCs. There's always something or the other. Patient capital has always been interested in India, and I actually see that today, the amount of investors, private equity, private capital, that is looking for opportunity in India, I've never seen it as much as it is today.
That's good to hear. There's also a lot of that patient private equity that's made some very sweet returns, and it's exiting, and we'll talk more about that as we go forward. But, Joydeep, from your lens, when we talk about these times, and there's disruption in every sphere, right? Capital flows, markets, business decisions, tariffs. What is your definition of, resilience and maybe the first step towards building it?
So thank you for that. And the two things I would say that really struck me over the last couple of years. First is, I think if you look at what companies are dealing with, and I think the range of disruptions are immense. First is at the macro level, right? So it's enormous, just the macro changes, the geopolitical moves that are happening. Second, the technological disruptions that you alluded to and we heard from our last panel. And finally, I think just in terms of talent, right? People are, the revolution of talent, the change in that mix which is happening. So one of the things which I think we've seen successful companies now really focus on is much more around what does it take to be resilient, and adaptability as a leadership trait is becoming something which people are increasingly focusing on. How do you move nimbly? How can you be more agile in the face of this, as opposed to thinking long-term in terms of drawing a big roadmap? It's much more about building a strong ship that can navigate when the waves are rough.
Interesting. So agility is no longer a choice. It is the new normal that you have to be.
It is,
you have to
indeed.
build and be with.
Indeed.
Okay. Your thoughts, opening thoughts.
In terms of resilience, for us as a REIT product, I mean, look what the pandemic has done for us, right? We went through a black swan event, and we consistently delivered, right? And we've delivered, growth plus yields, right? Which is really hard. And in a space where globally office markets was a bad word, Indian REITs have actually delivered. And I think testament to the fact is now new capital as well as old capital is returning back. If you just see the diversity of the cap table that we have about 40% of FPIs in our book. And we have about 350 global fund houses. And there can be hedge funds versus, long funds, indexes, sovereign wealth management funds. So, you see the gamut of it. So I think, the story for us is just very strong. And I think we're just at the beginning of this event because it's a very new product in the country. It's about, 2019 was the first REIT that got listed. And, look what's happening. The space is now about 176 million square feet. The AUM is about 2,25,000 crores, market capitalization of 125,000 crores. And look where the US is, right? So I think it's a great story for us.
Since we're on the subject of REITs, let me actually, ask you a little more on that. I think, like we discussed in the previous panel as well on real estate, that the total assets under REITs in India is still a small sum by that stretch, right? Only about 20 billion. Now, as real estate, which is a capital guzzling sector, as it looks for options, how will REITs compete with the other traditional sources of capital, which are also available to at least grade A developers?
See, the REIT is actually a product that's been launched for the masses. It's an annuity product, right? So if you just take a comparison of US, what's done in the US is 98% of commercial real estate is in the REITs, right? And it's, the penetration on the market cap in the stock exchange is about 4%. In the Indian side, it's about 18% or 19% of the total commercial real estate is listed in the country. And see, we are in the verge of crossing the billion square feet mark in the country. And we're going to be the fourth largest. And I think about 35–40% of that stock is actually REITable as we speak today. But 19% is where we are. And I think, just from that, for the next 5 years, the growth story is so imperative simply because there's an organic side of the story, which is the existing supply that's there. Plus, there's about 50 million square feet that gets added year on year. So that's the inorganic side of the growth story. And I think, this 25 billion will graduate to about 50 billion in the next 4 or 5 years.
Okay. Interesting perspective there on REITs. Now, Vishal, I want to come back to deals and capital, because whatever's been happening in the secondary market, it might be a flat year, etc. There has not been a day when we've not had a deal headline in the Indian market, right? And both inbound and outbound. What have you made of the absolutely hectic activity here? And what's private equity thinking when it comes to either taking a call on mature investments and, of course, taking a call on new potential investments here?
Look, I think as I started out by saying, as you look at private equity around the world, and let's pick Warburg Pincus as somebody, the question for us is, how can we do more in India? We're always pushing ourselves for how we can do more. And I think that asset class, private equity as a source of financing, has really matured in India. Entrepreneurs today are not asking the question, why should I take private equity? They're asking the question of, how can I take private equity to help grow my company, build a bigger business? And I'd say the virtuous cycle has actually closed because we're investors. We invest behind strong entrepreneurs and terrific management teams. And I'd mentioned this before. Really terrific management teams today are entrepreneurial. They want to leave their jobs and say, let us start something. Let us do something entrepreneurial with private equity backing. And without that, we can't find deals to do.
Is there, on that, because this was an offline conversation I was having with a deal maker here in India, and there was this debate about whether the animal spirits in India are dimming to an extent. I mean, I go back to reference that Mr. Uday Kotak made, a couple of quarters back, saying that now people are more interested in, selling stakes and running family offices than running businesses, because, that could be a little troublesome in terms of finding the right, deals and.
I see zero reduction in the animal spirits of entrepreneurs. If you're asking about animal spirits in the stock market, I'm not the one to comment on that. But entrepreneurs in India are as aggressive, as excited about the future. And frankly, as a private investor here in India, I couldn't be more excited right now about the next 10 years of investing in the country. So there is no dearth of entrepreneurs, no dearth of investors. So I actually quite excited.
That's again reassuring. Let me ask you about how you're thinking, just to stretch that point, in terms of the activity. Of course, you guys made huge headlines yourself with the IDFC first, right? So clearly financial services you're looking at. But there have been a couple of exits as well, again from financial services companies, and there are still apparently some in the offing. So where is your core focus now in the near to medium term in terms of opportunities here?
So we've always invested in a few core sectors which we're good at. We're thesis-based, and like I said, it starts with the entrepreneur. Financial services. I think technology in India, which is frankly part of financial services. Why are we excited in IDFC First Bank? We're excited because of the technology. Vaidya is building a technology-first bank. I know he spent a lot of money building the technology, but I promise you, it is differentiated. That's what excited us. It's not just a traditional banking business, right? So that disruption, that ability to do something differentiated is important. We see the Indian consumer. Yeah, everyone says, oh, there's a slowdown in consumption. We don't care about next quarter and next 6 months and next 9 months. 5 years from now, you've got an Indian consumer that is aspiring. They want more. There's lots of opportunities to invest. So I can keep talking, but I'll give you one example of a company called Merrill.
It's a company in which you invested.
Yeah, we invested in it. It's in Vapi. It's the Bilakhya family. Now, before I invested, I'd never been to Vapi in my life. Okay? My fault. But I met them. This company out there didn't even know existed. It's amazing. And in the last 3 years, the way they've grown, half their business is outside of India. They're doing deep, real medical technology. I'm talking about robots for surgery, automation. It's amazing to see what's coming out of India from an entrepreneurial standpoint.
That's fantastic to hear. I'm going to come back on the point of technology in just a bit. But Joydeep, comment on this. This is really heartening to hear because, we track the public listed markets as our daily bread and butter. And there's always this question about, earnings are not picking up and, top line is not growing. It's only about margin expansion. But how are you seeing Indian corporates, whether it's mature companies or mid-sized or even startups, adapt to the new normal? Because clearly there's appetite from people who have capital. So what would your suggestion or recipe be to get that capital and to really get going with it?
So maybe I'll answer that in two parts. I think first is, any corporate needs tailwind, right? And the Indian economy has got tailwind behind it. It's got growth behind it. And I think when you look at it from a investor lens and you look at both private capital in particular, today when we just completed a survey of LPs around the world and we interviewed across markets. And so far allocation in an in an India fund, if you made in a regional fund to India has been about 20%. People are looking to up that to about 40%, which means there's much more confidence in India as an investable destination. I'll come back to a glass empty view a little bit later. They see the lack of animal spirit yet, right? And they do see the emergence of what people call professional entrepreneurs. It's a new term which many LPs are now beginning to use, which is to say that, look, you had entrepreneurs which were typically businesses which were grown from first-generation founders. Then you had the professionals, but now you have the professional entrepreneurs who really we want to bet behind. So that's a second element which is quite interesting. And in that context, your question on companies themselves, I think the companies are transforming. I think there is no company that we talk to which doesn't have transformation on the top of its agenda, right? Transformation in terms of the shift on technology is a big factor, right? Everybody is talking about digitization. There's nobody who doesn't talk of AI, whether they understand it or not. Everybody talks about it, at least, which is the first part. But there's massive amount under the surface of reskilling and building up the capabilities that is going on, which I feel very confident about, therefore, the future of companies in India to adapt effectively to this change.
You know, now let's broaden this out to technology because it touches everyone and all of the businesses that you all either invest in or deal with, and of course the REITs. I mean, the tech story is so important for that. So Vishal, to come back, and we can break this up. There's traditional, of course, IT services here. There are a lot of the new age internet companies, and we had some of those fantastic disruptors with Mr. Kant on his panel just a while back. And then there is this whole GCC piece, right? So the argument is that you have all this, but you don't have real cutting-edge AI in India, and you don't have deep tech in India, and therefore South Korea is getting the money, or Japan's getting the money, etc. Maybe China is getting the money. So Vishal, what do you say to that argument? And how should investors and Indian entrepreneurs look at technology to be, well, global ready? I mean, from both an investment perspective as well as a business perspective.
Look, it's the biggest challenge. I've been saying it for a while. It's the biggest challenge India faces, not just India. They're happening. By the way, investors completely believe it. We're investing around the world. Are we starting maybe a bit late? But it's still very early in the game. So I look at India and I look at AI, I look at deep tech, I look at innovation. I think it's all just starting out here. I'm optimistic about it, but it is a challenge. And it's top of mind of not only the entrepreneurs, but all of us as investors as well as how do we play that.
And in the meantime, of course, we have our homegrown internet/platform companies. Many have already come to the market. Many are making their way to the market. And that's the hottest debate here. Valuations, have they reached the maturity, the size and scale? Are they leaving enough on the table? You're seeing this from a global Asian vantage point. What do you say?
No, I think valuation is always the question, but I think if you take a 5-year view, whether you pay, on some of these technology companies, whether you pay 10% more or less, frankly, it's not going to make it a success or not. We are investing, just pick data centers in India. It's an amazing business, and there's a long runway. The question is, how do you grow it fast? How do you execute it better? And we've just opened 2 data centers in Bombay. Right now, one of our portfolio companies, Princeton Digital Group. So as you look at AI, as you look at tech, as you look at the plumbing around it, I just see lots of opportunities. Valuation is not the constraint. Opportunities, entrepreneurial spirit, that really is.
Joydeep, what do you have to say on the great India tech debate?
No, look, firstly, I agree with the point made. But I do worry about one thing, and that is if you take a 5-year view and you look at the investment trends, it looks great. But if you take a 15-year view and then you take a look at all of the geopolitical moves that are happening, under the surface in the last 3 years, dramatic changes have happened. So let me give you 3 examples. Number one, I think the US, which was essentially a net investor, is effectively now the biggest investee in the world, right? 60%, 50 to 60% of total greenfield investment is going into the US. Advanced Asian countries, which used to invest together with the US and Europe into emerging markets, are now investing in the US. So if you look at South Korea, Taiwan, Japan, They're all investing in the US, right? You look at data center, and where are they investing? It's all in the new technologies, EV, renewables, data centers, of course, the whole fab area, right? Semiconductors. So if you take a 15-year view and you say that, look, these are the industries which effectively over a period of time are going to shape GDP, shape revenues, bring the next billion-dollar companies or the trillion-dollar companies, I worry that India doesn't get its fair share, right? In fact, I think India risks not having that kind of capital coming in, because that is what will really build the foundation for the ecosystem around it to happen. So that's the piece I worry about. I'm not worried about the near term or the medium term. I worry about the long term.
That's an interesting point. Amit, on the issue of technology, and we were asking some of our other panelists on this as well, in an era where you don't know how US policy shapes up and whether that kind of slows down to an extent the GCC and offshoring drive, in an era where Indian companies are being forced to reimagine, so you don't know if workforce sizes start reducing a little bit, where does that leave the look ahead for REITs and the promise of 15 to 16% IRR?
So, we've been doing a lot of conversations with our occupiers, right? So what I'm hearing is that India has the largest pool of data science, right, talent, the second largest pool of AI talent in the country, and the largest English-speaking AI talent, right? Now, if I just bring that to the GCC story, at the end of 2024, we had about 1,900 GCCs employing about 1.9 million workforce. And that's expected to grow to about, 2,000 plus 2,200, 2,400 GCCs employing about 2.4 million workforce. Now, one interesting fact is about 6,000 of the global jobs, the CTO jobs, are being performed from India. And that's expected to grow to about 30,000 jobs, right? India is now not seen as, a cost arbitrage country, but it's been seen as the innovation hub, transformation hub, where deep tech is actually being done. But what we worry about is that there's a lot of jobs and a lot of work, a lot of technology being done, but we are not harnessing it as a country. Yeah. It's the large corporations which are harnessing that, and that's what's worrying us. You see the internet bubble or the internet era or the the ITS era. All the companies were the US-led companies or they were Japanese companies, but we didn't benefit despite the fact that the technology was getting built in our country.
I have one quick last question. I think we're running out of time, but Amit, this one's for you, the final word, because it's the biggest debate here in India, right? We've spoken about a lot of inbound investment and private equity interest in India. There are also big exits, Temasek going out of Schneider. That was a large, I think, $6 billion transaction, Carlyle with PNB Housing, and so on and so forth. So many examples last 12 months. So that always raises the debate that does the smart money know something? Is this market at prime valuation now? Or is it just a sign of maturity? Which side of that debate are you on?
Oh, it's completely a sign of maturity. You cannot get fresh FDI into the country unless you have successful exits. And every dollar that is exited, I promise you multiples of that will come back. I will sit with you on a panel years from today and we will look back, and that's a promise.
And which also then brings me to the whole debate around FDI itself, because FY25, gross FDI is about $80 billion. Net was almost flat. So again, it raises that issue of what's really happening with net FDI.
You invite me back to your panel 3 years from today, we will have this conversation. There will be more FDI that you will see because of the exits.
More private equity investment, more FDI, resilient is the word from what we've heard on this panel. Thank you so much, all of you, for giving your insights. Thank you very much.
Thank you.
शिफाली, आपसे शुरू करती हूँ. You were talking to the Prime Minister also yesterday, और वो आपसे पूछ रहे थे कि आप हंस क्यों रही थी कैच लेने से पहले?
First of all, thank you for the sweet gesture. Thank you all. And to answer your question, well, वो पार्टनरशिप बहुत ही ज़्यादा क्रूशल चल रही थी एंड हम सबको पता था कि वो पार्टनरशिप ब्रेक करनी है. तो जैसे ही बॉल हवा में गई, मैं अंदर ही अंदर बहुत खुश होगी कि चलो, क्योंकि वो दोनों ना बहुत नीचे नीचे से खेल रहे थे. तो मुझे ये था चलो कुछ हवा में मारा, तो मैंने बोला आ गई मेरे पास, आ गई, अब पकड़नी है, क्योंकि वो बहुत क्रूशल था एज ए टीम हमारे लिए. तो यही था, बस हाथ में कैच आ गई, वो खुशी थी मुझे.
और जब आ गया कैच
फिर खुशी मिल गई, फिर मैं नाचने लग गई.
Well, I'm going to request my colleagues Mangalam and Hormuz to also come up and join the conversation. But Sneh, आपसे पूछना चाहूँगी that moment जब finally, मतलब semi-final तो हम लोग सारे, मतलब the whole country was excited, the whole country was celebrating. But जब final में we saw all of you running onto the pitch, what was that moment like? आपके लिए वो जो moment था वो कैसा था?
First of all, thank you so much for having us here. And the moment was surreal. We are still feeling numb, actually.
Still feeling numb?
Yeah, still not sunk in. So it was amazing feeling. We have waited for so many years to lift that cup, and we have manifested so many things. So a little story: when we went to England and we met Charles King, and so few of our members were invited there. So 20 of us. So जो हमारा support staff था, they were left behind. So we all manifested कि चलो यहाँ नहीं हुआ, we will lift the trophy, and हम अपने PM सर के सामने जाके सब लोग पूरा support staff के साथ जाएंगे. तो हमने वो manifest किया था उधर, and we are really grateful and happy कि हम लोगों ने वो moment create किया और आप सब लोगों को ये खुशी दे पाए.
You know, आपने वो manifest किया और कर भी दिया. Ladies and gentlemen, in 2023, CNBC-TV18 honored the Indian cricket squad, and Harmanpreet then said, "We will win the World Cup." So clearly, आप लोग manifest ही करते रहते और फिर manifest करके दिखा भी देते, deliver भी कर देते. तो ये collective manifestation होता है कि individual?
कलेक्टिव भी होता है और इंडिविजुअल भी होता है, और मैनिफेस्टेशन में वाकई एक बहुत बड़ी पावर होती है. क्योंकि पर्सनली मैंने एक नोट बनाया था, एक वर्ल्ड कप और चैंपियंस ट्रॉफी उसके आगे बनाई थी, एंड मैंने उसमें लिखा था वी विल विन इट फॉर देम. और 27 सितंबर का वो नोट है, और वो मेरे पास
सितंबर का वो नोट है. Do you have it with you?
अभी नहीं है, बट फोन में मेरे पास पिक्चर है उसकी. और जब वो फाइनली हमने कर दिखाया तो आई वाज लाइक ओके, it has some power.
So now that you've manifested this, you've delivered this, what next? What are you manifesting now?
Now party.
Shifali?
Now we'll enjoy for sure.
Now you'll enjoy, but आप क्या manifest कर रहे हो?
Now I think as a cricketer सबका सपना रहता है वर्ल्ड कप जीतना, अब बचना है. तो I think वो बचपन से आप कह सकते हो, मेरे पापा की मेहनत कह सकते हो, एंड आई थिंक खेल खेल के भी समझ आ जाता है कि अगर आपकी विनिंग माइंडसेट रहेगी तो आप अलग ही दिखोगे. तो वही मेरा हमेशा रहता है, विनिंग माइंडसेट से रहना है.
You know, the families matter, and we saw Harmanpreet's father was there, and you know, it was literally like watching a child with her dad. आप लोगों की जो families है, it's not easy doing what you've done. It's not easy breaking barriers. It's not easy breaking boundaries. उसके बारे में बताइए. Tell us a little bit about how your family stood up for you and what the reaction now is to your victory.
See, back then when I started my cricket career, women's cricket लोग समझते थे exist ही नहीं करता है. So और बहुत सारे हम लोगों को opportunities भी नहीं थी इतनी, और इतनी facilities भी नहीं थी, and also BCCI के under भी नहीं था women's cricket. So it came under BCCI in 2006. एंड वहाँ से विमेंस क्रिकेट में कुछ चेंजेस आना चालू हुए, मैचेस टेलीवाइज होना चालू हुए. मिथाली राज, झूलन गोस्वामी, हरमनप्रीत कौर, अंजुम चोपड़ा, इतने सारे नाम हैं, लेकिन उनको कोई जानता नहीं था, कोई रिकग्नाइज नहीं करता था, क्योंकि टेलीवाइज नहीं होते थे मैचेस. बट आफ्टर ये बीसीसीआई ने जो स्टेप लिया, उसके बाद सब लोगों को वो रिकग्निशन मिलना चालू हुई. एंड जो ड्रास्टिक चेंज आया, आई फील इट्स आफ्टर 2017 वर्ल्ड कप, जो फाइनल्स में हमारी लड़कियाँ पहुँची थी. उसके बाद जो ड्रास्टिक चेंज आया विमेंस क्रिकेट में, वहाँ से जो ग्रोथ हुई है, आई थिंक इट्स मैसिव.
It is massive, and you know what you talk about, Mithali, Julan. For me, one of the most memorable moments of that winning night will be to see Mithali, Julan and Anjum and all the other previous generation of cricketers being celebrated by these wonderful sports leaders because it is on their shoulders that they stand. Shivali, जैसे कि स्नेह बता रही थी, matches were not televised. There were no role models, so to speak, because people didn't really talk about them. People didn't showcase their stories. So what motivated you? Who inspired you?
आई थिंक फर्स्ट ऑफ ऑल जैसे स्नेह दी ने बोला, मैं वहीं से स्टार्ट करूँगी कि जितने भी हमारे एक्स क्रिकेटर थे उस टाइम पे ना कोई टेलीविज़न होता था, ना कोई इतना मनी होता था. हम तो गोल्डन पीरियड जी रहे हैं. मेन चीज़ तो उन्होंने कमाई है और हम यहाँ खड़े हैं उन सब की वजह से खड़े हैं. एंड आई थिंक मोटिवेशन की बात करोगे, सबसे पहले मेरे पापा ने लुकअप करने को सचिन सर को ही बोला था क्योंकि वो ऑब्वियसली मास्टर है क्रिकेट के. तो पापा ने यही बोला था कि उनको लुकअप करोगे तो अलग ही दिखोगे फिर. आई थिंक मेरे हमेशा सचिन सर रहे हैं एंड मेरी फैमिली का बहुत ज़्यादा सपोर्ट रहा है. आई थिंक विदाउट इनकी भी जितने भी हम टीम मेंबर्स हैं किसी सबकी फैमिली ने बहुत सपोर्ट किया है एंड आई थिंक उन सब की वजह से हम वर्ल्ड चैम्पियन बने हैं आज.
You know, Shireen, I have to ask her about something. When you're talking about the contribution from the family, at the same time you said that, they did not differentiate between genders, etc. The one thing that her father did, and when she was a child, deliberately cut her hair short, make her look like a boy so that she could play with all the boys. And at the same time, then the boys wouldn't differentiate as well. And that's what made her game. She speaks about Sachin Tendulkar. The one who followed Sachin Tendulkar was Sehwag. And that's her role model as well. 87 runs in a World Cup final, 2 wickets. मतलब ऐसे टाइम पे जब आपका खेलना भी शायद पॉसिबल नहीं था, वो तो डेस्टिनी ऐसी थी कि आपको चांस मिल गया और आप उस चांस में आ गए. तो मैं ये भी जानना चाहता हूँ कि डेस्टिनी पे आप कितना बिलीव करते हो और वो क्या रोल आपके लाइफ में प्ले किया है.
सी डेस्टिनी आपको तभी मिलते जब हार्ड वर्क करते हो. मैं पिछले एक टीम के साथ नहीं थी. उस टाइम मैंने बहुत ज़्यादा हार्ड वर्क किया एंड आई थिंक भगवान ने उसी हार्ड वर्क का मुझे पेज ऑफ दिया. और जब मैं टीम में ही, मेरे दिमाग में यही था टीम इंडिया को जिताना है कैसे भी. एंड जब हम वर्ल्ड कप जीते, ये सिर्फ हम सबकी नहीं, पूरे वुमेंस क्रिकेट की विक्ट्री है. आज के टाइम जैसे मैंने बाल कटाए, किसी लड़की को नहीं कटाने पड़ेंगे और हर एक स्टेट में वुमेंस क्रिकेट की एकेडमी खुलेगी. तो सबसे ज़्यादा खुशी इस चीज़ की हमें.
मुझे ये लगता है कि किसी लड़की को बाल नहीं कटाने पड़ेंगे, हम लड़कों को बाल बढ़ाने पड़ेंगे आपके अचीवमेंट के कुछ आसपास भी आने के लिए. और जब टीम में नहीं होते हैं, जब टीम में होते हैं तो ऑब्वियसली टीम का माहौल बहुत अच्छा होता है. जब टीम में नहीं होते हैं तो अपने आप को कैसे मोटिवेटेड रखते हो, अपना डेली प्रैक्टिस कैसे करते हो ये सोच के कि कल मौका मिले या नहीं मिले, वो मेंटल स्ट्रेंथ कहाँ से लाते हो?
वेल उस टाइम पे तो मेरे दिमाग में यही था कि इतने साल बाद मुझे अपने आप पे काम करने का मौका मिला था. तो मेरा यही था कि यहाँ से जब मैं जाऊँगी टीम इंडिया में तो मैं अलग प्लेयर दिखनी चाहिए. एंड आई थिंक वो टाइम ने मुझे बहुत कुछ सिखाया. और आई थिंक जब बैड टाइम आता है और उसके बाद सब प्लेयर आई थिंक अलग निखर के आते हैं. तो आई थिंक बैड टाइम से कभी भी कतराना नहीं चाहिए. अच्छे टाइम पे आई नो सब खुश रहते हैं, बट जब हमारा डाउन टाइम आता है उस टाइम पे अपने आप पे बिलीफ रखना इट्स नॉट ईजी. मतलब यहाँ खड़े होके बोलना बहुत आसान है, बट जब मैं उस दौर से गुजरी मुझे ही पता है कि मैं हाउ डज़ आई फील, कैसे मैं डेली अपने आप मोटिवेट रखती थी. बस मेरे दिमाग में यही था कि मैं कभी भी कुछ भी भगवान करा सकते हैं. और जब से मेरे साथ हुआ कि मैं टीम में एंटर की हूँ उसके बाद तो मतलब कभी भी कुछ भी हो सकता है. जैसे आप सबको स्टोरी पता है कि मैं वर्ल्ड कप में भी नहीं थी, ना ही 15 में थी और ना ही स्टैंड बाइज में थी. एंड आई थिंक ये मेरे लिए एक मैजिक प्ले था. मेरे पूरी लाइफ में कभी भी मेरे साथ ऐसे बिलीफ नहीं हुआ. और मैं सुनती थी कि मैजिक होता है लाइफ में होता है, तो मेरे साथ कभी नहीं होता. बट जब मेरे साथ ये हुआ मैंने ये जान लिया कि मैजिक बहुत बड़ा रोल करता है. और कभी भी हार्ड वर्क से मत डरो, हमेशा अपना बिलीफ रखो.
As they say, right, it's meant to happen. It will definitely happen. So firstly, Shafali Snape, thank you for giving us the honor of calling you all world champions.
Thank you.
And I take on switch off mode रखना एक cricketer के लिए because तीनों formats जो है बहुत अलग है एक दूसरे से.
सी फर्स्ट ऑफ ऑल तो जब आप कोई भी इंसान किसी स्पोर्ट्स में स्टेप इन करता है तो उसको ये एक्सेप्ट करना बहुत ज़रूरी है कि हमेशा आप हाई पे नहीं रहोगे. लो आएगा आपकी लाइफ में, बट आप उसको कैसे मैनेज करते हो, कैसे बैलेंस करते हो, वो आपके ऊपर है. और जहाँ तक बात रही मेरे कमबैक की, यस 2016 में मैं इंजरी के कारण टीम से बाहर हो गई थी. फिर उसके बाद मुझे 5 साल लग गए इंटरनेशनल क्रिकेट में वापसी करने के लिए. एंड उसी दौरान आई लॉस्ट माई फादर इन 2021. जब ये मुझे न्यूज़ मिली कि मैं वापस से इंडिया टीम में आ गई हूँ. सो आई कुडंट शेयर विद हिम, बट यस, उनका आशीर्वाद कहीं ना कहीं मेरे ऊपर रहा होगा. और जिस टेस्ट मैच की आप बात कर रहे हैं वो मेरे लिए बहुत ही स्पेशल है, क्योंकि एक मोमेंट ऐसा था कि इंडिया का थोड़ा सा ऐसे ही चल रहा था, मतलब वो हार भी सकते थे वो मैच, बट दैट 80 नॉट आउट नॉक और मेरे जो 4 विकेट्स थे वो मेरे लिए हमेशा स्पेशल रहेंगे. क्योंकि उस टाइम पे मैं एक्चुअली बताऊं तो मैं एकदम नम थी, मैं लॉस थी, बिकॉज 1 महीना भी नहीं हुआ था मेरे डैड को, एंड आई वॉज प्लेइंग देयर इन इंग्लैंड. सो मुझे लगता है कि शायद वो पार मेरे डैड ने मुझे दी, एंड मैं आज जो भी हूँ, जहाँ भी हूँ, ही गिव्स मी द पाथ, और मैं वो बस फॉलो करती हूँ. ही इज़ माई गाइडिंग एंजल. और जब भी मैं एक चीज़ बताना चाहूँगी कि जब भी मैं विकेट लेने के बाद ऐसे करती हूँ तो आई थैंक हिम. Actually,
wow.
So
and
that's
I
the whole
think,
story.
And it's lovely because I saw you posting on Instagram a picture of you. Because I saw you posting on Instagram a picture of you holding the World Cup, saying, "This is for you, Papa." So you know, for all the proud fathers out there, what a fabulous story and what a fabulous legacy these wonderful women leave behind. But एक और मैं आप लोगों ने एक मैनिफेस्ट किया था, एक टीम का सॉन्ग था कि आप तभी गाओगे जब आप वर्ल्ड कप जीतोगे, राइट?
Yes.
जी बिल्कुल.
So now that you won the World Cup, you have to do the honors for us here on the Global Leadership Summit stage.
And
नहीं
the entire audience is your team today. The country is your team today.
I think you can play it here because वो इतना special है कि
नहीं
Live गाना है.
Live गाना और play करना
एक line, one line, whichever line you choose.
It's Team India, Team India. कर दे सबकी हवा टाइट, Team India is here to fight. कोई न लेता हमको लाइट. Oh, our future is bright.
Our future is bright, ladies and gentlemen. The wonderful Sneh and the wonderful Shafali Verma. Thank you so much for joining us here at the Global Leadership Summit. What an absolute honor it is. A big round of applause to these wonderful sports leaders joining us here at the Global Leadership Summit.
Thank you so much. Thank you so much.
Thank you.
Thank you.
Thank you.
coming to India. You see the epic scale of Mumbai. You know, in AI, we're often used to epic scale, but India always kind of has to make you refresh and think. So it's great to be here.
Yeah, absolutely. And I, would be amiss if I didn't, connect the AI theme in India as well too. And I think, picking up on that point, before we go into some other topics, we had this old narrative, which was, okay, when we had the original .com era, over 2 decades ago, that was something that kind of originated in Silicon Valley on the West Coast and then propagated over to Asia. I think with what's happening in AI today, while we do have different pockets around the world where the foundation models have leadership, in terms of, I think the AI adoption of how folks are bringing it into their daily life and how companies are bringing it into their workflows, actually on many metrics, India is a leader in this area, right? So that energy is really connecting to this AI theme as well too.
Yeah, and I think, we need to come to that, the role of India in AI. I think just the way to open it for me is that, I've listened throughout the day, and all day we hear AI, AI, AI. You open a newspaper, you read about AI. You watch the TV, you hear about AI. And, if you are so immersed in it like me, occasionally you just think, God, are we going to get bored of hearing about AI? Why is everyone talking about it? I want to just stop for a minute and say, look around you right now. Look at every single thing in this room. Everything that you see was the product of intelligence. It was designed, it was built, it was arranged, it was moved. We're talking in language, something that is innate to our intelligence. Intelligence isn't just another thing. It is the architect of our whole world. So suddenly to be able to recreate that, to copy it, to bottle it, that is something really significant. And I think that means it's not overdone. We're not hearing about AI too much because this really is transformational to the carpet beneath our feet, the lights above us, to the content that we're looking at. It is everything. So that's what I sort of think. In big terms, that's all true. Do you think we're seeing that on the ground?
I think we're starting to see that on the ground. And I actually think there's potentially 2 waves of what's coming, right? So I think you're exactly right in terms of, yes, AI is a technology. So there's one frame of mind that says, oh, we have another technology trend that's here, right? But we actually, I would argue, in any of our lifetimes, have not had a technology that has such a profound, you could say, mimicking of intelligence, or you could argue of such a profound impact on how knowledge work is done. And you could say, yes, we were able to connect to the internet 25 years ago. We've had various things, but actually, if you think about how humans interact with the world around them, how they create, you say, value in society, right? A lot of it boils down to knowledge work, and we are at the very early stages of how this revolution is fundamentally changing knowledge work. It is amongst some companies and some other entities, but we're just getting started on that. And I think the second wave, which therefore comes, is, well, knowledge work is the things that live in our heads for the most part. But as we start to connect and are already starting to connect some of these types of foundation models to the robotics as well too, that is where we have, some call it embodied AI, right? That connection between all this power that we are seeing and really interact with in our computers right now, starting to actually have a direct connection to the physical world. And that is a wave which is just beginning to start and is probably going to pick up. But I think you've been seeing this in some areas as well too.
Yeah, so, what people are missing really about AI now is that, yeah, we're talking about a cognitive change. But what that cognitive change has already done is it's unlocked robotics. So, for the past, 40 years, we've had some success with robotics, but try to get a robot arm to pick up an egg. Try to get a robot arm to pluck an apple off a tree. Try to get a robot to cook your supper. Just can't do any of these things. But large language models, the transformer architecture, the things that have become the dominant paradigm in AI, it turns out they generalize to robotics. So, this is huge. So much of the world that we live in is physical. It's not just about intelligence, it's about intelligence coupled with physicality. And that's what we're seeing now. And I think we're also seeing another AI revolution happening. You know, we've got used to ChatGPT, we've got used to Copilot, we've got used to language. You know, that in itself is huge. When I first started going into AI, people thought language was decades away. It was just too complex, too nuanced. Now we're entering the agentic era. So now we have agents that are interacting with the world and that can do things on people's behalf. It's not just saying, it's doing.
Yes. And I think what's starting to bubble up is there are real agents being deployed today, and we're just starting to see the beginning of it. In our research, we find that there's probably only about 5% of companies in the world who are actually fundamentally transforming the way that they operate with AI. And if you look at what, I think we think of Gen AI, we think of what's been happening as like, I can do language, I can make images, right? But I will give you a manufacturing example, right? If I have an agent that thinks about how do I run the predictive maintenance of my lines, right? When should I take down certain machines, right, for maintenance because that's better off in the overall. If I have another agent that's working on production scheduling and planning, and I have...
Yeah, so I think, what do you make of this? This is how we often think about this. Today in a company, you've got the employees. Tomorrow in a company, you will have mixed teams of human employees and agents. And so wherever you see a person, you're likely to also have a number, potentially a very large number of agents working with them. And so these frontier firms are going to be blends of agents doing loads of things, people coordinating those agents and instructing them, those agents reporting back. Do you see that as something that's happening or coming?
It actually is already happening, and you see even a few archetypes, right? You have agents that are going off and doing tasks defined by humans and then coming back and reporting, right? So therefore you could say humans intersecting with or managing agents. We will start to see agents which are smart enough to know when I have to ask the human for help. So actually humans are just a biological form of agent, right? And so indeed there are these mixed teams that are being created. I don't think yet, let's be clear, we're at the stage where fundamentally HR is managing agents, right? That's going a little bit too far in terms of where things are today, but actually rethinking through workflows in terms of what is best for agents to do, what is best for humans to do, what is best for them to do together, what is best for them to do separate. This is the new theory of work, which is just getting written right now.
So, I mean, basically then, if you think about it, we've touched on robotics and we've touched on agents. What we're looking at is a world that in the next, let's say, 3 to 15 years, is suddenly we've got people, we've got disembodied agents living in the cloud, and then we've also got humanoids or other forms of robots. So suddenly that's a very, very different world to the one we live in today. And that's why I think AI is so powerful. Is that going to lead to a massive boom in economic growth? I mean, personally, I think probably yes. Is there another narrative, or where are you on that?
Yeah. And I almost thought it was a joke, but there was a paper that came out by one of the Federal Reserve banks in the United States, which basically gave 2 scenarios of GDP per capita in the medium term. And in one scenario, it grew exponentially to infinity. And the other scenario is we were eliminated by AI and therefore went to zero.
And the third narrative was that it just kind of bumps along a little bit faster than now.
Which is the least predictive prediction you could possibly imagine, right? It's infinity zero or somewhere in between, right? But, I think it's a very common statement now that we overestimate how tomorrow's going to change, but we underestimate the medium term. I mean, I am very optimistic because, ultimately, I actually come down, if we just take the economic view and we think about the work that most people do every day, the majority of people don't enjoy the majority of their day at work, right? Everyone has, and if you talk to, everyone here is leaders in various contexts, you always feel short of great people and great skilled people, right? And so if we think about this AI revolution as saying, hey, why don't I take off the plate the work that people hate to do and the work that is really not fully utilizing their skills as humans, right? That's a positive thing, right? And so I think what the human ingenuity will allow us to do and will allow everyone to do is actually take that kind of new equation of what work looks like, and then we reconfigure what economic productivity looks like. Now, are there going to be some difficult collisions, difficult transitions in that process? For sure, right? There is no question about that. But overall, we've found a way to deal with, I'd say, persevere and thrive to a new level in many of these revolutions, and I think AI is yet another one of those.
Yeah, that's how I think of it. Really, it is of a magnitude. It's of an industrial revolution. One sort of critical thing in this that I think people are very aware of is who are the nations that are building it. And the truth in AI right now is there are two leading nations, the United States and China. And these are the countries that have the companies, and largely AI is being built and driven by private companies. They have the companies that are operating at the frontier and pushing at the frontier. But I honestly think that there is room, and there has to be room, for a kind of third pole in this equation. And there are only two realistic players in the world who could do that. One would be Europe, and two is India. And of those two, I would personally be betting on India. India has vast reserves of data, and data is the key to making AI work really, really well. India has engineering and scientific talent second to none in the world. India has the potential for scaling up startups in a way that's true nowhere else. Meanwhile, Europe just simply isn't deploying anywhere near the amounts of capital needed to create AI. AI is expensive. Data centers are expensive. You need to be ambitious. You need to think in the future. And again, I think India is doing that. So India is incredibly well positioned, but nothing is written. Like, where are you on it?
Yeah, it's a great observation in terms of you have US, China, and then how do we think about where the other, I'd say, poles are going to be? And I think it's useful to break it down into a couple layers, right? We have oversimplifying, but we can think about there's a hardware layer, we have a foundation model layer, we have an application layer, right? Let's think in those regards. Obviously, things are quite concentrated at the hardware layer right now, right? They'll probably get less concentrated over time. We face constraints at the hardware layer, but there's tons of capital going in, so I expect that becomes less of a constraint over time. Model layer really sitting with two poles, right? Many of the frontier models, we originated in the US, and then we have many highly cost-effective, highly practical models coming out of China, right? And then there's the application layer, which is how do I think about using all of this stuff, right? And when it comes to the model layer, I suspect we'll start to see innovation out of India for sure. And then the place where I think there is infinite possibilities, the application layer, right? Because we're at this cusp here, right, of where the economy is, right, the growth of the economy, the very skilled and highly skilled workforce, the number of innovative companies in India. So much innovation is going to happen, and I think it's an interesting place to be able to both look westward and look eastward, and see. We're not going to copy one or the other, right? But actually take the parts that make sense for here from both, and that's a very unique position that India has.
Yeah, and I think bring something distinctively Indian into the equation as well. I think it's far healthier for the world if we have sort of different forms of AI that somehow emerge from different cultures, and that's a really good thing. I guess, two other things that I think it's worth touching on. So, we were talking a minute ago about, how we will live in this kind of mixed ecosystem of agents, of robots, people. One way of understanding that, and this is a metaphor, so I don't want anyone to take it literally, but one way of understanding it is it's kind of like we're creating or building a new sort of species that will live amongst us. And so for me, just talking about this in terms of work or productivity, economics, that doesn't really capture the full sense of change that is going on. These are kind of things that people are already spending hours a day talking to. And, whether that's a good or a bad thing, that needs to be thought about. It's already changing how we create images or films, how we write, how we communicate, our media, our sense of who we are. And, I think that's just this really deep change. And, so there's the economic piece, but then there's just a wider sense of what's happening to us, to humanity.
Yeah, and I think we're already starting to see the interesting impacts on how we even interact as humans, right? To give the simplest example, and I'm sure many in the room would relate to this as well too, I've had multiple people tell me over the past couple of weeks, like, you know, sometimes I get really angry because this person is not doing something I want, or in a personal, professional context. And one of the great things I use ChatGPT or Copilot for is, how do I take some of the emotion out of that, or add some emotion into it, right? And think about how do I almost coach myself in my interactions. And so I think we're at the very early days, but you're right, it is not just about work, right? It's not just, of course, you know, many
believe that they're conscious. So, you know, the models have memory. They remember all of your interactions. They are communicating fluidly in actions. They are communicating fluidly, naturally, with personality. They have goals. They seem to have goals that they are then pursuing in multi-step programs. All of these things are the kind of markers of consciousness that we look out for. And look, it's almost impossible that these models are conscious, but we worry that people will start to believe that they are. And so actually, designing AI, we have to design it very carefully so that it isn't pretending to be a person. It isn't pretending to be illusory. And I think, you know, perhaps in the workplace as well, as companies do it, they need to find ways that these are complements to humanity.
Yeah. And that really connects, you know, to one of the things that we talk about a lot at BCG, which is this principle, what we call the 10-20-70 principle. Because, you know, I mean, I think we're both technologists. We get very excited about, you know, exactly what's happening on the technology front. But when we look at how profound change happens powered by AI, and you think about, well, where, you know, as a leader or a company or in a non-company context, where do I have to put my energy to make that change happen? 10% is actually, okay, what's the cool algorithm? What's the foundation model? It's important, right? But it's only 10% of the equation. 20%, which is a bit like the plumbing, is like, well, I've got to have the tech stack that means that I can scale this, means it can go to everybody. And really the big one is the 70. The 70% is, how am I thinking about change management? How am I thinking about ways of working? How am I thinking about the human side of things? Because ultimately, and if I even go back to the narrow company context for a second, if I am trying to drive impact, if I'm trying to drive productivity, efficiency, or effectiveness, if I'm not changing the way that people work, I'm not doing anything. And so therefore, actually thinking through all of that, you know, how humans and agents are working together, how I prevent some of an automation bias, a selection bias, all the biases that could emerge from the human side when that happens, that is a new science and a new art, right? Which I think we're all going to have to become accustomed to, because that's the new reality for us.
Yeah, I mean, we're barely scratching the surface here, but I think maybe there's a couple more things that it would be good to touch on. One, I think we share an opinion on this. AI, the biggest capex story of our time, hundreds of billions, maybe even trillions of dollars being spent. Is it a bubble?
Well, we are going to see certain bubbles in certain areas, but what's not going to be a bubble is the fundamental change to how we interact with AI, to how we work, to how knowledge work is done. So you could argue that there is some blips or steps back that markets will take over the coming years, but I think we share a view, whereas if we were to go stand 10 years in the future, 15 years in the future, we will look back and see those as course corrections on a fundamental change that continues.
Yeah, that's what I think. We had the dot-com boom, that was a bubble, but today the biggest companies in the world are the tech companies that grew out of that. You know, what we haven't talked about here is superintelligence, the most advanced forms of AI. At Microsoft AI, we just launched a superintelligence team yesterday, building something that we called humanist superintelligence. You know, if we can build that, and I think we can, and I think a lot of people are beginning to understand that AI that can build better AI is the route to doing it, then it's, you know, as you say, there's ups and downs, but the course, the trajectory of the technology of where our societies and civilizations are going is pretty incredible.
Yeah, and maybe we could close and leave the group with one thought. Michael, if you had one piece of advice on how everyone can I'd say, thrive and evolve in this journey with AI, personally, what would you recommend?
I think one, I would advise everyone, and probably everyone in this room and watching is already doing it, to engage with and use AI and find out how it can make you more productive, how it can enrich your life. That's one. And two, don't take your eye off it. It does need watching, it does need regulating, and it does need engaged citizens around the world who are going to push for the most responsible, the safest, and the best forms of AI that are about humanity. So please don't lose sight of that and keep pushing.
And I couldn't agree more, right? And I think maybe to close, right, probably, those who thrive over the next 5, 10, or decades are going to be the, regardless of where you stand today, regardless of how old you are today, wherever you are in your career and life, it's the rate of learning that matters. And the engagement with, the great thing today is anyone can learn anything about this with, all the tools that are out there. And even if you haven't written a line of code in your life, you could actually go make something with AI to help you. So it's an amazingly democratized type of technology. And then, we just encourage everyone to get their hands a little bit dirty with it and increase the rate of learning.
Thank you very much. Brilliant to be here.
Thank you.
Well, thank you.
language has become synonymous with Indian luxury across the globe. Ladies and gentlemen, please welcome them all with a thunderous round of applause.
Yeah, don't hold back. I know this is the moment that all of you have been waiting for. That's the one question that we've been asked all day today. When is Deepika coming? When is Sabyasachi coming? So here they are, ladies and gentlemen. A big round of applause for Deepika Padukone and Sabyasachi Mukherjee. Thank you very much for joining us for the closing session of the second Global Leadership Summit. Without further ado, I don't know how many of the people in this room know, she's been your muse in many ways, Sabya, and I know we spoke about that previously as well. When we last spoke, you said that there's only one person from the world of Bollywood that's ever graced your runway, and that was Deepika Padukone. What is it about Deepika that's so magical?
Well, I think Deepika truly is India's biggest cultural mascot. Everybody from all over the world know who she is. She's bringing the world to India. And if you look like that, it really helps too, because, Deepika started with fashion. And I've always said that, if I wanted to put somebody on the runway, it has to be somebody who has a fashion background as well. But more than that, I think there is no stronger cultural ambassador of the country like Deepika. And it was an honor to have her walk the show. Thank you, Deepika.
Well, from one ambassador of Indian art and culture to another, Deepika, do you remember the first time that you met Sabya?
Yes, I remember the first time I walked for Sabya, and this was one of the many fashion weeks that were happening. I think it was in Delhi. At that time, we didn't have so many, then there was one in Bombay, one in Delhi, whatever. Anyway, this was in Delhi, and this was a very different Sabyasachi, and
how different?
Evolved. He's evolved today, right?
He's evolved now.
He's evolved now, and he's evolved. I wouldn't say he's different. Even today, if I think back on that work and that show, I still see Sabyasachi in it. But I'll never forget, it was basically this slick, pulled back, like choti, like a bun, like a braid going at the back. And all of us models had to take a black sketch pen or like a marker and draw a mark in our teeth to make it look like we were buck teeth. And big, like reading glasses. If you Google it, you'll find it.
Yeah.
That was the very first time I walked for him. And even back then, I just remember that this designer was very, very special. So yeah, that was my first interaction. I then bought a sari from that collection, which I still own, by the way.
You did?
Yes.
I think that tells us things about both of you. And Sabya, I'll start with you. This idea of wanting to stand out and not fit in, this idea of wanting to disrupt. And I think that's something that the two of you have in common as well. Both of you like to challenge the status quo. And Sabya, I want to start by talking to you about that. I mean, who would have thought that a designer would actually get models to ink their teeth with a sketch pen before they go out there? I mean, what were you thinking?
Do you remember that?
I do. It was called the Nair Sisters. And, when I was growing up, I was an awkward child. And, when you're awkward and when you're unseen and you're unheard, there's a majority of us who feel like that. And I always think that beautiful things and most important things in the world are built with relatability. And I think the underdog is always relatable. And that's not something that's ever glorified in fashion, because it was my life, my story, and I wanted to bring that out. And like I said, that I think you build beautiful things by including people and not excluding them. I know I have many conversations on that when people say I can't afford your clothes, but I've always built the brand on public ethos. So that was probably the beginning.
That was, and that's interesting that you talk about it. And Deepika, I want to ask you this in your own context of what you've been able to achieve as an actor, now as an entrepreneur, and more importantly now as an activist in the field of mental health. And of course, you're now the brand ambassador for the government's program on mental health. And we were together shooting in Chhindwara just a few weeks ago. And, there's a lot of good work for the last 10 years that Deepika and her foundation have done in that space. This idea of inclusion, this idea of relatability, I mean, those are not ideas that one associates necessarily with the world of celebrity, with the world of Bollywood, where everything is larger than life. How do you make yourself relatable to an audience like this? How do you make yourself relatable off-screen and on-screen?